On the technology front, we look at anything that's connected to Apple. We sometimes see some of those suppliers to Apple move on the day after those Apple numbers, and the Apple numbers didn't go down all that well, but for reasons to do with supply chain. So we'll see if that has an impact. And Leonardo in the defense space, orders strong, the full year outlook raised, so maybe that's one to watch this morning.
I spoke to the CEO a couple of days ago at Farnborough. Very positive momentum he certainly sees with that business going forward. OK, let's talk about this market open this morning. As we've already indicated, we are expecting a positive performance. The FTSE is likely to be a laggard. We're certainly seeing that early doors. Stock 600 is expected to be up around 0.6%. I don't have a number for you yet. We're broadly expecting Europe to go higher at a kind of top-down macro level. We've also got some single stocks that are going to add into that narrative as well. So the stock 600 is up by 0.2%. The FTSE is not quite delivering the 0.2 move we expected and we saw in futures. We're getting basically a flat open. The stock 600 is up though by 0.2%. The IBEX is up, well, the IBEX is only just up, the CAC's only just up. So where are we going to see this? Actually, I think we were expecting a little bit more outperformance initially. So there's a few key stocks that feel like they're not open yet. So it's going to be interesting to see what they are and what the drivers are first thing this morning. The DAX is yet to go. The AEX is yet to go. We were expecting maybe 0.5%. We're not getting that yet out of Europe, Anna.
Yes, indeed. We do seem to have more sectors in negative territory than in positive, which the futures picture is sort of inconsistent with. So let's dive into a bit of the detail as to why that is the case. We do have to the upside basic resources, so that sector going up by 1.3%, Antofagasta, Fresnillo, Anglo-American, the usual cast of characters moving that sector higher. I know that iron ore prices have been very much in focus of late, but we'll leave the upside there and look at the downside, because maybe we've got a bit more downside than we'd anticipated. I can see that IAG, which we have had numbers out, it's been such a busy morning, I haven't had time to mention much, but that company, that stock is down by 4.5% on the back of its numbers. We have Accor in the hotel space and others in the hotel space, and airlines and catering companies and gaming companies all a little bit weaker. Personal consumer discretionary grocery stores also an area of weakness. Not a standout performer to the downside, but Unilever and Tesco's are both in the mix there. So, yes, it's just not a day that's quite, not as positive as maybe expected, although we are seeing a bit more upside in basic resources now. Yeah. But we kind of split 50-50 then in terms of the sector moves.
Points. So it's Unilever. So we're getting a little bit of a mover. So what you get, there's quite a positive tech performance in Europe this morning. So ASML is up quite nicely, 2.35. Schneider's up quite nicely. Asia Brand Baveri is up quite nicely as well. All of these are kind of adjacent AI stories, AI data center stories. You've got Unilever and Nestle as the two biggest drags on the market. Are we getting basically a rotation within the space? You're getting money coming out of the staples, the safer end of the market, and we're rotating back into maybe some of the sort of AI adjacent trades. ASML, Siemens Energy, Infineon is up quite nicely this morning. Schneider's up, ABB's up this morning. So that's the kind of trade. It's back into tech. It's out of safety.
Yeah, indeed. And we've got something like Soitec in the technology space up by 8%. So there are some pretty standout movers in the tech space. And of course, it's been such a volatile landscape recently. Let's widen our focus and talk to Eleanor Taylor-Jollydon, who's co-head of Global and Swiss Equity over at Union Bancaire Privé and joins us now. Eleanor, good morning to you. Nice to have you with us. So oil prices have been creating a lot of volatility recently. The tech trade has been creating a lot of volatility. And July has been marked by a lot of that equity market volatility, certainly. Are you assuming that that carries on for the rest of the year, over the next few months, or, you know, we're at the last day of July, is it behind us?
I think what we've seen over the reporting season so far has been very strong earnings results, which probably the market was not entirely expecting when you see to what extent companies have been able to beat expectations. So for a fundamental investor like myself, it's particularly encouraging to see that when you base your decisions on earnings as opposed to optimism, that is being paid off at the moment. Having said that, yes, there was a lot of hope going into July, a lot of growing questions against that hope as regards the monetization, the success story of AI going through. And there was what I think one can expect when there is a completely transformative technology, a very, very high expenditure behind that technology, a pause for thought in markets, which happened. And there may be perhaps a more critical, a more informed look going forward, which is again more based on earnings than has perhaps been the case in the more recent months, quarters.
And so where does that take us on that AI trade into the rest of the year, Eleanor? To what extent do you want to get exposure, continue to have exposure, or to avoid? And if you want to avoid, where do you look to be instead?
Well, certainly if you are a portfolio manager, what you're looking for more than anything else is balance in some ways. So having exposure to names which have a decent value creative opportunity, be that expressed in earnings or what we prefer to consider the cash flow return on investment growth or stability of those companies. Now, we want to find pockets of that growth in different themes. There is a very dominant theme at the moment and a concentration of the market, which has been much discussed over this year, which is around AI. But I would argue that there are other opportunities in the market, other trades to play alongside an AI trade. And one also has to be thoughtful about who really benefits at what time and how from these different themes. So we have within our portfolios at the moment exposure, obviously, to AI thematics, but we also look for companies which can play into the infrastructure spend that we're still expecting coming out of Europe. We have companies which have exposure to what unfortunately is truth, which is that demographics, certainly in the Western world, are probably moving more to an older generation rather than a younger generation. And that means that there are going to be health costs associated with that and a willingness of us all to try and combat that in an effective way with an interest in healthcare and improving healthcare metrics.
But I don't know, how do I invest in this? Day to day, we are seeing such volatility. Do I just have to take less risk in a portfolio given that volatility? Is that just the nature of the market we find ourselves in? Can you take the kind of positions that you once wanted to? The danger of getting stopped out of them at the moment looks pretty extreme. How do you invest in a world where this kind of volatility is there every single day?
I have seen that the markets change in their behavior every single day, and the sources of volatility can be very different. What is different about the markets at the moment compared to perhaps other periods of volatility that we have known is the very high concentration in a few names when it is the United States, indeed a concentration that we've seen also on the US, and a willingness also to pay perhaps slightly higher valuations than one would necessarily in usual circumstances feel comfortable with in order to gain exposure to that particular thematic, which is technology, artificial intelligence. But then as a portfolio manager, we always have to be aware that things can change, and things do change very rapidly, as we saw during the month of July. Fortunately, you could say it's so far, at least it's only been a month of change, but I don't have a crystal ball exactly for the future, and what has happened over the July does give me also an indication or a reminder of what is likely to happen or could happen in the future. So maintaining exposure to themes which have genuine underlying earnings potential makes sense, but at the same time being sure that we're always balanced, that should something suddenly come out of favor, we have other areas of growth growth which are present in the portfolio. It isn't perfect
the
every
CEO
day,
of UBS,
obviously, but hopefully that gives us some protection on reversal trades like we saw during the month of July.
But do you worry that investors ultimately, and at the moment it feels like we're repositioning around some of this stuff, but I was talking to the CEO of UBS about this earlier this week. His view is that ultimately investors, kind of the people that put money into wealth funds, don't like this kind of volatility. So ultimately, is it, while it's a short-term kind of, we're seeing a lot of movement, ultimately people will get much more cautious if we see this persist?
We've certainly seen people become more cautious in the past around volatile equity markets. But when you look at the valuation which people are prepared to pay for equities at the moment, when you see the performance of equity markets globally, and notably perhaps again in the United States, which is the most exposed market to technology, you could argue, then you do seem to see that a number of people continue to wish to be exposed to this market. Indeed, we've seen a pretty attractive picture in terms of flows onto equity markets. But yes, there is a flexibility around those flows, and there have also been interesting periods where we've seen quite interesting flows back into Europe, which was something which was missing perhaps over some of the more recent years, as people felt that Europe wasn't able to re-find a dynamic in terms of growth. But when you see some of the numbers and also the macro numbers which were published yesterday, you can see that there are shoots of growth in Europe. There are areas of opportunity in Europe, and also, for example, in Switzerland, which is a market that we continue to consider as very value creative and interesting. And as such, you see that there is interest for investment in equity. Whether that interest and whether the levels of equity markets are reflecting perfectly what is happening in the general economy and reflecting perfectly some of the considerations and concerns that people have around the cost of living is another debate. But clearly there is a willingness to be involved in equity markets if we look at the level of equity markets today.
And Eleanor, do you, I know equity markets is your focus, so within equities, are you interested in commodity-related equities at this point, given we have an oil price that sort of refuses to go down? I mean, it went down, but then bounced up again, because, of course, we see a persistence to the activity in the Middle East.
Well, one of the main areas of my focus is Swiss equity, and the Swiss equity market does not have a terribly high exposure, in fact, has no exposure really to commodities. So that answers part of your question. As regards our global equities, we do look certainly at companies which would be serving the commodity area. We're also aware of the importance that a lot of our investors still attach towards ESG considerations that may hold us away from some more direct exposure to commodities, but where we see an end market which has a growth potential, which is as a result of higher commodity prices, we do gain exposure to that both through our Swiss equity and through our global equity.
Eleanor, thank you very much indeed. Always appreciate the time. Thank you for joining us on a Friday. Eleanor Taylor, you're leading the co-head of Global and Swiss Equities at UBP. Let's take a quick look at the Core 6. This is what we are seeing this morning in terms of the big moves that we are watching. There's quite a comparison. Basically, tech is up. Look at ASML, up by over 3%. Nestle is down, so let's take that as being emblematic of the more staples trade, and that is under pressure. So we're rotating back towards tech, I think, is the narrative that we are watching. Banks also firmly in focus, as they have been all week. Let's start there with Alex.
Yeah, guys, look to Credit Agricole this morning. Of course, got that beat on earnings, boosted by Amundi, and looking at this out of the gate, up around 5% in the green this morning, climbing up. Let's turn, though, to tech, and this really is an interesting one. It's been a bit of a week of whiplash, I think it's fair to say, when we're looking at tech stocks, but European tech stocks opening up. You can see particularly those in the semiconductor space. And this is interesting because there was that question whether Apple's disappointing sales forecast were going to cast a shadow over Europe. But in between, of course, we had the rebound of the Kospi and the tech trade in Asia. We'll be seeing European tech stocks, particularly those in the semiconductor space, opening very much in the green, climbing this morning. Let's turn then to Siemens Healthineers, and this was a mixed picture in their earnings this morning. They are in the red, down around 5%. On the one hand, you had this windfall brought by tariff refunds, which did lift their earnings. On the other hand, there was a drag in the diagnostic space. And that was contrasting with other areas which are looking promising, like imaging and cancer treatments. But you can see this morning that mixed picture that is pulling Siemens Healthineers down into the red around 5%. Let's just turn the board over finally. We can look to, we've got Siemens Healthineers there. Sorry, Dana, flipping that over. Yes, to Taylor Wimpey. Here we go. Now, there was a cut to the dividend here, and this is dragging them down around 5%. The broader picture this is pointing to is to a slump that Taylor Wimpey is still confronting, but that is taking them down around 5% now. So that's some in the green. European tech very much in the green. Credit Agricole in the green as well after that beat on their earnings. Taylor Wimpey, Siemens Healthineers, some of those in the red this morning.
Alex, thank you. Alex Morgan with an update, a rundown of some of those stocks on the move. Coming up, profit beats from both NatWest and Credit Agricole. We'll dive into the results from the European banking sector next. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television. Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
We had a very strong
strong set of results overall, thanks to very dynamic activity everywhere. I just talked about equity and trading, but we had record inflows in insurance, record levels of assets under management in Amundi. But we're also very profitable because our cost-to-income ratio decreased and is now below the target that we had set in our medium-term plan.
What gives us the confidence to strengthen the guidance really is the strong performance of our three businesses, retail banking, private banking, and our corporate bank are performing and growing really well. They're also becoming more efficient, so that's a virtuous cycle.
That was the NatWest CEO and Crédit Agricole CFO speaking to us earlier after their earnings reports. So NatWest raised its guidance for the year and says it will consider buybacks sooner than planned after beating second quarter earnings estimates. Crédit Agricole, for its part, also reported better than expected numbers. Income rose at its French retail business and it saw record profit in its asset management arm. Let's put together what we've learned then from the banking sector this week. Philip Richards joins us from Bloomberg Intelligence, who leads the global capital markets banking team. Philip, good morning to you. Let's start with NatWest then. How did NatWest stack up against the competition? Telling a pretty positive story this morning.
Yeah, good morning. Yeah, as you say, I mean, there's been a very strong 2Q round for the European banks overall. Two-thirds of banks almost beating on revenue, every bank almost beating on cost of risk, EPS line, almost every bank outperforming. And not really any bank suffering on that front. And we've seen exactly the same today. Crédit Agricole, NatWest, upping guidance, beating quite strongly, 10%, 11% PBT beats for both.
We just talk about trading and why there is this big gap between what Wall Street has produced, particularly on the equity front, and what Europe has produced this week. And it's been notable, like Barclays, into UBS, into a whole range of other banks. We have seen good performances, but not relative to the United States. Is that because all the great deals are in the United States, or is it simply just we are not going to give these businesses the same level of capital, they can't take the same amount of risk, and therefore they don't deliver the performances?
Yeah, I think you hit the nail on the head there, exactly. We're all talking about the beats versus consensus, but the fact is consensus is far too low for these European banks. And as you say, the Europeans are doing a far lower growth rates than the US banks are. And you say all the activity, the M&A deals, all the technology investments, IPOs, are all coming through in the US. So unsurprisingly, the US are winning on their home turf.
Philip, we've been asking a lot of CEOs in lots of different sectors, to be fair, but including the banks, about return on investment from AI. And both NatWest and Lloyds talked to us this week about their wealth management tools, basically, that are going to be fueled by a lot of AI. Is this going to be a huge step change in the retail banking landscape, do we think, in terms of the products available, the access that people have to wealth management products?
Oh, it definitely is across the board in terms of the whole AI rollout. There's also a case it's not everyone's going to benefit on a relative basis. So it's about controlling how much you spend, and that's a concern sometimes. Maybe the banks are spending too much and maybe not actually getting the full return on that. So there's a combination of the two. Yes, you've got to spend to grow, but actually, are you getting the returns on that?
Yeah, tokens aren't free. No. Price is dropping.
Still not free. Still not free. Token maxing is definitely out. Philip, thank you very much indeed. Philip Richards joining us from Bloomberg Intelligence. Let's get into another story that we're watching. Actually, probably haven't paid attention enough to this morning, but we are definitely paying attention to now. IAG is down 2.5%. Remember, this is the parent company of British Airways, Iberia, Aer Lingus, etc. Let's find out why we are down. The stock was down more than this earlier on. We've rebounded a little bit, but why we are seeing this drop. Benny Campbell joins us now, Bloomberg's managing editor for space and aviation. Benny, good morning. Is this just a fuel issue that IAG is facing?
Yeah, so fuel is the big sort of story here, has been really across the industry for a number of months now, and it's hitting hard at IAG, as it is indeed with all the other airlines. Why is the stock down? It's down because the company is more pessimistic about its growth prospects. In February, when they reported for the first quarter, they said that capacity, which is sort of a key metric for the industry, would rise about 3% this year, and then this morning, the new word that was used was flat, so no growth. So essentially, the company has abandoned its growth prospects for the year, and they're doing that because they are less optimistic about adding routes, growing the business, and really it's about retrenching, and that sort of sends a signal that this is a generally slightly more pessimistic outlook into the latter part of the year, and that is why the stock is down.
Yeah, Benny, you might have thought in terms of the competitive landscape, that the fact that there might be reticence still to travel through Dubai, travel through Abu Dhabi, might mean that there's something to play for some of the other for the European carriers in terms of taking people to Asia. But I guess you can't turn that kind of growth plan around very, very quickly, can you? What's been the competitive landscape? What does that look like at this point?
Well, it's been very, very dynamic. You're absolutely right that there was a window of opportunity for the established airlines, say BA, Lufthansa, Air France, to push more into these routes that over the years they had really lost to the Middle East carriers. That's parts of Asia, parts of Africa, parts of India, and so on. But that pendulum has started swinging back as the likes of Emirates, Qatar, Etihad sort of regain their strength. Now, obviously, in the last couple of weeks, the conflict has flared up again, so it's really unclear how that dynamic will play out. But this was a bit of a flash in the pan, to be honest, in terms of those gains that they had. They haven't really stuck, it seems. So that's on the long-haul side. On the short-haul side, the likes of Ryanair and EasyJet are still making life difficult for a lot of the carriers over here. They are gobbling up more capacity. A lot of people are flying shorter routes, thinking about those long-haul trips. So it remains a fiercely competitive landscape. We're going to hear more from the company at the bottom of the hour. That's when the analysts get their time with management, and they'll ask about what's going on the crucial transatlantic route in particular.
It's been interesting. Up until this point, it's felt like the long-haul carriers have had an advantage. There's been some premium in the market. People have been prepared to pay for premium seats, and that has insulated them. Can we now say, basically, that period has come to an end, Benny?
Well, it depends a little bit where you look. In the US, that still seems to be a strong theme. So if you talk to United, Delta, even American, who've struggled a little bit on the premium side, they all tell you that the premium is where the growth is, the front of the cabin. That's where people are still spending. Over here, it's a little bit more diverse. As I said, the low-cost segment remains very strong. The customer is opting for shorter routes. So that sort of creates a slightly more difficult picture for the carriers over here in terms of long haul. And they had that brief moment in the sun, pushing more capacity into Asia, but that seems to have disappeared again now.
Thanks very much, Benny. Thanks for bringing us the story. Benny Camel there on IAG. Let's check in on what's happening with Universal Music Group. They reported the stock is down really substantially today after they reported numbers late yesterday. Universal Music Group then reporting subscription revenue that actually beat analyst estimates because of price increases from streaming platforms and a busy music release schedule. But the EBIT numbers seem to miss estimates, and so that seems to be something weighing on the business.
Adidas had a pretty tough, was it yesterday or the day before? I've lost track this week. It seems to have been one of those weeks. That takes us into Puma, which this morning is down by, let's call it 5%, on the back of the numbers that we've seen from the company this morning. What you're basically getting here, I think, is probably, as one of the analysts puts it, a clean-up operation. This is a business that is kind of going through a little bit of a reset right now, and it'll be interesting to look forward to see what it delivers going further down the road. But the market this morning is reacting fairly negatively after what has been a very tough week for the footwear industry.
It has been. Let us talk about the macro a little bit. Coming up on the programme, the Bank of England keeps rates on hold. We will discuss the decision with Santander UK's chief economist, Victoria Clark. There's a lot of change from number 10 in terms of the economic landscape. Well, that change is intended, at least. What does all of that mean, and what does it add up to? What do we know so far? This is Bloomberg.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions: software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting, rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
This is the opening trade, 30 minutes into today's session, and it's turning out to be a pretty positive session, actually, for Europe. Took a little bit of time to get going, but we are participating in, for what it's worth, the rebound in technology stocks that we're seeing in the Asia session, because technology is the best performing sector here in Europe today. That is playing out well for the DAX, as you can see, and to some degree, the CAC 40 as well. The FTSE 100 not left behind. Basic resources not doing too badly, and that plays well for the FTSE. So we do see a bit of positivity then coming through from the Asia session ahead of what could be another positive day over in the US, Guy. A bit of a rebound here for tech stocks, but it's quite a divided story across Europe. We've got some real standout individual stocks moving quite a lot in either direction.
And we have a fresh record high on the Stock 600 this morning, which is also probably worth mentioning as well. In terms of the internals, it's kind of 2-to-1 basically in terms of the upside versus the downside. What is the standout story this morning, though, is the volume. You are getting, you've got a kind of end of the month factor and all that kind of stuff to throw into the market as well, but you have got quite a big chunky move, big rotation being signalled by what we're getting in terms of the volume numbers. Let's talk about Polish convenience stores to start with. Why not? Zabka is being bought by Couche-Tard. That stock is up very nicely. Now, West on the back of the numbers that we talked to the CEO a little bit earlier on, up very nicely on the back of the numbers. You want to talk about the tech trade? I give you ASML. It's up by 3.22%. When you get ASML moving that kind of distance, you are going to get some fairly decent upside on this market. So that's basically the narrative that we're getting: decent earnings, a bit of M&A, and a tech trade that is working. There are some negative stocks this morning. Believe you me, Universal Music, that miss that it's delivered is being punished and really punished. 22% to the downside. Hensoldt is out with a miss this morning. It is being punished. It's down by 3%. Taylor Wimpey has basically kind of said that the market's really flat in terms of the housing story here in the UK. We're not going to be able to do for you as much as we thought we were going to be able to do for you investors, and that's the reaction. Taylor Wimpey down by 5% on the back of that story. So a mixed market, Anna, but certainly a market that is being driven by tech and earnings this morning.
Yes.
The upside.
Yes, absolutely. Let's get an update on some of the stories that are driving the tech narrative this morning. Amazon shares jumped in late trade after reporting a 5th straight quarter of cloud revenue growth. The company also boosted its full-year capex forecast. The CEO, Andy Jassy, saying most of that spending will go towards AI. Meanwhile, Apple forecasts lower than expected revenue growth in the coming quarter, with the iPhone maker's outlook hit by supply shortages, which CEO Tim Cook warned will affect more of the company's products in the months ahead. President Donald Trump says the US-led Board of Peace has reached an agreement for Hamas to disarm. US and Board of Peace officials said details of the deal would have to be refined over the next couple of weeks, with progress expected in the coming month or two. The Bank of Japan kept its policy settings unchanged while signalling less caution about economic growth, pointing to confidence that the economy remains on track for further policy normalization after it lifted its benchmark rate last month to the highest since 1995. The decision came after Bloomberg learned that authorities intervened in the currency market overnight to support the yen. Guy.
Let's talk about what's been happening with the Bank of England. Yesterday we had a very nice special. We listened to the press conference. I actually thought it was quite interesting. So let's come back to it and talk a little bit more about what we've seen. The governor downplaying a future rate hike, this after the bank held rates steady. There were 3 dissents, though, to the upside. The committee said it remained alert to the inflationary impact of the ongoing conflict in the Middle East.
Please do not leave this room thinking that the Bank of England is edging towards a hike, because, frankly, there's nothing in what I said, and I think any of us have said along those lines. We took a decision today to leave bank rate unchanged, and that is the relevant conclusion.
Please don't leave this room thinking we're going to hike rates. I wonder if he actually meant to say that. That was a very strongly worded statement, a very strongly dovishly worded statement that came through from the governor. And I have to say, the front end moved aggressively on it. I can't remember, we were kind of down 2 or 3, 4 basis points kind of for the bulk of the press conference, and then we dropped quite sharply towards the back end of it. Santander's CIB UK chief economist is Victoria Clark and joins us around the table. What did you make of that?
I think he got carried away. I don't think the intention was to be quite as forceful in that message that, that we were edging towards rate hikes, because, of course, that remains a possibility, as their analysis yesterday showed. But I think, he was frustrated that perhaps that person hadn't quite understood that there's full optionality there. And I think that optionality was still the message he wanted to give. So I think, I think it probably gave too much of a dovish steer to the markets. And
so rate hikes are still possible here?
I think they are, yeah. I mean, looking at the Middle East crisis, they've clearly got a scenario which shows that if there's episodic Middle East energy shocks coming through, that you might need to raise hike rates in that scenario. But look, I mean, at the moment, they're not particularly keen to do that, but it's there, and it's certainly something that he shouldn't be discounting.
It's quite interesting, isn't it? Because another of the journalists made this point listening to the press conference yesterday, that the people on the table yesterday were all people who'd voted to keep rates on hold, but there were these 3 dissenters. Was there anything you heard from the dissenters that made you think, or indeed from those who held, was there anything that made you think we won't get 6-3 next time, we'll get more dissent, or we'll get more push for a hike next time? I wasn't sure, looking at the detail, whether that kind of messaging was there.
So I think that the dissenters are quite on their own at the moment. The one that would be closest to joining them would probably be Claire Lombardelli, one of the other deputy governors. But she said yesterday that, it wasn't a close call for her. And I think at the moment that the bank are really pretty happy with the way that the data's gone, that there's disinflation, that the signals on inflation expectations look good, that everything that they have to hand at the moment tells them that maybe that risk of second round inflation isn't that big. But the hawks are saying, well, that may be so now, but, this stuff comes later. Isn't this all a bit complacent?
And what's your assessment on second round effects then? Because he also added in that companies they hear from, they're not considering putting up prices anything more than just recouping costs. I mean, what do you think the second round effects will amount to?
I think that they will be quite contained this time, but I also have a lot of sympathy with the hawks who are saying, look, let's not get carried away. Those are risks there. It depends where inflation peaks out. I have inflation at the top, nearly 4%. The bank has it down at 3.2%, so that's quite a big difference. And the consequences of that for inflation expectations could be quite meaningful. So I think that there's risks there. I am pretty reassured by the data of the last month. I think that the fact we haven't seen a lot of pricing power in anything in recent inflation prints, the signals for the year ahead are good. But I also, I do have that sympathy there with the hawks that there are some risks, and it's too early to judge on those. So, look, to the question at the opening, I think the governor does need to keep all those options in play.
Presumably the labour market is the critical factor there?
Yes.
The labour market looks like it's got quite a lot of slack in it. What power does Labour have right now in terms of its ability to say, we want higher wages? Or are there other factors here, like government spending, the shifting of government spending, that is likely to maybe drive that inflation?
Yeah, so I think that the labour market is absolutely central, and I don't think this is an employees' labour market at the moment. You're just not seeing that in the surveys of pay setting, pay expectations. So that's the thing that would make you reassured on that, certainly. But look, we don't know precisely where the economy will be 6 months from now. I mean, there's some hints in data that there's a little bit of a bounce coming through. That's worth bearing in mind. I mean, look, my feeling is it's, you know, this isn't going to be a big thing. Second round effects aren't going to be a major thing this time. I don't have an enormous amount in the forecast, but
you get to 4%. You are way off target, though.
It is, and it is a temporary jump, and it is largely energy and food and those things. But when you get towards that point, those risks come front and centre. So the labour market's important. There's other things that are important too. I mean, obviously we're talking about private sector pay. There's a lot of public sector employees. Public sector pay settlements will be important too, and that will determine cash into households' pockets. So I think all these things need watching.
We've seen that as crucial, haven't we, that the public sector pay awards in the past. Let me ask you about things that the government is doing, and we have heard from Andy Burnham a story overnight that we've got saying that he's going to give mayors in England a share of the income tax generated in their regions as part of the new drive for more economic and political power to be pushed out of Whitehall, sort of, you know, devolving some of these powers out to the regions, out to city mayors. Now, we don't know a lot of detail, do we, about any of this right now, but I wonder what difference can that kind of policy make? Do you have any expectation? Has work been done on what difference this can make? Because he clearly is counting on this kind of devolution policy to move the dial.
Well, look, I mean, the details are absent, as you say, and it feels as if this, well, we know this is not for now or even for next year. This is, you know, into the future. So I think, you know, for the immediate, you know, Bank of England horizon, it's, you know, it's not something that for them to dwell on too much at this point. I think, you know, politically it's obviously very important. I mean, we know from polling how big the cost of living issue is, and, you know, across the UK, the kind of sense of inequity that may be there. So it's, you know, I think it's more probably about the political narrative than necessarily the economics.
OK, so that's about the politics. I mean, Victoria, and not to step too much into the politics, but just thinking about what change we can expect in the economy as a result of the politics. We've heard from Andy Burnham say a few times that he thinks that the model for the UK has been broken over the last 40 years, and he wants to change that, but we don't know a huge amount of what he wants to change it to. Are you anticipating that kind of, he has the latitude to make big changes to the UK's economic model, or will they just be tweaks?
I think it's difficult because every chancellor over recent years has had a very tough set of constraints. And I mean, I come back to this all the time, which is just the difficulty of the fiscal position. That constrains them very much on the kind of tax and spending levers. Obviously, you know, Rachel Reeves had a big go at regulation, deregulation. They've made some progress. There's other things to do there. I think it's very difficult. I think that you're more likely to see things that are perhaps more meaningful for the narrative, but in terms of where that shifts the, you know, the economic conditions, perhaps that's more incremental.
Nice to see you. Thanks for stopping by to see us.
Thank you.
24 hours for UK policy. Victoria Clark, Chief Economist, joining us from Santander's CIB UK. Coming up, we're going to turn to the geopolitical picture. The US President, Donald Trump, says Hamas will now disarm. More details to follow. We'll do that next. This is Bloomberg.
being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to the opening trade, 8:45 here in London this Friday morning. And we have actually a positive picture for the European equity markets, picking up on the positivity on technology. Media stocks underperforming, but that's sort of stock specific to Universal Media Group. Technology outperforming on the back of, well, today's more positive vibes, shall we say, around the tech trade.
Lots of positive vibes going into the weekend. Let's talk about what's happening with the geopolitical story. President Trump says his US-led border peace has reached a deal for Hamas to disarm. There are quite a lot of questions, though, about the extent of the agreement and when it will actually take effect. Let's try and find out some of the key questions that we need to be asking. Abu Omar, Bloomberg Horizons, the Middle East Africa anchor, joins us now. So the headline is Hamas is going to give up its arms. How does that actually happen? What do we know about the details of the deal?
Good morning, Guy. Not much is the short answer about this deal. We don't yet have a lot of clarity on what exactly it entails or how Hamas disarms. It's obviously filled with caveats given the history between Hamas and Israel. Now, two things that we know so far is that Hamas did come out through delegates in Al Jazeera and said that it will not disarm as long as Israel is in the Gaza Strip. And so Israel, from Benjamin Netanyahu's government, we haven't heard anything, but it isn't, we're not really clear on whether Israel will agree to pull out of Gaza unless Hamas disarms. And then when it comes to the details of this deal per se, Guy, what we know is that nothing is final, that the discussions can go on for a couple of more weeks, and that the implementation could take up to 350 days. So there's a lot of time for a margin of error to happen there. And then the Board of Peace obviously will include countries in the region. We don't know what shape or what form those countries will take in securing this deal. So in a nutshell, there's a lot of unknowns. President Trump did come out on a post and said that he will require the complete disarmament of Hamas, that this deal will pave the way for a Palestinian Authority to come in Gaza and govern it and give people a better future. And he said that it will be a step towards lasting peace and security. But then when it comes to the response from Israel, we still don't have that yet. We'll obviously follow it and see what the far-right part of that government decides to say about it. And then, as I said, Hamas will not agree unless Israel pulls out, and then it can decide whether to disarm or not.
And Abir, it's been a volatile week for oil prices, of course. We're watching, of course, everything to do with, well, the Red Sea now, but also the Strait of Hormuz, where I see reports that things are slowly picking up. I mean, this can be unwound again, but what's the state of play right now?
Yeah, slowly picking up is the right way to describe it, Anna. And again, the Gaza deal is in the midst of this Iran-U.S. tensions that are happening in the region, that are re-escalating. In the heart of all of this, of course, is the Strait of Hormuz, but not just the Strait of Hormuz, because we're also seeing the Red Sea getting affected or at risk of the Yemeni Houthis attacking it. But as you said, the movement in the Strait of Hormuz is slightly picking up. We reported yesterday that a Qatar LNG ship was able to make its way through the Strait of Hormuz. It was idling around for about 3 weeks, but was able to pass through with its lights turned on. So we're seeing slight movement there, obviously a fraction of what it was before the war, and then over the past 2 weeks since the escalations restarted. And then we also reported that Saudi ships, Anna, which have been able to make their way through the Red Sea, Saudi Arabia was resorting to the Red Sea as an ulterior pathway throughout the war, is now going through other pathways in Africa. So you're seeing 2 waterways at risk now, and we're still monitoring that movement. Again, a little bit more movement, but nothing compared to what it used to be.
Abir, thank you. Bloomberg's Abir Abu Omar. Now, the Spanish government has ordered troops to one of its 2 North African enclaves after a recent surge in illegal immigrants. The migration crisis risks a flare-up in tensions with leaders across Europe, with Italy's Prime Minister, Giorgia Meloni, threatening to impose travel restrictions on Spain. Let's bring in Bloomberg's chief Europe correspondent, Oliver Crook. Some of the pictures are quite dramatic here, Ollie. How did this enclave, well, remind us of the geography first, and how did this enclave become the centre, the latest centre for the border crisis?
So absolutely. So this is Ceuta, which is Ceuta, I should say, which is right off of the southern tip of Gibraltar, basically just across the border there, basically attached to Morocco. And this is actually only one of 2 areas of the European Union, both Spanish, that actually border the African continent. And what we've seen over the last week or so is a real increase in illegal crossings into the area by migrants that you can see there on those photos that are actually really very breathtaking, and that really exploded yesterday with effectively them completely losing control of the border. And this is obviously a major concern for the Spanish. We understand that they're going to deploy the military, the army, some of the civil guard, more in police to try to regain control of the area. And we're going to get a visit there, we also expect, from the Prime Minister, Pedro Sanchez, who will be going down to the region, we understand, a little bit later today. Now, this is significant, obviously, for the Spanish. This is something that they're now having to deal with. The reason that why this is happening now, according to the foreign minister, this all comes down to a court ruling in Spain, which effectively blocked the ability for the Spanish authorities to intercept and send back people immediately. So effectively now, if you do get to Spanish soil from the sea after this court ruling, you sort of suddenly come under all of these sort of protections for human rights and effectively cannot be sent back, which is the reason, at least for now, that the foreign minister has given for the reason that they've seen this massive influx over the couple of days. So for the Spanish, #1 priority is going to be regain control of the border, try to figure out what to do with these people. But of course, it sparked some controversy within the European Union. We should say that this is not, the European continent. There is still a good deal of sea between this enclave of Spain and the rest of the continent. So it's really majorly an issue for the Spanish. But of course, this is turning into a political conversation here in Europe.
The Spanish have taken a very different approach to immigration to the rest of Europe, you could argue. And these pictures have been flashed across Europe. They are everywhere, as far as I can tell. You've seen the Italian reaction. Meloni is clearly not happy. What else are we hearing? Is there going to be a change in the kind of the free movement principle that underpins the European Union as a result of this?
Yeah, so what's really interesting here, guys, that obviously you have the socialists from Spain, Pedro Sanchez, and then the right-wing government of Giorgia Meloni that really came into power in a very anti-immigration sort of platform. The Spanish, as you mentioned there, on the other hand, have been very welcoming and trying to increase the numbers of immigrants within Spain, and they've touted that this actually has been a very massive economic success for Spain, and you've seen it in the numbers. They're trying to mostly attract people from Latin America. That being said, the largest proportion within Spain are actually from Morocco, but of course this turns into the domestic classic debate internally here within Europe, where you basically have the Italians saying that this is the massive problem, this is sort of the migration crisis that we're talking about, and you have Meloni coming out on Twitter saying that the images coming from Ceuta demonstrate the uncontrollable illegal immigration poses the real threat to the security of European borders. We are prepared to take extraordinary measures to defend our borders and ensure safety for our citizens, including the suspension of the Schengen Agreement with Spain. Now, it's not very clear what she's referring to here, so effectively what European nations can do is they can kind of retake control of their borders really at any time and basically impose border checks. This happens very, very routinely. You have the Germans do it, the French do it. The French have basically the ability to do with every bordering country until October because of the concerns that they have over extremism. That is not something terribly new. What it seems like she is trying to imply is that somehow Schengen would get together and basically put Spain on pause. Not really clear if that's something that she would be able to do or there really is any precedent for. But obviously this is a moment for Meloni to sort of score some political points. Obviously this doesn't really pose an imminent threat in terms of immigrants to Italy. It does cause, however, Guy, a really big problem for the Spanish, particularly with this court ruling, to figure out how they're going to deal with these thousands of people in the next weeks and months.
Ollie, thank you very much indeed. Oliver Crook, our chief Europe correspondent, updating us on the immigration story. Let's talk about another challenge that Europe faces right now, and a big one. A group of scientists now warning that the risk of extreme fires is growing. The climate is warming, seems to be the sense, and you are going to, no more normal summers. You're going to see a lot of extreme weather, and that seems to be the narrative that is emerging very, very quickly. The World Weather Attribution Group says climate change is making fires twice as likely in France, and get this, 20 times as likely in Spain. The alert comes after flames consumed obviously hundreds of square miles near Bordeaux and Madrid over the last few days. Joe Wirtz is our climate reporter and joins us now. For context, how extreme is what we're seeing in places like Spain and France right now relative to recent history?
Yeah, this is really a new era of wildfires. We're seeing intense, fast-moving mega fires. In some cases, these are fires that are so intense they're warping the weather around them, creating their own weather systems. These are firestorms, dangerous, extreme fire behavior where the fire's moving and spreading rapidly. These firestorms create these powerful downdrafts that can spread the flames further and also hamper the response. Right now, we're seeing strong winds in Greece and Crete that both spreads the flames, fans the flames, and hampers the wildfire fighting effort. You can't take up planes or helicopters or do these aerial drops that we've seen. It's really hard to do when the winds are gusting this strong.
And the climate is having another impact on our ability to create energy, and that is around river levels.
Yes.
So the heat has seen water levels drop in the Danube and the Rhine, and that means in some parts of Europe, that creates problems for generating electricity from some sources. Run us through how significant that is.
Sure, yeah, we've seen record low river levels in and critically low levels in the Rhine. Hungary has had to take emergency measures to shore up its only nuclear plant there. It uses these rivers for cooling, and the river levels drop too low. It threatens that cooling supply. They've had to roll out these special floating pumps to secure the water that they need to keep those plants cool. It's also affected the amount of energy fuel that they can transport on the rivers. When the river levels get low, you can't move as much cargo on those ships, and so we've seen a real bottleneck of shipping through those rivers there.
Joe, thank you very much. Bloomberg climate reporter Joe Wirtz bringing us ahead of the weekend. There we go, some sobering messages.
You'd be delighted to know the football starts again this weekend.
Excellent, good.
Just because obviously the World Cup wasn't enough.
Yes, we need more football in our lives.
Okay, that's what's happening this weekend. What's happening next is The Pulse. I will leave you in the capable hands of Francine Lacroix. Enjoy the weekend. This is Bloomberg.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
A global rally in tech stocks gather momentum as South Korean equities jump by the most on record. Now, Asians' gains follow the biggest rally in Wall Street chip stocks in more than a year. Amazon jumps on strong earnings, but Apple falls on supply shortages. Plus, President Trump says the U.S.-led Board of Peace has reached a deal for Hamas to disarm, but questions remain over the extent of the agreement. So we've made it to Happy Friday. Friday, everyone. It's been a long week because we've had a lot of earnings. There's been quite a lot going on. Also on treasuries, I know we're following South Korea very, very closely because of the volatility that we saw there in certain asset classes. Now, we've seen a global rebound in chip makers carrying into Friday. That is giving a little bit of a lift to stocks to end a month that saw a steep G rating in this year's most popular trade on a positive note. I'm, of course, speaking about AI, and then we'll talk about the Fed and Kevin Warsh and maybe concerns over his credibility. And, of course, we look at the Middle East, Brent crude 87.78. So let's also look at the European markets map. If you look at the week that we've had, they've really tracked a lot of the U.S. moves, which is why we're seeing a positive note for the DAX, the CAC, and the FTSE. This is a picture for some of the big corporates we're watching for. So Amazon gaining in pre-market trading after reporting second quarter results that actually beat expectations on key metrics, including revenue at its Amazon Web Services business. Apple sliding after component shortages are weighing on the company's sales forecast, and pre-market Apple down 6.7%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. This, of course, we're in London, and this is the final day of a big week when we had a lot of earnings. Now, quarterly results from Amazon and Apple have capped off a big week of earnings. Apple tumbled more than 6% in extended trading, and supply shortages hurt its sales forecast. Meanwhile, Amazon jumped in late trading after reporting a fifth straight quarter of cloud revenue growth. For more, let's bring in Bloomberg's Neil Campling. Neil, there's a lot going on, and then in a second, we'll also speak to Yari Sten about the overall impact this has on the economy. But Amazon had some pretty strong revenue and capex. So how well positioned are they to get through the AI build out and build on that in the future?
I think, Fran, the main thing is that there's comfort for investors in that the investments that they're making are paying off through the growth rates you're seeing in AWS. So AWS grew 37% year on year, the fastest year-on-year growth rate in 5 years. So it's delivering on that side. Clearly, it comes at a cost in terms of a significant amount of capex. But to put it in context on one of the measures, if we look at capex to sales as a measure, then they actually are at the lowest end relative to the other hyperscalers. 26% of capex to sales is their ratio, and by comparison, Alphabet is at 50%, Meta is at 60%, and Oracle is at 97%. So in that respect, they have the balance sheet, if you like, or the investments to pay off with that growth coming through.
So, Neil, news of supply shortages are really hitting Apple's results as Tim Cook departs. So what does this tell us about how the firm is actually adapting to this AI era?
They've actually built up a lot of memory, which they're now actually having to use their internal inventory. That's going to impact in terms of pricing. It may impact volumes down the line. One of their suppliers, Qualcomm, had similar caution the previous evening. But I suppose for their positioning, they're waiting to see which of the AI models, if you like, win out in the battle. And then I suspect they will then sign a deal to lease, if you like, the capacity and that compute down the line. But in the meantime, clearly, us as consumers, I think, are likely to wear higher pricing of the products when Apple can get those to market. But it was a surprise to hear that the company with the greatest purchasing power of components in the world is struggling for supplies and is unable to get as much memory and components as it needs.
Neil, thank you so much. Neil Camping there with the very latest, of course, on AI. And it has been quite a week. Also, Ken Griffin's Citadel has swooped in to buy the bulk of AI stocks held by Situational Awareness, the hedge fund led by former OpenAI researcher, once described as the Nostradamus of AI. Now, Leopold Aschenberner started the hedge fund 2 years ago, despite having no investment experience. Now its assets have plunged over the course of this month after a sharp decline in AI-related stocks. It's a story that's one of our most read on the Bloomberg Terminal. Let's get straight to Nishan Kumar, Bloomberg's hedge fund reporter. Nishan, I mean, this is a fascinating story. It's a complicated one, but what actually happened here? How did, a fund go from 45 to 10 billion in a month?
So I would say in days, actually. So at the core of this is really the leverage story, the money that hedge funds borrow from banks to supercharge their returns. Banks were lending this fund like 4 to 5 times its capital. And this fund built a massive position in AI that became even larger with this leverage. Then the tech share started to slide and lenders wanted more collateral. And the fund had to sell into a falling market to meet those calls. And the rest, as we say, is history. One thing I would like to highlight here really is that despite all this thing, and this took just days, for all that, the fund lost about 67%. But it's still up 80% on the year. So that goes on to tell you how massive the rally in AI stocks has been this year.
So is this a one-off? I mean, we're also really interested because, of course, Citadel had to step in. But is this a one-off or is it a warning sign about something uglier brewing?
Well, it's what's separating the two things. One, prime brokers were already differentiating on single sector concentration. Barclays, for example, turned the fund away on exactly that. Two, the fund is still standing and still one of the largest equity hedge funds in the world focused on AI. It still holds more than $5 billion worth of Anthropic stake. So this is really a leverage story more than a verdict on the AI trade, I would say.
So why did Citadel step in? What did Ken Griffin get out of it?
Well, I mean, Citadel ends up with stake in major AI companies at a price that was not on the table, just a week earlier. So that shows how powerful even these large multi-strats have become in the market. There is a very short list of firms that can absorb billions of dollars of stock in days. And calls went out to several of his peers, like Millennium looked at it. So did Gen Street, the powerful prop trading shops, which is also one of the investors in situational awareness. Citadel heard about it. They negotiated a deal. It got a discount and bought the portfolio. And it seems the AI trade is back up today.
Nishan, thanks so much. As ever, Nishan Kumar, there, our hedge fund reporter, on this very, very readable story to try and understand what's coming up next. Now, earlier this morning, the Bank of Japan held its policy rate steady after officials took the rare step of wading back into the currency market with apparent help from the U.S. Here in Europe, the BOE kept UK interest rates steady, with Governor Andrew Bailey insisting his committee is not getting close to a hike. Well, with us this morning, Yari Sten, Chief European Economist at Goldman Sachs. Yari, as always, thank you so much for joining us. There's just a lot of data to get through with central banks that are going in very different positions. I mean, let's start with Japan and just in general what we're seeing in Asia. Is this, where does this end up?
Yeah, we think it ends up with higher rates in Japan. I think that's pretty clear. We didn't get an awful lot of news, I would say, overnight. Yeah. There was emphasis that there's upside risk to inflation, but I think there's also a little bit of caution not to overdo the speed of the rate hikes, because you want to make sure that demand can recover and you can get back to 2% sustainably. And so we think the BOJ is still on a semi-annual hiking pace. We expect the next one early 27, another one mid-27. Of course, this can shift around depending what happens with energy prices, but we think it's a pretty sort of inline, steady pace type of message.
Yeah, what do you make of the Fed? I mean, this was the big one where you saw Kevin Warsh. I mean, people are now saying, well, maybe he's not as credible as we thought, and I don't know whether there's, this is a correction course or whether it was on purpose, whether it was just like teething problems.
I think the main thing is very little guidance. So no hike, no guidance, no change to the statement. I think that was the broad takeaway, that we are in a different era now of Fed communication where you get much less guidance coming into the meetings. There's sort of, bigger surprises on the day, more information revealed through the decisions. That said, we think he did lean dovish on some of the things he did say. That wasn't an awful lot, but the things that he did say, we think leaned a little more dovish. For example, he downplayed some of the inflation pressures from AI. He mentioned a couple of times that the market is actually doing some of the tightening for the Fed. And so, yeah, we read all of this as there not being urgency for them to raise rates. Now, what happens in the end obviously depends on what happens with inflation. And here we have a more dovish view. We think that inflation is being propped up by a number of things that are more likely to drop out in coming months, including still pass-through from the tariffs, some effects from AI, some energy pass-through, and so on. And so we have them on hold through the rest of the year.
So, but is there a danger that actually if they're too slow, then they'll have to hike by 50, which is quite a lot?
I'm not sure I would worry about that so much. I mean, again, it depends what happens with energy prices. We obviously have lots of risks still out there. But when we look at wage growth, for example, when we look at the labor market, when we look at underlying inflation dynamics in the US, it looks more benign than concerning to us. And of course, rates are still restrictive in the US. And as a result of that, we don't think there's an awful lot of urgency.
Yeah, what's your take on the Bank of England? So I was in the press conference, then I had an interview with Governor Bailey, and he was really pushing back. I mean, it was almost like he was at making sure that nothing was being priced in the market.
Yeah, I mean, at first sight, the vote split was more hawkish, so most people had not expected Catherine Mann to dissent. But then the rest of it, we think, was more dovish. I mean, they emphasized a few times that the underlying inflation trend has been softer in the UK. I mean, we very much agree with that, but I think the way they emphasized it, it also turned up in the inflation projections, of course, that were lowered. He then, pushed back against the idea that the Bank of England is getting ready to hike. I think he said pretty clearly that the sort of modal view is for rates to be unchanged. And then I also thought in some of the paragraphs, for example, Lombardelli kind of indicated that the decision was not close for her. There had been some questions about her maybe shifting. And then Dave Ramsden talked about, yes, potentially having to hike if there are upward pressures, but he also talked about potentially having to cut. So we thought that the broader communication was on the dovish side and consistent with the idea that they're not hiking. And our forecast continues to be that they're on hold.
But Jari, how difficult or how complicated it is for the Bank of England to also deal with the fiscal? I mean, we're going to have a big budget event, right, at some point in the fall because of the new government. And this is something that, we know from the Bank of England governor that he met with the Chancellor, but of course he wouldn't give us any indication of what they talked about. Yeah. I mean, could that complicate things significantly for them?
It might. I mean, obviously, for now, all they can do is wait. So there's a lot of time left. We don't, a lot of sort of moving pieces in the fiscal story, and they will obviously see what is announced, then kind of run the numbers and then respond to it. The risk ultimately is probably in the direction of more spending and slightly higher deficits. So the way we think about it is that this is something that could support demand more than expected over the next year or two. But I think the hurdle for that to push the bank into hiking, we actually think is pretty high, because if you were to deliver more spending as part of the budget, gilt yields would probably also rise. They wouldn't probably like that. And so you would already get a tightening of financial conditions, and for the bank then to hike on top doesn't seem all that plausible to me. So I could see how it could push back the eventual cuts. So we do actually think that next year the bank is going to resume the cuts. So that could get pushed back. But I think the hikes are really much more related to the energy risks, second round effects on inflation. And so far, we're not seeing any of that.
Yeah, I mean, it was striking for me this week that actually the difference between the German, and bonds and actually gilts was quite watchable. I mean, you kind of saw, are gilts being punished because the UK is not getting a handle on inflation?
I mean, gilts have carried an excess risk premium, term premium for some time, right? So when you just look at, even if you just look at 10-year yields, you see that the UK is carrying a much higher premium. Now, some of that is probably related to remaining inflation uncertainties, also the bank having restrictive rates relative to the ECB, so that's probably some of it. But there are also more worries around the fiscal situation, the pressures that the budget is under. We ultimately think in the near term this will probably remain. Certainly as we sort of run into the budget, we learn more about the burn and fiscal policies. But ultimately that risk premium in the UK relative to other countries like France, to us looks too high.
Because of the French elections, or just because of the situation in Europe?
Both. I mean, it's on both sides. I would say on the UK side, the sort of fiscal outlook, is challenging, but I don't think is as bad as the markets are pricing it, because potential growth, we think in the UK, for example, is higher than in Europe. There are also some positives that people don't talk so much about, like AI. The UK, I think, will be able to benefit from that quite a lot.
More than Europe?
Probably, yes. I mean, it's more services-oriented, has a strong innovation R&D base, life sciences. So I think there are a few things that should actually play in the UK's favor relative to a sort of a more traditional manufacturing base, like in Germany. But then also on the European side and the French side, there are obviously fiscal risks and concerns there. And so I think, relative to that, we think gilt sort of over the sort of next year or so should look more attractive.
Jari, what do you think the ECB does next? I mean, there's always these rumors that come up also about Christine Lagarde, whether she stays and she doesn't. I don't know whether that actually would be a market event.
I'm not so sure. I think that's a little bit of a distraction for me from the main issue, which is how much does the ECB need to raise rates to contain the inflation pressures? That, I think, is really the focus. I think it looks very likely that they will hike again in September. When we look at the renewed spike in energy prices, when we look at the resilience of growth, and then also the commentary. Again, Lagarde didn't say much last week, but there were a few hints here and there that... So I think September is very likely, unless something changes fundamentally. But beyond that, we're more skeptical that more rate hikes are really needed, because the incoming inflation data to us looks reasonably benign. You're not seeing pressures on the wage side, for example. And I think taking rates restrictive into the adverse energy shock, I think will not have a huge amount of support on the Governing Council unless something changes. And so our view is the hike in September to 2.5%, they keep a hawkish stance, but then wait and ultimately stop there. And so relative to what's priced, because we're pricing 2 more, that seems like quite a lot to me.
Okay, thank you so much, Yari, as ever, for joining us. Yari Stender, Chief Economist for Europe at Goldman Sachs. Now, coming up, President Trump says Hamas will disarm. More on the details of that next potential deal. This is Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
President Trump says his U.S.-led Board of Peace has reached a deal for Hamas to disarm, but there are questions about the extent of the agreement and when it will take effect. Now let's get more with Abir Abu Omar in Dubai. Abir, good morning. And what do we know about this deal?
Good morning, Francine. Not much is the short answer. What we know so far is that, as you have just mentioned, President Trump said that Hamas has agreed to disarm if Israel pulls out of the Gaza Strip. Hamas came out overnight telling Al Jazeera that it will only disarm, as a matter of fact, if Israel pulls out its troops. Now, we haven't heard back from Prime Minister Benjamin Netanyahu's government or whether that will actually happen, just bearing in mind that he has an election year ahead of him, and it will be quite questionable on his party, from his party, if he does not get a deal that actually is in the interest of Israel. This is what a lot of analysts are saying. But when it comes to this deal, or this potential deal, the exact details of it are not yet clear. What we understand from our sources is that it still needs a couple of weeks or so for the final details there to be finalized. It could take, Francine, up to 350 days to actually be implemented. So there's a lot of margin of error there to potentially happen. President Trump does say in his post that this will pave the way for a Palestinian government to rule the Gazan people and pave the way for a better future there. He also says that it paves the way for more security and peace in the Gaza Strip. Let's just bear in mind that this deal announcement, according to President Trump, is happening in the midst of a wider war that is taking place in the Middle East, of course, the Iran-US war. And so for President Trump, this is a small win, or this is what a lot of those political analysts are saying. He's in a desperate need for those wins, especially as the US-Iran war drags on in the region with no clear end in sight. So short answer, again, is we still don't have a lot of details on what exactly this deal entails. We have a little bit of opposition from Hamas on disarming. As a matter of fact, they only say that they will do that if Israel pulls out of the Strip. And if history proves a lesson, Francine, that will be a difficult feat to actually accomplish.
And Abir, it's been a volatile week for oil.
Yeah, so another thing that we're watching very closely, oil, it's roaming at around $88 on the barrel now. We're seeing Brent down today, but for the whole month, it's actually up about 20%. And that is obviously as these escalations in the Middle East continue to happen, albeit a little bit calmer today. Francine, we're watching two straits now. We're watching the Strait of Hormuz, but also Bab el-Mandab in the Red Sea that's been prone or has been at risk of those attacks by the Yemeni Houthis. We're actually reporting on stories that Saudi Arabia is having to reroute some ships through African routes. Francine, it's obviously been using the Red Sea throughout the course of this war as a secondary route to the Strait of Hormuz. In the Strait of Hormuz, movement is picking up only slightly. We reported yesterday that an LNG ship flagged to Qatar was able to make its way through the Strait of Hormuz for the first time in 3 weeks. So slight movement there, but nothing really compared to the levels that those shipments were at pre-war.
Abir, thanks so much. Abir Abu Ammar there in Dubai. Now, the Spanish government has ordered troops to one of its two North African enclaves after a recent surge in illegal immigrants. Now, the migration crisis risks a flare-up in tensions with Europe across Europe, with Italy's Prime Minister Giorgia Meloni threatening to impose travel restrictions on Spain. Let's bring in Oliver Crook, our chief Europe correspondent. Ollie, how did the enclave find itself at the center of this real border crisis?
Yeah, Francine, really very interesting. So this part of Spanish territory, which is effectively attached to Morocco, just across the Strait of Gibraltar, Ceuta is where this is all happening and has been really developing over the last week, where you've had a surge of immigrants coming in illegally, swimming, climbing over the fence, and effectively, as you saw from those very dramatic pictures there, Francine, we should say a number of people have died in the attempt to do this, have basically totally lost control of the border, and there are thousands of people now, they don't have a really precise figure, that have streamed into this sovereign Spanish territory. This obviously is a massive concern for the Spanish government. We understand that Prime Minister Pedro Sanchez will go down to Ceuta today in order to visit and to inspect the situation. They will deploy the military, the civil guard, additional police forces, and their number one priority right now is to try to retake control of the border. And then they have a much bigger question, which is how to deal with this influx of thousands of people and where to send them. And the reason, Francine, that this is happening now, at least according to the foreign minister, is a court ruling that we got out of Spain over the last couple of days, which effectively barred Spanish authorities from blocking people from coming and sending them back on humanitarian concerns and those sorts of things. So as a consequence of that, now if you cross into Spain from the sea and you manage to end up on that territory, you get a lot more protections than had historically been the case, which is why this is now happening. This, of course, is causing some issues for Spain, some broader issues across Europe.
Yeah, I mean, the pictures are pretty incredible. I think 50,000 migrants, according to press reports, entered that Spanish enclave. So what kind of consequences could we see in European politics as a result?
Yeah, well, we're already hearing the sort of rhetoric. You know, obviously the context for this is that you have a socialist Prime Minister, Pedro Sanchez, who has been very pro-immigration. He's been trying to actually attract people mostly from Latin America, but actually in the end, most of them that go into Spain are actually from Morocco. And Giorgia Meloni, who was obviously on the right wing, was elected on a very anti-immigrant platform, now taking to Twitter and talking about potentially suspending Spain from Schengen. Now, it's not clear exactly what she means. There is prerogative for every individual nation within Schengen to basically instill border checks on their own borders. This happens fairly routinely. The Italians do it, the French do it, the Germans do it. It happens all over the place. But really, I think it's for Meloni a place for her to win some political points. Obviously, with those pictures, which are very dramatic, are going to sort of instigate a lot of anger among the far right around Europe. So really, Meloni is sort of an opportunity there for her to sort of potentially grandstand a little bit on that, though it does not pose a direct or immediate threat. We should still say this is still several miles off of the European continent.
Ollie, thanks so much. Oliver Crook there, our Chief Europe Correspondent. Coming up, an earnings beat for Clariant. We'll speak to the Chief Executive shortly. This is Bloomberg.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
The global economic playbook is being rewritten and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. A global rally in tech stocks gather momentum as South Korean equities jump by the most on record. Asia's gains follow the biggest rally in Wall Street chip stocks in more than a year. Amazon jumps on strong earnings. Apple falls on supply shortages. Plus, President Trump says the U.S.-led Board of Peace has reached a deal for Hamas to disarm, but questions remain over the extent of an aiming agreement. Now, Swiss chemical company Clariant has beaten profit expectations for the second quarter. Guidance for flat sales in 2026 remain unchanged as the company navigates a challenging geopolitical and economic backdrop. Well, we're delighted to be joined by Conrad Kaiser, the Clariant chief executive. Thank you for joining us this morning. When you look at the backdrop for a lot of the chemical companies, it hasn't changed. I know you've had a good, sound results. The Strait of Hormuz is still closed. So how much do you worry about costs going up in the next couple of quarters?
Yeah, what we see, good morning, Francine, regarding the Strait of Hormuz is we now are expecting a prolonged period of turmoil. The strait is not fully open yet, as you're well aware. What is different from a few months ago is that industry experts were expecting very high oil prices, $150 per barrel or even higher. That has not materialized. So global oil and gas markets have proven to be much more resilient than people thought. So we are expecting prolonged turmoil in the Strait of Hormuz. But in terms of impact on oil and gas prices, we basically no longer have scenarios with oil pricing well above $100 per barrel. We are seeing, though, continued elevated prices in downstream products from refineries, from crackers. Keep in mind, Strait of Hormuz, not only 20% of global oil and gas export, but also when you look at base chemicals, petrochemicals, roughly 20% of global production came from the Middle East, and there is not that resilience, that spare capacity in those markets.
But give us a sense of how much energy prices, but also shipping and logistics costs have impacted you.
Yeah, they have obviously impacted us, but what is very positive is that we have been able to more than price through year to date the impact of increased raw materials, increased energy, increased freight prices. If you look at it in the quarter, we saw actually elevated raw material costs, 7.4% compared to the same quarter last year, but we have actually fully priced that through to our customers. We are truly specialty chemicals. We are generating significant value to our customers, and it allows us to pass on these raw material cost inflation.
There's also extra tariffs that we heard from the U.S. last week. I think Switzerland is now 12.5% compared to Europe at 10%. First of all, is that frustrating, being a Swiss company? And again, what kind of impact would it have on your return longer, from here until the end of the year?
Yeah, the impact is very modest because we have actually 68 sites globally. We typically produce in a region for a region. It is somewhat surprising that we're facing tariffs in the context of forced labor. I mean, there obviously is no forced labor, not in any of our sites, but also not in our supply chain. The difference between the 12.5% is that apparently the judgment of the United States is that Switzerland is not enforcing enough these forced labor law in its imports. I can assure you that both Clariant as well as our peers here in Switzerland were obviously free of forced labor.
But I mean, does it again? Is a change from 10 to 12.5% impactful? Regardless on whether there's a basis for it. It means that there's a higher franc to contend with. It just how much does it complicate it? That 2.5%.
Sure. Yeah, well, for Clariant, it is not material. We have basically 68 sites, manufacturing sites globally. Only one of them is in Switzerland. For some colleagues here in Switzerland who have their manufacturing predominantly in Switzerland, this is obviously a bigger impact, but for us, it's not material.
So yesterday, there was a big ruling, of course, in your favor. What does that mean going forward? Does it make you're expecting also other rulings that you're waiting for? Are you more positive on the outcomes for those results coming?
Yeah, a big step forward yesterday. The courts in the Netherlands, actually a very positive ruling for us. The claim from Shell, more than €1 billion, has been dismissed on all aspects in the Dutch court. This is actually a very positive development for us. It related to a legacy topic, an ethylene cartel. It's very positive that the judge in the Netherlands has assessed that there had not been an impact by the cartel behavior on ethylene pricing.
I mean, your share price flew yesterday. Are you worried that it makes you more of a takeover target? It must be great relief, but how does it change, the proposition of Clariant going forward?
Yeah, it is very positive to see the reaction yesterday, the share price up 16%. It basically tells the story that there was a significant overhang from these ethylene claims in our share price, which we have said all along. And we're very glad to see that actually moving out now.
And so you don't think it makes you more of a takeover target now that the overhang is gone?
No, we think in terms of the whole situation with the overhang from ethylene on our share price, it has never impacted us, neither from an operational point of view. We always basically had very strong liquidity. We basically have a strong investment grade. It never has impacted the company, neither operationally nor from a strategic perspective. We've always been able to do bolt-on M&A. It has not been constrained by this overhang in the share price from these ethylene claims.
Okay, thank you so much for spending a bit of time with us today. That was the Clariant Chief Executive, Conrad Keijzer. Now, France's Crédit Agricole and British lender NatWest posted results ahead of expectations for the second quarter. NatWest raised its guidance, citing its takeover of wealth manager Evelyn Partners, while Crédit Agricole reported a record results in its asset management arm and income growth in its French retail business. Let's bring in Philip Richards, senior analyst at Bloomberg Intelligence. Thank you for joining us. What actually have we learned from these two banking reports this morning?
Yeah, good morning. All week has been dominated by the investment banks and how strong the trading has been. And what we've seen today from more retail focus, corporate as well, but mainly retail focus, that these banks are actually doing very well as well. The revenue line is coming through very strongly. Credit risks are very low. So actually, it's not just investment bank focus; it's across the board in banking.
And so, through this earnings season so far, how is Europe doing compared to Wall Street?
Yeah, well, Overall, it's doing very well. I mean, if you look on revenues and cost of risk, so, almost every bank is beating. Essentially, in the bottom line, EPS, every bank has beaten consensus. So they're doing very strongly. How are they doing versus the US banks? I think it's a different story, because of the US are doing so well, particularly on the trading side. So if you look at equities trading or fixed income trading, then actually in both cases, the US banks are doing a lot better than the Europeans. So there they are losing share, and that's a concern.
Philip, thank you so much. Philip Richards, their senior analyst at Bloomberg Intelligence. Now, the Bank of England has kept UK interest rates steady at 3.75%, with Governor Andrew Bailey insisting his committee is not getting closer to a hike, despite 3 members voting for tighter policy. Well, I spoke to Governor Bailey about how policymakers are navigating uncertainty.
There are 2 things, I think, that shape my thinking, certainly. One is obviously is the one that's shrouded in so much uncertainty. It's where are these events in the Gulf going to go to? And then the second question is, for any sort of given set of events, how are they going to feed through into domestic inflation? Now, we start in a position where it's come in lower than we thought it would. We're below where we thought we would be if you go back to April. But you can't take too strong a message from that in terms of second round effects going forwards, because frankly, this is a very unprecedented situation.
Governor, if you look at market bets, they reduced bets on a hike in September. We're now at around 33% chance. Yeah. Are you content with that?
I think the market pricing is sort of sensible.
So that's where you would lean towards.
The reason I say that is because when we survey the market, what the market tells us is that their sort of, if you like, their central expectation is for no change. But then they say, yeah, but there's a risk on the upside. And you can see that built into market pricing. And I think that, as I said in the press conference earlier, I think that fits with the fact that we've got 3 scenarios. We've got less probability attached to any one of them, frankly, than we probably normally would. But the adverse scenario is further away from the centre than the lower scenario. And the adverse scenario basically is a scenario which says if this breakdown of the ceasefire continues as a permanent thing, then we're going to have higher energy prices, and that will have an effect.
But, Governor, we've also seen some new language, right? So the 6 members who held rates said the policy strategy could change if upside risks of inflation were to subside. So can you tell us a little bit more about that?
Yes. So I think if, however, we were in a position which we were when we started the meetings for this round, where the Memorandum of Understanding and the ceasefire was holding, and we had crude oil price, I think, briefly down to somewhere not much above $70 a barrel. It's a bit higher than it was before the conflict, but not a lot higher. Then, yes, I think we're looking at a different situation. Now, sadly, of course, that hasn't held.
But that's very unpredictable at the moment, or
yes.
Are you expecting? So it could flip. And what happens if it flips from one to the other?
Well, I think there's two things going on. So if we got into a situation where the ceasefire is in place again, I don't think it's unreasonable to think that when they come down as much, we'll see, but they come down again. But then the problem we've got is the sheer unpredictability of this, because this is what we've learned again in the last week, 2 weeks, 3 weeks.
Governor, your central projection shows unemployment peaking around 5.5% in 2027, a rate that we hadn't seen since 2015. A weaker labor market is helping, of course, to contain the second-round inflation. Yeah. But at what point does it cost in terms of jobs?
Well, I think we are seeing softness in the labour market. We are seeing something of an output gap opening up, and that is reflected in the labour market. So I think it's exactly consistent with what you say is in the projections. Obviously, we don't want to see that happening. And one of the things I would say is that we don't have a dual mandate, and I like our mandate. What our mandate has in it, though, is what we call trade-off language, which is we've had another negative supply shock. Pushes prices up, activity down. Our job is to return inflation to target, but that language, that trade-off language, gives us some flexibility as over what period we return it to. We obviously have to look very carefully at things like inflation expectations, but it is in our mandate, and I think we must use that where we think it's appropriate to.
You've met with the new Chancellor. Do you think your mandate could change under this Prime Minister?
I've had no discussions on that at all, so I don't think that's anything that we should speculate about. I've not had that discussion.
I know you don't like talking about fiscal policy, but what does the uncertainty of the budget in autumn mean for for the next couple of months?
Look, honestly, I don't go into this autumn in any different position than I normally do. I know there's going to be a budget towards the end of the autumn because that's the way the UK cycle works. And so we condition our monetary policy decisions on announced fiscal policy. We'll do the same again.
Well, that was the Bank of England Governor Andrew Bailey. Coming up, as FIFA vows to press ahead with controversial plans to seek private investments, we speak to former England international and Mercury 13 investor Eni Aluko. That's coming up shortly, and this is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
We've put a lot of measures in place in order to help the people with fast claims payments, with relocations, and simplification of the procedures. Obviously, the question will come, how much will this all cost? But this is far too early because, these have just happened. If you go back over the last 3-4 years, we have had many of these events, and all of these events, yes, have touched us, but have touched us in a way that we have always well managed and absorbed.
Well, that was Thomas Buberl, the AXA chief executive, on the impact of wildfires in Europe. Now, a group of scientists has warned that climate change made the weather that fueled Europe's recent wildfires significantly more likely in France and Spain. Well, the alert from the World Weather Attribution Group comes as fire crews are tackling blazes in England and Greece. We can bring Joe Wirtz, our climate reporter. Joe, thank you for joining us. So how severe have the blazes been across Europe this summer?
They've been very severe. The fire season in Europe started early and ramped up quickly. The fires have been big and fast-moving. They have also erupted near major population centers, which is worrying people on the ground there. And the fire behavior has really changed this year. Firefighters on the ground reporting, they're seeing fire activity like they just have never seen before. And in some cases, this is so intense and so strong that these fires are actually warping the weather around them. These are creating, firestorms on the ground that just really haven't been seen in Europe before.
So, Joe, I mean, the heat, has seen water levels also in the Danube and some of the Rhine River drop to an unprecedented low. What kind of impact is this having?
these are our key transit hubs for commodities, grain, and energy. They're also used to cool nuclear plants. Hungary's had to take emergency measures to shore up pumping stations and emergency pumping stations to keep water flowing through its only nuclear reactor there. And it's led to limits on the amount of cargo that you can push in those rivers and real navigation problems because the levels are getting so low.
Joe, it's such an important story. Thank you so much for joining us.
Thank
and
you.
Of course, we'll push this out on social media. Our climate reporter, Joe Wirtz. Now, FIFA says it will proceed with a consultation on its controversial plans to bring private investments into the World Cup and other football tournaments. Well, Europe's football governing body, UEFA, says its members will boycott all FIFA tournaments, while federations for Asia and North America have also signaled their opposition to the proposal. Well, I'm very delighted to be joined by Eni Aluko, investor in Mercury 13, former England international football player. She's also on the CAF Women's Task Force. Eni, such a great pleasure, first of all, to have you here. I mean, this UEFA-FIFA standoff is a big one. If this continues, it's likely that women's events will be the first real testing battleground for it. I mean, how do you feel about that? Does it prove the importance of the women's game, or does it just bring unwanted pressure?
Well, yeah, I think the women's game is an integral part of global football now, whether that's the World Cup or the European Championship. So that includes UEFA. But I think UEFA's stance, really shows the lack of consultation, the diametrically opposed positions for UEFA and for FIFA, and the fact that Infantino seems to be doing things and making decisions without the consultation of major member associations like UEFA. And frankly, I think that once UEFA's not on board, the value of the World Cup diminishes anyway. Out of the last 4 teams at the World Cup, 3 were European. So I think UEFA's protest means that these proposals cannot go forward, unfortunately.
I mean, did you have concerns from the start? What kind of impact does this have on competitions if the Infantino plan, if we're to call it that, goes through?
Well, look, I think the privatization and commercialization of football has been happening for a long time. And the proposal in of itself to sell the World Cup to private investors, I think is a continuation of what we've already seen. I think where there's a big problem is the affiliation with politics and the fact that it's, Trump's associates that might benefit, who might be the private investors. That's where I think the integrity of football becomes questioned. There are rules around fit and proper persons test. There's rules around who can own in football. And I think that's where, you really question the integrity of the sport. Fans are becoming much more isolated from any of the decisions that FIFA are making. I think from a PR perspective, FIFA should really start thinking about the fans. If they came out and said, right, we're going to generate $4 billion from this commercial proposal and we can subsidize tickets for the next World Cup, it gets received in a much different way because you're centering the fans. I think what we're having is a conversation about a billionaire class taking over football, and the stakeholder fans and some of the member associations get completely isolated.
I mean, if you look at the commercialization, do you worry about, is it ticket prices we should worry about the how often these competitions, like there's a whole ecosystem that we have now that could potentially change?
Well, if you look at the last World Cup, fans were outpriced. I was there in the US, and a lot of people could not afford to even go to the games. So that needs to be taken into consideration. Whenever there is a proposal to generate more money, how does that impact the fans who are the center of the sport, right? So I would like to see that, for the next World Cup, okay, generate money commercially, that's fine. That's what football has done for many, many years. But how can that benefit the fan? How can that subsidize tickets for the fans so that everybody becomes more on board and there's more of a collective approach, rather than it feels as if it's benefiting, the sort of billionaire class and politicians, and it feels very isolated. I think that's where Infantino has gone wrong. There has to be more of a consultation around the fans, but also around, member associations, important member associations like UEFA.
Do you think CAF, which is the African UEFA, will vote the same or have similar feelings to UEFA?
Well, I think the proposal is that, if the member associations get on board, 40 million will be distributed from this proposed plan. 40 million to African member associations is very, very important for the sort of development of football and the infrastructure. 40 million to the African member associations is very different to 40 million to UEFA. So it's all relative, and so I'm not surprised to see CAF hold back a little bit and say, actually, let's have a conversation, because I think the money that's proposed actually could really be beneficial for African nations. But ultimately, if UEFA are not on board, the World Cup diminishes anyway. I think the value, and so I would like to see a different iteration of this idea. All member associations get back to the table, come up with a different proposal that feels a lot more collective in its approach.
Do you think FIFA and Gianni Infantino will back down?
I think they have to. I think if UEFA have taken such a strong stance, and as I said, UEFA are very, very important to the overall value and position of global football. I think they have to change. The proposal has to change, and they have to sort of come together and come up with a different proposal. I would like to see the fans considered much more in whatever the new proposal is. We saw a few years ago with the Super League proposals, it got widely rejected, same sort of outrage. But there was a different iteration that came with the Champions League a few years later. Champions League changed, then the Club World Cup changed. So I think from this position, you can come up with something better that feels more of a collective approach. And I hope that, the fan as a stakeholder is considered within that.
And you've been such an icon, right, on this field, but also what you've done for women's sports and investing in it. How do you see, where's the money coming from now? I mean, away from what FIFA is trying to do you see more, big sports investments in women specifically coming from the US or Asia, or how's that dynamic changing?
Well, you mentioned, obviously, that I'm part of Mercury 13, a global women's investment group, multi-club investment group. Private investment is coming into the women's game, which is very, very exciting. It hasn't always been that way. Lots of multi-club investment, lots of new investors coming into the sport, lots of brands, commercial activity. So it's in a really healthy place. It's very exciting to be part of. Great leagues like the US, obviously the WSL in the UK are really growing rapidly. There's development in Africa as well. The women's AFCON is currently playing now. So there's lots of growth on the women's side that is now part of the wider, football ecosystem globally as well.
I mean, I know there's concerns about, the players just playing too many games and risking injury. If you look at the ecosystem, what's your main concern about how we're playing football right now?
Yeah, that always has to be a consideration. The player welfare, the amount of load on players with the new competitions coming in, that has to always be balanced with, the desire to generate more revenue and build more competition. Women's World Cup is next year, which is going to be very exciting in Brazil. But the players always have to, we always have to keep an eye on the fact that the players play so many games now, particularly players at the highest level who are playing in the Champions League as well.
I mean, a couple of years ago, everyone was talking about the Super League, and there was a real uproar from fans. Do you think something like that could ever come back in a different iteration?
No, I don't think so. I think the idea that sort of you can have breakaway leagues, I just don't think it works within an ecosystem that's so historic. Football is such tradition. And so I think whenever there's new ideas, there has to be a collective approach. You cannot have, one president doing something over here and someone doing something over here. It has to be more of collective consultation. I think that's where Infantino has gone wrong on this occasion, lack of consultation. But it does allow you to come back to the table and have a different conversation and say, okay, how do we get to this outcome of more commercial revenue for the World Cup? And how does that benefit all of us, including the fans?
Thank you so much for coming on with us today. That was Eni Aluko, investor in Mercury 13, former England international football player, and a member of the CAF Women's Task Force. Up next, it's Bloomberg Brief, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Tech earnings diverge. Amazon results bolstering the AI investment narrative. Apple dips on disappointing guidance. Stock futures gain as South Korean chip makers rebound and European equities head for an all-time high. And the yen rallies on intervention just hours before the Bank of Japan decides to keep interest rates unchanged. Tech stocks surging across Asia. We have to get the latest details from Winnie Su in Hong Kong. Winnie.
Good morning, Vonnie. Well, happy Friday. What a significant rebound in Asia, especially with gains being led by South Korea's Kospi Index, which saw an unprecedented jump of 18% in a day. Now, that's being mainly led by SK Hynix and Samsung Electronics, which both saw a surge by more than 25%. Overall, the sentiment is being boosted by the solid earnings from Amazon and Microsoft that reassured investors of the AI monetization, but also the authorities from South Korea stepping in to curb the volatility, as well as how traders pointed to the rescue by Citadel of situational awareness that is putting a floor to the recent sell-off driven by these leverage bets. Now, for the board, we take a look at the Japanese yen because, yes, we saw that big spike overnight driven by the authorities' intervention and also the U.S. rate check, but we did see these gains started to fade after the Bank of Japan kept rates steady with the Bank of Japan's Governor Ueda, in fact, striking a bit of a hawkish tone, still citing the upside risks of price outlook. However, it seems like at the moment, markets are demanding more.
It does, although, Winnie, you may not have seen this, but we're at 158 now, so a massive strengthening again just in the last few minutes. That is Winnie Su in Hong Kong. Now, let's get a look at what's happening in Europe. Over to Britain and Justina Lee.
Good morning, Vonnie. Now, in Europe, we don't often get to crow about our equity performance, but today is one of those days because the Stocks Europe 600, outperforming the world this month probably, and it's hit another all-time high, you know, rising 0.8% today. Now, of course, a lot of that is led by a lot of the losers from earlier this week, but we kind of have a rotation of that rotation with a lot of tech names rebounding strongly over the past 2 days. Now, when it comes to the bond market, you know, we have a slightly lower oil today, but interestingly, we just had some inflation figures from the euro area in general, and the core numbers slightly exceeded expectations. Also exceeding expectations are French CPI figures coming out today. And so we're seeing here the 2-year German bond yield rising 2 basis points. Now, on the other hand, if we flip the board here, we can see also on the short end bond yields in the UK, a completely different trend after the BOE decision yesterday. Now, it was also a hold just like the Fed. We also got 3 dissenting rate hikes. But Andrew Bailey came out and told everyone, don't think that we're edging toward a hike. And you can see here that the market heard that message loud and clear, Bonnie.
Absolutely, a lot of messages coming to this market this week, Justina. And in fact, yesterday, even though we had a massive spike and a massive rebound in the SOX index, it was up more than 8%, we're still down on the week so far for the NASDAQ 100. Again, we'll see what happens today, but pointing very much to gains in today's session. Obviously, across the indices, we're seeing the same thing, and it's a bleed across from the Asian session, but of course also the situational awareness situation. Let's look at yields, though, because market's still digesting that Fed outcome and, of course, everything that's happening globally as a result. The 2-year yield staying the same, and we have the longer end of the yield curve coming down just a couple of basis points, but we're still very elevated with the 10-year at 464.50 and the 30-year very close to that 520 mark that we hit earlier in the week. Not maybe getting unanchored, though. We are at least holding on to this pricing. Let's take a look at oil, because once again, we're down today for sure. We're down to 88 on Brent and 82 and change on WTI. At the same time, still up more than 20% this month. It's been a wild ride for this market this month. Let's get to some individual movers now. Over to London and Chloe Melly.
Good morning, Bonnie. We've got positive and a negative news coming out of those big tech earnings this morning. So we had Apple down after the component shortages really weighed on its sales guidance. Then on the other hand, Amazon has had this cloud computing revenue accelerating once again and reassuring investors around this AI spending. So 2 very different stories this morning there. Moving on to Coinbase, and the crypto exchange is down this morning after missing revenue expectations. It seems that it is really struggling with that weakness in the crypto market. So we're down more than 4%. And finally, let's go over to the Netherlands, where the world's biggest record label, Universal Music Group, is taking a major hit this morning, more than 22% after it reported a miss in subscription revenue. It seems that it's really struggling to hold on to this market share because of this rising competition from other record labels. And so we are seeing that really drive down the shares this morning.
Yeah, it's been a while, several months for Universal as well. Chloe, thank you so much. Chloe Melly there. She'll be back later in the hour. Also coming up this hour, we'll take a closer look at these moves in the yen and the US dollar with Jane Foley of Rabobank. Let's start with tech earnings, though. Amazon jumping double digits in pre-market trading thanks to robust AWS results. Supply shortages, though, taking a bite out of Apple shares. With us now with more is Bloomberg's Mark Bergen. So it's a 5th straight quarterly gain for AWS. Mark, what's Amazon doing right?
What it's doing right is it's growing its cloud business at a pretty impressive clip. I believe it was about 37% for the quarter. You know, the Amazon AWS has been the market leader in cloud for a very long time. The story that Andy Jassy, the CEO who ran that division for a long time, is telling investors is this is a repeat of when we built AWS. For a long time, Amazon was famously unprofitable. They were investing that money in this cloud business that soon became this much bigger growth engine than their e-commerce business. And he's sort of saying the same thing with this new version of AI and chips, and we're going to see a repeat. And certainly investors are buying that. We've seen that this morning, yesterday and this morning as well.
Yeah, why haven't they been up until now? Amazon has been lagging stock-wise, and yet it seems to have been doing very well, particularly in its cloud business for the last several quarters.
Yeah, I think obviously there's, they had a big impact around tariffs with their e-commerce business. I think the AI story in general for Amazon has not been a positive one. They were seen as sort of a late mover. They don't have the strategy in place that, say, Microsoft and Google or even Meta do as far as what their game plan is around large language models, around models around robotics and sort of the next generation. That still remains pretty unclear, I think, but they're clearly the biggest beneficiary in the cloud computing market.
Apple, Mark, it's definitely hurting, price hikes and so on. What should we expect from Apple for the next few months?
Yeah, it was pretty fascinating. Tim Cook described this as a 100-year flood, this memory chip shortage. I think this was an indication. We've certainly seen that from earlier results, and we've been reporting on that for our colleagues in Asia for some time. This is clearly the biggest indicator that this chip shortage is now having a major impact on the world's biggest company. So I think a lot of that was the sluggish sales forecast we saw, I think is now dependent on those supply chain issues.
What about for the consumer? Should we expect now extended wait times, and what does extended actually mean in this scenario?
Yeah, as far as I know, I don't think they've, Apple and Tim Cook said this was actually a sign of just increased demand for iPhones and iPads and their products. As far as I know, they didn't signal any extended wait time, but that's certainly a possibility.
All right, Mark Bergen, thank you so much. We'll see how these stocks trade today. Turning to Japan, the yen trading now at 159.10. It strengthened very suddenly just a few moments ago. Once again, we know there was intervention earlier. The Bank of Japan also holding its policy rate steady just hours after that, at least first intervention, with apparent help from the United States. Joining us now is Bloomberg's Ven Ram. Do we just get another round of intervention, Ven?
It doesn't look like, because it stopped at 159, but nevertheless, it's an important spike up that obviously will have the market sit up and take notice. Now, the Bank of Japan had a massive opportunity this morning, which I think they squandered, because, after yesterday's overnight intervention, they could have doubled down and said, look, we are going to put up rates, which would have completely caught the markets unawares, because no one was pricing a hike. If they had come out with their guns blazing and fired the next salvo by raising rates, that would have really propped up the yen like much better than what the intervention could have done. We've seen these repeated bouts of intervention that have failed to sustainably pull the yen up. So, and I think that, if they are found wanting in terms of monetary policy, no matter what they do on the currency front, it's not going to help the yen.
Why didn't you sound a little bit more hawkish? So it's been characterized as maybe a modestly hawkish BOJ meeting. But the plan, or at least the reporting coming into this, was that maybe they would up the cadence of any rate hikes beyond just one every 6 months that the market is used to.
Absolutely. I think that, he repeatedly said that, look, there is a threat that inflation could breach 2%. And in fact, if you see the inflation forecast for this fiscal year, it's 2.5% now. And they also think that the economy is going to go much better. And so for them not to be raising rates and keep the rates below neutral is inexplicable to bondholders, which is why you see that the bonds have repeatedly come under pressure. They've sold off. And if you look, currency swap the JGB yen holdings into the dollar, you will find that they are trading at a considerable price discount to treasuries. And that is why the markets want to hear a very strongly hawkish message, which they fail to hear.
Then I have to ask you about the situation, obviously in Korea, but in Asia more generally. How much has this to do with the situational awareness unwind, and how much is it just generally that positions have been flushed out?
I think that it's got to do with the latter thing that you mentioned. Positions have been flushed out. We saw that Korean market go down 20%, and it's come back up by a whole lot this morning, today. So I think that, this is all a positional flushing out of positions. But I think that the longer term questions remain here. The Korean market has been behaving more like a casino than a stock market actually behaves. So I think that, the risks are out there, and I think that the AA story has played out, and I think it's been overpriced, and I think there's more correction to come in the coming weeks and months.
Then, thank you so much. That is Bloomberg's Ven Ram in Dubai. Now to other top stories trending on the terminal this morning. South Korean stocks surging a record 18% in today's trading, largely driven by chip maker stocks, obviously, that had faced 3 days of massive sell-offs. The rebound was fueled by bullish reports on the AI build-out overseas and regulatory support from the South Korean government, among other things. Anthropic says its AI models breached 3 outside organizations during cybersecurity tests that went wrong. 3 Claude models accessed the internet and hacked real-world systems after a testing environment was mistakenly left connected. President Trump says Hamas has agreed to disarm as part of an agreement with the U.S.-led Board of Peace. Questions, though, remain about the extent of the accord. Officials say details will be refined over the next couple of weeks. Hamas officials confirmed they struck a deal that includes provisions on their weapons. Coming up, we'll take a closer look into Ken Griffin's rescue of situational awareness amid the latest AI sell-off. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Leopold Aschenbrenner's hedge fund, Situational Awareness, slumped to about $10 billion in total assets after Citadel's Ken Griffin bought most of its public stock bets. That's down from $45 billion for the fund at the start of the month. Well, for more on this really crazy story, Bloomberg's Nishant Kumar joins us now. So what actually happened here? How does a fund, well, we know partially how a fund goes from $45 billion to $10 billion in a month, but give us the details of what happened here.
Yeah, so this story is really about borrowed money and a lot of it, and how it supercharged a very crowded, hot trade the world has ever seen. Banks were all lending into this, some offering 4 to 5 times the fund's own capital in terms of leverage. So what was already a big bet on AI got multiplied several times because of this leverage. Then the tech trade turned. And some of the banks, they were so willing to support the fund on the way up, decided that, they want to protect themselves. They want more collateral. So they asked the hedge fund for more collateral. And to find it, Situational Awareness had to start selling into price which were already falling. So we have seen this story repeat time and again. What stands out really here to me is how quickly it happened. We are talking about days. And even after all that, July was down 67% for the fund, but the fund is still up 80% year to date. That shows how ferocious this AI rally has been.
Why did Citadel step in? What did Ken Griffin get out of it? And, were there no other positions they could have sold in order to hold on to their assets?
Well, everyone loves a discount, isn't it? If anything is on sale, we all rush to buy it at the right price. But it also reflects how only a handful of firms in today's world can take on like billions of dollars of stocks in one single transaction. And a few of them got calls this week. So Millennium had a look. Jane Street, which is an investor in situational awareness itself, they also had a look. Citadel got a wind of it, and they negotiated a discount and ultimately bought their positions.
Negotiating through the night, according to your reporting. Nishant, you have to wonder what it says about the AI trade that maybe some of these funds passed, like Millennium and Jane Street. Was this a one-off, or is it a warning sign about AI exposure across the market?
I mean, it's hard to say that, but I won't read it too much into whether it's a signal that shows how the AI story is going to unfold. The firm hasn't gone anywhere even now. It's still among the largest equity hedge funds right now. It still holds on to Anthropic bet, which is north of $5 billion. If anything, this is an old lesson resurfacing. While leverage on top of a very concentrated, crowded bets, and this is what it leads to. The AI thesis isn't really what was tested this week. It was the leverage behind that trade.
Nishant, I wonder if you'd seen the conspiracy theories that Citadel had put out a potential Fed rate hike story in order to actually cause this sell-off. That's a little bit of a conspiracy theory that's going around Twitter. Is there any truth to it?
I mean, it's hard to, as you said, it's conspiracy theory. So, as a journalist, it's hard to, unless, we write about it, it's hard to say. Social media is hot these days, and it becomes hotter whenever a story like this unfolds.
Exactly. It's in the ether, at least. Nishant, thank you so much. That is Nishant Kumar there, our hedge fund reporter. Coming up, a look at what else is making headlines in your front page news. This is Bloomberg.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC. Africa CDC is the leader in terms of public health in Africa.
From the world world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Medika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. The United States has led the world in building huge technology companies and attracting enormous capital, but Europe showing a strong desire to try and catch up. Here's more from the latest episode of Wall Street Week.
Growth has been slowing down for a long time in Europe, but we've ignored it. But now we cannot ignore it any longer. Now conditions have changed.
We need new tech champions in Europe.
The fact of the matter is 43 of the largest 50 companies in AI are US-based. Europe has one.
The quest for Europe to get into the mega tech game is one of the reasons it's now undertaking the biggest revision to its merger rules in over 20 years. And few people know more about the potential impacts for businesses and consumers than Fiona Scott Morton, a professor at the Yale School of Management and a former chief economist at the Antitrust Division of the U.S. Department of Justice.
There's been a lot of angst in Europe over growth and the ability of Europe to stay at the technological frontier. And we've had a couple of reports, the Letta report and most recently the Draghi report, that have really hammered on that and pointed out all the issues in Europe that are holding back Europe from more growth.
Scott Morton says the new guidelines, which were published in April and are now under review, aim to change that.
I think the complaint has been among some parties in Europe that the Commission is not favorable enough toward the mergers they would like to do. So this is explicitly laying out how do you come to us with a story for why your merger is really good, why your merger is going to increase innovation, something like that, and explicitly laying out what those factors would be and how you might go about showing them.
It's a big deal. It's a big deal because it's been 20 years since there was a revision of the guidelines, and it's a good exercise in showing the direction of where competition law is heading.
Ingrid Vandenbora is the head of Skadden Arp's European competition practice in Brussels. It's firms like hers that are navigating the changes on the front lines.
What the guidelines do is they set out also for the difficult deals, also for those that may not be so easily to get through. There's a couple of factors that are more developed. A, the Commission's going to look at efficiencies in a much more robust way. They call it the theory of benefit in the guidelines. So they're not only looking at what will the harm be to the economy of a transaction potentially, but also what will the benefits be. The second element is that they're going to look at markets on a dynamic way. The key term in the guidelines is dynamic competitive potential of a transaction. And so it's going to be forward-looking.
Beyond giving companies explicit leeway to argue for efficiencies or changes in the market to justify their mergers, the new guidelines specifically address the question of startups and provide ways for early investors to reap rewards for taking chances.
We all know that that's what startup companies need. When you invest, you need to know you have an exit route as well, and that's really what the guidelines are trying to do. So those are a couple areas where very concretely the guidelines set out some more robust frameworks for companies.
And you can watch the full episode of Wall Street Week tonight from 6 p.m. Eastern. Coming up, we're going to talk about this yen move, several moves in fact, with Jane Foley of Rabobank next.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Tech earnings diverge. Amazon results bolstering the AI investment narrative. Apple, though, giving disappointing guidance. Stock futures gain as South Korean chip makers rebound. European equities heading for an all-time high. And the yen rallies a couple of times today. Intervention in the early hours, then the Bank of Japan decides to keep interest rates unchanged. So let's take a look at these markets then. Even with what looks to be a nice rebound for the Nasdaq 100 today, it is the worst performer of the indices in July. So far, before today, it's still down 5.7% month to date, even after yesterday's nearly 3.5% gain. The SOX, by the way, yesterday, up more than 8%. And, I mean, just look at Korea today. The Kospi rallied 18%. What kind of bounce is that? It's literally unprecedented. It has never happened to see an index in such a major developed country rally that hard. Obviously, this is bleeding across to S&P futures and Russell 2000 futures as well. Let's take a look at yields. We're not seeing too much movement. A little bit lower at the longer end, but still holding on to the price that we moved to after the FOMC. So 465.51 and very close to 520 on the 30-year yield. Oil continues to show some respite. At the same time, we're up almost 20% this month nonetheless. We're just below $89 on Brent, just below $83 on WTI. And we have European gas futures rallying once again. We're up to 59.36 now per megawatt hour. All right, let's get to some stocks to watch. Here's Chloe Mele in London.
Good morning, Bonnie. Let's start with big tech this morning. We had Apple down this morning, more than 7%, after giving quite disappointing sales guidance because it's been really dealing with those component shortages, those supply chain disruptions. And then on the other hand, we have a much more positive story coming from Amazon with the cloud computing business accelerating once again and reassuring investors around this AI spending. And so we have those very two different stories in that big tech sector this morning. Moving on to the crypto exchange Coinbase, which is taking a bit of a hit this morning. We're down more than 4% after the revenue fell short of expectations. It seems that it's really dealing with this continued weakness in the crypto market. And so we're seeing that really drive down the shares this morning. And finally, Universal Music Group, the world's largest record label, is taking a major hit in the Netherlands this morning. We're down more than 24% after it missed expectations on a very key metric, which is subscription revenue. And so it's a company that's been having some trouble over the last year or so already. And so this print this morning has just really not helped its case. And so we're down quite a lot for Universal.
All right, Chloe, thank you so much. Chloe Melly there in London. Massive volatility for the yen today with an intervention earlier and then a BOJ decision to hold rates pat. We also got the news conference afterwards. Rabobank's Jane Foley writing, quote, a rate hike in October would be a first step towards a firmer yen, but for the dollar yen to hold below 160, the market may also have to price out Fed rate hikes this year. She joins us now. She's head of FX strategy at Rabobank. So, Jane, if we just take a look at the chart for the yen, it's been really incredible today and a very strange day, perhaps, for intervention. Most surprising to the market, which maybe is what authorities wanted. But we had the yen strengthen and then it reversed some of those declines. We're going to take a look at it now. As you can see, a massive strengthening there to about 158. Began to reverse those declines and then we got another sudden drop just less than a half hour ago. We were back down to 158.50 and again, the market is fighting that. We're at 159.56. What is going on today?
Well, the market, the market is clearly very nervous. I mean, will there be intervention? Did the US check prices yesterday? Certainly, at least one press reporter suggested that they may have done. Will that happen again? Now, I think really the timing of this is really quite clear. I mean, the Fed, for instance, a couple of days ago, had the result of pushing the dollar low. And that's because, of course, US short-term interest rates went down. And that provided really a perfect opportunity for the Ministry of Finance to come in and intervene because they haven't intervened since late May, despite the fact that dollar yen has been pushing higher. And of course, that was probably because why would they try and intervene in a period of dollar strength when the dollar was pushing higher? But of course, this week it started to go down. So that really did open up a window for them. But the crucial question is, can it sustain? Can dollar yen sustain, at 160 without pushing higher again? And many people in the market were looking at the Bank of Japan, hoping for something hawkish. I would say they were hawkish, but often in these circumstances with respect to the Bank of Japan, it's almost as if the market has made up its mind and the market, it seems, will only wants to see a faster pace of interest rate hikes. And that, of course, was not on offer today because it only hiked interest rates last month.
Yeah, exactly. Now, Ueda at the news conference sounded a little bit more hawkish than perhaps the market originally thought. What is his position on this? Is he waiting to see? Is he concerned about, overdoing things or about getting off the path so well trodden so quickly?
Well, I would say that Ueda has been hawkish for a very long time. If you read his Christmas Day speech, for instance, and in fact, if you go back the last couple of years, there's been a couple of themes there, and that's an aging population means a declining labour pool, and that is inherently hawkish. But of course, if we look back over the last, since October, there's been a number of sort of one-off shocks. You had the LP leadership election, then you had a new prime minister, and then you had a general election in February, and then you had the start of the war. And I think, to be fair to you could say, well, all of these events probably slowed down or the pace of interest rate hikes made them more cautious. And that's probably why they didn't hike for 6 months. Now, going forward, can they hike in October? I think they can. And if we look through at some of the rhetoric in today's statement, they're talking about inflation, core inflation, above 2% in the second half of the current fiscal year. They're talking, quite bullishly about inflation. If you look at wages, they think that there is that in place at that real good position where you can see wages continuing to be pushed higher. Yen weakness is part of the reasons for the inflationary pressures. Of course, higher oil prices, another reason too. But look at the strength of the Japanese economy. Yes, there's been a moderation because of oil, but there are some good factors in there too.
But this is just it, Jane. Didn't we learn this week that talk is cheap? And if hawkish commentary isn't followed by action, or at least the promise of action, or some kind of transparency, the market just won't accept the talk alone.
I think that's the rut that the Bank of Japan, have found itself in. Talk alone isn't enough. And the market, I think, is caught up really on two things. The first, it thinks that maybe the Bank of Japan is behind the curve. And last year we had US Treasury Secretary indicating just that. And the second is that the market is looking at what the Prime Minister is doing. Now, the market is quite fearful that the Prime Minister could be leaning on the Bank of Japan not to increase interest rates. So there is that fear that's that's been coming through. But also the Prime Minister, we know that she's an expansionary fiscal politician, and the market is quite fearful of what's going on in JGB yields, what's happening there, to what extent is that really impacting market sentiment too. So I think what the market needs to see is not just the hawkishness from the Bank of Japan and maybe that interest rate hike coming through in October rather than December, but I think it does need further reassurances on the fiscal front. There is a concern about JGB issuance. There is a concern about the balance sheet of the Bank of Japan. That's come down about 15% since 2024. And I think that really has changed the constitution of who owns JGBs. And it really has, I think, accelerated the weakness of the yen. And, what I would say to that is that there might be lessons there, for Kevin Walsh, at the Fed if he wants to change the balance sheet in the US.
Jane, we're seeing a little bit of dollar strengthening today. What are the longer-term dynamics given the backup that we've seen in longer-term yields and just how the press conference was accepted by the market? And, what happens in the next few weeks if we get some dissenters and other people coming out and maybe trying to reverse some of this market action or not?
Well, I think the Fed is very interesting. It was this week, and I think the word credibility comes to mind. Walsh has only been in that position for a very short period of time, and yes, he said that he was inflation fighting, but the market, of course, was doubting him, and you see that both in the long end of U.S. yields going higher, but you see that in the short end as well. So he's really got to assert his inflation credibility, or inflation needs to moderate further in the U.S. to sort of let him off the hook, and that's I think where we are in the US. Now, with respect to the dollar, we still have obviously got the war on, and I think because of the safe haven demand, I don't think the dollar's going to fall very much. But at the same time, if we look at the euro, yes, the euro's risen this week against a weaker dollar, but I don't think the market really wants to build very large euro positions when the war is going onwards because of the detrimental impact to the terms of trade in the eurozone. So I think we're in this period where we might just see some sort of choppy sideways trading for euro dollar.
All right, Jane, we have to leave it there, but thank you so much, Jane Foley of Rabobank, with a cameo, I should say, from Buzzy. All right, two other top stories trending now on the terminal this morning. Leopold Aschenbrenner's Situational Awareness Fund had tried selling some of its stakes in private companies this week to raise cash and meet margin calls. Sources say Aschenbrenner opted not to go through with any sales after reaching a deal with Citadel to offload the bulk of its public equity portfolio. Ukrainian artillery crews are on track to have access to extended-range shells by the end of the summer. The country's defense ministry said in June that it had purchased 15,000 extended-range shells from Denmark without providing details. The high-tech tool could give Kyiv a drastically expanded frontline kill zone. FIFA will proceed with plans to privatize its commercial business. That's despite spreading threats from regional football organizations in Europe, Asia and North America to boycott the World Cup. FIFA issued a statement earlier today maintaining that it was not, quote, selling football. Coming up, a complete disarmament. The Board of Peace says Hamas has agreed to the next phase of the ceasefire with conditions. More on that next. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. more danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. The war between Israel and Hamas potentially inching closer to a longer peace. President Trump announcing on Truth Social that the Board of Peace had reached an agreement for Hamas to disarm. This does come with conditions. It also comes as the administration faces growing pressure on multiple conflicts in the Middle East ahead of the midterms. Joining us now is Bloomberg Government's Jonathan Tamari in Washington. President Trump obviously continuing with these wars as if the public is behind him, as if Congress is behind him, but they're clearly not, Jonathan, are they?
No, and in fact, the public seems to be turning increasingly against President Trump, in large part because of the wars, the costs that people are seeing, prices at grocery stores, prices at gas stations. There's been a series of polls out this week from a wide range of groups, Fox News, CNN, Associated Press, Quinnipiac University. They all have the president's approval rating either at his all-time low or very close to his all-time low. Deep disapproval on the economy, deep disapproval about the Iran war. AP had, I think, something around 1 in 3 Americans only supporting it. And so it's been a very big drag on the president, and it's a drag on Republicans right now as we get much closer to November's elections.
Jonathan, critical minerals are back in the headlines. Trump signing an order on export curbs. I thought we had this taken care of back some time ago.
I think the U.S. thought they did as well, but there's a deal with China, and there's, as our colleagues have reported, there's been a lot of dispute actually between the U.S. and China about whether China is living up to the deal, whether the U.S. has violated terms of the deal, and it's still a major pressure point that we saw China use against the U.S. to kind of fight back against President Trump's first round of tariffs. The tensions are certainly rising around this, around a number of other issues, including AI, about China's involvement in the Iran war potentially. And this is all coming. We know President Xi is coming to the U.S. in September. They had a very friendly meeting, the two presidents, a few months ago, but the tension is rising ahead of this September meeting between the two here in Washington.
Yeah, I mean, the timing is so interesting, Jonathan. Is it manufactured tension in some ways? Are both sides angling for a little bit of leverage for this meeting?
There certainly could be some of that. Both sides certainly wanting to come in with something to push on, to ask for. But I do think the tensions around the rare earths are significant. The U.S. saw that was a major weakness that China was able to exploit during that initial trade fight. So it's a big concern for the Trump administration. And this deal that they think they had, again, they don't believe China is living up to its terms. And so that could be a point of, I think, real tension and real dispute when the two presidents meet again.
All right, Jonathan, thank you so much. We'll monitor developments. Bloomberg Government's Jonathan Tamari with the roundup from Washington, D.C. Amazon and Apple capping off a big week of tech earnings, a massive week, you have to say. Amazon jumping after reporting a 5th straight quarter of cloud revenue growth. Apple, though, slumping, supply shortages hurting its sales forecast there. For more, let's bring in Bloomberg's Neil Campling. I'm not sure the market was really anticipating this, Neil. It's amazing how these companies continue to surprise us quarter after quarter. Let's start with Amazon. You know, the stock has not been rewarded in the last several quarters. It's definitely getting rewarded today. I mean, we know AWS is a success. Why is the market missing this?
Yeah, I think if we look at the actual growth of AWS, Bonnie, the key is 37% growth that came in was above street expectations, around 31%. It's an acceleration of growth, the best since 2021, the best in 5 years. So there's relief there that the capex that they're spending is in some respects paying off. If you look at hyperscaler spending on the capex, which obviously is a big deal for many investors, their ratio is far lower than the other hyperscalers. They're about 25% capex to sales basis, whereas companies that are out there like Oracle is at nearly 100%. So they're being rewarded today, as you mentioned. Stock is only up 2% year to date, so there's some relief for sure.
Yeah, absolutely. No relief though for Apple, and that also surprised the market. The memory cost issue for Tim Cook, he's likening it to the 100-year flood. I mean, that's terrifying, no?
Yeah, it's pretty exceptional phrasing, but of course they are the company with the greatest purchasing power of any company on the planet. So for them to be struggling tells you just how bad the memory crunch is. Unfortunately for us consumers, we're going to be feeling it, I suspect, in much higher ASPs for the iPhones going forward. But yeah, the guide was slightly soft. Don't forget, out of the Mag 7 stocks, again, this one was the best performing company into earnings, best one year to date. So there's a bit of travel and arrive to a degree with the stock, I think.
Yeah, it was the place where you went to hide if you didn't want to take part potentially in the AI trade. Speaking of which, Korea, I have to ask you, 18% for the Kospi, and that's a gain today. It could have been either way, but I'm just making it clear that we're up 18% for the Kospi. What's going on? I mean, this is not sustainable, is it?
It's a record move today. Obviously, the regulator talked earlier in the week about putting in curbs. Well, they may have put in curbs today for some of the leveraged products, but not the actual, the single stock products. As you say, the volatility is so vast that it's going to put off professional investors, I think, to have that kind of level of volatility. Something needs to be done to try and reduce that volatility further, because it is just probably the most volatile market as we've seen on this trade of AI, but it's a concern for sure.
Yeah, absolutely. I mean, it's been so whippy. You have to wonder if really anyone has made money in this market in Korea. Situational awareness, did that have repercussions around the world or impacts on markets around the world, or is that just talk? Was it really too small of a situation to actually have that kind of an impact?
I suppose, look, if this fund itself was being levered and they were unwinding these, clearly the news of the last 24 hours, they've probably been unwinding those positions for the last few days. And then it has a knock-on effect into other kind of levered products and levered positioning. So I suspect it was a contributing factor, and then it sort of would have helped to kind of steamroll some of the other momentum factors, because we saw significant dispersion and stock volatility across many companies.
Neil, thank you so much. We need all of your expertise and context on mornings like this. That is Neil Campling there for us. It's Big Oil's turn now for earnings, with earnings coming out from Exxon and Chevron this morning. Let's get a preview with Bloomberg's Mitchell Furman. So, Mitch, I mean, with the war restarting in earnest, it can't, I mean, obviously that won't have played into this quarter's results most likely, but it's been a good quarter. Is there anywhere we should look for fragilities?
Well, the U.S. majors, Exxon and Chevron, are expected to post their third highest ever quarterly profits. There are, of course, outages in the Middle East. We should hear particularly from Exxon, which has quite a significant presence in the Middle East, and they've lost a lot of production. So we should be hearing an update from them about their outlook for this current quarter and the rest of the year, which should be quite market sensitive.
And with those companies being so close to the physical market, Mitchell, will we get a better read on how they anticipate pricing to go? I mean, particularly with inventory so low across the world, not just in the United States, but Europe as well.
Yeah, whether we get price predictions or simply a read of the current market remains to be seen. But so far in earnings from Shell, Total Energies, we've heard language about kind of the market being difficult to call through the rest of the year, obviously because the oil prices have been so closely driven to headlines and what's coming out of the Trump administration regarding a potential peace deal, but because it's so volatile and the Strait of Hormuz has experienced kind of this open and closed, off and on nature, and then there's the increasing threats through the Red Sea and the Black Sea and exports from Russia, diesel. There's a lot of moving parts, which gives these big oil executives a little bit of pause to actually predict where oil prices are going to go.
Absolutely. We'll be glued to the conference calls to hear any stray comments whatsoever. Mitchell, thank you so much. That's Bloomberg's Mitch Furman there. Coming up, we'll get you set up for your trading day. This is Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance. Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television. Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now a look at what's ahead today. Well, if you made it to Friday, congratulations. You've got some more earnings. Chevron and Exxon reporting quarterly earnings before the bell. More results as well from AbbVie, Colgate and Moderna. Plus, we get data, University of Michigan sentiment data out at 10 a.m. Eastern. Let's take a look at some pre-market movers. Apple, well, that was a real shock for a lot of people, down more than 7% in the pre-market, talking about supply constraints, talking about FX issues, talking about the memory cost issue being like a 100-year flood situation, and that really caught the market off guard. Amazon also caught the market off guard, a fifth straight quarter of gains for AWS, 37% higher in revenue. Tesla, this is an interesting one. The Wall Street Journal is reporting that it's looking at a potential sale of its China business, or at least a separation of it, to pave the way for a possible merger with SpaceX. And this is your macro picture for the day. Could be an update for equities. That's it for Bloomberg Brief.
Some people have written that your bank, Revolut, is worth $75 billion. Have you ever thought of taking your organization public?
Well, the way I think about it, we kind of will be ready probably in 2 years' time. But then again, depends on how good the market is.
Since you don't have an IPO, how do people who work for you make some money? Do you make a market for people to sell their shares internally?
Yeah, so we do secondaries every 1 or 2 years when people can sell a certain portion of their stocks to external investors.
So you've done secondary sales for your employees, so employees can then get some liquidity. Do you expect before you go public you'll do any more of those, or are you just going to wait till you go public before you liquefy any more stock?
Yeah, I think so. We might do secondaries as well before we do IPO, because we do it every 1 or 2 years, so we might do secondary as well.
All right, well, if anybody wants to sell their shares to me, let me know. And have any investment bankers told you why they're the best to do the IPO for you?
Yeah, obviously every single one is the best.
Everyone is the best. You're not in a rush to do it. You don't need the money.
So we're a bank, and then for the bank, it's super important to have trust, and then public companies are trusted more compared to private companies. So that's the reason.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
There's still lots of demand for equities.
Right now, we're in the middle of a good growth cycle.
What we really need to see is continued strong earnings growth.
Once again, we have these broad-based earnings surprises. Earnings are opinion, cash flow is fact.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday, tech stocks bounce. Equity futures pushing higher, heading into the weekend. As Ken Griffin's Citadel is stepping in to help out a wiped-out hedge fund, South Korean investors are hoping the washout is very much behind us. The Kospi absolutely surging.
It's just amazing to see Samsung up 19%, to see SK Hynix up almost 25%. The bigger story here is, have we seen the leverage really come out of the system in a massive way, whether it's the retail triple-levered ETF buyers in South Korea, or whether it was a once erstwhile $45 billion fund investing in tech that has now been whittled down to $10 billion and at the mercy of Ken Griffin. You put it together, people have more confidence that maybe we have reached some of the near-term bottom.
Well, let's start with the fun. Let's start with situational awareness, and let's talk about the positioning. Long hardware, short software with tons of leverage. And that's been wiped out, cleaned out, and you've had to unwind all that leverage. South Korea is one half of the trade, right? It's long hardware. That's been really struggling. You've got to bounce this morning. Can you say with confidence we've had the washout of positionings when you see the bounce back that severe in the Kospi? And as Guy Johnson said repeatedly earlier this morning over in London, you've got the biggest one-day gain on record in South Korea, and you're still down on the week. South Korea's been really volatile all week.
When you see moves of this magnitude, it's hard to say this is comforting, because typically you want to see a gradual bleed upward. That said, it gives you a sense of what the feeling is right now on the street. Even Lori Calvasina came out and said, right now, you're getting to the point where value is being unlocked. In other words, the sell-off has gone far enough, and the price-to-equity ratios are starting to make more sense. So you have that fundamental story. As to the technical story, unclear, because when you have someone who is younger than 30 who's running $45 billion and is suddenly forced to face a call with the Grim Reaper and say, okay, you're right, here you go, it gives you a sense that maybe there are others out there.
He's still got some massive private market positions that reportedly tried to offload as well. We'll spend some time on this throughout the program. We'll spend some time on this too. Bring up the bond market and look at 2s, 10s and 30s. And let's just isolate the 30-year piece of the curve, and we'll look at this yield together. 520, yields down a single basis point. Do you know what we've done on the week on 30s? Just a bit of perspective. Yields are higher by 4 basis points on a 30-year yield. After a massive freak out at the Federal Reserve, a lack of guidance, a lack of clarity, a credibility test for the Federal Reserve, it's a move of 4 basis points.
Yeah, and I was actually looking back and I was going to say, oh my goodness, this is the biggest widening in yields in 30 years going back to, and it's like a couple months. I mean, it was like much more before. It was only up some 25 basis points in the past month. So to your point, we haven't seen as much of a freak out in the actual numbers as we have among some media commentators who freaked out.
I'm not saying there's space to be concerned. I certainly wouldn't say he did a tremendous job on Wednesday. I'm not going to try and say that.
This market's just sort of
just saying a bit of perspective.
Yeah,
you know,
exactly.
helpful into the weekend, just a bit of calm. 30s right now, 520, 10s at 467. Coming up this hour, we'll catch up with Dan Greenhouse of Solis Alternative Asset Management as equities bounce. Tom Foley of Maxim Group as investors reward Amazon and punish Apple following quarterly earnings. Plus, we'll catch up with Terry Wiseman of Macquarie as Japan stages a big yen intervention. We begin this hour with tech stocks adding to gains following strong earnings from Amazon, building on Microsoft's record one-day value gain. Dan Greenhouse of Solis writing the following: the economy is doing well and earnings season is going great. It is the macro that seems to be confounding investors. Dan joins us now for more. Dan, welcome to the program. Every time we get earnings from MasterCard and Visa, I think of you, buddy, and I think of the economy that seems to be doing okay. Dan, is there a decent argument just to sit here going into the weekend and say things are all right?
I think things are definitely all right, and it's, thank you for thinking of me, but it's not just MasterCard and Visa. It's Brunswick. It's a whole host of other companies, American Express, another card company. It's Corning and a whole host of companies in the tech space that are talking about demand. It's Hilton and some of the hotels. I'm trying to find some corporate commentary that says things are not great, and the best you can find is that a couple of companies here or there say things are flat. That's pretty good to me. So, yeah, I think going into the weekend, you have to feel pretty good about what earnings season has done, even outside of AI. But as my quote says, the commentary from the Federal Reserve obviously has given a lot of people some indigestion.
We are learning something about price, positioning, and leverage. Dan, what have you learned about price, positioning, and leverage over the last few weeks?
I don't think I've learned something, but the idea that it's easy to run a $20 billion hedge fund has probably, again, been challenged. Listen, I don't want to comment on the specifics of the situation since obviously I don't know them, but running money is about more than just being levered long something that's in a bull market. It takes patience and diligence, and it's called a hedge fund for a reason. And apparently right now there's a washout. This happens from time to time. We've all seen it in our careers. I don't know whether it's over or not, but the action certainly feels like the worst of it may be behind us.
But there's a larger question here, and what John's getting at is how much leverage is still in the system and needs to get washed out, right? I mean, in other words, is this emblematic of a whole host of other funds or other types of activity that replicate this in a time where some people have gotten used to markets only going in one direction?
Yeah, listen, some of these charts are obnoxiously vertical. You guys talk about it, we've talked about it, and a lot of them have corrected, and I imagine there's a lot of people who run smaller amounts of money so they don't make it into the journal, let's say, who are being, as we say, scientifically blown up. And I imagine there's a bunch of them on the smaller side of things. I have no way to quantify that. You can bring on someone from the prime desks, from the big banks, and they'll have more color than I do. But it shouldn't be surprising. On the way up, we all talked about that this was unsustainable. We would pull up charts of SanDisk and AMD and Micron, et cetera, et cetera. And I would say you don't need a PhD, you don't need to be a technician to look at these charts and know that it's not going to continue. And obviously that has, to some degree, stopped over the last couple of weeks. I would just say, getting back to my point about corporate commentary, again, when you read through what these companies are actually saying, from Google on down, there's no cessation of demand. You haven't really seen anyone talk about any equation between supply and demand. It's all, we're still going full bore here. So I think from a cycle standpoint, you still have to be encouraged by what's going on.
Do you think the pendulum is still squarely on the equity markets for relative value right now, given how much yields have backed up, even in a pretty good time for consumer credit?
Yeah, well, we've talked about this in the past. I think, and to turn this to the Federal Reserve for a second, we're all, including Chair Warsh, are trying to figure out why yields are going up. And obviously there was I think John called it a freak out after the press conference. So I think that we all don't really know why yields are going up, and we're trying to figure it out here. And I think that speaks a lot to what happened the other day.
Do you think it's fair to say he's part of the reason yields are now going up, Dan?
Well, sure, yeah, it's undeniable he's part of the reason that yields are going up. I think to have fun and be contrarian for a second here, I understand what he's trying to say, maybe to a better degree, or maybe I heard something other people didn't hear. I heard, he was too vague at points, fair, but I heard a guy saying, we need to make sure that we're measuring this stuff right. We need to make sure that we understand why it's going up and whether or not interest rates are the correct way to combat the rise in inflation if it's going up according to whatever new way we might measure it. And I think I heard a guy just repeatedly ask for patience, and the market obviously does not want to give him any.
Is there some sort of 4D chess going on with what's going on with the press conference, what we saw in yields, and then the New York Fed doing a rate check for the Bank of Japan as there was some intervention over there? I'm just wondering if there's correlation or any kind of relationship between any of these events.
As a general rule, I don't think anyone is ever playing 4D chess. So I would say no to that. I think we're going through a transition here where the new chairman of the Federal Reserve is trying to move away from what he believes is an era where the Fed provided too much information to an era where perhaps the market has decided the Fed is providing not enough information. And that transition is coming with volatility, completely unsurprisingly. That process is going to go on for a little bit. I don't know what the outcome is going to be. I don't know who's going to win that debate, quote unquote. But I think that's really all that's going on here. I don't think there's any new spike in underlying demand that would push up inflation. Obviously, oil prices are volatile, up $4 one day, down $5 the next day. And I think, again, we're just trying to figure out why inflation is going up. And more importantly, again, he said this, are interest rates the best tool, the only tool to combat what's going on? And again, I just heard a guy asking for some patience while he figures it out.
Dan, I had that question too on the balance sheet, which is what you're alluding to. And I think this is important. If you have a Fed chair that is refusing to articulate a reaction function, and in some ways communicating he's not in a rush to hike interest rates or use that tool at all, if I'm in the market right now and I'm thinking, where is there flexibility to express a view across the curve right now? The last place I'd do it is the front end of the curve, because that's where the Fed can actually anchor things. So if you've got a guy suffering from inertia, I don't know, describe it, characterize it, however which way you want to, that 2 years is going to remain anchored somewhere close to the policy rate. It's about 50 basis points away. The flexibility is further out along the curve, which is how the market expressed the view on Wednesday to push yields higher. So, Dan, I think we can sort of think about the yield curve that way. That's where the flexibility is. That's where I can push this market round just a little bit. So, Dan, we've got to think about, okay, what do higher long-end yields mean to markets cross-asset if front-end rates will remain anchored? Now, one way of expressing that cross-asset is to go short the US dollar. We saw that on Wednesday. I just wonder what it means to you, Dan, if that's just a base case assumption for the next several months.
So getting back, I said a couple of times we're trying to figure out, I kept saying why inflation is going up, but the answer tangentially is why yields are going up. As an investor, in credit, obviously you care about spread, and in equity you care about relative value, among other things. So one thing we've all discussed is how much is the demand for capital from the hyperscalers and from tech in general, and is that pushing up yields, et cetera, et cetera. If something like that is what's going on, then that's more or less a positive. And I think it speaks to, despite the freak out that's happened at the very long end of the curve with the 30-year, let's say, but even the 10-year at 470 is at elevated levels, you still have the S&P basically at highs. It's up 9% for the year, give or take. Half the index is up more than the headline, which is about what you would expect. It's not as if it's top heavy and AMD and Micron are doing all the work, so you have half the index up more. So broadly speaking, the economy thus far and the market thus far is doing kind of what you would hope, even with this backup in yield. So in terms of I as an investor, or we as an investor class, how do we think about it? If what's going on here is the economy is doing fine, earnings are doing fine, and again, virtually every company is bearing that out, then I'm far less concerned about the backup in yields, assuming it's orderly.
Dan, appreciate it, buddy. It's good to see you in the studio next time. Dan Greenhouse there, a Solus Alternative Asset Management. Dan, thank you. It's the recipe for higher long-end rates, isn't it? If you take the emphasis off short rates As a consequence, you're putting the emphasis on long rates. If you're flying with balance sheet reduction at the same time against the backdrop of increasing supply absolutely everywhere, that's even more pressure for higher long-end rates.
Yeah, and that's how you're seeing it transmitted through the market. A real question here, though, what is the most effective way to tighten financial conditions? Is it on the long end or is it on the short end? Some people would argue the purest play is on the short end because it takes the leverage out of the system, and it might not be a coincidence that Citadel put out there that they expected the Fed to hike rates this week right before. I mean, well, this is something people have been talking about. Look, I'm not saying that that is actually what happened.
You're just asking.
But I'm just asking.
Of course, many others are too. 425 on 2s, 10s around 467, 30s at 520. With an update on news worldwide with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. The Kospi surging by a record 18%, driven in large part by the chip makers. SK Hynix rallying by the 30% limit, and Samsung up 27% intraday. Bullish reports on the AI build-out overseas. Regulatory support from the South Korean government among drivers of today's rally. Microsoft soaring 16% in Thursday's trading for its best one-day performance in 18 years following strong earnings. The company adding nearly $500 billion to its cap, the most by any stock in any single day. The Spanish government ordering troops to one of its 2 North African enclaves after a recent surge in illegal immigrants. The migration crisis risks a flare-up in tensions with leaders across Europe. Italy's Prime Minister, Giorgia Meloni, threatening to impose travel restrictions on Spain. And that is your Bloomberg brief. John.
Vonnie, thank you. Watch this space. That is a major, major point of tension for Europe right now. Up next on the program, we've got a breakthrough in Gaza.
The war in Gaza, which proceeds at a very low level, it's just about there.
The war in Gaza is over. It's over. There are little flames, little flames. Hamas has been, I think they're going to give up their weapons.
Up next, General Robert Walsh of Academy Securities, live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Mike Worth, Chevron, crushed it. Good morning. Stock is up in the pre-market by 1.7% higher year to date by more than 20, I think 26 percentage points higher. The earnings come in as follow. The biggest quarterly profit we've seen Bremo, since 22.
Yeah, when you take a look at the overall earnings per share in the second quarter of $6.06 versus an estimate of $5.65. Just taking a look at what they're doing with some of this profitability, they're paying down debt. This is fascinating. They're increasing production. They had about a 20% increase in production over the period of time, and it's running its U.S. refineries almost full out with the utilization rate above 97%. So this is a company that is taking this moment to sort of fortify its balance sheet, be prepared for whatever is coming next, but might not have the conviction to go in and do new exploration and drilling, because ultimately it is a cycle, and typically when you get that kind of cycle, prices can come down pretty significantly if they go to heights that we've seen recently.
We've seen this in energy, we've seen it in mining. After the bust of the last decade or so, in both asset classes, for both the metals and for oil, I think of the shale patch, of course, more recently for the oil majors, it was a focus away from volume to value. Capital returns over investment. It's not to say they don't make massive investments, they do, but certainly the emphasis has shifted since then. And if you're a company like that, are you going to make a long-term call off a short-term volatile move? That's a difficult call to make.
Which is why they're paying down debt and fortifying their balance sheet. Notably, Chevron shares up 23% so far this year. Sounds really good. Up only 3% since the war in the Middle East started. So a lot of investors have been looking through this and saying, okay, what about the other side? How are you going to grow, et cetera? Right now, they're growing just by simply profitability and their balance sheet getting fortified.
Add a few percentage points to that move this morning, up another 2 in the pre-market. Equity futures shaping up as follows, up by 0.5 on the S&P 500, up by 1 percentage point on the NASDAQ yesterday, 3% plus gain on the NASDAQ 100, biggest one-day gain we've seen for the year so far, going back to March, which is quite a gain for the NASDAQ because it's been very volatile over that period. On the Russell this morning, up by 0.5. In the bond market, 2s, 10s and 30s shaping up as follows. Someone's got a new mug on the desk. 2s at 425, 10s at 467, 30s at 520. You want to share it with the audience, Bremo?
I walked in to Yield is Destiny.
Yield is Destiny.
It's not just Yield is Destiny on any mug. It's on an inspirational, spiritual mug.
I like the tone as well.
It gives you a sense of being on vacation.
How quickly did our cameraman Marlon move to get that done?
Marlon, you are an absolute champ.
Pretty impressive, isn't it?
I am inspired, and I plan on going for a walk this morning.
Are you going to, you know, produce some and sell them?
Let's see how today goes.
A little bit of Bremo merch.
A little merch.
I'll take some
Bremo
Bremo
good.
merch.
All right, well, we'll see if we can make that happen.
See if we can sell some mugs, not just some bonds. 30-year yields, 520, maybe to some mugs. Anyway, let's turn to the commodity market. Brent WTI shaping up as follows. That was a bad dad joke. Brent crude around 90, we're up by 0.6%. WTI 84, up by 0.5. Under surveillance this morning, a breakthrough in Gaza.
We reached a momentous breakthrough in the Middle East, something that people said was never going to be done.
The war in Gaza, which proceeds at a very low level, it's just about there.
The war in Gaza is over. It's over. There are little flames, little flames. Hamas has been, I think they're going to give up their weapons.
So here's the latest this morning. President Donald Trump saying the Board of Peace reached an agreement to disarm Hamas. Questions remain over the details and the implementation of the deal. With the latest, Tyler Kendall has more. Hey, Tyler.
Hey, John, good morning. Well, if this agreement holds up, it would be incredibly significant for that 20-point peace plan to resolve the conflict in Gaza after months of little progress. But you're right, at this point, it's unclear exactly how this will work. The deal does hinge on Hamas giving up its arms, with a senior Israeli official telling Bloomberg News that Israel is demanding the full demilitarization of the Gaza Strip. That will then kick in a phased plan where Israel will withdraw its forces as well. Now, Hamas, a terrorist group designated by the U.S., has said that it did agree to a deal, but leadership from the group told Al Jazeera in an interview overnight that it's not going to take any steps unless Israel withdraws its forces first. So it appears that there may be a sequencing difference here between the two sides. We'll have to see how it goes from here. U.S. officials are saying that they still need time to refine some of the details, and they're going to give a 200 to 350-day period for it to be implemented, also deploying what's being called an international stabilization force in order to ensure everyone's safety. John, very quickly, of course, any potential resolution has broader implications for the region, since Hamas is a proxy group backed by Iran.
Tyler Kendall with the latest down in Washington. Tyler, thank you. To build on that, joining us now, General Robert Walsh of Academy Securities. General, welcome back to the program, sir. Is this situation now more dangerous than it was 4 or 5 months ago?
I think overall the situation in Iran has gotten much more dangerous, but I think the last piece that Tyler added, the piece on Gaza, makes it very significant that the larger Middle East peace plan, the Hamas disarmament agreement, which will take some time, is a big step in that. It's another step in isolating Iran. And what we're seeing throughout the Middle East, more and more of these pieces are coming into place that is isolating Iran more and more. This was a case where the IRGC asked Hamas to delay this decision and not continue with it. And in fact, Hamas went against this and agreed to the disarmament. Now, the devil's in the details, and we'll see where it goes. But this is a step in that direction. And now the larger question is the situation with Iran getting more dangerous. It obviously is in the sense that we've gone from a phase of really deterrence where a ceasefire was in place. We've kind of gone back and forth where these attacks between Iran and the U.S. have been occurring. But now what you're seeing is Iran again using their asymmetric capabilities to try to spread the fight and extend this throughout the region by bringing in the Houthis into it, bringing in the Shia Iraq militias into it, attacking the Saudi Arabia oil fields. So a little bit of a widening going on here, and that's Iran's asymmetric approach, is to try to widen the war, put more pressure on the U.S. and the U.S.'s partners in the region.
General, what do you think the next steps will be for the U.S. and its regional partners as the war does broaden out more significantly?
It's a great question, Lisa. I think the president has a lot of options on the table right now. I think the president's desire is to get back to getting a deal. He continues to say that over and over. And you saw where we had this 13-day significant escalation by the U.S. And this was now for the first time, instead of a tit-for-tat approach, the U.S. used a disproportionate approach where if Iran hit us with 3 missiles, we went back and hit them with, hundreds of attacks on targets throughout the Gulf region or throughout Iran. But with that, now that what we're seeing is that the president again kind of settled things down, stopped those attacks to see if negotiations could continue. And I think the options he's got now is, one that Admiral Cooper has on the plate is to go much larger and really try to increase the number of attacks more along the ways of what we were doing earlier in the war. But again, really trying to isolate the Strait of Hormuz by attacking, command and control facilities, drone and missile capabilities that can strike the Straits of Hormuz. That would probably be a phase 1 approach. See how that goes. And if you can get Iran to kind of back off and try to, push their will to the point where they want to get back to the negotiating table, get to a ceasefire, that would be a step. If that doesn't work, I think another option on the table is to go really big, and that would be to try to isolate the country itself, to really significantly go after, probably bringing in Israel, go after infrastructure targets throughout the region.
We all hope we can make some progress on the diplomatic front, and it doesn't come to that, sir. General, appreciate your time. Thanks for sharing some of your morning with us. That was General Robert Walsh of Academy Securities. Up next on the program, Tom Forley of Maxim Group, as Apple sinks on supply shortages. Their stock is down 7%.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Stocks this morning positive, heading into the weekend on a high note, up by 0.5 on the S&P, up by 1.2 on the Nasdaq 100. The Nasdaq 100 bouncing 3% in yesterday's session, best day since March, following the longest slide on the Nasdaq 100 since October 2022. That's the index level story this morning. Flying in South Korea. That stuff is crazy. We'll spend some time on that later this hour. In the bond market, 2s, 10s, and 30s. Things have been crazy here as well. It's nuts. Think about the amount of ink that's been spent dissing Kevin Walsh in the last 48 hours. I'm not saying it wasn't well spent. I'm sure it sold a lot of papers. I'm just saying that the 30-year, the yield has barely budged on a week. We've had a move of like mid-low single digits on a 30-year yield. 520. 520 this morning.
He triggered a lot of people, but it didn't actually leave a pretty big scar on the market, at least for now. And possibly it's because people are waiting for more information, and after momentarily feeling a very emotional response to this change, and change is tough, and I get that. But, after that, I think people have reset and understood, we still don't know a lot, and I guess we have to be patient.
You're not giving yourself enough credit. This is not about change. I know, and I've worked with you for a decade plus. You're not pro-establishment. You're open to change. You're open-minded about all of this, going through the process. You're certainly not afraid of volatility. I know you welcome it. This isn't about any of that.
No.
This is about the tone. It's about how patronizing the news conference was for people who have followed so many of these issues for a long, long time. He sounded like a man who hasn't worked for 15 years. Stepped into the room and decided that no one else knew anything. That's what the news conference sounded like on Wednesday.
We're going to discuss big issues like what's the cause of inflation? What is the correct measure of some of these metrics? How should we look at it? We've been debating this. I mean, the market's been hashing this out, and frankly, it's been a wonderful family fight, and it's been really enjoyable to cover it. I think that the key question is this a Kevin Walsh that is trying deliberately to mislead or just somehow just gaslight a group of people, or is this somebody who genuinely is exploring these issues and not communicating it properly in a way that actually resonates with
people? Don't know, and we certainly want to give him a chance.
Totally.
Don't know, but that tone's not going to help, that's for sure, on Wednesday. And I think that's what a lot of Wall Street had a problem with. It's not about the market doing the work and the end of the hand-holding. Like, I don't know anyone that's really too bothered about that. In fact, how many people in the market have been sick to death of this Federal Reserve for a long, long time? Yield is destiny.
Yield is destiny, and we have yield. So many bond investors are thrilled.
They've
and
been
frankly,
complaining about it for years.
Financial repression has been death to active managers in the fixed income area. So yes, hallelujah. Do we want the Fed repressing, dynamic markets? Absolutely not. I think it's just a matter of exploring it openly and honestly.
Well said. Okay, let's move on. 3 hours away from the cash open. Let's get you some single names. Some morning movers. Yahara has more. Hey, Yahara.
Hi, John. Apple's safe haven status is taking a hit this morning. Shares down
7.3% after the company issued a disappointing forecast, warning us that the problems we've been talking about repeatedly, higher memory costs, component shortages, will weigh on growth this quarter. Add to that a miss on its high-margin services business and China sales, and you get the reaction you're seeing today. Of course, shares had run up more than 20% year-to-date heading into the report as investors rotated away from those big AI spenders. But this morning, one of those big AI spenders is getting rewarded, and that is Amazon, up nearly 13% in the pre-market because investors got exactly what they wanted, assurance that the company's massive AI investments are paying off, even after it raised CapEx plans from $200 to $220 billion. And that was okay because AWS, the leader in cloud, grew at its fastest pace in nearly 4 years. And we get a bunch of energy earnings out this morning, and the first one is Chevron, which you broke earlier. Shares up 3.25% after the company delivered one of its strongest quarters in years, of course, boosted by higher energy prices. It easily beat expectations, but the story goes beyond that. Chevron also increased production 20%, cut debt by a record $8.4 billion, and boosted share buyback, showing that it's using this period of elevated energy prices to strengthen its business. John?
Yahara, thank you. More from Yahara in the next hour. On our radar this morning, South Korea's Kospi surging, rising by a record 18% in today's session. The rebound fueled by chip heavyweights SK Hynix and Samsung following strong US tech earnings. Elsewhere, Amazon shares soaring, the company reporting a fifth straight quarter of cloud sales growth with a 37% revenue jump for AWS. Apple shares sliding, the tech giant's forecast disappointing as it faces major supply constraints. And finally, Ken Griffin's Citadel snapping up the bulk of hedge funds Situational Awareness's AI stock bets. The embattled firm forced to liquidate public equities, selling off a heavy chunk of its portfolio following the recent tech rout.
This is Wall Street cinema. Let's just really play this out. This was at one point reportedly a $45 billion fund led by a 24-year-old AI genius who had graduated college at 19 as valedictorian of Columbia. And he believed that he had the situational awareness of AI and the incredible power that it had. And essentially, they might be right on exactly the direction, but wrong on market activity that takes the experience of one Ken Griffin, who Cliff Astus once said, when he heard him calling to bail him out of something, I heard the Grim Reaper's scythe knocking at my door, and I just kept walking towards the light, and I tried to walk away.
We're learning about the difference between being an impressive thought leader and being a great risk manager. That you can get the trade right, add too much leverage, and things are going great. They're going better, and all of a sudden, and the real lesson here for the hedge fund industry, and Dan Greenhouse was talking about, he's absolutely right. I couldn't do that job. A lot of people struggle to do that job, and this is an example of struggling to do that job, even though you've got for the year so far, for the bulk of the year, the right trade on. You're long hardware, you're short software, but you added too much leverage, and the trade started to go against you, and things have turned really quickly in the space of, what, a month?
Yeah.
That's not much time at all.
So, and I couldn't do it either. I'm here. I mean, honestly, if these people are billionaires and do very well because they are incredibly talented at doing this, it's a perfect analog to this moment. The idea of a 24-year-old idealistic, effective altruism believer coming out, having this gorgeous view, and then having sort of a grizzled pro in the market be able to come out and be like, nah.
This is my turf.
Yeah, no, try again.
I'm not betting against the guy, the 24-year-old.
No, not at all.
I imagine he's still got a great future. He's going to take some big bets and he's going to keep swinging. I have no doubt about that.
Sometimes the people who fail the biggest are the ones who succeed the most.
Yeah, and I think there's some lessons learned from a lot of pain over the years for Ken Griffin and Citadel. We'll turn back to earnings. Let's talk about it. Apple falling in the pre-market as supply shortages cloud the company's forecast. Tom Forley of Maxim Group maintaining a buy rating on the stock with a price target of $350, writing, while the company appears to be managing the situation admirably, it looks like memory inflation is starting to impact margins. Tom joins us now for more. Tom, welcome to the program. Is that another way of saying we've reached the limits of consumer price tolerance and that they can't put up prices anymore?
Sure. So thank you, Jonathan. So Apple did talk about its willingness to raise price to combat inflation, especially in the cost of memory. And I think that the good news is that the company does have the ability to raise price. I think really what happened here is that, to put it about as positively as we can, for 2/3 of their sales, iPhones, Macs, iPads, demand far exceeded supply, and even with Tim Cook's strength in supply chain, he was not able to manage this excessive demand. And now we've got to a point where their inventory needs to be refreshed at materially higher component costs. And that's what I think you're seeing in the margin outlook for the September quarter. And then when you couple in that 250 basis point drag from unfavorable FX, that's what you see in the weak sales guidance for the September quarter.
Tom, given you believe they retain pricing power, the question I'm trying to ask is how concerned should I be over the long term about margins so long as they retain that pricing power?
Yeah, you should not. So I think that I think what we're seeing here is the hyperscalers leading a massive round of CapEx, which is contributing to supply shortages and inflation in component costs. This will resolve itself over time. Apple is still amazing at managing the supply chain. And I would say that this is a short-term issue, but in this case, short-term could be 12 to 18 months, but it'll eventually take care of itself.
Tim Cook talked about the memory cost issue as a 100-year flood in their inability to prepare for it, the idea that nobody can really prepare for it. I just wonder, though, how concerning it is that you saw underperformance in the China business, considering that that was one area of substantial growth going forward.
So underperformance, yes, to the extent that they had growth that was in line with expectations, Lisa. I think what we're seeing, though, is that Tim is handing off a successful China business to John Ternus, to the extent that you now have had 3 consecutive quarters of 15 to 20% top-line growth, and prior to that, you had about 3 years of underperformance. And the company is working on, though I do think this is going to take some time, getting that enhanced Siri approved by China regulators. So I think that directionally, he's handing off a strong China business to his successor, John Ternus, who takes over on September 1st.
What's going to be the main product of Apple in, say, 5 years? The John Ternus Apple going forward. Is it still going to be the iPhone? Is it going to be glasses? Is it going to be the watch? Is there some other device that's going to go in our heads that we aren't aware of yet?
On a percent of sales basis, the iPhone certainly seems like that'll be the one. I like your implanted product. I don't know if we're ready to have even an Apple product directly implanted into our brains. But I do think that you also hit on what I would call the low-hanging fruit. I anticipate that they'll come out with smart glasses. As you know, Jonathan, at least I'm wearing my Amazon Echo frames right now. Meta's done very well in that category, and I think that's an opportunity. Foldable iPhones, I think, is another form factor that makes a lot of sense. But I am hopeful and will be closely watching if John Ternus can, mimic Steve Jobs or, channel his inner Steve Jobs and come up with that device that we don't know about yet or haven't really thought about. That'll be a next great consumer electronics device. And that's something I'll be monitoring closely.
Tom, in the meantime, what are your thoughts about how we pay for that device? If you go to, say, a telecom communications company in this country, you can walk into an AT&T or Verizon, they'll give a good deal. In some cases, they'll just give you the phone, and you won't really be able to identify how much you've paid for that unit. What about the lease program? What does it mean for the outlook for unit sales growth?
So I was thinking about the lease program, and Jonathan, really it's already a lease program in some regards, to the extent that you have consumers, as you pointed out, either getting very significant subsidies for their carrier or already paying essentially monthly, a monthly bill, in this case to their carrier, to have an iPhone for an extended period of time with the expectation that they'll trade in that iPhone for the next generation one. So I'd say they almost have like a de facto lease program. The difference, I think, that I learned yesterday is at this point in time, it's only in the US, and this point in time, it's only through the retail channel, meaning the Apple stores. So maybe to the extent that this drives incremental revenue iPhone sales through the Apple stores, that could be incrementally beneficial. But I would say that they've had a de facto lease program in place for some time.
That makes sense. Tom, appreciate it. Thank you, sir. Tom Forty there of Maxim Group. On Apple, that stock is down this morning by some 7% in the pre-market. It was up big time into this, largely because it wasn't a hyperscaler, and now you start to think about the growth. He says you shouldn't worry about the margins. They've still got pricing power. We'll work through. What does he call it? A once-in-a-century flood over at Apple?
Yeah, a 100-year flood in terms of just the memory cost issues. You raise a great question, though, about leasing, because you don't notice that you're paying $200, $300 more if you're leasing something. And a lot of people who have the ability to pay and aren't paycheck to paycheck are fine with that, especially for a luxury device. And that's one way to lift margins and keep them there.
Not new, though. It's been a story for a long time at that company, to Tom's point. The Nasdaq this morning up by 1.2% on the Nasdaq 100. With an update on news worldwide with your Bloomberg Brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Exxon reporting second quarter earnings that just missed analyst estimates. The company saying it had the highest upstream production in more than 2 decades, excluding the Middle East disruptions. China's DeepSeek is planning a massive AI data center in Inner Mongolia. Sources telling us here at Bloomberg the facility will add 1 gigawatt worth of compute. DeepSeek is pushing to bring at least part of its data center's capacity online by the next year or early 2028. Tesla reportedly considering the sale of its China unit. The Wall Street Journal is reporting Elon Musk is weighing that sale ahead of a potential SpaceX merger. Musk saying on X, though, that the report is fake news, while a company representative called it false information. And that is your Bloomberg Brief. John.
Right before it happens. Vonnie, thank you.
Always.
I'm tracking that reporting, and of course the company's reaction to it as well. Just logically taking a step back, whatever you believe is and isn't happening right now. Let's just take what they're saying as sort of the base case assumption. Tesla's right, I'm listening to that statement, okay. But doesn't it make sense intuitively that that is what you would do if that's what you wanted to do down the road?
If you want to have a company that's integral in artificial intelligence as well as telecommunications and all things satellites, you probably want to isolate it from China as much as possible, especially because the Tesla business is so integral to the Chinese ecosystem of electric vehicles.
Just some of that is going to be very difficult to unpack, I'm sure. Up next on the program, we'll talk about Japan propping up the Japanese yen.
The Japanese yen seems very undervalued to me. The currency is very cheap. The economy is doing well. At a point that the market will realize the yen is undervalued and should strengthen.
Why is it in America's interest to support the Japanese yen? We'll have that conversation next. Terry Wiseman of Macquarie, live from New York City. You're watching Bloomberg Surveillance.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time.
From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Stocks bouncing into the weekend. The bounce continues, adding to yesterday's gains. Futures higher by 0.5% on the S&P. We'll round it up on the Nasdaq, up by 1.2. In the bond market, 2s, 10s and 30s. Things have settled down. 2s unchanged around 425. 10s around 467. 30s around 520. Under surveillance this morning, propping up the Japanese yen.
The Japanese yen seems very undervalued to me. The currency is very cheap. The economy is doing well. The prime minister is very popular and enacting very strong policies. And I think we're going to see the fundamentals come through. At a point that the market will realize the yen is undervalued and should strengthen.
So here's the latest this morning. The Bank of Japan keeping rates on hold after reportedly intervening in the FX market. The Trump administration adding to support the yen. A market participant telling us here at Bloomberg, U.S. officials conducted a rate check ahead of the BOJ's rate decision. Terry Wiseman of Macquarie joins us now for more. Terry, good morning. Good to see you.
Good morning, John.
Can we start here? Why is it in America's interest to support Japan as they face this problem? I won't say crisis, but certainly growing problem.
Yeah, I mean, this is a great question. You would think that a market-oriented White House, a market-oriented government would let the market settle where it wants exchange rates to be. But this is not the White House that we have been dealing with for the last year and a half. This is a White House that sees, I think to some extent, conspiracies around the world. And when it sees a foreign currency depreciating a lot, it feels that the United States is being slighted. Our manufacturers are being slighted. We've seen that with China. We've seen it with Korea in the past and the comments the White House has made. There is this issue and this feeling that weak currencies abroad are detrimental for our workers. To some extent, that is true. And I think this White House has their interest in mind to some extent, for political reasons, mind you, and it has to demonstrate that it's not going to let competitiveness in the U.S. Erode indefinitely. So that's the interest that the U.S., I think, has. It's political, it's domestic, but it's an interest nonetheless.
Japan has a solution. We were talking about it. The BOJ can hike. The BOJ chose not to. I'm trying to understand why they keep choosing not to.
Yeah, well, first of all, the hikes that they've done in the past 2 years have not really helped the yen situation. Let's keep that in mind. They have been hiking, and yet the market has been speculating against the yen, against the yen, against the yen for the last 2 years, to the point that we got to dollar yen at 165. So you could say, yes, they could have hiked as a solution to this. I know they didn't. But it's not clear that that would have helped by itself. I think the proper solution here might have, or at least the solution they fell upon, was to have the MOF, the Ministry of Finance, do the intervention, and then have the BOJ come out, not hike, because I think that would have been too much of a shock to the market. Remember, there are too many traders out there who are short the yen and using that short position to finance other currencies, and you would have caused a lot of volatility by a sudden unwinding, a shock unwinding of those positions. But to at least to prepare the market for a hike that's coming, I think this is proper. So we used to think, you go back a month, the market thought that the BOJ was going to hike in December. And then there was rumors in the last week and a half that said they were going to accelerate that hike. And then people started to think it was going to be October. Now it seems like it's going to be September. And the emergency, if there is one, is that the dollar yen pressed to 165. Importers in Japan were getting hurt. Takaichi's popularity ratings were falling over the last 6 weeks, in part because of the cost of living issue in Japan, which had been highlighted by the press. And at that point, the MOF, which is an arm of the government, decided it needed to do something.
Maybe this is a step too far, but I'm wondering if there's a bigger takeaway from some of the central bank events this week, and that is that a lot of these central bankers are leaning on the long end to do the work, and they seem deeply reluctant to make a move on the front end as quickly as some people are suggesting might be necessary, and allowing yields maybe to go where they naturally would otherwise go. What do you make of this?
Well, so there's definitely a debate in the market as to how to interpret the backup in yields at the long end. Not everyone believes that it has something to do with long-term inflation expectations. A lot of people out there believe that it has to do with the fact that governments around the world, government borrowers, sovereign borrowers, have just a lot of debt, and it's way about time that we started to price that in properly, and the market is driving yields higher to reflect that sovereign credit issue, that debt sustainability issue. There's another view out there that really talks about inflation as the problem, and the fact that the central banks have not been quick enough to address the inflation issue. I think that probably is more the issue in the U.S. than it is in Japan. Of course, we have a Federal Reserve that has not, in the past week, gotten around to signaling strongly that it wants to address that inflation issue. And as a result, you saw yields back up further on Wednesday. That's a problem too. But at the core of the issue is this debate. Are long yields going up because of government debt, or are they going up because inflation expectations over the long term have been going up?
And where do you stand on that?
It could very well be a combination of both. We don't have to fall on one side or the issue, and it may be country specific. In the U.S., you don't see inflation break-evens rising that much, but you do see survey-based inflation going up, and the Fed has cited that as well, and certainly a lot of people at the Fed have cited that. I would say that in the U.S., it's clearly more of an inflation issue than it is a debt issue or a debt sustainability issue. In Japan, it might be more of a debt sustainability issue.
Everyone's sharing their movie review. What was your review of the news conference on Wednesday?
Oh, absolutely terrible. I mean, we were giggling on the desk.
Were you really?
Yeah, absolutely. We did not hold back. I certainly did not hold back in the notes that I read.
What was it that made it so terrible?
Look, there were three potential reasons for why it went as badly as it did. I'll review them, really quickly here. One of them is that, Chairman Warsh is really a dove at heart. I mean, he's a structural dove. He got the job for that reason. And all of this is just a veiled way of delaying the rate hike, right? And the way you do it is you just talk and talk and talk until you exasperate everyone or get them, confused enough so that maybe they don't pressure you to hike. That has not worked that well with respect to the other members of the committee. They have coming out before the blackout period and basically telling you that it's time to hike. And you saw that with respect to the dissent. The second theory is that he's just over-intellectualizing the whole thing, right? Sometimes, let's admit, too much brain power is counterproductive. Right? It just is. And, but the problem, of course, is that this is the Federal Reserve. And the Federal Reserve has to confront crises from time to time, not just high inflation. You don't want Hamlet at the head of the Fed when there's a crisis, okay? But this is a second theory, that there's just too much brain power at work here. The third theory is he just doesn't trust anyone, right? And that's revealed by the fact that he needs these task forces to tell him what the inflation framework should be and how the Fed should address it. My view is, what the heck are all those 200 economists doing on the staff of the Fed? What is the FOMC supposed to do? Aren't they your task force? And this lack of trust was revealed, I think, in the presser the other day, because he said, when he was asked about who was on this task force, he said, these are people I've known for a long time.
Yeah.
Well, does that mean they're your friends? And what's the point? I mean, isn't the task force supposed to be independent? Isn't it supposed to give you an objective opinion? I would have rather heard him say, these are not my friends. These are people I've never heard of, right? That makes more sense.
We should have started here and not done.
Anyway, those are my three theories. I tend to fall on, along the view that he's a structural dove, and this is the reason why this has happened.
Terry, appreciate it.
My pleasure.
Thank you. Terry Wiseman there of Macquarie. Up next on the programme, Victoria Fernandez of Crossmark, Dilip Singh of PGIM, Lake Chu of AllianceBernstein, and the Ares CEO, Mike Arougheti.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, yet ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
The rest of the market cannot play the ball without knowing how the Fed might play the ball.
Some real anger at the long end of the curve.
If yields rise too much, it's going to break something.
This has become a lot more about credibility than actually bringing inflation down.
I think we'll get to a good equilibrium eventually.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your price action scores look like this. Equity futures adding to yesterday's gains. We're positive by 0.5 on the S&P. On the NASDAQ, the biggest one-day gain since March. We add to it by 1.2% on the NASDAQ 100. On steroids, that was the rally over in South Korea earlier on today. Check it out. The Kospi, not a typo, up 18% on the session. The session. This is intraday. Not month to date, year to date. Samsung up by 21%, SK Hynix up by 26%, and even with that move on the Kospi, it's just unreal. We're down on the week in South Korea.
So is this enough to give people confidence, or is this just more whipsaw volatility? And I ask this in the frame of reference of some sort of washout of leverage. We're seeing that with respect to Korean officials coming out cracking down on retail leveraged ETFs. We see this with the unwind of a big levered U.S. fund tied to technology. And there's a question here, are we seeing some of the bottoms because of the washout here? Or does this just indicate how much is left in the system?
So it's been a thing for us for what, the last month, the last 2 months. We've learned tons about price and positioning. We've talked about it extensively. Learned lots about leverage in South Korea, talked about that extensively. I don't think you should overlook the fundamentals, though. We should talk about the fundamentals. How sustainable is the spend? Everyone's still ramping CapEx. Some companies are punished for it. I'm thinking of Tesla, I'm thinking of Alphabet. Others rewarded for it because the gains elsewhere are so good. Thinking this week of, say, Microsoft. But you've started to see something you pointed out very early on last week with Alphabet. They've got negative free cash flow. They're becoming increasingly, I'm not going to say dependent, but increasingly dependent on raising capital from elsewhere to fund this CapEx. And the price of that capital is going one way at the moment. It's going up. You've seen spreads widen in credit, and you're seeing yields climb on treasuries. If that's the direction of travel, more questions will be asked about the ROI and how expensive the spending is becoming.
This is why I find the Amazon move so interesting. They also outperformed with their cloud computing service, the AWS, and that's the reason why their shares are absolutely surging in pre-market trading. They raised their capex to $220 billion from $200, and they were negative cash flow. Free negative cash flow, and that wasn't something they were penalized for. So it's unclear how this story is coming together and how much tolerance there is. You can feel that ambiguity when you speak to fund managers and we speak to people in the industry who say, this technology is real. There still is a whole host of infrastructure that needs to get built out. The promise is there. It's just about who the winners and losers are going to be.
You've got to communicate the path with tons of clarity and with decisiveness and show the numbers, the hard numbers, the growth. Probably the difference in the last week between the companies that have done well and the companies that haven't. And Meta is one of the companies on the wrong side of the conversation right now. Within that company is a very profitable business. With that, there can be no debate. We know that. But when you're on a call being indecisive about what that capacity is for, you're not conveying confidence that you know where this is going and you know what the end point is. And that's going to be a problem for a lot of people.
We're out of the dreaming phase. We need the tangible phase. We need the return on investment. We need to see the business path going forward. We need the clarity of vision, because right now, clarity of vision, whether you run one of the biggest tech companies in the world or whether you run the most important central bank in the world, is what gets rewarded in markets.
That's exactly where my mind was going. I was just thinking of one guy.
Of course.
I wasn't talking about tech CEO. I was just thinking of this one guy.
I picked up what you were
at the
putting
Federal
down.
Reserve.
Yeah.
2s, 10s, and 30s looks like this in the Treasury market this morning. Treasuries were sold. Credibility was sold. Earlier this week, on the week, things have settled down. We've settled down around 520. And the lack of clarity of this institution is a contributing factor, but not the only one, to high yields. There's a lot going on in fixed income worldwide.
Yeah, with respect to what's going on in Japan, with respect to the fact that every single major government is borrowing money and there is a huge deficit issue. What I'm curious about this morning and in the weeks ahead is how much dissent we get, how powerful some of the dissenting voices on the Fed actually are. Do we see the beginnings of a mutiny being staged where suddenly Kevin Warsh ends up in the minority?
I see some pushback on the horizon, let's put it that way, and we're all looking at the schedule as it builds out with all the Fed speaking, waiting for one name to pop up, and that's Chris Waller, Fed governor. Didn't dissent at this meeting. It was notable that we got no governors dissenting at this meeting, that it was just regional Fed presidents. There's nothing original about that. 3's a big number, I know, but it's the governors on the board. Do you start to see some building daylight between them and the man at the top?
Does Chris Waller become essentially a shadow Fed chair? And ultimately, people are watching his voice as the loudest one in the absence of a concrete voice coming from the top.
Yields up this morning by a single basis point, 2s, 425. Coming up, we'll catch up with Victoria Fernandez across market with tech rebounding, Dilip Singh of PGIM as investors question so-called Fed credibility, and the Ares CEO, Mike Arrighetti, on the depth of capital markets. We begin this hour with tech stocks rising following the biggest one-day gain since March. Victoria Fernandez across market writing, earnings continue to reach new heights, even if companies are not always rewarded for it. And it's not just the large cap stocks. Victoria joins us now for more. Victoria, welcome. We're wrapping up mega cap earnings season. One more still to go. Nvidia, a long, long way away. We'll get to that later on in the next month or so. But let's talk about the names we have heard from. What's been the differentiating factor between the companies that rewarded and the companies that were punished?
You know, Jonathan, you mentioned it a few moments ago, and I think it's important. It's the communication that we're getting. So we've seen negative free cash flow from multiple companies. We've seen multiple companies up the CapEx spending that they have and get punished for that. But yet we have Amazon come out and their stock is actually up. And I think it comes down to Andy Jassy on their call was very clear and concise about what they're doing, about the return that they anticipate getting through AWS with the growth that they're seeing there, saying that they see it as a $1 trillion business going forward. So I think he set expectations as to, yes, we're spending this money, but look at the returns that we're getting on it. Here's the goals that we're setting that we see. And we didn't necessarily hear that same narrative from some of the other CEOs. And so I think that's what investors are looking for. Show me exactly what is happening here and how this spending is going to improve the business, and then the stock gets rewarded. And I think that's part of the main difference, because really, all in all, earnings were pretty good across the board.
Communication should be easier to fix than a bad business model. Now, Victoria, if you've been punished because of bad communication, is there an opportunity to buy some of those names? Because underlying that is a decent business model.
Absolutely, I think there is, and I'm hoping a lot of people went in and bought Microsoft when it was down. We talked about that before, that's a great long-term holding to have in the portfolio, and I think you can be very tactical right now. There's not a lot of high correlation in sectors once you move outside of energy and utilities, so some of these names that are getting hit for reasons that maybe are something that's simple to fix, I think you can go in, you can be tactical, you can add to some of those positions. You're not maybe doing like a full position in there, but you want to add a little bit here and there as the market moves, because as we know, each day it's either up or down. I think you can go in and do some changes there that can be beneficial to the portfolio.
Victoria, just to sort of underscore what you're saying, is this essentially a market of stocks that all look pretty great and pretty successful, that are probably going to end the year somewhat higher, and that you're just essentially tactically trading within them as they sell off for various reasons?
I think that's part of the story here, especially when you're looking at tech, when you're looking at the semi names, these chip names, when you're looking at some of the memory names. There's so much volatility under the surface. I mean, you look at the VIX and we had what, an 18 handle yesterday on the VIX, but underneath the surface, there's so much movement going on. I do think you can go in there and have those tactical plays right now. Do they end the year higher than where they are? Probably, as long as we see earnings continue to hold up and that communication gets better, where shareholders feel confident about where that spending is going and what that return is going to be.
Late last year, I was talking to a number of credit investors who said the best way to play tech was to invest in their equity and avoid the credit, because ultimately you are taking down the downside and none of the upside. Has that equation shifted? Possibly as borrowing costs go higher, as yield is destiny and destiny looks a little brighter for all those fixed income investors. Do you see the pendulum shifting in the risk reward to bonds?
I think it depends why you're investing in fixed income. If you are going into fixed income because you just want to have that steady cash flow coming out of there and you feel confident that these companies can meet their principal and their interest payments, then why not go ahead and put some exposure in your portfolio to some of those longer dated tech names in the bond market? That makes perfect sense. But if you're going in and you're trading it more opportunistically, then you have to look at what's happening to CDS spreads. I mean, we went on some of these hyperscaler names, CDS going from around 150, 160 out to like 240, 250, huge changes in CDS spread. So if you're looking day to day at market value on fixed income, then I don't think it's where you want to be. That's going to give you a little bit of indigestion. But if you're just looking to get some cash flow, then these higher yields that you're seeing can be good for your portfolio.
Victoria, good to see you, as always. Thanks for jumping on. Victoria Fernandez there of Crossmark. On this market right now, Torsten's Lock of Apollo just published in moments ago, higher for longer continues. Why are rates so high, the highest in 20 years? We're talking about the long end of the curve. He offers 3 reasons, and he doesn't mention Kevin Walsh. Inflation, fiscal problems, hyperscaler issuance. The bottom line, we're not going back to the 2010s. It's good news for everyone cutting coupons in high-quality fixed income.
Yield is destiny. And
that was teeing you up for it, I know.
But it's true. If you want to clip coupons, well, this is a great time to do it, because your coupons look pretty darn good, especially for high-quality debt. Key question here, the inflation side of things is mentioning Kevin Walsh without mentioning Kevin Walsh. Is it essentially allowing inflation to run hotter for a longer period of time as a result of avoiding any kind of rate hike? The fiscal problems, everyone keeps mentioning, but no one keeps delving into it. People are worried about the deficit. It's not just me. And the hyperscaler issuance, that is going to be the key, especially as these spending ambitions continue to ramp up.
You need to mass produce those mugs. You know that, right?
Evidently.
I think they would sell. I really do.
I love this. This is absolutely
trading
fantastic.
floors everywhere.
Yield is destiny.
Without a doubt.
It would be for all the fixed income investors out there.
Think of a price, all right? Prices are going up. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. $5, $10, 15?
$10?
Bonnie Quinn's got
kidding?
more. Hey, Bonnie.
Hey, guys. Thank you so much. Spanish Prime Minister Pedro Sanchez saying the country suffered a, quote, territorial attack. This after hundreds of migrants breached the border fences from Morocco yesterday. European Commission President Ursula von der Leyen reacting, posting on X, saying, "We cannot allow anyone to come to our union without abiding by our rules." Anthropic says its AI models breached 3 organizations during recent cybersecurity tests. In a blog post, Anthropic said it found 3 instances in which its Claude AI tool accessed the internet and then hacked into external organizations. Momentum building against FIFA's plan to bring private investment into the World Cup and other football tournaments. Sources telling us here at Bloomberg, Real Madrid and Juventus are the latest European clubs to oppose the idea. FIFA maintaining, quote, "Nobody is selling football." And that is your Bloomberg Brief. John.
Vonnie, thank you. That's the central question in all of this. Who owns the sport and who takes the risks? I was just reading the story from Rodrigo Oruela, our colleague here at Bloomberg, on why Juventus, Real Madrid and all these clubs are starting to push back. They own the player rights, they fund the salaries, they absorb the risks associated with any injuries when they go to play at these tournaments.
They have a real vested interest in controlling some of this. Also, how much animosity, UEFA and FIFA, given the fact that FIFA has really kind of overplayed its hand in a lot of ways.
It's a sad day for football. Can I tell you why it's actually a sad day for football?
Please.
Will you give me a little bit of space?
Always.
The legendary defence of AC Milan in the late 80s, 1990s, Maldini, Costa Curta, Tassotti were led by a guy called Franco Baresi, the greatest defender that ever lived, and he passed away in the last 24 hours. So we wish him and his family and all of his friends the very best. A sad, sad day for Italian football. When everyone talks about Maldini being the greatest defender of all time, he had a teacher, and that was Franco Baresi. And Baresi, for my childhood, just total legend.
Yeah.
Total legend.
Thank you for sharing that with us.
Anytime, like, it means something to me and
I
my
love that,
childhood.
actually. I love experiencing your childhood through.
To Milan fans around the world. All right, up next on the program, the Fed under fire.
The Fed is not the referee in this. The Fed is a player on the field. The rest of the market cannot play the ball without knowing how the Fed might play the ball.
No more football. Up next, the former U.S. Deputy National Security Advisor, Dilip Singh, live from New York City this morning. Good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Guerrero.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Stocks bouncing back. We're positive by 0.4 on the S&P. We're up by 1.2 on the Nasdaq, heading towards the weekend with another day of gains on the cards, following a really, really big day of gains on the Nasdaq yesterday, the best day of gains in some 5 months or so. If you turn to the bond market, 2s, 10s and 30s, yields have been creeping higher through the week, just a little bit, up this morning again by not even a basis point on 10s, around 470. Under surveillance this morning, the Fed under fire.
The Fed is not the referee in this. The referee sets the rules, enforces the rules, is an impartial arbiter, and the referee doesn't care who wins the game. The Fed cares who wins the game. The Fed has goals and objectives in this. The Fed is a player on the field. The rest of the market cannot play the ball without knowing how the Fed might play the ball.
So here's the latest this morning. Investors doubting Fed Chair Kevin Warsh's credibility and commitment to curb inflation as Wall Street puts pressure on the central bank to clarify its direction. Bloomberg's Tyler Kendall has the latest. Hey, Tyler.
Hey, John, good morning. Well, as our analysts at Bloomberg Economics frame, this felt like a warning shot after a press conference that was, quote, poor on operational guidance. And Washington isn't necessarily helping here either after President Trump quickly praised the Fed chair post-decision, claiming that he knows Kevin Warsh would love to see lower rates. Instead, the administration is accusing others on the FOMC of being politically motivated, even as we hear from those more hawkish members that they're focused on the economic fundamentals amid inflation running above target for the past 5 years. NEC Director Kevin Hassett was on Bloomberg Television yesterday and said that he felt that the PCE numbers from this week should make Warsh's job easier, especially amid that downside surprise to the core reading, adding that maybe the markets need, quote, a couple of more prints like it. But John, the issue is that data is particularly stale given the surge in global energy costs due to the renewed tensions in the Middle East. And I'm sure you saw new this morning, a new statement out from the IRGC maintaining that the Strait of Hormuz remains closed.
Tyler Kendall with the latest, that tension building with the Saudis as well. You can see that in the price of crude this morning, back into the 90s on Brent just moments ago. That's contributing to that move in yields. Yields higher by about a basis point now. Let's talk to Dilip Singh, the PGIM Vice Chair and former US Deputy National Security Advisor, writing the following. The market is demonstrably running out of patience. The lasting impact of the July meeting is that it will now cost more to regain credibility than it did before. Dilip joins us now for more. Dilip, welcome. You see this a lot. When you do something so poorly, it takes more to make up for it. Are you suggesting that if they do hike in September, it might not be enough?
No, I think if they move in September and they move big, they'll be back on the right path. And look, I mean, I say this with humility and the utmost respect for the Fed because I've been involved in my share of policy mistakes. But when you spotlight a problem like missing the inflation target for 63 months, you declare your resolve to fix it, and then you spend 8.5 weeks offering neither action nor a strategy to do so, it's not a good look. And you invite a credibility shock that makes your job harder. That's what happened.
Dilip, what was it specifically about the news conference that stood out to you as a mistake that needs fixing?
Well, the problem wasn't the decision itself, okay? It was the absence of a strategy to achieve the mission. Instead of a strategy, we heard a suggestion that the market is doing the Fed's work, that higher nominal yields and real yields can partially substitute for rate hikes. We also heard a comment that, who knows, maybe 2% PCE inflation may no longer be the goalpost after January. And that's why we saw long-end bonds, the dollar, and stocks sell off simultaneously hard all at once. That was the problem.
Do you think that they're going to be forced to remedy it? And John asked a question about whether they might be forced to do more in September, the idea of a 50 basis point rate hike being put back on the table possibly, or whether you even get some sort of revolt, mutiny by other Fed officials who vote and you see Kevin Warsh in the minority. How do you see this playing out?
I'd say, Lisa, there are two scenarios from here. One is we get immaculate disinflation. Dovish data validate the Fed's patience, and we're going to get 2 more looks at CPI, 2 jobs reports, 1 PCE. I think that's unlikely, but that's a scenario. The second is that inflation remains high and sticky. That's what I expect to be the case. And in that scenario, either the Fed will have to give forward guidance, maybe at Jackson Hole, that hikes are coming, or it lets the bond vigilantes rage in the streets, and it then restores order belatedly by having to go big in September with 50 bips.
Why do you think, Dilip, that it is better to use the front end of the yield curve to tighten inflation, to bring in inflation, than allowing the long end of the yield curve to do the work?
Well, look, I mean, there is something to the argument. Higher long end yields, they do slow investment. They do dent the wealth effect. So I'm not denying that's the case. But they're not a full substitute. For one, higher long end yields, they may not last. So the 30-year yield can spike by 20 bips and then give it all back on a soft inflation print. A Fed rate hike tends to be more durable. The second problem is long end yields, they just tighten a corner of the economy. Housing, yes. Business investment, yes. Maybe consumer durables. But, as Michael Gapin said, the Fed's policy rate is the entire foundation. It's the risk-free price of overnight money. The entire yield curve is bootstrapped from it. The entire financial system is built on top of it. So it reaches every loan, every funding market, every cash flow producing asset in the economy. And that's why rate policy is considered the more blunt instrument. To borrow from Jeremy Stein, it gets into the cracks in a way that higher long end yields driven by the markets do not.
Lisa, I'd add to it. It's a global market. You're outsourcing monetary policy to Japan, to the BOJ, to Germany, to the bond market, to the hyperscalers, anyone that issues at the long end of the curve. You have so much more control over the short term. You can be intentional about it on short rates. Long end rates, do I want the BOJ or the situation with JGBs on any given day to set monetary policy here in America?
Yeah, although you asked a really good question over the past couple of weeks. Is volatility a feature, not a bug? And how much is the volatility in the short term potentially doing the job of the Fed without them having to raise rates?
I don't mind introducing a bit of two-way risk and volatility. I'm not sure that's even what we're talking about, though, is it? It's about building risk premium for the sake of building risk premium. Like, what are we doing that for? Why are we making it all about the long end of the curve? To your point, it's the right question. They haven't explained that. They've been very vague about that. You need to be intentional about why you're doing these things.
So, Dilip, I would ask you, without that kind of guidance, how confident are you to say yield is destiny, and if my destiny is 520, it looks pretty good?
Well, first of all, I think Robert Tipp, my colleague at PGIM, trademarked that phrase a few years ago. He's got it tattooed on his shoulder.
That's true.
But go for it with the mugs. Look, I mean, the long end is the whole ball game right now, and we're having more supply from Washington and sovereigns around the world, more supply from Silicon Valley, less demand from a smaller Fed balance sheet, most likely, and now less faith in the Fed's inflation-fighting resolve. So those are now four tailwinds behind a higher term premium, all blowing the same way. So, I think the Fed is going to be forced. It can either take the easy way and hike on its own and guide that it's going to do so at some point in August, or it'll be forced to do so in September. I think ultimately the Fed will do the right thing. They'll ultimately hike 3 times this year. My view is that argues for gradually adding in the curve flattener risk over the course of this month.
Dilip, just to come back about the economy, because we haven't talked much about it. This is a market issue. At the moment, do you think there are economic consequences to what's developing?
Developing with the Fed or more generally? I mean,
yields
it's all one
climbing higher
conversation.
because of the Fed. Part of the reason also we're getting the hyperscaler debt we're seeing yields rise at the long end. We're seeing a market that's tolerating that quite well. Risk assets certainly haven't plunged in response to that, and the economy seems to be tolerating it well, at least for now. Do you think there are economic consequences to it?
Always. I mean, higher long end yields are a tightening of financial conditions. They're going to have real economic effects, particularly in housing, particularly in rate-sensitive investment categories, probably not AI CapEx. And it will have a wealth effect. It will slow consumption that's resulting from valuations that depend on lower rates. But I still think if you step back and ask, how is this economy doing? For me, the backdrop is the same. We have hot demand colliding with supply-side constraints. That's what produces high and sticky inflation. And I don't think the move this week changes that story. I mean, we'll look back and see that empirically, demand was acyclical during the AI build-out phase. Hyperscaler CapEx has proven insensitive to the cost of financing. See what Google said earlier this week. And there's a downstream positive wealth effect from the AI ecosystem to consumption. Plus, on top of that, we have loose fiscal policies. We have hot demand. And I think the problem I had with what we heard earlier this week from the Fed is there's a lack of recognition that the supply side shocks, they're not independent, they're not one-offs, they're not mean reverting, they're recurring and compounding.
Yeah.
In the labor market, in the energy sector, in the trade sector, this is all part of a new geoeconomic regime. And all of these forces are net inflationary. The longer it takes for the Fed to recognize that we've had a structural break, the more difficult it will be to regain credibility.
It's the uncomfortable new normal. Dilip, it's good to see you. Dilip Singh down. Our apologies for the trademark infringement as well. I think we got clearance, right?
I was about to say,
do we have to give them
Robert
royalties
Tipp.
now?
What do I have to pay you? Trademark.
10 cents a
Robert
month.
Tipp. But still, yield is destiny.
Late Shewer for Lance Bernstein. Up next.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
The open about 2 hours away. Equity futures adding to yesterday's gains. Futures positive by 1/3 of 1% on the S&P. Yesterday, the biggest one-day rally since March of this year on the NASDAQ. The NASDAQ snapping a 6-day slide, the longest since October 2022. Microsoft got it done. Wow, what a one-day gain for one of the biggest companies on the planet. The fastest cloud growth in 4 years.
That was rewarded with a $450 billion increase in the market capitalization, a record. When you think about them adding many big companies and the total market cap of those companies in one day, it gives you a sense of how volatile things have been and how much just one day of getting it done can lead to some pretty massive market cap responses.
Things have been pretty volatile in the bond market too, so let's talk about it. The 2-year yield has been down every single day so far this week, with the exception of today. Yields are higher by a single basis point, 426. The 30-year inching higher by just a handful of basis points on the week, despite a massive move on Wednesday, only up just a little bit on the week.
I love Thorsten Slock's note. You were talking about it earlier, saying that it's about inflation, it's about the incredible amount of debt being sold from U.S. and global governments, and it's about the hyperscaler issuance. This is going to be higher for longer, and that's what a lot of people are coming around to. Question is that welcomed or is that a problem for the Federal Reserve? And that question was only widened this week with some of the communication.
Is it by design?
Right.
I think we're all trying to figure that out still. As things stand on the week, yields are higher on the week at the long end of the curve. 5 consecutive weeks of high yields at the long end of the curve. That would be the longest going back to 2023. Let's see. As we count you down to the cash open 2 hours away, let's get you some single names and morning movers. Yahira has more. Hey, Yahira.
Hi, John. Moderna is out with earnings that were better than expected, yet we are seeing shares sinking 8.3% after results for its norovirus vaccine. Early results for that vaccine were not successful. It marks a big setback for Moderna's most important growth programs as the company looks to build beyond its COVID business. But you can see markets punishing companies that, as you said, not getting it done. But one company that did get it done was Amazon, and you are seeing it being rewarded handsomely this morning, up 11%, because it gave investors exactly what they wanted, proof that its massive AI spending is paying off, even after it raised its capex this year from $200 to $220 billion. But that was okay because AWS, the leader in cloud, delivered, growing at its fastest pace in nearly 4 years. And now that Amazon has joined Microsoft and Alphabet in reinforcing that the AI spending is not slowing down, we are seeing a lift across the chip sector with NVIDIA and Broadcom all higher. The rally is also getting a boost after much of the forced selling tied to Leopold Aschenbrenner's AI-focused hedge fund appears to be over. The fund was heavily invested in chip names and the broader AI sector, so its liquidation created technical selling pressure across the sector, but we are seeing that beginning to ease this morning as well, John.
Such a messy year, Yahira, thank you. Just think about it. They effectively blew up being long hardware and short software, and earlier this year we had all these worries about private credit because they were all long, and private markets because they were all long software. So you've had two blow-ups essentially on different sides of the same trade.
Yeah, essentially leverage is a problem if you want to get in on this. The idea that the SaaS coplifts led to, what was it, a hardware get-in?
Concentration is the problem, right?
Maybe that's the fair point.
That's the issue. With leverage on top of that, then you've got a massive problem.
Yeah, the whipsaw back and forth of what exactly is the correct trade in a time of rapidly changing AI.
Let's get to some of our top stories, shall we? On our radar this morning, Apple disappointing investors after issuing weak guidance tied to surging memory prices and chip shortages. Amazon managing to impress with accelerating cloud sales growth, the company reporting a 37% increase in AWS revenue. Elsewhere, Anthropic announcing its AI models breached 3 unnamed organizations during recent cybersecurity tests. The company discovering the hack after reviewing over 100,000 evaluations, rival OpenAI making a similar announcement just last week. And finally, Tesla considering a sale of its China business to open the door for a potential merger with SpaceX. The Wall Street Journal reporting some executives have already been told to prepare for the move. Elon Musk, the CEO, denied the report, calling it, quote, fake news.
Either way, and I think you put your finger on this earlier, it is going to be messy for SpaceX to just acquire Tesla without some regulatory safeguards. And this has to do with their huge China presence, which is a significant one for them, one of the largest, second largest market for them, one that has been growing rapidly. They have factories there that produce a lot of parts. That is really the key question. Are they willing to do that? And then how do you get to the valuation that some people have priced in for Tesla as sort of an ancillary unit of SpaceX, which is much larger?
Tesla punished last week for a lot of spending, AI spending remaining intact, with several hyperscalers reaffirming some aggressive capex plans. Amazon, Alphabet, Meta, Microsoft leading the charge, devoting more than $700 billion to spending for this year. Late Chu of AllianceBernstein writing, we have reached an inflection point in AI. Investors should remain selective. Late joins us now for more. Late, good morning. Thanks for being here.
Thank you.
What's changed about this AI trade?
Well, I think where we are is on the exciting front, we've reached an inflection point in inferencing, in adoption. And that's, I think much of the market focus has been on the CapEx side. But let's take a step back and then see what we've seen through this earnings period. What we've also seen is revenue upside, backlog, massive amount of backlog these hyperscalers are delivering. And, you know, a lot of people have been calling the AI being a bubble. In my experience, it's very hard to call something being over when we just reached the rapid adoption phase. So if you ask me what has changed, we've been on the journey and we just reached an inflection point.
Well, let's talk about the companies that are being punished and the ones that are being rewarded. So Alphabet was punished, Microsoft was rewarded. What was the distinction between the two for you?
I suppose it's less so about they're that different as in the timing of it. And this month and this week, we've seen massive volatility in the marketplace. And I think that's one of the issues that we have had. And some of it's technical, some of it is led to, you know, is sort of what you talked about, the leverage in the system at the investor level. And these, in my opinion, when you look at the results, they're fairly similar to some extent. We're seeing revenue acceleration, we're seeing CapEx remain firm, and we're seeing these companies actually really innovatively trying to figure out ways to lower their cost base as well. So I think in general, results were similar. It was just more which day of the week did they report and where were we sitting in the middle of a massive sell-off.
So to John's point earlier when he's talking about how it was the SaaS coplifts early in the year and then suddenly it was the hardware names, the chip names selling off, how much do you see that narrative kind of continuing to oscillate between the two as people keep investing in the hardware and the infrastructure that seems to be a feature of this entire cycle that has to keep going?
At this point, I mean, we've seen it even from Apple's results, which has been phenomenal in terms of supply chain management. When they're talking about component shortages and when they're talking about pricing increase at the chips level, at the memory level, you see that, you know, we are having shortages. We are still, I would say, overall in the earlier phase of the build out, and especially when you see revenue accelerating, these hyperscalers. And if you're a business owner, if you see business coming in, you should be building. So I think we will still continue to see really strong spend throughout. But in the meantime, most important thing for us to take away this earnings period is that we see adoption, we see revenue accelerating. That to me is the most important sign. And as long as we see that, I think the ecosystem remains healthy.
As an investor, how important is it for you to hear from the C-suite clarity of vision?
It's particularly important when we are in once-in-a-lifetime massive changes at the infrastructure level. So it's important to understand what they're spending on, how they see the future. And it's more important than ever for us to scrutinize and then to ensure that our vision, our belief is aligned with the companies that we invest in. And furthermore, I would say the one thing that we are talking about is as a whole, CapEx is very strong. But underneath it, even when you look at it, stock selection is extremely important. It's not rising tide lift all boat. And I think more than ever, because the pace of innovation is so fast, and then because this time it's some of the biggest spenders actively looking at what they're spending on, and they're scrutinizing that spend. So we are likely going to see, even at the spending level, even at the supply chain, you're going to see continued pace of innovation going faster. And as a result, the market is also going to pricing in, like when we think about SaaS or some of the company that we think might be disrupted in the marketplace, the market quickly is pricing in the probability of success at the terminal level. And I think we're going to look at that at the hardware level as well. The architectural change is actually happening at a much faster cadence than we ever imagined, and partly aided by technology. And so I think as an investor, it's very important for investor to remain very prudent and selective and pick the right winners, even though the overall narrative has constantly been focusing on how big that number is.
This has not been a forgiving market, that's for sure. Leah, appreciate your time this morning. Thanks for being here. Leah there of Alliance Bernstein. The Nasdaq up this morning by 1% with an update on news worldwide with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Saudi Arabia holding talks with 43 countries on forming a multinational alliance to protect shipping in the Red Sea. The Saudis proposed leading the coalition, the plan receiving support from 13 countries, including Turkey, Egypt and Qatar. Ken Griffin's Citadel stepping in to rescue a hedge fund. Situational Awareness selling off a heavy chunk of its portfolio. Citadel buying up the bulk of the fund's AI stock bets. Shares of Novo Nordisk are falling in the pre-market. The company giving an update on its Zeus Phase 3 trial, saying it failed to reduce the risk of heart attacks or strokes in a large study. The monthly injection was a key part of Novo's effort to expand beyond its core obesity and diabetes businesses. And that's your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next on the program, dry powder on the sidelines.
There's $4.5 trillion of dry powder across the private markets, which is just an astonishing figure. I almost think about it as a waterfall of capital markets depth.
Up next, we'll catch up with the Ares CEO, Mike Harugetti from New York City this morning. Good morning. You're watching Bloomberg TV.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
Welcome Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Equity futures positive here by a third of 1% on the S&P, adding to yesterday's gain, the biggest one-day gain on the Nasdaq we've seen since March, following a 6-day slide, the longest losing streak, going back to October 22 for the Nasdaq. The Nasdaq this morning up by 1%. Into the bond market, 2s, 10s, and 30s. Lots of reasons for higher 30-year bond yields on the week this morning. Just sticking at about 520. Lots of people talking about Kevin Walsh and that performance on Wednesday, but there's so much more going into high yields at the long end of the curve.
It has to do with government issuance, and it has to do with hyperscaler issuance, and it has to do with the fact that central banks around the world don't seem to be in a rush to raise rates to counter inflation, and so they're allowing the long end of the yield curve to do the work for them.
30-year yields this morning, just about unchanged at 522. And at Savannah's this morning, dry powder on the sidelines.
There's $4.5 trillion of dry powder across the private markets, which is just an astonishing figure. There's broad demand, and you're already seeing it in the 2026 patterns where some of these companies are actually choosing to issue in the private markets. I almost think about it as a waterfall of capital markets depth.
So here's the latest this morning. Ares reporting at earnings beat, highlighting another record quarter of fundraising with over $36 billion of inflows. The CEO, Mike Arrighetti, writing, "Our clients continue to reward us due to our strong and consistent fund performance across our strategies." Mike joins us now in the studio for more. Mike, good morning. Good to see you.
Good morning. Good morning.
I wanted to start with a quote of yours from earlier this year when things were pretty difficult with the software issue. And you said something really important. You said the following: if you're going to underwrite a narrative of AI disruption, you also then have to say, well, what does that mean for the productivity and margin improvement for the rest of your book? I think that's a good place to start. Where are you seeing value being created right now?
I'm glad I said that. So if you look at the way that Ares is playing the AI transformation, it's what are we doing within the data center and digital infrastructure space? What are we doing within our portfolio companies, and what's that productivity uplift? And then what are we doing within Ares proper to either improve our investment outcomes or profitability? So if you start with Ares first, we're obviously deploying AI across the entire enterprise. We're seeing significant efficiency. We had a 100 basis point margin increase in the quarter year over year, and we've guided the street to expect 0 to 150 basis points per annum. A fair amount of that is technology efficiency that's getting created, re-underwriting processes, re-underwriting systems, and we are seeing uplift. That is also translating into increased productivity and margin expansion within the portfolios. So if you were to look across our private equity portfolios, our private credit portfolios, cash flow growth is still plus or minus 10%. If you look at corporate earnings, I think you're going to see that that's generally the theme. And then within the investment space, we are doing our best to stay diversified in the way that we're attacking the digital infrastructure opportunity. Big investors in data center development, but I think our approach has tended to be a little bit more targeted. We're doing 150 to 300 megawatt deals, hyperscaler adjacent in large tier 1 markets like Tokyo, London, Sao Paulo, pre-leased 12 to 15-year terms with escalators. So we have probably shied away from some of the secondary and tertiary markets and stayed away from some of the frontier model type of opportunities. Two, we're a very large lender in the infrastructure debt space, and you're seeing that rolling through our earnings as well in terms of the fundraising and deployment momentum there. So we are one of the largest institutional lenders to other developers, and that's been a bright spot. 3, we have a large asset-based finance business, and we're squaring off with a lot of the banks on SRTs and portfolio purchases, where we're helping them free up liquidity on their balance sheet to continue to deploy into the opportunity. And then 4, we have a very large infrastructure equity business where we're investing all around the digital ecosystem, transmission, fiber, battery storage, et cetera. So we're kind of attacking it from all angles, but our view has been we want to be global, we want to be diversified, and we want to have the full capital structure so that we can move around where we see best relative value.
It's the second word I want to dig into, diversified. Yeah. And I'm open to the reality check. I'm just going to say it feels. It feels like a lot of people are in the same trade. They're in asset-backed infrastructure debt on the credit side, and they're taking direct equity investments into, say, software and models. How do you avoid all the crowding that we're starting to see in other places?
In digital specifically?
Within your firm?
Yeah, I think the key, and this goes, if you look at our earnings this quarter, and you put the numbers up on the screen, what screams out to me is just the broad-based nature of the business and the diversification. And so the way that we think about private markets is we want to be up and down the capital structure, debt to equity, so that we can move around and find relative value in response to rates or the economic environment. We want to be horizontally diversified across all the different private market asset classes, secondaries, private equity, real estate, infra, and you'll see investor appetite and our own view of relative value shift. And then within the funds, we want to be highly, highly diversified. So if you look at our credit funds as an example, you may see 900 to 1,000 line items. So we're not going to have any single exposure really drive the long-term performance, and I think that's key. There is a risk in any investment business that you're over-diversified, and I could argue maybe 1,000 loans in one fund is over-diversified, but it's served us well over the 30 years that we've been doing it.
Earlier this year, everyone was saying there's going to be a complete collapse, that the private credit space is going to go down in flames because of the retail investors, et cetera. And your compatriots and yourself are coming out and saying, whoa, not at all. We're seeing actually performance hang in there and people are still interested. Where are we in that in terms of interest from investors in private credit, how much the pendulum has shifted to the infrastructure and some of the other plays instead?
Yeah, look, we've been pioneers in private credit, and people have been saying it's a bad place to be for 30 years, and it's grown pretty consistently and compounded at a very attractive rate of return. So anytime there's a narrative that's that loud, you've got to at least ask yourself, what is it that they're looking at? We don't see it. If you look at our direct lending business, which is kind of where I think people are focused, our non-accruals across the direct lending business right now are inside of 2%. That is well below the historical averages. Our cash flow growth is plus or minus 10%, as I said, and that's been consistent. We are seeing healthy interest coverage, very low loans to value. So the fundamental performance is exactly what was underwritten. A lot of the noise, I don't really know where it's coming from. It could be coming from a competitive set of capital that, doesn't like to see the flows. It could be software related, but there's nothing that we see in the portfolios that would indicate that credit's weakening. And the interesting thing to your question, and you see it this quarter in earnings, the institutional demand for private credit is probably accelerating right now because they're seeing spreads widening and they're seeing capital leave the market and feel like there's an opportunity to come in and take share. So our last 2 credit funds, both in asset-based finance and opportunistic credit, hit their hard caps, and we had demand well in excess of the hard caps, and we raised those funds quicker than any prior vintage.
It's fascinating to hear you talk about the performance of these loans, and it's something that we've seen from the likes of Capital One and some of these other credit card companies. The credit performance is hanging in there. Yeah. It's actually hanging in there better than people expected. Where are we in this economic cycle based on some of the activity that you're seeing in portfolio companies?
Yeah, if anything, you could say growth is moderating slightly. So if we're growing cash flow portfolio-wide 9 to 10%, a year ago that may have been 11 or 12. But it's not negative. So you are slow growth. I mean, where are we? It's still early. And back to the first question from Jonathan, you're seeing margin improvement, productivity gains, balance sheets are healthy, companies are delevered. So it feels pretty good, and it's just not in corporate. We see it in the real estate market too. We're well leased. We're seeing rent increases and strong demand, so everything feels really good.
Right now we're talking about leverage coming out of the system in public markets. There was some concern that maybe leverage was building or there was some frothy types of behavior in private asset management. You talk about $170 billion of dry powder. I'm just wondering how you see some of these structural dynamics in the market in terms of ability to finance some of the huge bills coming and willingness to do so.
Yeah, look, I think $170 billion of dry powder feels like a lot, but it's actually kind of in line with our annual deployment. So if you look at the $36 billion that we raised this quarter, we also deployed $36 billion. That's actually a lot quicker than historical. It used to take us probably 2 to 3 years to deploy our dry powder. We're now almost on an annual raise and deploy. I think with regard to the digital CapEx, obviously there's $750+ billion of CapEx demand coming from the hyperscalers. That is a large amount of capital. It's beginning to, quote unquote, overwhelm the markets, and that's showing up in two ways. One, spreads are widening, which is not necessarily a bad thing, and people want to get paid more for the risk that they're taking. And it's probably slowing the pace of the build. So, when you're thinking about deployment, this is not happening overnight. These are 2 to 4 year projects. You've got energy constraints, you've got community engagement and civic discussions that have to go well. So there's a lot that's actually constraining the coming online of some of this CapEx. So at least as we're sitting here today, those numbers don't concern me. But your point is a good one. And going back to a year ago, people were beginning to ask, where's all this capital going to come from? The CapEx numbers have doubled, and the market is trying to keep pace, but it's going to be a little bit of a constraint, I think.
I thought you were about to ask whether Leopold had given Mike a call. When you talked about a dry powder, I thought maybe.
Maybe you were the one that was the Grim Reaper calling. Did you hear some? I love those quotes. Did he give you a call?
No.
Breaking news. And with Ken Griffin. Just kidding.
Are there any lessons from that? As you see that story and react to it in real time?
I don't know enough to know. I think, if anything, maybe back to your prior question, is be diversified, number one, which is, don't be fully exposed to one factor or single correlation. I think that's, that might be the lesson. It might be that experience matters, and that, combination of smarts and experience through cycles is ultimately important. And I think, I think about our own 30-year journey and all the lessons that we've learned navigating cycles and
painful ones,
things, and you'll learn lessons the hard way. And so that might be the moral of the story too.
Mike, appreciate it.
Thank
Good
you.
to see you.
Good
Thank
to see
you,
you
buddy.
guys.
Thanks for being
Appreciate it.
here.
Thanks.
Thank you very much. Mike, how do we get you there? The Aries CEO. So that's a no. Leopold didn't give him a call.
Well, it's a different asset class, I guess. But it does highlight the role of experience in this. I mean, 24, idiot savant or not idiot, but, that is sort of an incredible, brilliant guy.
Strong, Bremo.
Well, no, but it's like it's a phrase. He's graduated college at 19. No, that wasn't. No.
Running out of time here to clean this up.
Time. Look at that. The time's got to go. Yield is destiny.
15 seconds to dig out of this hole if you want.
No, he's a brilliant guy. 24.
Okay. From New York City this morning, good morning. The third hour of Bloomberg Surveillance up next.
What is Mira Murati's vision for the future?
Predicting dystopia or utopia to me feels very, very simplified, because the truth is we actually have a lot of agency in how we build this technology, in the tools that we're building, how we're deploying it. It's not a predestined outcome. There are certainly those risks. We all understand the potential for greatness that comes with building frontier AI systems, and that's why we're working on them. There's been a lot of talk around the uncertainty, around the downsides, and I agree with a lot of these risks. And perhaps where I might disagree or take a different path is that I think we have a lot of agency. Like this period of time where both humans and AI systems have their hands on the wheel and we can collaborate, it's a very important time to get right. And the more that we can reduce the discontinuity that comes from new capabilities and huge change in capabilities, the better. And this is why we took this approach with thinking machines and why the company exists.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
The global economic playbook is being rewritten and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
There's still lots of demand for equities.
Right now, we're in the middle of a good growth cycle.
What we really need to see is continued strong earnings growth.
Once again, we have these broad-based earnings surprises. Earnings are opinion, cash flow is fact.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Yield is destiny. Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now with equity futures positive by a third, adding some weight to the rally of the last 24 hours on the NASDAQ. The NASDAQ delivering the biggest one-day gain since March, adding another 1% to the NASDAQ 100 this morning. In the bond market, 2s, 10s and 30s, yield shaping up as follows. Yields this morning on 2s up by 2 basis points to 426, on 10s around 468.
Yeah, and the real key question here is, what is the relationship with the global trade and what is the relationship with the Federal Reserve? We heard from Kevin Warsh, the Fed chair, a speech that was widely panned on Wall Street, but gave a lack of clarity about what the actual calculus would be when they were deciding whether or not to raise rates. Now we're hearing from some of the other officials about why they dissented, and some of those might suck up a lot of the oxygen.
Mike McKee is going through those dissents. I understand that Mike McKee is available to talk to right now about it. Mike, clarity. We didn't get much from Kevin Warsh. How much clarity are we getting from some of those dissenters this morning?
We're getting a lot more. It's become something of a thing that on the Friday after a Wednesday Fed meeting, the dissenters published statements explaining their votes, and we've got statements from 2 of them, Beth Hammack and Neil Kashkari. Hammack cites supply shocks, but also says that she sees inflationary pressures on the demand side of the economy as well. Businesses in her district, she says, are telling her that pricing pressures are broadening rather than fading, and she notes consumers are expressing despair over persistently higher prices. Inflation has been too high for too long. In my view, now is the time for the FOMC to act to speed the return of PCE inflation to our 2% objective and deliver on our commitment to price stability for the American people. And she notes that the longer inflation persists, the more challenging and costly it is to bring it back down. She also says that she's not confident it will return to their objective on its own. Kashkari worries about the effects of the series of supply shocks the economy has faced, as well as new demand from AI. He looks to the oil shocks of the 1970s and the ultimate decision of the Volcker Fed to lean against those shocks rather than accommodate them. To manage against the risk that high inflation would become entrenched, Kashkari says, I would rather tighten policy incrementally as we gather more data on the path of inflation and unemployment. If inflation remains elevated, in my view, a potential series of small policy moves would be better than waiting and eventually concluding that even bolder actions were necessary. And of course, on the other hand, if inflation fades, he says moving in slow, small steps would allow the Fed to dial back the stimulus without unnecessary impact on the real economy. We have not heard from Lori Logan, the third dissenter, but we are, since it's a thing now, expecting to get something from her later today.
Looking forward to your coverage of it. Mike McKee there breaking down the dissents of Hannock of Cleveland and Kashkari of Minneapolis. Let's start with Kashkari of Minneapolis. I give him credit for being consistent and slightly early, pushing back against the easing bias in the statement a number of months ago, suggesting that the earlier you move, the less you'll have to do further down the line, and that we could see some tightening of financial conditions. And then now, ultimately making the point again that the earlier we move, the more incremental we can be, and the less we might have to do later. But of course, this is dragging on and on. It's the word incremental hikes, those two words that get my attention from Kashkari this morning.
Yeah, saying that a series of small incremental hikes is preferable to acting when you finally allowed inflation to get away from itself, and actually arguing that, yes, monetary policy can have a role in dampening supply-side, supply shock-driven inflation, kind of rebutting the argument that this isn't their battle to fight. Ultimately, if inflation is a choice and it is their choice, he's saying they should do something about it. Here's the question. If Lori Logan comes out with this type of statement, it puts all of the non-speaking Fed members on the hot seat. Where do you stand, given that we haven't heard the rhetoric, the argument for remaining on hold this week at the Fed's meeting?
If you're on the board of governors, let's just park the regional Fed presidents just for a moment. If you're on the board of governors right now, I imagine you feel quite sensitive to the idea that a new guy's just taken the role, and you want to give them some time, which might be, and I stress might be because I don't know and have no insight line on this whatsoever, it might be why Waller did not dissent at this meeting. I would look for clarity on that. It's the governors I'm looking for, because right now, based on this commentary, the Fed chair's running out of time. And you're going to have to see the data do a lot of heavy lifting between now and the September meeting to stop this pressure from building even more.
Just like Dalip Singh said, if you do get a sort of immaculate disinflation, that could take the pressure off in a significant way. But without that, a lot of these voices are going to get a whole lot louder.
Let's get to the view on Wall Street this morning. Phil Camporelli of JP Morgan Wealth Management writing the move in the yield curve after the press conference is something that every Fed chair would want to avoid. They would much rather be transparent heading into the meeting versus the driver of material price action. Phil joins us now for more. Phil, good morning.
Good morning.
Whole new world. How many times have we said that this week?
Yeah.
What's your reaction to Wednesday and your reaction to this morning?
Yeah, bond market freak out. We haven't gotten that in a long time. And it does remind me, there was this Chair Powell press conference from October of 2018. I'm not sure if you guys remember when he said, you know, President Trump was very, very critical of him. And
long way from neutral, that line.
Yeah, good one, John.
I don't remember if it was the presser or if it was an interview or testimony.
We're far away from our neutral rate.
But that was the line.
And the bond market was like, what? How many more tightenings does that imply? It ended up being one more tightening in December, a pause in January, and then they were easing by July. Like, this stuff moves very, very quickly. But more importantly, John, as I wrote, no Fed chair wants to see a reaction like that in the bond market after they talk, because they want to be transparent. I remember when Janet Yellen compared monetary policy to like watching paint dry, right? That's what they want monetary policy to look like. And that could be course corrected. I think that's the bottom line here. When the statement came out, there were 3 dissents. Fine. 3/4 of the committee didn't see enough evidence that the impact of what energy prices would be doing to broader inflation. And the statement was fine. It was the press conference. And I think they can, or Chair Warsh can course correct that. At the end of the day, though, I still go back to the 10-year Treasury rate and the volatility of rates. I think the federal funds rate is priced to move 1 or 1.5 times by the end of the year. And it's kind of interesting because when we have our strategy meetings, you have the bond people on one side, and they're like, oh my goodness, look what's happening. And then you have the equity people, and they're like 20% equity earnings growth, right? And this is a trade that we still like. And that's really the disconnect here. Yes, there's a lot of consternation in the bond market this week, but the equity trade continues, we think, to have momentum and legs. And we're going to look back on July, and this month, we're going to have an unchanged month in the S&P 500.
Yep.
But it felt more like the Odyssey than an unchanged month in the S&P 500.
A few points away from all-time highs as well.
Yeah.
You serve wealth management clients.
Yeah.
If they're in the clip and coupon business and they're not too worried about the volatility, the income that fixed income provides now is higher.
Yeah, that's the key.
Is this a buy after the freak out?
Yeah, that's the key. So we are of the view, John, that the 10-year Treasury probably stays at or around these levels through the end of the year, which leads us to believe that, yes, you have the power of carry on your side. If the Federal Reserve is already priced to go 1 to 2 times this year, then you're not really talking about a dramatic move. It's kind of like buy the room, sell the fact, dramatic move in the long end, unless we're really wrong about these next 2 CPI numbers and these next 2 payroll numbers that show significant strength that, Lisa, I think you mentioned earlier this morning, could maybe prompt the Fed to do more. So yes, we do believe that it's a buying opportunity in fixed income to take advantage of these current yields. But John, we are looking in the front end of the curve because I think there's a little bit more of an opportunity there than in the back end of the curve that could have more duration and volatility just in the near term.
I remember late last year, a lot of people were talking about how the pendulum of risk reward had really shifted more to equities than potentially from bonds, just based on where spreads were, based on the potential earnings ahead for particularly tech companies. Do you think that pendulum is shifting back? That higher yields means lower returns from equities for a longer period of time?
No, because I do believe it's still the equity side, Lisa, that we're leaning into, because we think that this earnings story is interest rate insensitive. And that sounds kind of blasphemous to say, but again, we have a 24% earnings forecast for 2026. And the only other times that we were 20% in a calendar year were coming out of the 2001 recession, the global financial crisis, and the pandemic, and we're doing this in the middle of a cycle. And I think this month especially, the fundamentals have completely dislocated, right, from the price action of some of the hardest hit sectors, which were, tech, communication services, industrials. And, if you look at the earnings revisions, they're positive. That's usually what drives stocks, but the price action was lower. And I think we're still leaning into that tech trade more than bonds. But bonds, again, at these levels, you really need a Federal Reserve that's going to be super hawkish to get hurt. And legging into a 10-year note at 470, if your high side looks something maybe like 5%, doesn't sound like a bad idea when you're getting paid for that carry.
Where in equities is the best place to go? Because we've heard from Mike Wilson about the broadening trade, and we just heard from Mike Arrighetti of Ares about the incredible efficiency gains and increased profitability that non-tech related companies are experiencing. Is that where ultimately the upside is going to come from?
Yeah, so our favorite sectors are tech still, industrials that are tied to the tech trade, but introducing financials. Financials are also a sector that we like. And I think what's happening, when you see the Mag 7 versus the 493, when you see that valuation at points that we haven't seen in a decade, I actually think it has more to do with the 493 than the 7. And investors buying into and having confidence in that those sectors are going to be more profitable, that there can be non-tech sectors that are profitable, like financials. And financials are one of the biggest deltas or changes in our earnings revisions. Buybacks are really important in financials. And capital market activity. I mean, I'm sure you guys covered the JP Morgan results, the Goldman results, and the way that those CEOs talked about capital market activity. And Lisa, again, that's the disconnect, right? You have the fixed income people freaking out this week. Oh my goodness, we may need to see yield is destiny. You may need to see a rate hike.
You're not letting that go, are you? Hey?
Never.
That's going nowhere.
But this remains a pro-cyclical trade. And again, earnings are driven not just by growth, but by nominal growth. So inflation is bad without growth, but if we have a 2% GDP growth forecast and 3% inflation forecast, 5% nominal growth is a good environment to take risk in.
We found something to blame. Can we finish on situational awareness?
Yes.
The hedge fund's blown up, someone stepped in and picked up the positioning. Do you think that's a sign of a washout, a clearing of positions where we can form a new base and pick up from here?
Yeah, we do. And one of the things that we like to look at are retail flows and ETF flows. And John, the move in the tech ETF and the semi-equipment ETF, those outflows last week were some of the biggest on record, right? So akin to what you were just talking about outflows, that's what I think kind of makes a floor where you can then get back to the fundamental story. Oh my goodness, these folks are adding to their capital expenditures. There still is a supply-demand imbalance on semiconductor demand versus supply, which I think keeps this thing moving forward.
Good to see you, buddy. As always, Phil Camporelli there, JP Morgan. Private wealth management rather. I just want to get to this statement from HSBC and Max Kettner, because he talks about that in this new note this morning, Bramo. He says, yesterday's news around the unwind of AI hedge fund situational awareness gives markets a welcome narrative to justify the renewed sell-off in chip stocks in the past 2 weeks. Goes on to say that technicals have also become much cleaner now. In our view, this creates a powerful backdrop for a positive reversal of Momo, says we shift EM Asia equities back to overweight, reduce Eurozone equities, remain overweight US and Japanese equities.
Yeah, this max overweight in equities continuing, interestingly, remain quite aggressively underweight developed market sovereigns to fund or carry an equity overweight position. So this is coming at the expense of yield in terms of yield is destiny, yield is going higher, and the developed world is going to continue to struggle with that. That's not undermining, though, the overweight in some of these momentum sectors.
Interesting note from Max this morning. Just interested, and Phil was talking about the same thing. Maybe just, whether it's the right thing to blame, but something for the people who are in denial to blame, maybe, about the last few weeks.
I think we have more situational awareness about
it. Maybe we do, or maybe we don't. Let's get you an update on news elsewhere this morning. With your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. 2 of the 3 Fed presidents who dissented at Wednesday's meeting are speaking out now. Cleveland's Beth Hammock saying now is the time to speed the return of PCE inflation to 2%. Minneapolis's Neil Kashkari saying he'd rather tighten policy incrementally as the Fed gathers data on inflation and unemployment. Anthropic says its AI models breached 3 organizations during recent cybersecurity tests. In a blog post, Anthropic says it found 3 instances in which its Claude AI tool accessed the internet and then hacked into external organizations. Shares of Jersey Mike's slumping nearly 9% in their trading debut. The company and some of its shareholders raised $1 billion in an IPO that priced at the midpoint of its marketed range. And that is your Bloomberg brief. John.
Vonnie, thank you. More from Vonnie in 30 minutes. Up next, the morning calls, plus Shweta Kajuria of Wolf Research as Amazon soars, capping off hyperscaler earnings on a high note. That conversation up next from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
What we're seeing here is the hyperscalers leading a massive round of CapEx, which is contributing to supply shortages and inflation in component costs. This will resolve itself over time. This is a short-term issue, but in this case, short-term could be 12 to 18 months. But it'll eventually take care of itself.
That was Tom Forney of Maxim Group weighing in on Apple. Apple struggling in the pre-market. More on that name throughout this morning into the opening bell. The cash open 1 hour and 12 minutes away. Let's talk about the stock market. Equity futures positive by 0.25%. The Nasdaq doing better, higher by 0.8%. There's a fantastic story out there about a hedge fund called Situational Awareness. All the characters involved. It's a great one. You could write a book on it, I'm sure. When Ken Griffin of Citadel's doing the rounds too, there's always extra meat to it. But the essence of it is you had a guy who was running a strategy that was very long hardware, very short software, and was using lots and lots of leverage. That produced fantastic returns for much of the year until it didn't. And things unwound really, really fast. Did that contribute to the weakness that we started to see in SAIT chips? Did the unwinding of those trades contribute to some of the big moves we started to see over the past few weeks? Maybe to some extent, possibly, yeah. Do you believe that now sets a base, a cleaner base to rally from here because we've washed out some of this positioning? I think some people believe that this morning. And this came from Max Kettner of HSBC, and it's an important line. Yesterday's news around the unwind of the hedge fund Situational Awareness gives markets a welcome narrative to justify the renewed sell-off in chip stocks in the past few weeks. Technicals have become much cleaner now. In our view, this creates a powerful backdrop for a positive reversal.
And this goes to a point that a lot of people have been talking about, which is the technical nature of the market over the past couple of weeks, rather than anything having to do with fundamentals. We talked about Samsung, SK Hynix, Samsung more so, coming out with really good earnings and still getting beaten up for it. It's also coming in tandem with the South Korean market stabilizing a bit, with authorities putting some sort of caps on the use of leveraged ETFs.
I'll tell you what, Bram, I can't keep up with the news flow. No. I was looking at this headline just crossing the Bloomberg. I mean, let's bring it up right now. Moonshot's Kimi was built on 20,000 NVIDIA chip cluster through Alibaba.
Oh, dear Lord.
You know?
Yeah, well, this is the whole question of how much of the Chinese technology is being built on smuggled equipment from the United States, or things that have been sanctioned in some capacity. There will be a lot of questions.
How export compliant is it all? There could be questions about that. Where's the technology coming from? Is it just US tech dressed up as something else? How much of a threat is this to US markets? Is it another shock like DeepSeek just last year? These are all questions we're trying to answer in real time.
And just how much cheaper is it actually than some of the frontier models? I mean, the big argument is that it's cheaper, it's open source, but it turns out when you dig under the hood, it's using a lot of the same compute, a lot of the same technology, and it costs a very close kind of amount.
This is according to our reporting, but what it underlines still is that on the surface, yes, we're seeing some progress from China, but there's an underlying dependence on US technology. So if you thought that story a few weeks ago was a reason to sell US tech, I think you're rethinking that based on the reports we've seen over the last few weeks.
Yeah, which maybe is also giving some stabilization. It isn't exactly a one-for-one type of disruptor that people had imagined.
I'm running out of time here, so I've got to move on. So let's get to the morning calls. One stock in focus, Amazon. Barclays raising its price target, saying it's, quote, atop the AI hyperscaler pedestal. His second call from JP Morgan hiking its price target, noting a clear line of sight to strong financial returns. And finally, Citi lifting its price target too, citing booming AI demand and calling it a top pick. The tech trade then regaining its footing after a blockbuster week of earnings. Amazon surging on growing cloud strength. Apple facing some headwinds. Ed Ludlow has the news wrap. Hey, Ed.
Yeah, good morning, John. The markets with Apple had no sentimentality for Tim Cook's final call. It came down to a really critical question, which is what does the world look like in 3 months relative to today? And Apple made some pretty stunning concessions that they had misjudged demand on the smartphone side and on other products. And so it wasn't even a case of memory. Yes, memory prices will go up. But even in lead-edge processors, Apple basically didn't ask suppliers enough. They made a misjudgment. And so the September quarter and the outlook of growth of 9 to 11%, trailing the street's expectations, it is pretty amazing to see the stock down almost 8% in the pre-market as a result. Amazon, a completely different story, right? They told the market, our AI investments are already paying off, and quite clearly the market believes them. Capital expenditures rising from $200 billion to $220 billion. Azure growth, 37% growth in the quarter gone, above expectations. But loads of other data points that show they're making money on AI, and the street believes that.
The stock's behind the story. Ed, thank you. The stock is higher by 10% this morning. Shweta Khajuria of Wolfe Research staying bullish on Amazon, writing the second quarter was a clean beat and third quarter guidance came in line with investor expectations. We see a path to 40% full-year growth. Shweta joins us now for more. Shweta, welcome to the program. What was the difference between them and, say, the likes of Meta, the likes of Alphabet?
Good morning. Thanks for having me again. Well, Amazon, as far as I remember, in the recent past, had one of the cleanest prints. And what was different between Amazon and Meta and Google was that Andy Jassy actually talked about the clear line of sight into return on invested capital, how they're seeing demand, how they're laying out data centers in the first 2 years, and then they break even post, a couple years after they put in servers and networking investments. And the life cycle and the length of the life of each is different. And they think that this is just a very similar playbook as how they expanded AWS with just much faster growth that they're seeing in AI. And so that gave investors a lot of comfort that they're spending against a lot of demand. They have concrete demand. They're not going to spend if they don't see it. And there is line of sight to seeing returns. And most importantly, they're doing this from a position of strength. And they've done something like this before. So that is probably the biggest difference between across the three.
Shweta, is Amazon essentially a cloud computing company with a retail arm tacked on?
It's really amazing how things have turned around. I mean, still retail is their biggest revenue business, not operating income or profit business. But what is remarkable is that if you really believe in the $1 trillion revenue opportunity at AWS, and let's say that it reaches that in 10 years, at low to mid 30% margins, assuming that's the normalized state of their margin profile, it is amazing that that would be about 2/3 to 70% of their total company level operating income. So vast majority of their enterprise value would be coming from AWS. So yes, I would think so in characterizing it as more of a cloud computing AI company than retail.
Isn't it funny, Lisa, if you ask someone on the street away from Wall Street what they know Amazon for, obviously it's retail. They wouldn't even be talking about the other part of the business. In fact, I would guess that most people on the planet away from Wall Street, when they think of this company, don't even know the other side of the company exists.
Well, at dinner the other night, one of the kids was like, how did they get it so much cheaper than everybody else? And I said, cloud computing. Phew. Mind blown.
Totally.
That's exactly how it gives them a competitive advantage to potentially compete on price in a whole different kind of way.
Almost by accident, they end up with that business.
I know.
It's nuts.
I know. It came from, selling books online, and suddenly now they, are the reason why we...
You need quite an imagination to think you'd get from that to this.
And the imagination is what people are buying into.
Shweta, appreciate it. It's good to see you. Shweta Khajuria there of Wolfe Research. The stock is higher by almost 11% at the pre-market. Up next, we'll catch up with the former New York Fed President, Bill Dudley, seeing some major red flags in Fed Chair Kevin Walsh's strategy. That conversation is up next.
Welcome to Bloomberg This Weekend. I'm David Burrow.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Equity futures this morning positive by 0.25% as a bounce on the Nasdaq, up by 0.9. That bounce continues following yesterday's big gain. In the bond market, 2s, 10s and 30s, some data just seconds away. Yields at the front end of the curve up 3 basis points, around 430 on 2s. Let's call this 427. Yields up a single basis point on 10s, behaving just a little bit on 30s at 521, following the free count on Wednesday and the news conference with that Federal Reserve. We'll spend some time on that in a moment with the former New York Fed President Bill Dudley. Looking forward to that. Let's get you some economic data. Mike McKee has that data for you. Hey, Mike.
Good morning, John. Well, we've got another inflation indicator. The employment cost index for the second quarter is just out, and it is up 0.9%. That's higher than the 0.8 the prior month, or the 0.8 it was expected prior quarter. Excuse me. We see that wages and salaries were up 0.9%, and business benefit costs increased 1%. So a little bit more inflation on the employment side in terms of compensation. Not sure whether that will influence the Fed a whole lot, since we've got a lot more inflation between now and September 18th, their next meeting. But it does show you that inflation is not dead, and it sort of helps undergird the cases that Beth Hammack and Neil Kashkari were making this morning for their dissents.
Mike McKee, thank you. I just want to pick up on the bond market move and just go to the front end of the yield curve. And I won't make too much of a big deal of this. I'll just talk about it directionally. So we're higher by 3 basis points. And if you look across the curve and just look at 2s, 10s, 30s all at the same time, just look at this, how the markets responded to the data. I think this is actually quite important. And I'll tell you why. So 2-year yields have responded by climbing 3 basis points. The 30 has not moved. So that's a market that still believes on the margin that that kind of data would influence the policy rate of the Fed. And it's not something they would look through. Now, it's just one data point. But if things had really changed after Wednesday, you'd expect to see that leakage at the longer end of the curve in the belief that you don't actually think the Fed's going to do anything and they're just going to let inflation run. So I think still out there, internalized within this market, investors still believe that this Fed is sensitive to incoming information and yields are higher at the front end.
The Fed is composed of individuals, and the individuals have different views, as we're learning this morning, and they're all coming out with some dissents. And what people are looking for, you're going to expect to see more volatility around every single data dump that we get, because ultimately, if you get data that does not cooperate with this immaculate disinflation narrative, there will be a lot more people on this FOMC committee that are going to come out and vote with Logan, Hammack, and Kashkari, and might even put the Fed chair, Kevin Warsh, in the minority.
It's a small move, Brahma, but you're with me? That's kind of how to think about this right now?
Essentially, the market is saying that at a certain point, if the data confirms that inflation is sticky and it really is continuing to move in the wrong direction, that the members of the Fed, regardless of what Kevin Warsh does, are going to be forced to make a move, and the market is forcing that hand and saying they probably will follow through on it.
Yields up 3 basis points this morning on 2s. It's a small move, but the direction, the response, the sensitivity to the data as it comes in is noteworthy. Mike, you've been following those descents. What have we learned so far this morning?
Oh, basically that both Hammack and Kashkari believe that if you start raising rates in small increments now, you'll have to do less later, because they do think that inflation is going to continue to be above target significantly for quite some time. and that that inflation rate is not going to come down towards the target on its own. It needs more help. It needs more tightening in the economy. We haven't heard from Logan yet, but she has made that same case before, so I would assume that she's dissented sort of on the same basis.
Stay tuned. Mike, thank you. Michael McKee there. The former New York Fed President, Bill Dudley, with a new op-ed titled "Walsh's Approach to Fed Policy is Deeply Flawed." He writes, "Outsourcing monetary policy to financial markets is a terrible idea. Walsh missed an opportunity to rebuild the Fed's credibility." Bill joins us now for more. Bill, welcome to the program. We were all watching that news conference, and it didn't start terribly, and then progressively it just got more and more confusing. What was the point in that news conference where you sat up and said, "This is weird"?
Well, it's weird when you're not explaining why three people are dissenting, yet the committee is deciding on no change in policy. There really was virtually no information about how the Federal Reserve is thinking about monetary policy, how the Federal Reserve is likely to react to incoming information in terms of how they adjust monetary policy. The silence of Walsh was really quite deafening, and the financial markets, basically said thumbs down. I mean, the fact that the 30-year yield went up, the 10-year yield went up, and 2-year yields dropped really was a sign that that there was a loss of credibility from that press conference.
Bill, I want to highlight a distinction because I think it's important, and it's in the body of your op-ed, and I want to say it for you. You're not against reducing forward guidance. This is important. I think that the complaints about the people doing the complaining often are around the idea that somehow we still want our hands being held, that we want to hold on to the post-GFC communication architecture. And Bill, I don't think that's what your criticism is about.
No, I mean, I wrote a group of 30 paper that we published in April, and one of the recommendations was to get rid of forward guidance. The only time you really need forward guidance is when you're at the zero lower bound for interest rates and you're trying to provide additional monetary policy stimulus. But the rest of the time, it really just sort of inhibits the Fed and probably makes the Fed a little bit slower to react to incoming information. But that doesn't mean you don't want to know what the Fed's monetary policy reaction function is. And I think that's the real problem. Walsh in his comments is conflating the two, and they're very, very different. If I don't understand how the Federal Reserve is going to react to incoming information, I can't price financial markets correctly. And it's also creating a lot of uncertainty about what policy is going to be in the future. The market response on Wednesday was really Fed credibility has lessened, and I think this is a really own goal on Kevin Walsh's part. I think one of the problems here, I think, is he's overpromised and underdelivered. He's talked about sea change at the Fed, radical regime change. But then the markets are actually getting very, very little in terms of guidance on how to think about the new Fed.
Bill, we were discussing about whether maybe some of this was by design. There is going to be more volatility. There has been more volatility both at the front end and the long end in response to every economic data point and comment coming from anyone on the Federal Reserve as a result of an absence of some sort of reaction function articulated by the FOMC chair. Do you think that this could be by design to help reduce inflation without hiking rates?
I don't think this is a really great strategy for a couple of reasons. Number one, it's a very inefficient way of tightening financial conditions. Basically, you're driving up risk premium in markets. That's a deadweight loss to the economy. Number two, how well can you actually control the market process to generate the impulse that you want to slow the economy down sufficiently? And lastly, it's a credibility issue. I mean, if to the extent that the markets reacted the way they did on Wednesday, that's telling you that people are more worried about the Fed's resolve to do the job. That means inflation expectations are less well anchored than they were prior to the press conference. That in itself makes the Fed's job harder.
Bill, how high is the bar for there to be, I don't want to say mutiny, but the bulk of the FOMC committee voting against the chair, potentially with the governors joining suit?
I don't think we would get to that. I think at that point, Walsh would throw in the towel and vote with the majority. I can't imagine a situation where the chairman allows himself to be outvoted by the committee, because if you had that result, it basically would be saying that the chairman has lost control of the committee, and that's just not a very good look for any head of any organization.
Bill, he was also vague about the inflation target. That was confusing too. Vague on the inflation target, whether they'd respond to it, and what tool they would use to respond. Can I pick up on that last point, Bill? He's flirting with the idea of using balance sheet instead of short-term policy rates, short rates.
Well, I think
what do you think of that?
Well, I think the problem here is that even if you reduce the balance sheet, you're probably going to be able to reduce it by about $1 trillion or so if you want to continue to have an ample reserves regime. And I think the commitment of the committee is to maintain the ample reserves regime. And then the question is how much restraint is shrinking the balance sheet by $1 trillion going to be? It's actually going to be very, very small. So the idea that, you pull on this balance sheet lever and that allows you to not have to tighten monetary policy, I think is very much exaggerated.
It's obvious that for the market, the primary tool is still the policy rate, because you can see that in the reaction this morning to the sensitive economic data that we got moments ago on wages. They came in hotter, labour costs. You saw yields rise at the front end of the curve. Bill, we've talked about this all morning, the credibility hit. You say credibility's been hit. Others agree with you. Let's talk about how you repair it. When you do a job really badly, sometimes you have to do more than you otherwise would have had to do. How much more do they need to do now at this Federal Reserve to regain that credibility?
Well, I think you have to follow up talk with action. So I think that what's happened in financial markets over the last 72 hours or so basically increases the pressure on the Fed to act in September. If it's a jump ball in September, you almost need to tighten now because you have lost credibility over the last couple months.
Do you think that it increases the chance of a larger than expected rate hike?
It's possible, but I don't think that you're so far away from your inflation objective that you need sort of shock therapy. If the Federal Reserve did 50 basis points move, that would be, in my mind, a little bit of a sign of desperation. Why didn't you hike in July and then you do 50 basis points in September? I think that's actually is a confusing narrative as well.
What do you think the overall motivation is here? I mean, we've been talking about this, and a lot of people said Kevin Warsh is a 100% respected person by the mainstream of the financial markets, by the establishment. Do you think this is just rookie's error, the classic kind of first press conference of a Fed chair? Or do you think that there is some political motivation here trying to dodge the ire of the president going into the midterm elections?
I can't judge that, but I generally think, no, that he's not trying to do it to sort of mollify the president. I think he really does believe that somehow outsourcing this to financial markets will improve the conduct of monetary policy. But you can't outsource it to financial markets for a very simple reason. Markets don't price to what the Fed should do. They price to what they think the Fed will do. And so if you try to outsource it to markets, all you have is the markets looking at the Fed looking at markets, and the interest rate path is indeterminate.
It's the
so it just doesn't work.
That we were talking about yesterday.
Yeah,
everyone's pointing at each other.
And I saw a couple versions of that. Fed.
I'm sure you did. But it's good to see you. Thank you, buddy. Bill Dudley there, the former New York Fed president. Thank you very much, sir. Appreciate your time. Employment labour costs. Employment costs coming hotter than expected, and you see the reaction in the bond market. It's notable. 2-year yields are higher by a few basis points. Equity markets pulling back. Lisa, the S&P just about positive.
Yeah, and this is something that Beth Hammack was talking about, that she does see the longer this kind of inflationary backdrop continues, that she does expect it to get more embedded in the market, and that there is not a rate that's sufficiently restrictive to really bring down that inflation. Look, we all want to see wages go up, and at some point, it really speaks to the productivity nirvana that people have been hoping for. Question is, if prices keep going up that much more, it doesn't ease the pain that a lot of households are feeling.
There's one letter that stands out for me this morning. You asked about regaining credibility, we both did, and you asked about whether they'd do a jumbo hike. I don't think they're going to do a jumbo hike, but I think you're in the right frame of mind to ask that question. The letter I'm thinking of is S. When Kashkari elaborated on his dissent, he didn't talk about hike, he talked about hikes. He talked about incremental hikes. That's a guy who's willing to go more than once. And I just wonder how many people look to signal the same thing.
Yeah, the idea of 75 basis points of rate hikes that an increasing number of Wall Street companies are looking for.
Is that the way you would have needed to communicate things if you'd hiked, let's say, early this week on Wednesday? Possibly not.
Yeah, well, and at the same time, we need to have some sort of reference point if they start hiking about what their lodestar is. Is it going to be a series of methodical hikes, or is this going to be something that is sort of a case-by-case basis? I mean, that kind of articulation is required for markets to not get ahead of themselves and possibly price in 150 basis point of rate cuts. This is where the reaction function matters.
Futures this morning positive by about 1/10. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie has more. Hey, Vonnie.
Hey, John. Thank you. China's moonshot continuing to rely on Western semiconductors to fuel its AI development. Sources telling us here at Bloomberg the company has a compute power agreement with Alibaba for the use of around 20,000 NVIDIA chips. New York is suing Kalshi for allegedly running an illegal gambling operation. The suit alleges Kalshi's prediction market exposes residents to, quote, serious personal and financial risk. New York also accusing the company of failing to acquire a gambling license. And an update on situational awareness. The Financial Times reporting the fund's manager, Leopold Aschenbrenner, is vowing to fight another day. In a letter to investors yesterday, he said he took full responsibility for the events, which led to a 67% plunge in assets in July. The fund, though, still up 80% on the year. That's your Bloomberg Brief. John.
Vonnie, thank you. Aschenbrenner adding, according to the FT, that the situational awareness fund would no longer borrow money from banks to magnify its bets.
Lesson learned. Guess what? I think we're going to get out of the leverage business.
Yeah, I'm not sure what that line of credit looks like right now anyway, but
that's fair
you know,
point.
more credit to it. He'll keep swinging,
you know,
right? I don't know him personally, but those kind of people, they'll keep swinging. This won't set them back.
He's 24 years old, and he has done an incredible amount in his years.
It's
and
impressive.
It is
like,
so
really,
impressive.
Really impressive.
I'm sure he learned his lesson. I'm sure that Citadel gave him a schooling, and now he's going to go off
No doubt.
and, you know, lay the groundwork for something else.
I'm not in the business of knocking that guy.
No, not
Just
at all.
Not at all.
I mean, honestly, this is what experience is, and he's getting it.
It's a major experience. Up next on the program, Dan Niles of Niles Investment Management as the tech sector posts a major rebound, plus Yahira has your morning movers. A clinical trial setback sends Novo shares lower by close to 9%.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. You know, it's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Chairman Morse is really a dove at heart. I mean, he's a structural dove. He got the job for that reason. And all of this is just a veiled way of delaying the rate hike. Sometimes, let's admit, too much brain power is counterproductive. right? It just is. What the heck are all those 200 economists doing on the staff of the Fed? What is the FOMC supposed to do? This lack of trust was revealed, I think, in the presser the other day.
We asked Terry Wiseman for his movie review from Wednesday, the news conference with Chair Walsh. Lit up. That was the most excited I've seen Terry in like years.
What do you think, 25% on Rotten Tomatoes? What do you think he was actually giving?
If you ask Wall Street,
yeah,
that rating, Wall Street Economist,
yeah.
that rating was pretty low for Wednesday.
It was one of the ones, every single one was just that like green kind of.
And you tune
flat.
into it because it's so bad. Like, it's
Actually,
like
it's
right
true.
on the edge of that.
It was relatively entertaining.
One of those movies. Equity futures this morning, positive by 1/10. On the Nasdaq, up by 0.75%. The opening bout just around the corner. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with Novo Nordisk, whose shares are plunging in the pre-market, down nearly 8% after a major blow to its pipeline. One of the company's most closely watched experimental drugs failed to reduce the risk of heart attacks and strokes in a late-stage trial. And this is a problem because this is a drug that was supposed to drive the next leg of growth for the company beyond obesity and diabetes drugs. Now let's get to the earnings that we've gotten this morning, because we've gotten some interesting reactions. We are seeing AbbVie, this is the company behind Botox. Shares are down 3.25% despite delivering better than expected earnings. But after a 13% rally this year, investors were looking for even more, but they did not get a clean beat since AbbVie did issue a lower full-year profit outlook than expected. And it was a similar story over at Colgate. Shares are falling nearly 2% despite the toothpaste maker posting solid results, beating on earnings, but it did post weaker than expected sales in North America. It said that it's seeing a slowing consumer demand and tougher competition, but these reactions just underscoring how high the bar is this earnings season, and of course raising the question of what it will take to take this market meaningfully higher from here. John.
Yahara, thank you. Thanks for this morning. As we count you down to the opening bell, your trading diary shaping up as follows into the week ahead. At 10 a.m., we get UMich consumer sentiment. At 11, you'll hear from the president holding a cabinet meeting at Camp David. Looking ahead to next week, ISM data on Monday, Tuesday. We start some results again, some earnings from AMD and SpaceX just around the corner.
Very curious to hear SpaceX, given how much the shares have declined, and the fact that you're going to have an opening up of the shares to the public float and the ability to sell. Real questions there. Also questions about what it would take to buy Tesla. I'm sure everyone's going to wonder.
Oh, without a doubt. That's like number one question, isn't
100%.
it? Yeah, but the SpaceX call would sound like the Tesla call.
Yeah, exactly. Just tell us.
Yeah.
They'll say it's not prudent to talk about it, and then people ask again.
Let's focus on tech. Tech stocks on track for a second straight day of gains. A big move yesterday on chips of something like 8%. The hyperscalers powering the Nasdaq 100 to its best day since March. Dan Niles of Niles Investment Management writing, looking at Max 7 results, it's mostly come down to return on invested capital. Google remains my favorite play. Dan joins us now for more. Dan, it's good to see you. I expect you to be slightly contrarian, and that is slightly contrarian after the week we've had for the likes of Alphabet. Dan, what is it about Alphabet and Google that's getting it done for you?
Well, there's three stocks, John, that I like. It's Amazon, it's Microsoft, and it's Google. So if you look at Google, the great thing is the stock got hit. Well, part of the reason it got hit is it reported results before you had situational awareness shut down, and you had the forced liquidation that put a bottom in. But if you look at the actual results for the most important piece, which is Google Cloud, you saw an acceleration from 63% year-over-year growth to 82%. It's the fastest acceleration of any of the cloud vendors that actually reported, and you've got a pretty low multiple on it. So they've got the full stack, they've got the chips, they've got search, they've got a huge amount of cash flow, and I think they're going to be the winner ultimately in consumer AI, which is why I like them. For Amazon, you've got a big infrastructure business there for e-commerce. I think robotics and AI will really help that. You saw AWS accelerate to the fastest growth since COVID, and you've got a 23 times PE. And remember, the S&P is at 21 times, so you very rarely get that. Microsoft is more, I'm increasingly coming around to this view of a lot of people in enterprise want a secure way to get onto using AI, and Microsoft's got about 450 million paid seats. They've only got 30 million Copilot paid seats, and I think you're going to see a lot more businesses say, hey, I want security. I already am using Microsoft 365, I might as well pay for the Copilot, and that's how I'm going to get there. And so those are kind of the three I like.
There's a lot to unpack there. You mentioned situational awareness, or you inferred that that was part of the reason why Google's shares didn't do better when they reported earnings with some of the similar metrics of the likes of Microsoft and Amazon. How much do you think that's been affecting some of the volatility that we've been seeing over the past couple of weeks?
I mean, that's the main thing. And don't forget, they're not the only ones. There's at least 3 other funds that I know that have got problems. Yesterday probably fixed a lot of that. But situational awareness, because they were running 4 times leverage, and it was long-based leverage. You can run leverage if you're hedged, but if you're not, that's a huge issue. And so that's going to force a lot of problems. You might remember Archegos, what happened there. Go back further to long-term capital management. Obviously, you had the bank failures following the rise in bond yields like Credit Suisse. And so the good news with things like that is it washes out a lot of the excesses in the market. And, that's a positive. I mean, what you saw earlier this year in the rise in semiconductor stocks, that wasn't a good thing. Or the move in the Kospi in Korea, that was not good, because a lot of that is just excesses. And when you've got these vertical moves higher, you're going to get vertical moves lower, especially when you have a fundamental catalyst like token minimization, which, I flagged this back in a June 20th note of why I thought there was a speed bump coming.
Yeah.
You put that on top of a highly levered, visible fund that's going to get crushed. This is what happens.
Well, Dan, just quickly, how do you know that there isn't a lot more of that still has yet to wash out? Because this could have been a lot messier than it was. I mean, it was an orchestrated sale with Citadel. It wasn't exactly some sort of fire sale.
It was a fire sale, Lisa. I mean, they did not want to do that at situational awareness. So the thing is that you're always looking for a forced sale, a forced seller. You got that. Now, by the way, other funds that are highly levered, we're also trying to degross, which is why if you look at, something I think I wrote up on Wednesday, I talked about the different metrics and how much the momentum index had come down, especially if you look at the TMT, Tech, Media, and Telecom Momentum Index. That drawdown was almost 50% in a month, and that's longs minus shorts. And so what you had was your longs are getting crushed, your shorts are going up, and if you have leverage on top of that, that's magnifying the losses. And so we've never, ever seen a move in this short a period of time with that magnitude. And so, human beings, our nature hasn't changed, right? Which is fear and greed. You got a tremendous amount of fear going into Wednesday.
Dan Niles of Niles Investment Management. Dan, thank you. Have a great weekend. To Dan's point, the last point, really important, the speed. The amount of time it took for this to unwind, the speed, because of the leverage that had to be unwound, just accelerating the whole thing.
It's the reason why people thought that it wasn't really
Place to rally from here.
because people still like the names, and so why not?
A lot of people believe it. You're starting to hear it a little bit more going into the weekend. Coming up on Monday, Sarah Hunt of Alpine Saxton Woods, Frank Lee of HSBC, Neil Dutta of Renmac, Nancy Lazar of Piper Sandler from New York City this morning. Good morning. Thank you for choosing Bloomberg TV. Have a wonderful weekend. This was Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Only 2 more bells until you can start your weekend. 30 minutes until the start of your cash equity trade. I'm Danny Berger.
I'm David Gura. Bloomberg Open Interest starts right now.
Coming up, the big tech divide. Amazon gains on robust results while supply shortages hit Apple.
A deal by billionaire Ken Griffin's Citadel with situational awareness caps a dramatic week for the AI trade.
And as markets head into August, earnings season passes the halfway mark while geopolitical risks linger.
Some stocks to watch. That big tech divide that we talked about just a moment ago in stark relief here as we look at the screen. Amazon reporting a 5th straight quarter of cloud sales growth with a 37% revenue jump for AWS. Should say it's a totally different story for Apple. Its shares falling this morning after it announced it has component shortages weighing on its forecast here in the quarters ahead, Danny.
Such big swings after reporting earnings we're seeing from these companies. I'm watching another sector that reported this morning, and that is oil and gas. A little bit less dramatic. Chevron reported second quarter results. Oil prices did surge, drew to war-driven supply disruptions. Exxon, they narrowly missed estimates. You can see they're down 1 1/3% for their profit forecast. That's what they missed on, dragged down by scheduled refinery maintenance. David.
Back to those undulations in the tech sector. I want to start with big tech. Apple sliding on a weaker sales outlook, while Amazon, as I mentioned, rallying after the company raised its AI spending plans. But Amazon's CEO says demand still exceeds capacity.
We now believe we will spend approximately $220 billion in cash CapEx in 2026. The higher cost of memory pushing this number up from our prior estimate of about $200 billion. But even at that amount, we will still not have enough capacity to meet all the demand we have in 2026. And I believe this dynamic will also be true in 2027, too.
Joining us now is Bloomberg Tech host Ed Ludlow. Ed, great to see you. And I wonder if we could kind of start with this contrast that's kind of played out over the course of the week as we've made our way through much of Magnificent Seven. What did those results tell you yesterday just about the way that Amazon's positioning itself vis-a-vis these other hyperscalers, big tech companies?
Yeah, I mean, look, Amazon completed the set of data points that Wall Street wants, the full flush to reward the stock, right? Which is demand is running ahead of supply. They are committed to spending. CapEx was higher in large part because the cost environment is higher. And then they offered more than just top line growth, more than revenue growth. So AWS 37% in the quarter gone, pretty significantly above expectations. But they said that there's already a return on the existing AI investment, which is the AI business for AWS has a $25 billion run rate, and the business of them renting compute capacity based on their custom silicon, principally their Trainium chip, also is at a $25 billion run rate. And if you are sort of thinking, well, Amazon, I know Amazon as Amazon.com. Well, there's something for you too. They even said that people that have used Alexa Plus are more inclined to join Prime or spend more money on Prime. And they just kept giving additional data points that account for the stock being up more than 11% in pre.
Well, if you care about what the consumer side of the business looks like, maybe we can look to Apple as well, Ed. They reported earnings, a different situation there because they haven't been spending as heavily on AI, a disappointment. Where did Apple miss the mark?
So with Apple, not really, an AI story or a spending story. It was astonishingly a management of the supply chain story. The quarter gone was good, largely a beat across the board, a miss in China, a miss on services. The issue for Apple is that the world is going to get more difficult in the September quarter than it is now. Memory prices will continue to go higher, and the revenue guide of growth of 9 to 11% was below what the street was hoping for, of about 12%. But astonishingly, what Tim Cook said in his final call as CEO is that they had got it wrong. They had misjudged demand, particularly on the iPhone side. And so if you park memory for a moment, they actually did not place orders for enough advanced processing chips, right? They got it wrong. And Tim Cook's career has been marked by his ability to manage the supply chain. So that's been really interesting. And look, the reaction of the stock being down almost 8% is quite severe.
It's a really good point, Ed. We've seen him, to your point, do things like change from the China supply chain to the India one quite adeptly. Ed, thank you so much. Looking forward to Bloomberg Tech, 11 a.m., Ed Ludlow. Now to a different side of tech, a dramatic unwind, specifically in the AI trade. The hedge fund situational awareness is scrambling after margin calls forced it to sell assets. They plunged from $45 billion to roughly $10 billion before Citadel's Ken Griffin swooped in to buy a bulk of the fund's public portfolio. Let's get more with Bloomberg hedge fund reporter Hema Parmar. Hema, you and the team doing excellent reporting when it comes to situational awareness. And I think a lot of people would look at this and say, okay, this is leverage in the system, and it seems to have come undone. What exactly happened with situational awareness, and where do we stand now?
Yes, this is a story we've seen time and time again. Dramatic couple of days, dramatic 24 hours. And, what happens is, this is what you see what happens when we see these firms which have huge amounts of leverage, concentrated positions in volatile stocks. And situational awareness had 4 to 5 times leverage on these assets. And this is what happens when those see a downward spiral. They need to meet margin calls. They need liquidity fast. They have to find a buyer. And they were seeking to sell their public stock book as well as their private stock book. Ultimately, they found a buyer in Ken Griffin's Citadel.
Talk a bit about the level of panic, so much as it existed here within the fund. So you've got this Wunderkind who studies math at Columbia. He's the valedictorian, goes on to found this fund. From your reporting and others, he was looking at Sand Hill Road maybe as a place that might take on some of this, of what's in the portfolio. Was there a lot of panic here? Sort of where was the head of the founder of this firm here as this all happened?
Yes, I mean, they were trying to find any number of buyers. So they were talking to Millennium, to Jane Street, to Citadel. They were in conversations with Green Oaks and Sequoia about the private book. So when you're looking to offload this degree of assets so speedily, it's not a good sign. It's problematic. And so I can imagine there would have been a great deal of concern. He's now reassuring investors to say, look, we made a mistake. We're trying to get back on track.
Leopold Aschenberg getting married this weekend.
This weekend,
as well.
Yes.
It's a
big
tough
week,
time.
Talking about a stressful week.
Yeah. Some of his clients are probably in attendance, though, so I think he can get some work done.
Busy reception, no doubt. Hema, thank you very much. Appreciate that reporting. And I want to turn now to another story. A lot of earnings coming through this morning. Oil giants Exxon and Chevron reporting earnings before the bell. Maintenance costs brought down Exxon's profits, while Chevron beat estimates. Joining us now is Bloomberg Energy reporter David Wethy. David, great to speak with you. And I think about these two companies and the amount of exposure that they have to the Middle East. It does seem like the story of these two reports, which were blockbuster, really are closely tied to what we've seen over the last 5-6 months in the Middle East. Talk a bit about that connective tissue between the war that continues with Iran and what we saw in the results today.
Yeah, it's baked into the DNA of these companies because it is such a heavy presence for them over there, and it's a constantly changing situation. It's hard for the executives to tell the street what to expect because it's hard for them to even know what the outlook is in the Middle East. And to that point, Exxon said that they expect that if the Strait of Hormuz remains fully closed through the third quarter, they said this in the slides for the call coming up, that they could see as much as 750,000 barrels a day of production offline for them. Right now, it's about 500,000 barrels a day that is offline as a result of the Strait closing. So they definitely like to see that open, and that would affect their production more. But particularly, it was the maintenance on the refineries that hurt Exxon this time around. It prevented them from being able to capitalize on the really high oil prices. But they said in the third quarter, they expect less downtime due to maintenance, so they should be able to capitalize on some of those higher oil prices.
Then what separated them between Chevron, who was able to capitalize on those higher oil prices?
Yeah, probably less maintenance than what Exxon did, or they were able to at least tell it better to the street so that there wasn't a miss. And so it was easier for the street to understand as compared to Exxon.
All right, David, thank you so much for joining us. That's Bloomberg's David Wethy on the latest big oil earnings. A check on markets 20 minutes to go until your trading day, your last of the week. And we're coming in from a huge session on the Kospi. We're rallied nearly 18%, but is still down 2% for the week. So the NASDAQ gets a bid, up nearly 1% after closing at its highest level in about 3 months. 10-year yields, those move higher this morning, up 2.5 basis points alongside Brent crude, up 1.5%. Some of the individual movers we're looking at this morning. Tesla is reportedly weighing a separation of its China business to pave the way for a possible merger with SpaceX. CEO Elon Musk calling the Wall Street Journal report, quote, fake news.
Shares of Moderna falling after the company said a key trial for its norovirus vaccine did not meet the statistical criteria for early success.
And we're also watching Jersey Mike. Shares fell 6% in their first trading day. The company raised $1 billion in an IPO that priced at the midpoint of its marketed range. And we're going to bring you an interview with the CEO next hour. I spoke to him yesterday, and he said, I promise our lettuce is not making you sick.
Coming up, we'll speak with TD Cowen's John Blackledge on Amazon's bigger AI spending plans and what's next for AWS growth. It's coming up on Bloomberg Open Interest. Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Now to high interest to look at what's making headlines around the world. President Trump says a U.S.-led board of peace has reached a deal for Hamas to disarm, calling it a major step toward ending the Gaza war. But Hamas says it won't give up weapons until Israeli troops withdraw, leaving key details unresolved and implementation likely months away. Novo Nordisk's push beyond obesity drugs hit a setback. Its experimental anti-inflammatory shot failed to reduce the risk of heart attacks or strokes in a late-stage trial, sending shares down sharply. The drug had targeted a potential $10 billion cardiovascular market. And FIFA's proposed $20 billion commercial spin-off is facing growing resistance from European soccer giants. Real Madrid joined other top European clubs in saying FIFA doesn't have the right to sell part of its commercial business. The dispute could threaten support for FIFA's club World Cup expansion. We'll have more on that story in the next hour.
And Messi famously does not play in Europe anymore.
That's right, Miami.
He's in Miami. But certainly the other one does. Amazon surging after raising its AI spending plans and accelerating AWS growth. TD Cowen's John Blackledge boosted his price target, saying the results show AI investments are paying off. And he joins us now. John, great to see you. I mean, the fastest growth for AWS since 2021. How did Amazon achieve it?
Yeah, fifth quarter in a row that AWS revenue growth accelerated, and they called out, massive AI demand, so growth in AI revenue. Their AI business exited the quarter at like a $25 billion run rate, and they're also saying that the non-AI revenue growth is very strong. And I would also call out that aside from the revenue growth, which was great, margins expanded meaningfully and crushed consensus estimates. And they've been persistently high for now several quarters as revenue has accelerated. So that was really also great to see.
John, what do we learn about the future here? Management talking about $1 trillion revenue business over time. We know well the success of AWS for Amazon in not just recent quarters, recent years. What are executives thinking as they look at the inroads it seems like Meta and other companies have made kind of trying to get into this space?
Yeah, no, I think CEO Jassy was incredibly bullish and communicated so effectively last night. And you're right, he called out potentially AWS $1 trillion in revenue. If you go back to April to his shareholder letter, he was talking about AWS potentially doing $600 billion in revenue. So if we think about that over 4 months, you have that type of move. He didn't put a year on it, but it was incredible. And the other things that he was talking about were, AWS is going to be capacity constrained this year, 2026 and 2027, and that's on the AI demand. And then he said the AI demand in 2028, right, from what they're seeing right now, is striking, which we're a little over halfway through 2026, and he's talking about the demand in 2028. So it's just incredible. And I would also add that he reiterated that AWS's capacity will double by the end of 2027. So at the same time their capacity is doubling, the demand is so strong that they're going to be constrained through 2027. So all in, it's just off the charts demand. And we ended up materially raising our AWS revenue and operating income forecast next 5 years.
So ultimately, you had Andy Jassy communicating a very clear and strong narrative to this market. There had been this idea that part of the reason that Meta struggled after they reported their earnings is we didn't get that same clear narrative from Mark Zuckerberg. John, is there a contrast to be drawn between these two CEOs, not even just in the business, but their communication style to this market and what they're hoping to achieve?
Yeah, exactly. And I've covered both companies for a long time, and CEO Zuckerberg is a great communicator. Historically, he's been a great communicator. Historically inspires confidence within the investment community. But I feel like they've kind of missed the mark 3 out of the last 4 quarters. What we were looking for from Meta was some clarity on CapEx trajectory, clarity on monetizing excess AI compute, and then just more broadly, they're investing a lot in this AI moment. What are the products and services and potential revenue streams out of that? And, we didn't get as much as we would like, and it was disappointing, kind of the stock disappointed after the reporting. But, they do have an opportunity, right? Like CEO Zuckerberg was like, we think we can sell our capacity at a significant premium to what we paid for it. And from a CapEx perspective, they were like, we're going to maximize our capacity the next couple of years. So I feel like in the coming months, we can hear more, and maybe they will cut some deals on Meta Compute. But to your point, yeah, CEO Jassy was spot on this quarter with his messaging.
John, let me ask you about prioritization. Our Ed Ludlow just a moment ago talking about how there was something in this report for everybody, even those of us who remember Amazon as a bookseller way back. It still has a very sizable, of course, retail component. What did you learn from Jassy, from the company, just about the way that they're looking at the conglomerate as a whole, the whole business, and how much they're prioritizing one part of it versus the others?
It feels like everything's firing on all cylinders, to be honest with you. We spend time on AWS. I thought they were incredibly bullish on the e-commerce business. I mean, they're at record delivery speeds, and I think they feel like there's meaningful runway for further, kind of improving delivery speeds. And in e-commerce, when you increase the delivery speed, you massively increase the conversion rate. So I thought that was really bullish for the e-commerce business in the coming years. Advertising growth accelerated. I mean, this company is firing on all cylinders, and it's a great question in terms of prioritization. And I think they are prioritizing their biggest bets, which are what we're talking about: AWS, e-commerce, advertising, among other areas.
Talking about India, Mexico, Australia as well for international expansion. John Blackledge of TD Cowen, thank you very much. Appreciate that update after those earnings. And coming up, we're going to speak with Baird's Will Power on Apple's supply challenges as we look at this contrast over the course of the morning. This is Bloomberg Open Interest.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Apple slumping after supply shortages weighed on the company's sales forecast. Baird analyst Will Power reiterating his outperform rating on the stock, saying supply constraints pressured guidance, but demand remains strong. And he joins us now. Will, let me just start with what Tim Cook is leaving for John Ternus here as he looks to the exit. I mean, his last day is September the 1st, and we think of Tim Cook as having such prowess, such success managing Apple's supply chain. How much of what we saw in that report yesterday is attributable to kind of mismanagement on his part, or is it just by virtue of the fact that there is such widespread demand now for chips in particular, it's becoming increasingly difficult to manage even for somebody who has been known for so long as somebody who can do it so expertly?
Look, well, good morning. Thanks for having me, David. Look, this is still a strong foundation, right? And I think, as you look at the results in the quarter, sure, they were a bit light of, expectations, or at least the upside that we've had, the past couple of quarters, and guidance might have been a bit light. But if you back out, some of the impacts from supply constraints and FX, the numbers actually look, still very good. And so I think, from our perspective, the demand signals continue to be, quite robust. And so I think the business remains on, firm footing as we head into this next 10-year.
So is it fair to say that Apple does not have a supply chain issue, that the shortage of chips and the cost of memory is something they'll be able to get through?
Well, without question, they're facing supply constraints, memory price issues that are, impacting, the broader industry. But I think that's something they'll work through with time. And so, our suggestion is that investors look through that. But sure, is that something that could create some turbulence as it has over the last couple of quarters? Yes. And I think that is something that will continue to impact both supply and memory cost and margins as you look over the next, several quarters. But we're taking a longer term approach. And again, the key for us are the demand signals, which I think remain quite healthy. Look, we step back, iPhone, which is a mature business, has now grown north of 20% the past, 3 quarters. And you've also now got a, resurgence in Mac as well, to help balance that. A services business, that's a $100 billion business, growing low double digits. So we remain comfortable with the overall opportunity moving forward.
So let me play this out here. You mentioned the Mac products, and if Apple's able to kind of wade through this 100-year flood, as Tim Cook put it yesterday, kind of ominously here, it released this MacBook Neo, this low-end product, and I'm curious sort of what your takeaway is from the reception that's seen here over the course of the last quarter. I think that Apple for a long time was kind of pursuing the higher end of the marketplace. There was some resistance, I gather, from our reporting, Mark Gurman's reporting, to kind of going in that direction. But it does seem, from the results we saw yesterday and the demand that you've been talking about here, it is a niche that they are well suited to fill.
Well, I think that's exactly right. I mean, they had basically ceded share, to the Chromebook, market, and so Neo really opens up, a new opportunity for them, and they're going after that, right? And you're seeing that demonstrated in the numbers in the quarter with overall, Mac sales up, 27%. So again, really a nice resurgence there, and that's still facing supply constraints as well. That number probably would have been higher, without those constraints. And so, the combination of, Neo, Mac Mini, and then of course, the broader, Mac portfolio, I think, sets them up well. Certainly, medium term. Again, notwithstanding some of the supply constraints that we just touched on.
Even so, with some of those lower end product offerings, they have raised their prices for their devices, some as much as 20%. Do we have any sense to the price elasticity among consumers, whether they are willing to continue to pay more?
Well, I mean, that is a great question, particularly as we get into the next iPhone cycle, because I think the expectation is we'll see, probably some higher prices, there as well to help offset, some of those supply and memory cost challenges. Look, our sense is overall demand is going to remain, fairly inelastic. Now, will there be some impact? Sure, there's bound to be, but that is one of the central questions. I think the results again that we're seeing at this point, particularly in iPhone, remain pretty encouraging. I think again the demand signals have been strong, and we're going into a product cycle that we're excited about. I think consumers will be excited about, with the first foldable phone and Siri AI as potential catalysts to help drive demand into the back half of the year.
Okay, Will, thank you so much for joining us. Appreciate your time. Will Power of Baird. Less than 4 minutes until your opening bell. We're going to speak with Amanda Agati of PNC Asset Management. That's after this break. This is Bloomberg.
called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid? I don't think I was reading magazines until I was in them. You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Let's get your Friday trading day started. You're watching Bloomberg Open Interest. I'm Danny Berger. A rebound this morning after the tech wreck of this week. We are still headed for declines on the NASDAQ, even if we hold this, but we did end at the highest level in about 3 months. Actually, 1%. We should be able to end with some gains. S&P also higher this morning, too. And we got through the bulk of the earnings season, so we've digested a lot. Maybe smoother sailing. Maybe we'll finally get into the summer doldrums. Down at the New York Stock Exchange, Reformation ringing the opening bell. They listed yesterday and did their first day of trading up 0.5%. God, there's got to be a lot of pressure to dress really good for something like this. If you work for Reformation, which is literally a high-end clothing brand, they look pretty good, so I think it worked. Down at the NASDAQ, it is the Pat Tillman Foundation. They give support to vets and their spouses, and they're welcoming in the new class. So that's what's happening down at the NASDAQ. David, what are you watching this morning?
Yeah, love the sartorial commentary there. Again, watching these two major stocks here, Apple and Amazon. Of course, that's the contrast we kind of focused on over the course of the morning. Amazon reporting a 5th straight quarter of cloud sales growth with a 37% revenue jump for AWS. As we were just talking about a few minutes ago, completely different story for Apple's. Its shares falling after component shortages weighed on the company's sales forecast. I think what's so fascinating here is the demand was there, as we were just talking about. People want to buy Macs, they want to buy iPhones, but Apple having a very difficult time getting chips. Kind of a similar story to what we heard from Qualcomm a little bit earlier this week. Danny?
So some big swings for them, a little bit less of a big swing for Big Oil, which also reported earnings. Chevron, they reported second quarter earnings. Oil prices did surge thanks to war-driven supply disruptions, so shares are up 1%. Exxon, though, even with that, they narrowly missed profit forecasts. They had an issue with scheduled refinery maintenance.
Putting a bow on big tech earnings, Amanda Agati, PNC Asset Management Group Chief Investment Officer, writing, you could say the Mag 7 band broke up. Google, Meta, and Apple get pummeled, while Amazon and Microsoft with big gains. These names are not trading like a herd or a pack any longer, and Amanda joins us now. Amanda, we're on the same wavelength. I was talking a bit about this yesterday, thinking about Michael Hartnett, who coined this term now many years ago, Magnificent Seven, over at Bank of America. Talk a bit more about this. I mean, we talk about hyperscalers broadly now. They are approaching this CapEx expansion in decidedly different ways, and how useful is it for us now to look at them as one coherent group?
Well, it's always great to be with you. Thanks so much for having me. The AI story continues to be top of mind, certainly front and center for investors. But I think what's been different this earnings season is just what I wrote, right? The band is breaking up. There may be a reunion tour, so let's not give up on them just yet. But I think it's been very interesting that they are not trading and behaving in this sort of pack formation, right? With this herd mentality, there's been a really significant distinction between winners and losers. Why is that? Because the business models are different. and the levers that each of them are pulling is very different. And I think in an environment where investors are getting pretty paranoid Android, that's the Radiohead reference for you, I think that's showing up here in terms of the results and certainly in terms of the return. So it's going to be okay, for sure. It's going to be okay. But in this moment where valuations are pretty elevated, the ones that are winning are the ones that have lots of levers to pull, are demonstrating acceleration in revenue growth, and still spending. CapEx is still a story, but they're kind of keeping it in check.
Loving this so far.
I say I've never felt more powerfully than today that we need more music on this show. Amanda, thank you for bringing it to us. Narratives are really powerful in this market, as you know very well. Having Mag 7 as this point of leadership for the market was something that really fueled the last leg of the bull market rally. What happens when that narrative starts to get complicated, when we don't know exactly who the new leadership or what the new leadership looks like? Is it just more volatility, more market churn?
Well, I think it's a great question, and I'm not particularly bothered by it, to be honest. I don't know if it's all the coffee I've had this morning, the songs or what, but I actually would welcome a shift in market leadership. We've been talking for the last few years about how we can't hang our hat on one name. It used to be NVIDIA, then the Mag 7, now it's the Lag 7, right? Like the storyline here needs to be a maturation of this innovation cycle. It can't be about chips. It can't be about semiconductors. It needs to be about the use cases. And so I would welcome a shift in leadership, because I think that really means market breadth is becoming the more powerful story. We're figuring out how to use all of this technological innovation. I think that makes a huge difference in terms of the sustainability of the market rally.
I'm glad you brought us there, because there's been such focus. Again, it's the immediate thing that we're looking at right now, of course, the Magnificent Seven, these big tech companies. But I wonder if you could kind of situate the results that we got this week in the broader context of the earnings season we're in the middle of. How part and parcel is it of that, and sort of what have we seen beyond the hyperscalers and big tech, and what did this week's results tell you about those?
Well, what it tells me is there's a significant amount of resilience in both the earnings backdrop and also the broader economy that I think is underappreciated by investors. We're so fixated on this paranoia around the top 7 names, but when you look at the run rate on earnings growth and it's not over, right? We still have a ways to go, but we're at like 47% year-over-year growth for the S&P 500 in terms of earnings this quarter. That's insane. That's a technical term for you. And this is the 4th quarter in a row where we have set a high bar and are handily exceeding it. And so for me, it's reinforcement that the underlying fundamentals are really strong. And even at these valuation levels, right, it's not a cheap market, but the earnings power has been so strong. We've actually seen some multiple compression this year. I think it's just a really strong setup going into the fall, despite some volatility probably creeping in as a function of the midterms.
Amanda, I hear you talking about fundamentals, and what keeps coming to mind is a conversation I had a few months back with a hedge fund manager who said, you, Bloomberg TV, and all of your financial media are covering markets wrong. You cover them every day like there's any rhyme or reason to it, but the world is awash in leveraged hedge funds, and that's all that matters for this market. That sort of idea has come even more into the fore with this 24-year-old fund, situational awareness, reportedly having to unwind. Amanda, I wonder if we look back at this market and see the huge run up in memory names, which situational awareness did own, and then the sell-off in AI, and then the rebound again yesterday. I'm looking at Morgan Stanley writing a prime brokerage note basically saying that it was hedge funds that were basically the sole buyer of stocks yesterday. If this is just a market that's getting bullied around by leverage and hedge funds right now.
Well, there's no question that the hedge fund community has changed the dynamics a bit as it relates to the market. And so, in an environment like we're in, where there's a lot of concentration historically, there's a decent amount of volatility, you really have to get creative about what the future holds for all of this AI innovation, robotics, automation, et cetera. It's not at all surprising to me that there are organizations out there, firms that are taking big bets on one side or another of these trades, and some of it's going to work out and some of it's not going to work out. The volatility and sort of the uncertainty around this innovation cycle comes with the territory. But I think from a long-only perspective, there's just a really long runway here. And so if you can take a longer-term view, but pick your spots carefully and use some of this volatility to your advantage, I think investors really will, win out in the long run here, staying the course.
All right, that makes me feel warm and cushy to hear you say that, Amanda. Thank you so much. So great to have you on this morning. Enjoy your weekend. Amanda Gatti of PNC. Let's get a check on markets, and let me do the bad thing where I try to assign any reason to these moves beyond just hedge funds. We are up 0.5%. Again, I will point out Morgan Stanley saying that hedge funds were huge buyers yesterday, whereas retail investors actually sold a large amount, one of the biggest single-day selling on Robinhood's platform among retail investors. Just to give you a flavor of where we stand on this market. Amazon, after their earnings are higher by 13%, you can see a lot of the chip makers doing well today, carrying on from that South Korean session where we saw an 18% rally in just one day. That's not a weekly figure. Even so, down 2% for the week. On the downside, Apple, in terms of points being subtracted, is the biggest loser this morning, subtracting 54 points away from the S&P 500. Exxon and Linde also had earnings themselves, and that's also falling after disappointments there. Looking at the individual sectors and how they are performing today, consumer discretionary, that is doing well this morning, along with communication services as Meta rebounds. Materials, consumer staples, healthcare rounding out the bottom. So some of the safety sectors not doing well. Infotech only gaining 0.1% because Amazon is rallying. Yes, the chip makers are rallying, but having Apple not playing along is hurting that overall sector, David.
Appreciate it, Danny. Contrast in rhetoric and results, contrast in how they're playing out in the stock market today as well. Amazon, Microsoft, Alphabet doubled down on AI spending. More on this week's big tech results coming up next here on Bloomberg Open Interest.
Historically, bubbles were characterized by a notion of if you build it, they will come. In the late 90s, when we were building out data networking equipment, people were putting huge amounts of fiber in the ground on the assumption that it would come. And economists like to go back for reasons that are unclear to me to the railroads. They were also, if you build it, they will come. What is unusual about AI right now is the builders are so far behind the demand, it's absurd. We have a backlog of more than $25 billion of demand. That there are none of us, not AMD, not NVIDIA, that can keep up with the demand that your employees are driving. That's, in a lot of ways, the opposite of a bubble. We are chasing. Our customers and their customers are moving at the speed of software, and we're moving at the speed of real estate, data centers. Right, and so we are behind.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The rebound continues with the Nasdaq trading at its highest level, or at least had its best day yesterday in about 3 months. The S&P only up about 0.25%. Let's see what the sell side has to say this morning with your top calls for some of the analyst action. First up, Wall Street reacts to a disappointing outlook from Roblox. BMO downgrades the video game company, cuts its price target over 50%. They cited monetization challenges and weaker than expected guidance. Shares getting punished this morning, down 26%. Next up, Wall Street impressed with Rivian's upcoming mid-sized electric SUV. Although that's not reflected in shares this morning. Morgan Stanley says the R2 could attract a lot of buyers, but the company still needs to improve its production and lower costs. Baird sees encouraging early demand for the R2 vehicle. And finally, Wall Street focusing in on Apple's weaker outlook. Citi says services miss expectations. Evercore ISI points to strong iPhone and Mac sales, but slower growth in services. TD Cowen says higher chip costs and supply issues are the biggest risk right now. Shares down 9%, David.
All right, more on big tech now. Amazon surging after boosting AI spending, joining Microsoft and Alphabet in signaling that demand for AI infrastructure remains strong. Bloomberg tech editor Sarah Fryer joins us now on set here in New York. Sarah, I want to get to earnings in just a sec, but let's go to another story first involving AI, the Anthropic sandbox, where there's been jumping out of the sandbox into the sandbox. I don't know what the metaphorical term is here, but we're seeing sort of something similar to what we saw with OpenAI just a few weeks ago. That is, they had these models, they were testing them, and you correct me if I'm wrong, they kind of come to life, and the tests have gone differently than the company expected.
They were not properly contained in their digital box by the humans. It's interesting to me here that Anthropic is really blaming it on the humans, saying that their error in monitoring and the design of that sandbox is what may have caused this. That said, it does raise the question of whether this is the tip of the iceberg, whether, if this is happening with OpenAI and Anthropic, if it's happening with the other model companies too, how the government will react, and also, how do they not notice, right? Until they did this investigation, they were not aware that this had happened. And so that raises a lot of questions. If you're running a business right now, if you're experimenting with models, you better be checking that they're doing what you ask them to do and nothing beyond.
The skeptic in me can't help but look at this and have two reactions. One, they want to prove, oh, it's not just OpenAI that has these really good models that have a life of their own. We have them too. But the second one I thought of, Sarah, was this letter that had been circulating around from Jensen Huang saying, we want open source here in the US. And Anthropic pushes back and says, government, you should really step in to be curbing the pace of AI advancements. Do you think there's a little bit of PR government relations happening here too, with them releasing to the world that this happened, kind of saying, government, if this is happening to us, we're honest with you. We can't say what the same would be for Chinese open source models.
There's a little bit of that, but remember, Anthropic's line for most of its history has been AI models are dangerous. You really need somebody who's responsible, who's going to look at the risk here and calculate properly how to build guardrails around it. Like that is kind of their thing, and it's a double-edged sword. It makes everyone feel like these models are above and beyond human capability already, and that we're just going to be like powerless to them in the future. And so we really have to think about it now, and Anthropic is the way to do it. It also ends up with situations like what we saw earlier this year between the government and the Mythos models, blocking it, saying you can't do that. So here they're saying it was the human error. To me, that signals that they want to indicate that their model, once it saw the open internet, the latest version said, "Oh no, I'm not going there. I'm not. Yes. I know I'm not supposed to do that." So I think they're trying to show the responsibility a little bit, even in the response to this. But of course, the incident raises all of these questions about how didn't people know? If Anthropic hadn't investigated this, would we even know about it? And who are those firms that were breached?
Two instances, not a trend make, but we got the same kind of introspective blog post from Anthropic that we got from OpenAI, and I'm curious, what happens beyond that? Is this leading to more government interest, maybe intervention? Does it lead them to take it more seriously, do you think?
I mean, we have Sam Altman in DC this week. Right. I'm sure there are many discussions happening about this. We have IPOs on the line for these companies. They have to show this. As we have open source models from China, it's not clear that these, at least with these companies, we know that this is happening. This is like a show of faith. Like, we're disclosing this proactively because we are I think that's what this is about, really, is they're trying to get ahead of the government requiring that they investigate everything, you know, by being proactive. We saw this a lot, actually, with like the social media companies, and we have transparency reports. We are doing internal investigations to take down coordinated misinformation. We don't need the government to tell us to do that, right? So it is a strategy in that sense, but I don't think that Washington's gonna just say, okay, well, that satisfies us. I mean, we'll have to see.
I guess with social media, though, I mean, there are some businesses that built themselves around social media, but there are a lot more businesses now that are adopting these AI models and have changed their business plans and their structure and their costs and their employees around it.
It's a lot more immersed in our economy.
Right, so isn't the risk that the government steps in and something gets shut off just much worse this time around because of the impact it could have on individual companies?
Yeah, and I think the scariest thing maybe isn't like cutting off these guys, because these guys do have political power that they've built up, but if the government says, you know, we can't use open source anymore because we won't get that transparency about what's happening in terms of cybersecurity, well, the majority of businesses by token use are using those open source Chinese models, and so that would really harm a lot of businesses. At the same time, you know, with these instances, you wonder if it's necessary. So.
Sarah, good to see you. Sarah Fryer here with us in New York, joining us on set. And coming up here, we're going to talk a bit more about South Korea, how it's leveraged ETFs and has leveraged ETFs in sight as that country looks to curb volatility. That's coming up next on Bloomberg Open Interest.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Minutes into the last trading day of the week, we continue to rebound after the NASDAQ posted its best day in about 3 months. It's up 0.5%, supported by some of the earnings. I'll show you that in a second. Small caps having a more difficult day. That might be due to the fact that yields are moving higher today. Again, now up by 5 basis points. Really, since the Fed decision, we have seen some big swings in this bond market. No relief for the 30-year as it continues to trade at its highest the yield since 2007. Brent crude adds to that pressure, up at $90 a barrel. We had big oil earnings, Chevron, Exxon. Chevron able to capitalize off the high oil prices. Exxon is not, hence why you get that difference. Amazon, huge AWS results, their best since 2021, the revenue growth that they've seen. Apple, supply chain issues weigh on them after they report earnings down 8.5%. NVIDIA up 1.5%. SK Hynix, This is child's play. The fact that it is up 2.1%. In the South Korean session, it was up by 26%. That was its best day ever. South Korean stocks in general, Kospi gaining 18%, huge moves. And that's part of the reason why South Korea has stepped in after a sharp sell-off. It was led by those AI chip makers, SK Hynix, Samsung Electronics. It rattled the country's stock market. The government now proposing new measures, including curbing retail access to leverage ETFs. Bloomberg Intelligence analyst James Seffert joins us to discuss. James, what are South Korean officials debating at this moment? What might they do to the country and ability to access ETFs?
Yeah, I mean, I think they're debating everything under the sun, trying to see whatever is within their purview to actually limit these things. One thing we know is they increased the size of your account limit, so you need to have a certain amount of money in your account to trade these things. That goes into effect, I think, this month, today, but potentially even. Another thing they're doing is they're going to limit the amount, like the portion of your portfolio that can be in these levered ETFs. They're looking to cap it at 20%. They're looking to require certain levels of education and showing that you understand these things before you can actually trade them. They want to increase the fees to trade these things. I mean, it seems like they're going to try everything they can to kind of put the lid on this leverage gambling fervor that they're facing.
James, kind of whipsawed here because there was such enthusiasm for these products early on. I'm curious, as we talk about SK Hynix's ADR here in New York, before that, I mean, this was the means by which U.S. investors, others could kind of get a piece of these South Korean companies. How did that shift? How did the terrain shift when we saw that ADR debut here in New York?
Yeah, I mean, I don't know if I'd say the terrain shift. I mean, obviously, it hasn't been a great thing since that ADR went live. But I would say that, like, when you look at these levered ETFs, for the most part, people were using ETFs in the U.S. to get exposure to these products. There's a few products like DRAM and a few other ETFs that you could get exposure, South Korea ETFs in general. Because when you look at what these things were doing, SK Hynix and Samsung, initially they were 40-ish% of the underlying index. So it's not, people like to talk about the Mag 7 or whatever mangoes or whatever term you want to come up with the large stocks in the U.S. and say it's over-concentrated. In South Korea, 2 stocks at one point in June were made up 60% of the index. I mean, we've never even come close to anything like that here in the U.S. So you end up with these leveraged products that kind of go haywire. The traders start using them, retail investors get heavily involved, and things go crazy. And the ADR listing here in the U.S. just kind of, poured gasoline on that fire in some ways, you could say.
It doesn't help when there are stories in South Korea of retirees dipping into their pensions and putting them into leverage ETFs. And James, I wonder if for that reason, or maybe just a completely different market, a more liquid market, why we don't have the same conversations in the U.S., or maybe we do, about leverage ETFs and their impact on the market and what it means to retail investors. Have various regulatory forces also been looking at the huge amount of ETFs that have listed here that are leverage bets on single names?
Yeah, so the SEC has put out requests for comment on things that they're calling novel ETFs. I would say single stock ETFs fall into that. There's a lot of pundit worry about these things impacting the market. I have written notes that say there are instances of some of these single stock ETFs impacting the underlying, but usually in small and mid cap names. But nothing, it pales in comparison to what happened in South Korea. I mean, in South Korea in June, these single stock levered ETFs were the most traded ETFs in the entire market. That just doesn't happen here. Like, we're talking about tens of billions of dollars here in trading, hundreds of billions of dollars of trading here in the U.S. in these leverage ETF names. It still is not even coming close to touching, the money that we see trading in things like the S&P 500 or the NASDAQ 100 ETFs. So the size and scale of what happened in South Korea and the fervor with which it grew is nothing compared to what we're seeing here in the U.S.
James, insightful as always. Thanks for joining us, James Seffert. And of course, tune into ETF IQ on Mondays, 12 p.m. New York time. Coming up in your hour 2 of Open Interest, Paisley Nardini of PNC Asset Management. Plus, we'll bring you some of my interview with Jersey Mike's CEO, Charlie Morrison, after the company's trading debut. This is Bloomberg.
Today, Wayfair sees immense potential in brick-and-mortar stores.
When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in the space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent, but when she's here, she can have her app open and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Preston. Stocks surged this morning at the open. The S&P was up 0.5% right off the bell. The Dow adding about 41 points this hour. NASDAQ showing gains after Amazon reported a much stronger profit in the last quarter than expected. Also collecting some big profits in the second quarter. Big oil.
The U.S.-Iran conflict has reduced tanker traffic through the Strait of Hormuz to a trickle. In response, the major oil companies have raised the price of their refined products, pushing gasoline past the $4 mark. For U.S. and European oil companies, the strategy has worked. Most reported massive increases in second quarter profit as the war drags on.
ABC's Jim Ryan. Exxon profits up 105%. Chevron's profits up more than 300%. President Trump holds a cabinet meeting at Camp David today, and there in the Attorney General's seat will be Acting Attorney General Todd Blanche, whose confirmation is still being held up by two Republican senators, John Cornyn and Tom Tillis.
The senators are refusing to back Blanche until they get written proof that a $1.8 billion fund, which would have paid taxpayer dollars to Trump's political allies, including January 6th rioters, is officially dead, something Blanche already told Congress 2 weeks ago. But that wasn't enough for Cornyn, who claims the White House is standing in his way.
ABC's Jay O'Brien. Senator Tillis says one of Donald Trump's advisors want to revive the fund, which would also provide IRS immunity for the president and his family. A heat dome across the West, putting about 70 million people under warnings. As for the Pacific Northwest, wildfires are the main concern.
Oregon may be started on what could be their worst fire season in history. That's how hot and dry it's been here. What makes this worse? Wind gusts anywhere from 40 to 75 miles per hour.
ABC meteorologist Sam Champion. State of New York suing Kalshi, alleging its prediction market is nothing more than illegal, unlicensed gambling. You're listening to ABC News. chaos overseas as thousands of migrants surge into a Spanish enclave from Morocco.
Thousands of people swimming around border fences or using boats. A number of them we know have drowned. Spain has deployed its military to try and restore order here.
At least 3 people were killed. It's believed the rush began with a recent Supreme Court ruling, says ABC's James Longman, that those who reach the area by sea cannot immediately be returned without due process. It's unclear, however, if any of those who came in will be able to claim asylum. New details into the death of Nolan Wells, who was found dead after a July 4th boat trip with friends in Mississippi.
Officials familiar with the investigation say the medical examiner has now completed the official autopsy, but it's not been made public. The report will be sent to a grand jury for review. The family's attorney says his team is analyzing audio tapes and ocean data from the day Wells disappeared to try to determine how he died.
ABC's Sophie Flay. People aren't reaching for wine so much these days, and grape growers are taking drastic steps because of it.
California vineyard owners say they've been forced to rip out their grape crops or burn them because of slumping wine sales. They say they've removed thousands of acres, hoping to rebalance the market's oversupply. They blame the slump mostly on a shift in drinking habits. Studies show demand for wine has dropped significantly, especially among younger consumers.
That's ABC's Hannah Batah. I'm Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're streaming live on YouTube and streaming live at Bloomberg.com as well. It's Scarlett Fu, Paul Sweeney. This is the Bloomberg Intelligence program. We got red and green on the screen here. Coming up, we're going to check in with Joanne Su. She is the University of Michigan Surveys of Consumers Director. Got some UMich data out today. Came in a little bit better than expected. We'll break it down with Joanne. Rob Barnett, Bloomberg Intelligence Senior Energy and Commodities Analyst here. We got oil moving higher yet again, up a couple of percent here. We'll break it down with Rob. Joy Yang, Head of Index Product Management and Marketing at Market Vectors Indexes. Discuss her outlook for the markets. Gene Munster, Managing Partner and Deepwater Asset Management, joins to discuss Apple earnings and anything on the tech front. He is a go-to voice. Brandon Williams, Bloomberg's Business of Sport, he's going to join us here to talk to us about what's going on in the world of global soccer. UEFA, FIFA, all this kinds of
Everyone's
people
mad at
arguing.
each other.
Yeah, everybody's arguing. It's just there's like 100 countries you got to keep happy. I don't know what's going on, but Randall will follow it. And a programming note: Bloomberg Radio is introducing a new feature exclusively for Bloomberg.com subscribers and terminal clients. You can help shape our conversations by submitting questions for our analysts and experts to answer live on air. Subscribers can go to Bloomberg.com/askradio to send in questions, and you may just hear them asked on air. That's Bloomberg.com/askradio. There you go. Let's break it all down here. John Tucker and a Bloomberg Business Flash.
All right, guys, happy Friday. This Bloomberg Business Flash brought to you by IBKR, trade election climate and economic indicators with IBKR prediction markets right alongside your stocks and options. Earn interest in your position. Receive $1 per contract if you're right. Learn more at IBKR.com/predictions. Well, you'd be forgiven if you're a little dizzy at the end of this trading week and month after some intense swings. Beaten down, chip makers getting a bit of a bid right now, but even off the best levels of the session, even though the session isn't that old, the stocks right now up 0.4%. Best performing stock in the S&P 500 right now, Amazon up 14%. One of the worst performing stocks in the S&P 500, Apple down 9%. Avalon's going to take a deeper dive into these in just a moment. Roblox reporting second quarter daily active users missing analyst expectations. So this ongoing impact of the new child safety measures, that's having an impact. The shares right now, 29, well, let's call it 30% lower. Overall, everything has just turned negative. S&P 500, there goes my script out the window, down 22 points, down 0.3%, 74.17. The Dow Jones Industrial Average down 134 points. The NASDAQ 100 down 48 points. That's down 0.2%. Dan Greenhouse at Solus Alternative Asset Management, he says he's encouraged by the economic backdrop out there.
I'm trying to find some corporate commentary that says things are not great, and the best you can find is that a couple of companies here or there say things are flat. That's pretty good to me.
And after the Fed meeting Wednesday, 10-year yield right now almost 6 basis points higher, 472. The long bond up 4 basis points. That is at 5.26%. The more policy reactive 2-year, that is up 4 basis points at 4.28. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul, what did you say the water temperature was?
72 degrees, Jersey Shore ocean water temp. Perfect.
Oh, yeah. I'll be digging my toes in the sand.
It was the cleanest I've ever seen the Jersey Shore water in my lifetime. Chest deep, almost, shoulder deep. Absolutely clear, see the bottom. Unbelievably.
You can see the bottom. That's our metric.
That's our metric.
And the air quality is decent now, too. Remember, 2 weeks ago, we couldn't go outside without masks. Now it's better.
Sure, it's all good. We'll have some fun down there this weekend. All right, very good, John. Appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Boy, we started the morning with stocks higher. Now they've kind of rolled over. I don't know what's going on up there. Let's check in see what some of the stocks are on the move today. We can do that with Avalon Purnell, color-coordinated Avalon Purnell, equities reporter for Bloomberg News. Avalon, what do you got for us?
We have to start off with Apple. That's ticker AAPL, currently dropping about 9.2% most intraday since last April. Crazy. And while Apple did report third quarter results that largely surpassed expectations, bears are largely focused on the misses, mainly Apple services and also China-based revenue, which fell short of expectations. It also forecast revenue growth that was a little bit weaker than expected. Part of this is all coming from softer mobile gaming trends and also meaningful pressure from the memory crunch. If you remember just last month, supply chain shortages and also really fast rising memory costs forced Apple to raise prices on MacBooks and iPads. Vital Knowledge writing earlier that the results are underwhelming given the weakness in those segments, especially since services account for so much of Apple's premium PE.
But Apple has a way of turning those shortages into a good thing because people lining up to buy this stuff is always like signaling to everyone else, must have, must have.
And if you're a hedge fund manager and this is your core position, you're buying stock today. And that's on a separate P&L. Like where I worked, the portfolio manager had the P&L for the main position. The trader had a separate P&L to trade around it. When it got a little cheap, you buy a little bit more. Got a little bit above where you guys thought it should be near term, you sell it, and you take a big cut of that.
So you keep adjusting that position. All right, next up, Avalon.
Amazon, another Mag 7, that's ticker AMZN, currently soaring about 14% most intraday since 2022. And that's after the company reported its 5th straight quarter of cloud computing revenue acceleration. The second quarter results are definitely easing some investors' concerns about how much Amazon is spending to meet that increasing demand for AI. Morgan Stanley writing that AWS delivered accelerating growth, surging profitability, and a better backlog to give the market even more confidence moving forward in the return on investment cost ahead.
All right, one more.
Last one is Replimune, that's ticker REPL, have to bring in a biotech. It is currently surging 91% most intraday since October, and that's after an advisory panel at the FDA voted to support the drug last night. The positive outcome already spurring upgrades at Cantor and also Piper Sandler, which note that the positive vote materially increases the likelihood that the FDA may actually reverse its previous rejection of their skin cancer drug. It really has been a roller coaster ride for the stock this week, though. Earlier, it sank more than 30% after the FDA released briefing documents that showed an uphill battle for the drug. And now after this, the FDA's decision, which could come as soon as later today, some analysts say, could actually end up being positive.
Okay, well, watch for it. Thank you so much, Avalon Purnell, with our movers for today. She's our Bloomberg News equities reporter. And for more conversations like this, subscribe to our Stock Movers reports, 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We got some economic data at the top of the hour, and it shows that the move lower in oil prices, for the most part in July, is helping to boost consumer sentiment. In fact, consumer sentiment now at a 5-month high in July, according to the University of Michigan. So Joanne Shu, she is U of M's Surveys of Consumers Director, joins us now from Ann Arbor. Joanne, a 5-month high for consumer sentiment sounds positive, but then when I chart it out, when I look at it on a chart, it looks like we're kind of bumping along the bottom. So just give us some perspective on this.
Absolutely. So we are definitely better than they were in the previous months, particularly with the initial shock of the Iran conflict. And with the recent decline in gas prices that we're seeing from part of the last month, that's definitely something that consumers noticed, they internalized, and it made them feel a little bit better about what was happening on their pocketbooks. But they remain just really frustrated by the persistence of high prices. And yeah, we are really treading water at this point, not as bad as a few months ago, but still not doing great either.
What's the, do we know what the energy swings mean for the consumer here? We know they're important. We know it's a big part of people's budgets, particularly, particularly on the lower end of the economic scale. That's kind of the stuff that you see immediately. How does that impact the sentiment in general?
In general, when we have these fluctuations in gas prices, particularly when gas prices are high, it does affect pretty much all consumers, but it disproportionately affects those with lower incomes and lower wealth. And so what we are seeing is just a surge in the share of consumers who are spontaneously mentioning gas prices during interviews. So this is something that's very much top of mind because most Americans, they can't really avoid gas prices, and it's really affecting the rest of their budgets as well.
Within the report, AI has become what you guys call a salient factor for consumers. What did you learn from consumers about AI?
So over the past year and a half, we've had a gradual increase in the share of consumers mentioning AI during interviews. But that gradual increase actually hides the fact that it's increased tenfold from the beginning of 2025 to now. It's really a mix of views. We have some people who are mentioning the positive effects on stock markets, on productivity, on efficiency, but we also have a lot of negative mentions as well in terms of potential negative effects on labor markets, job loss, and potential negative externalities coming from data centers, for example, possibly increasing electricity prices. So on balance, the mentions are broadly negative, but again, it's about 10% of consumers right now compared to the 30% of consumers who are talking about gas prices.
The outlook for inflation on a 1-year basis, 4.2%, on a 5 to 10-year basis, 3.3%. That's probably higher. That's a lot higher than the Fed would like to see it. What's the inflation concerns out there?
Consumers are quite concerned that what's going on right now with the shipping constraints in Hormuz and the elevated energy prices that could spill over to the rest of the economy. Their inflation expectations are not as bad as they were in March from the initial shock of the Iran conflict, and they've come down a little bit since then, but 4.2%, we don't really want to see that. 3.3% is still higher than what we were seeing in 2024. And so, consumers really are expecting higher inflation for the foreseeable future.
And before we let you go, Joanne, you also look at sentiment by political party, and there's a huge jump among Democrats from June to July. Do we chalk that up to gas prices?
Well, part of that is that Democrat sentiment was pretty low to begin with. The thing to note is that all three political groups, Democrats, Independents, and even Republicans, everyone saw an improvement in July. So, we're really seeing quite a bit of consensus, and the same increases we saw across all groups by age, education, income, and wealth. So overall, people feeling better than June, but considerably worse than a year ago.
All right, Joanne, thank you so much. Appreciate that. Joanne Shu, Surveys of Consumers Director at the University of Michigan. Here's a red headline crossing the Bloomberg terminal that is interesting. Former New York Fed President Dudley says markets show loss of Fed credibility. That's kind of harsh. When one of your own kind of says the Fed kind of lost some credibility with their actions this week.
Given what Kevin Warsh said and did on Wednesday when he held his second news conference as the Fed chair, he talked a lot about a family fight, the disagreements and the debating within the Fed. But in the end, it feels like he confused the bond market because they weren't quite sure, why the Fed didn't raise rates if he's so hell-bent on containing inflation.
Yeah. The other way, I've heard some folks say, hey, he told us he was going to do this. He told us he was going to pull back dramatically on guidance and, and that's kind of what he's doing. But you've got a whole generation of strategists and economists who have been used to the Fed giving them some pretty
Spoon
good...
feeding everything.
Yeah, and there's a new sheriff in town, maybe. That's the way to look at it. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. So the initial rally on Wall Street that we saw earlier this morning, that's faded fast. Major averages have turned lower. You have, 9 of the 11 major industry groups in the S&P 500 down right now. It's being led down by materials and information technology. Consumer discretionary, the best performing industry group, that's home to Amazon. Amazon.com, best performing stock in the S&P 500, jumping close to 14%. After, of course, they reported fifth quarter of cloud sales growth. And then you have Apple, it's one of the worst performing individual stocks in the S&P 500 right now, tumbling 9%. Component shortages weighing on the sales forecast. And the index of semiconductor stocks, right now, the SOX, it's up 1%. It's been bouncing in between gains and losses this morning. pretty volatile there. Right now, the S&P 500 down 15 points, a decline of 0.2%. The Dow Jones Industrial Average down 116 points. That is down 0.2%. The NASDAQ 100 pretty much flat. It's up only 4 points right now. And as far as bond yields, 30-year, the long bond up 4 basis points, 5.25%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well here. All right, we got oil up again here. We got WTI crude oil at $85. My question is, why isn't it even higher, like a lot higher? Because there is no crude getting through the Strait of Hormuz. I'm not sure that thing's ever going to be opened up again like it was before. So let's check in with an expert here. Rob Barnett, the best hair on global Wall Street. He's also a senior energy and commodities analyst at Bloomberg Intelligence. Rob, why isn't oil higher? Because, boy, I just don't see, again, any oil getting through the Strait of Hormuz, maybe ever again. I don't know. The Red Sea, I don't know about that either. What's your take here?
Well, so the really bullish predictions have turned out to be wrong, and I think the market has proven to be much more resilient than folks anticipated at the start of the conflict. And in many ways, I would characterize this as a story about how the economy is much less dependent on oil today than it was during the big shocks in the 70s, right? So oil contribution to GDP tends to get lower and lower every year. And so what you're seeing is that perhaps the world can adjust and live with less oil. It seems to be that's the narrative. But, when I look at the price trajectory over the last month, we started at 70, we hit over 100. Now we're closing out the month at 90 for Brent. And really, it all comes down to geopolitics. You can kick out your supply demand models. You can everything that, you might think about in a economics 101 context. None of it matters. It just matters, are we at war? Are we not at war? Is the Strait open? Is it not open? Does the Red Sea matter? These are the questions that are really driving the market.
So things like OPEC, OPEC plus, different countries' strategic oil reserves, those don't matter at all?
I think, look, in equilibrium, all of those things matter, right? So if you have a coherent view of the oil market, you certainly are thinking about what's going on with inventories. The Strategic Petroleum Reserve in the U.S. is at lowest point in decades right now. Normally, that would be a very bullish indicator for prices, right? And so, to Paul's point, why haven't prices gone higher? I think there's the market is reconciling a couple of things. One is that the physical market's very tight today. We don't have enough oil to go around. But there seems to be this sense, well, if everything gets resolved in some way and we get normalization in the Middle East generally, then we end up just flipping to an oversupplied situation in, say, 2027. And so you've got very tight physical market. Everything is sort of screaming red alarm fire right now at the current moment. But if we get a peace deal, if we get normalization, then we're going to be swimming in oil in 12 months. And so I guess $90 is the reflection of those two very different kinds of signals.
If I'm Lloyd's of London or some insurer that's got to insure these big boats that get the energy in and out, there's no way I'm doing that. I'm not going to insure anything. I don't care what Iran says. Is that a downside scenario? Is that a realistic scenario? I'm kind of asking, is the Strait ever going to be open again?
It's a great question. And certainly we've been thinking about that, right? One of the perhaps enduring outcomes of this conflict, no matter whether we get a peace deal next week after, years into the future, right? There's going to be lingering questions about insurance. already any operator that's going to take a vessel into that region is going to be charging much higher rates for operating there. I think what you might see emerge is that some of the countries in the region might have to offer some kind of sovereign backstop on shipping through the region. So you raised the question around Lloyd's, but what if Saudi Arabia, UAE, these countries have deep pockets? Maybe they have to back the shipping in ways that they hadn't had to do in the past.
Rob, really appreciate your perspective here. Rob Barnett, he is our senior energy and commodities analyst on oil. Next hour, we're going to be talking to Vincent Piazza about ExxonMobil and Chevron's latest results. Yep, because they came out with their numbers. All right, let's move on to the markets overall, because it was a collision of macro and micro factors this week. We had the Fed, we had specific earnings from big tech companies. So we want to welcome right now Joy Yang. She is head of index product management over at Market Vector Indexes, and she joins us right now in our Bloomberg Interactive Brokers studio. Joy, great to see you.
Thank you, Scarlett.
So we have this collision between macro and micro, and investors are left to deal with a lot of different factors, grapple with a lot. And we're seeing a bit of volatility as we close out the end of July. What's going to be the theme for the rest of the year? I mean, has macro overtaken micro because there's just so much confusion?
I know what we've seen is these two headlines dominate, media attention, investor attention, which is AI and geopolitical risk. And largely, markets tend to ignore macro shocks because they don't seem to get in the way of the market trending up. But this week, we're seeing AI, big tech earnings, Fed announcements all collide into one, and that's created this volatility and this great unwind and leverage plays we've had in this optimism about AI, which now cannot ignore, these headlines just keep coming back, whether it's the Iran war, tariffs, or inflation. So as you said, Paul, when is this strait going to open up? And I think we can't ignore that. So investors have to refocus back on costs, not just how big AI is, but how much is AI going to spend on costs. So we've seen this week the differentiation between how investors are looking at Amazon versus Meta, or Google versus the players that are more disciplined around their spending and costs.
So how are you guys? Again, we did have a bunch of the big tech companies report, and Amazon traded up, but Meta traded down, and Google traded up. Kind of all over the place. Or Apple's trading down a little bit here today. What did you learn? What did you take away from that may continue to inform your AI call here?
I think it's important to think about costs, not just this financing costs that are, going to become higher because interest rates, inflation is still out there, but also just this kind of revenue circular dependency we have between, hyperscalers and the whole value chain. What happens when they stop growing, when they stop their CapEx flows? How does that impact semiconductors, data centers? And then we have to think about hidden costs. We're just now learning about the SPVs, the private credit that's coming in, off balance sheets, and people are focusing on that. But also, with this unleveraging around the world, I think it's good to kind of have this cleansing, because I think we're having this reset. People are repricing their outlook on risk. People are rethinking how to look at costs, versus just focusing on revenue.
For the hyperscalers themselves, though, the costs will keep adding up. I mean, no one is saying there's going to be a slowdown in how much they spend, and they're going to have to borrow a lot of that money. And we see that in the U.S. credit markets and increasingly in overseas credit markets. At what point does it become too much, where the borrowing costs become, I don't want to say prohibitive, but something that causes them to rethink their strategy? Would it?
I think they have to rethink their strategy, and investors have to, because now they have this risk exposure both on the equity side as well as on the bond side. So their total portfolio is going to be highly correlated to these macro shocks, and if that continues, then it will have an impact on the cost side, on the debt side, and certainly on the financing and maintenance of AI infrastructure.
Okay, so this week was really dominated by the big tech names, the AI story. about folks that might be looking for opportunities, maybe value outside of the AI story? How do you guys think about that?
I think, it went quietly unnoticed, but, we had strong earnings from, whether it's Coca-Cola or Starbucks, so these are the, boring consumer staples or consumer discretionaries. And I think people have to focus outside of the opportunities around large tech, and consumer staples have been strong performers here to date. We've seen strong performance in small caps, so equal weighted S&P has outperformed the market cap weighted S&P. We've also seen cheap AI relative plays outside of the US, and I think with the return of DeepSeek, of Moonshot, of CXMT, investors are taking notice that there are cheaper opportunities out there. And with China funding their own AI infrastructure, we look at our China Semiconductor Index, it will start to diverge from US Semiconductor Index.
Speaking of Asia, I think about what's happened in Korea, and that market is just bananas. All over the place, right? Up 16% overnight. Earlier this week, it was down 10%. We know South Korea is a market where retail investors play a big role. That's increasingly the case in the U.S. Is South Korea kind of a picture of what the U.S. market could become down the road?
I think definitely the volatility and how much it's attracted leverage, single stock ETFs has amplified that volatility. But, you have to think year to date, that market, the Korean market is still up 50%. These SK Hynix, these semiconductor indexes are still up over 100%, even after they fell, 30, 40% over the last few weeks. So I think it's a wild ride, but this is the volatility of the space that people are playing in.
All right, Joy, thanks so much. Appreciate it. Joy Yang, Head of Index Product Management at Market Vector Indexes, joining us live here in our Bloomberg Interactive Broker Studio. Kind of red and green on the screen here, no direction. We started out strong this morning. We sold them off. And now we've got kind of no real movement in the S&P, the Dow, and the NASDAQ.
Although small caps, which had been outperforming the big caps, is laggard today, with the Russell 2000 off by about 1%, while the S&P is just marginally lower.
Yep, I'm keeping my eye on the bond market. We've got the 10-year Treasury up 5 basis points here, so we're 472 on the 10-year. Keep an eye on that one. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. You know what really stood out to me? I just checked the volume. It was very high volume trading day today.
On a Friday?
On a Friday in July. The end of July. Major averages, they were higher earlier. They turned mixed, a little changed at this point. The S&P 500, you had, well, let me check exactly, 177 stocks higher, 324 are lower right now. And of course, Amazon remains the best performing stock in the index with its fourth biggest weighting in the index, keeping things afloat with a 15% pop after the earnings, where we learned they enjoyed a fifth quarter of cloud sales growth. The Mag 7 index up right now, the Bloomberg Mag 7 index up 1.5%. And if you didn't get enough of Dan Ives at Yorkville Ives, he sees the AI investments by hyperscalers definitely paying off.
As long as you're showing these numbers, the CapEx, investors are fine and willing and understand why they're spending. And I think that's where the narrative from this earnings season, what we've seen across the hyperscalers, worrying about monetization across tech, but now you're starting to see it.
The S&P 500 dead flat, 74.38 right now. Dow Jones Industrial Average up 3 points. NASDAQ 141 points lower. That's up just about 0.2%. Back to the yield space with a long bond up 4 basis points, 5.25% on the 30-year. Polls of American voters consistently have showed housing costs among their top priorities. And here's one, kind of a sleeper issue. I don't know, maybe not, but home insurance costs, making already expensive housing unreachable for some, and Americans starting to notice. So 58% of voters say rising home insurance costs are making them more likely to turn out for the midterm elections. This is a poll by the comparison site Insurify. Home insurance premiums have risen 46% since 2021.
So what's the thinking here, that you want policymakers to pressure insurers to reduce the cost of your insurance?
I don't know. I mean, I was dropped by, who's the big one?
Allstate, State Farm?
Allstate, and because I'm like, you know, within a mile of the water.
Yes.
So
they're all worried about flooding.
And boy, they gave me every excuse. Oh, you don't have shutters. You don't, I'm like, you know, whatever.
Well, when I owned a home in Carmel, California, I got dropped 3 times. So fine, because of the fires. Finally, I was going with Lloyd's of London, the same people that insure like these tankers going through the Strait of Hormuz. It was like, you got to be kidding me. But it's a scam.
Oh, wow.
Scam.
Well, now
right.
I'm secure because I have Joe's Insurance of New Jersey.
Yeah. All good.
All right, good stuff. John Tucker with our Bloomberg Business Flash this morning and other stuff. It's always the other stuff that takes up most of our energy and time, which I appreciate. Going back to the markets, the Dow not doing anything, the S&P not doing anything, but within the Dow, the best performer is Amazon, up almost 15%. The worst performer is Apple, down about 9.3%, following yesterday's quarterly results and the outlook. Gene Munster is the authority on Apple. He is managing partner at Deepwater Asset Management, and of course, years before that, he was a sell-side analyst on Apple, one of the most well-known. Gene, good to speak with you. Partially, I'm guessing that Apple's decline today, outsized decline, has a lot to do with the fact that it was an outperformer in the lead up to these results. What did we really learn from Apple that can be attributed to decisions it made versus things that are beyond its control, like really high memory chip prices?
Well, this is less about the high memory prices and more just simple numbers about where the guidance is going. So, Scott, just to take a step back, they guided to 12% revenue growth through September. They guided to 9 to 11. Now, when you find this subtraction key with a company, a stock that's been up 22% over the past month versus the NASDAQ up 1%, when analysts go to that subtraction key, that is negative for the stock. There's just no explanation that can get investors comfortable. And I think that's kind of where the conversation ended. But I want to go through that a little bit and answer your question about like what's the substance of what's going on? Is this about memory costs? The answer is a little bit about memory costs. Maybe if you think about the 10% decline, probably 1 or 2% is about just higher memory costs. It's going to have a 50 bips negative impact on their margins in the September quarter. The bigger picture is on revenue. And effectively what happened, this is a pretty unique dynamic, but it makes a ton of sense, is that the iPhone has been on fire. It was up 22% in the June quarter. If you look at over the past year, it's been up 22%. That compares to over the past 5 years, it's up 3% on average. So we've got this huge surge in iPhone demand, and separately the Mac up almost 30%. Typically it's up a few percent. And what that means is that they have essentially been pulling through inventory. Remember how tight inventory is? In part because of these pricing deals that they have to try to keep costs low, they're limited to the amount of capacity that they've had. So they pulled inventory essentially from September into the June quarter. And that means they just simply don't have as much. And the way that I'm going to back test this, and it'd be pretty easy for your listeners to do this, is just look at what the lead times on the products are. Right now, they're running a few weeks. Now, that typically would be same day on many of their products, right? That's an indication that they are, in fact, constrained. And so effectively what happened is they stole demand from the September quarter and pulled it into the June quarter. There's still a ton of demand out there, stole supply, and pulled it into the June quarter. There's still ample demand. And I think at the end of the day, just to put it in the most basic terms, Street was at 12% revenue growth for September. If they would have kind of had currency constant and supply constant, I bet they would have guided to better than 15% growth for the September quarter.
So, Gene, you were busy this week, as a lot of tech investors were, with all the earnings, but I got to ask you about this story. Wall Street Journal story about Tesla spinning out its China business to maybe pave the way for a SpaceX merger. Does that seem reasonable to you?
Yeah, I would say it's reasonable. And it is going to increase the probability that I have put on this happening in the next few years from 90 to probably 92%. Okay. About a week ago, I had it at 80%, and then the Tesla earnings call, they let a question in about the two companies coming together, which surprised me. Elon started to answer the question, and then legal took over and said, really, we can't say much. And then Elon grabbed the mic back and started to kind of pontificate about the benefits of these two companies being together. That took me from 80 to 90. Now I'm at 92. And the answer is it just makes a ton of sense. Like this China piece, I think, is grossly underappreciated about the tensions from the technology companies geopolitically, as I've been meeting with many companies that have ties and these leading private companies that have ties to China. It's pretty clear that they want as much separation as possible. And so my view is that we're probably a couple years away. Elon's has always structured the China business to be easily separated from the U.S. business for a lot of reasons. And one of them is his master plan. It's very simple. He's going to just keep rolling up his businesses into a master company. And so to answer your question, Paul, is I think that this, it makes a ton of sense. And even though they're saying it's not going on, I think it very much is in the cards.
It sounds like it'd be good for Elon Musk from the way he operates and runs his company. Would it be good for investors?
Now that's the key question. And I think the answer is the simple answer is yes, from two levels. On an operational piece, which is most important, is that when you bring things together, you reduce redundancies. And there's this long-standing view within tech companies that are highly innovative that smaller teams are more effective. And so when you have smaller, tighter teams and effectively you can do that, I think that's one piece of bringing all these together. I think their visions are very similar, obviously around being AI first, space AI with SpaceX, physical AI, terrestrial with Tesla, all of that makes sense. The other reason why I think investors would be rewarded is that the dynamic around Tesla and SpaceX to a lesser extent right now is really about investor confidence around the long term, retail investor confidence. And I think that unwavering confidence would only increase if they brought some of these together. And that has really explained how Tesla can still be a $1.2 trillion company despite having many of its targets pushed back for years. And so I think you put these two together, it would undoubtedly be the biggest company. I think you put them together, I think the path to a $10 trillion company is well laid at that point.
Oh, there you go. Geez, that's kind of what a lot of the folks are thinking about. Gene Munster, thanks so much for joining us. As always, appreciate getting some of your time. Gene Munster, managing partner, Deepwater Asset Management. He's based out there in Minneapolis out there. So good stuff there. S&P up 11, Dow up 25, NASDAQ up 110. That's 0.4%. So kind of bouncing all around here this morning. So we'll keep an eye on that. Coming up, Randall Williams, Bloomberg Business and Sports reporter. What's going on with FIFA and UEFA? Why even pronouncing them right?
So much.
So much going on. We'll have that coming up.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's get right to it. FIFA has plans to privatize some of its commercial business. I think I've got that right. Okay, that's the global FIFA. UEFA, they're the European dudes. They're not happy with it. And look at this, just across the tape, I think this is AP. Senior FIFA official resigns over Infantino's World Cup sell-off plan. Second says it deceived staff. Wow. Randall Waves joins us here, U.S. Sports. This is a big story, Randall. This is global soccer. We just finished with the World Cup. People have a great appreciation for football maybe now than they had before the World Cup. What's going on here?
Listen, FIFA's trying to make as much money as they possibly can. And, you know, for me personally, I thought the World Cup was going to come to a close. I would be able to take a deep breath. But obviously, we're witnessing a global fight right now. We have FIFA, who is over the World Cup, which is the biggest, largest tournament and the most famous tournament. It's the one the players love the most. It's the one that the teams participating, they have a deep desire to win it. But now they're saying, you know, we can raise up to $4.2 billion from Joshua Kushner, Strive Capital. And of course, he is the son-in-law of President Trump, who, you know, FIFA catered to.
Brother of the son-in-law.
Brother of the son-in-law. Thank you for correcting that. Who, you know, FIFA catered to President Trump all while he was here. And you have UEFA, who's over many of the countries who were participants, France, England, Spain, so many who are just like, hold on, enough is enough.
Enough is enough. So UEFA is now talking about boycotting the World Cup. That's not for another 4 years. So is this kind of an empty threat? Because there's a lot of time between now and the next World Cup.
I don't think it's an empty threat. I think that they're very, very serious about this because CONCACAF, who is over in North America, Central America, and the Caribbean, is also in it. We have yet to see what South America has to say as well. And so if everyone raises their hand and says, we're done with this, then now, of course, these are membership organizations. These aren't the members themselves. But, of course, to be a part of UEFA, you have to be a member, and I think FIFA as well. So if England, France, Mexico, the U.S., all of these organizations are saying no, who is going to be participating in this World Cup? And it's not just the 2031, it's next year's Women's World Cup that, of course, is top of mind as well.
One of the surprising aspects to me is JP Morgan is advising FIFA here. I'm surprised JP Morgan would get within a million miles of this.
Well,
it's not a lot of money, and the potential political fallout is ugly. Yep.
It's true. That's true. However, JP Morgan tried to do the Super League years ago that fell apart as well. Context. And then outside of that, the upside is tremendous. You know, FIFA's talking about expanding the World Cup to 64 teams. I believe there was a report from the Times of London that just dropped a couple hours or maybe minutes ago that said that they're trying to do this by August. And the vote for this $4.2 billion would be in September. So who stands to profit between now and then? If you expand it before this investment goes in, of course, the investors immediately make a ton of money.
Your colleague, Giles Turner in London, wrote a really interesting newsletter where he said FIFA's mistake was to value its spinoff at $20 billion. What it should have done is value it at 5 times that amount and make it so that the members, each country, would get even more of a payout so that it'd be uneconomical for them to say no.
We were talking about this before, we went live. And if you are France, if you are England, if you are Spain, if you're Portugal, if you're Croatia, $20 million is nice, but a good portion of these soccer federations can make that money in their sleep. And $100 million goes a long way. You can, might be able to build a training facility. You might be able to hire coaches that can better develop talent, all of those things. Whereas 20 million, I'm not so sure.
It's harder to say soccer's not for sale if you get 100 million.
Exactly. And of course, you have to remember that some of the issues that exist in global football outside of Europe are often the money distribution. So after you send this check, who's going to be distributing the money? Is that person going to be like, oh, we got $20 million, I'm going to take 5 of it. Oh, no one's looking, I'm going to take another 2.5. And now, you have 12.5 left to distribute amongst the players, amongst other officials and everyone else like that. There's no governance over that. It would just be a blank check to these federations, and then they would have to deal with it. So it's on life support, I would say.
Is UEFA and the other critics of the FIFA's plan, are they critical of the fact that they're selling a piece of FIFA in general, or is it to whom they are selling?
I think it's both.
Okay.
I think it's both. Number one is that if you were going to sell a part of this, then you would want to consult them to begin with. You would want to consult UEFA. You would want to consult CONCACAF. Say, hey, we're thinking about doing this. Then you could say you could get some preliminary thoughts on it. Everyone was shocked, a week ago or earlier this week when they dropped this and said, you know what, we're going to be raising this money.
But your reporting has shown that these discussions have been going on for a while. It's not like it was last week.
Exactly. So now that makes you think. You go back all the way to December of last year, President Trump gets a peace prize. And then we have, these different wars that go on. But also, how long has FIFA been considering this, knowing that this was going to be the most successful World Cup of all time? And why did FIFA not have conversations with other private equity firms, such as CVC, such as a Sixth Street? There's a bunch of them who might be interested in doing this, but those conversations probably did not happen.
It's called running a process. Why did they not run a process? The process is, here's a pitch book. We're going to send it out to 200.
You cover yourself, right?
Yeah, and do it. And then you create competition. You drive up the value and all that kind of stuff.
And you brought up JP Morgan really quickly. What about the other banks?
Yeah.
Why? And not saying there's anything wrong with JP Morgan, but I imagine that there are other banks who might want to be in this, and they're not.
Interesting.
So many questions.
Yeah.
And so much anger.
Yeah, exactly. Randall, thank you so much for joining us. Randall Williams, he covers the business of sports for Bloomberg News. And again, not a quiet time after the World Cup with this news story breaking. In the world of global soccer, This is big. This goes to the existential kind of aspect of who's running things out there. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business App.
Good Friday morning, TGIF from the Bloomberg Interactive Brokers Studio in Midtown Manhattan. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and John Tucker. All right, we have a lot to react to, certainly earnings, as well as oil prices. It's the end of the week, end of the month as well, so a lot to discuss when it comes to markets, too. Coming up in this hour, we've got Vince Piazza. He's our senior equity research analyst, talking to us about Chevron and Exxon's latest results. They did report today, and of course, Exxon and Chevron seen benefiting from the movement in oil prices over the last couple of months. We also have Tom Keene making a return to the studio.
Wow.
I know. He's coming back with his man bag. He's going to talk to us about what we're going to look forward to, what we're going to talk about in Bloomberg Money today, airing at 12 p.m. New York time on Bloomberg Television. Cool. Eric Kazatsky is our go-to guy for Munis. It is Munis in Focus. He's going to talk to us about the latest developments there. He is, of course, with Mackay Municipal Managers. And Frances Newton, she is our economic strategist and CIO of Tuttle Wealth Partners, in town to talk about, just to take stock of everything that we learned this week when it comes to the macro drivers in the market and the micro as well. Earnings, the Fed, geopolitics, all of that. Of course, we want to remind everyone that for our listeners, if you want to participate and engage with us, Bloomberg Radio is introducing a new feature exclusively for Bloomberg.com subscribers and terminal clients. Help shape our conversations by submitting your questions for our analysts and experts to answer live on air. Subscribers can go to bloomberg.com/askradio to send in questions, and you might just hear them asked on air. That is bloomberg.com/askradio. All right, let's head over to John Tucker for our Bloomberg Business Flash.
All right, let's start with this, Scarlett. Earnings season past the halfway mark, so time for your earnings report card. 86% of the 291 S&P 500 companies that have reported have beaten estimates. So this tracks the highest pace in 5 years, according to Bloomberg Intelligence. And I sound like a broken record with these, but the best performing stock in the S&P 500, Amazon, one of the worst, Apple. Amazon revenue jumping 37% at the Amazon Web Services, and what that generates about a fifth of the company's revenue, most of the operating profit there. So Amazon is up 14.7%. Different story for Apple, tumbling by the most in 16 months. They had shortages, component shortages weighing on the sales forecast. Meantime, Victoria Fernandez at Crossmark Global says investors facing lots of questions.
Do we buy chips? Do we not? Do we buy memory? Do we not? With the volatility that we're seeing in these markets, I think that's going to be the biggest conversation people are having. And really and truly, we need to be tactical. It's what we're doing for our investors. There is so much going on underneath the surface right now.
Big volume day also. S&P 500 up 6 points right now, 74.43 on the index. The Dow up 56 points. The NASDAQ 100 54 points higher. That's up about 0.2%. 30-year yield continues higher, up 5 basis points right now at 5.26%. This one's kind of scary. Halloween getting an early start this year. Hershey's hoping this means a sweeter season ahead. Sorry. The candy giant says the rise of, now this is what they're calling it, Summerween.
Ah.
Please.
What?
So this gives the holiday a longer runway. Hershey says 67% of parents have already purchased Halloween candy. More than half are in Halloween mode well before, no kidding. The number one Halloween candy, by the way, what is it? Want to guess?
Reese's Pieces?
Reese's
Peanut butter cups.
Cups, yeah.
Which
So-
they've diluted by not using real peanut butter and real chocolate.
What?
Yeah, there was a story about this in
know
Bloomberg
that.
Business Week. Yes,
Oh,
because all
that's
of this costs money,
outrageous.
and they need to reduce costs.
I like to freeze mine.
Yes.
Oh, really? I have not tried that.
Oh, no. At least refrigerate them. You don't want to eat them when they're like all mushy.
Yeah, that's true.
During-
Are there some upstairs? Sometimes there's some upstairs.
Okay. Happy Summerween. We check the markets for you all day long. Right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. As John was just reporting, we got some green on the screen here. It's Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's take a look at some of the stocks on the move today. We can do that with Tatiana Darie, strategist for Markets Live. Join us here in our studio. Tatiana, what are you looking at today?
Well, we'll start with Apple, as it was a big earnings week, as John mentioned. Shares under pressure. They're 9% lower after earnings, and guidance was a little bit shy of earnings of analyst estimates. So earnings for the third fiscal quarter were okay. However, looking ahead, the company said revenue will rise 9 to 11%, which is lower than the estimated growth of more than 12% that analysts were expected. However, this is not a demand issue, but rather it's a supply issue, as they cannot get a handle on enough computer processors and enough memory chips, as we've heard all along, and this is leading them to extended wait times for their products, hence to this lower outlook. But the good news is that this company is a cash cow. $32 billion in free cash flow there. That's more than Microsoft, Meta, Alphabet, and Amazon combined, with the disclaimer that the latest two have posted negative cash flows. But that discipline not rewarded today by investors.
Certainly not. Worst performer in the Dow Industrials. What's next?
Well, Amazon is doing quite the opposite here, surging 15% after its report, after it posted accelerating cloud revenue for the fifth straight quarter here, helping ease some of those concerns that AI bets are not paying off. Revenue jumped nearly 40% to over $40 billion at AWS. This segment now generates a fifth of its revenue, and it's the leading source of operating profit. That marks the fastest pace of growth since the fourth quarter of 2021. So investors really rewarding the company for its growth, even as it has boosted its capex to $220 billion from a previous estimates of $200 billion. And despite negative free cash flows, we are seeing Amazon truly rewarded here today, and that may be because it has been lagging this year.
NVO, what is that ticker for?
That is Novo Nordisk as ADRs. Right. Shares are down by 9% here after one of its experimental drugs failed to reduce the risk of heart disease and strokes in a large study. It did target the protein that it wanted to in the body. However, it didn't post that significant result when it came to cardiovascular problems. And this is really a blow to the company as it tries to diversify away from those obesity drugs, as that market got really, really competitive. And if you look at the stock, it has been lagging this year, but if you really zoom out, you'll see that the company really needs a new source of growth because shares have been lagging badly since that peak in 2024.
It's remarkable, given this company had the first mover advantage.
I know, that's a good point. Usually you can keep that for a while. Tatiana, thank you so much. Appreciate that. Tatiana Darie giving us the big report here from Working Conversations like this. You can subscribe to our Stock Movers Report. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Earnings coming out of the energy patch here. ExxonMobil, Chevron, some of the big boys reported here. Let's get in touch with an expert on this stuff. Vincent Piazza, he's the senior research analyst. He covers all the oil and gas companies for Bloomberg Intelligence. No idea where he is. It could be Philly, Princeton, Wilmington. You never know where this guy is. Vince, what's going on in your world of big oil?
And good morning from Wilmington, Delaware. But it's always sunny in Philadelphia, remember
there
that.
you go.
Yeah, so look, if you think about coming into the quarter, Exxon and Chevron, significant optimism coming into the quarter, just considering where we are on WTI and Brent. But, Chevron posted a much, much cleaner quarter operationally. Significant free cash flow, buybacks and dividends were up. The debt side, Chevron bought back roughly $8 billion of debt. So, look, strong quarter operationally for Chevron, a little more optimism coming into the quarter for Exxon. It's down roughly 2%, little softer on the downstream side. But Paul, combined $32 billion of free cash flow in the quarter for both companies. You're getting that back in dividends. You're getting that back in buybacks as well. But for Exxon, Paul, a little bit more of an impact from Hormuz in 3Q. Some thorny issues that they have to deal with, but for Chevron, much, much cleaner quarter.
So does this windfall help them do anything that they wouldn't be able to do otherwise? You talked about how Chevron is going to reduce debt and increase share buybacks, but operationally, can it think bigger than that?
Yeah, so if you think about Venezuela for Chevron, Chevron's output in Venezuela will likely grow through 2028. Again, put the geopolitics aside, definitely an operational ambition for them, but one that will see production grow from roughly 280,000 barrels to 400,000. Not a big mover right now, but think about over the next couple of years what could happen there with a more sanguine political backdrop in the country.
Hey, Vince, what are your companies saying about the Strait of Hormuz? I'm kind of the opinion that this thing's never going to be really open again because it just takes the threat of an attack to kind of shut things down. What are your companies saying?
Well, I can tell you what they've met, and consider that most of my coverage universe is U.S. and domestic. But what we see the industry doing is recasting those capital flows, rejiggering, reordering seaborne maritime logistics to dilute the impact of the region. And what does that mean? Well, it means extending transit times by up to 2-3 weeks and moving barrels away from geopolitical and conflict zones. What does that mean in general, though? It means a higher floor price, and it also means a logistics environment that provides for greater redundancy, whether it's floating storage, whether it's more land storage as well. But it does suggest that over time, we do see that part of the world being diluted so that you get away from those conflict zones. It means more capital coming to North America, whether it's capital invested in the U.S. or Canada to get those molecules out in the export market. It means more dollars heading down to South America too, whether it's Venezuela, whether it's Argentina, and even Brazil as well. So you could see over the next several years greater capital flowing to the Western Hemisphere, more barrels in floating storage, more barrels in land storage to dilute the impact of subsequent geopolitical events.
All right, good stuff. Vince, always a pleasure speaking with you. Vince Piazza is our senior equity research analyst on oil and gas, joining us from Wilmington. All right, in about 45 minutes or so, if you tune in to Bloomberg Television, Tom Keene and I will be hosting Bloomberg Money. It's our new show focusing on personal finance, retirement, wealth management. And Tom has come back to the studio to join us. He's all excited. You're really excited about our guest this week.
All sorts of news flow. One of our guests may be Donald Trump, the president of the United States, and he joined Bloomberg Money. He's at Camp David on his way to Bedminster to play golf.
Jersey, yeah.
But I thought Camp David always was west of Washington. It's directly north, up on the Maryland border. And in my youth, it was a big deal. It was David Eisenhower, the father and the grandson, the son of Dwight Eisenhower.
Okay, I didn't know.
Hugely historic, and he's there talking big, weighty issues with the cabinet. We may be interrupted with comments by the president.
Okay, but normally he doesn't even deign to show up at Camp David. I mean, he goes straight to his own resorts.
Second term, a little. It's not really like, he's not into making s'mores and sitting around the campfire.
The Trump place out in Jersey is very nice.
Is it? Oh,
Yeah.
you've golfed there. Of course you have.
Yes.
We got a great show. Lori Calvasina will be with us. Scarlett had a tantrum last week and said we got to get Lori on.
Yep, she'll
be on to
awesome.
explain the tech thing and where we go forward in equities. I would note, Scarlett, the bond market has moved since about 9 o'clock this
Oh,
morning.
it certainly has. You look at the 30-year yield, it's now at 5.26%. It's pretty incredible. This is a 19-year high. So this
And
global bond sell-off has all kinds of
just since I
repercussions.
exited to the Power Surveillance English breakfast, Paul and you have seen the real yield join. Just in the last hour or so, the real yield has popped up, the inflation-adjusted yield. We have a special guest today. We will do Bloomberg Money with Richard Clarida, the former vice chairman of the Fed. But Scarlett and I agree, Paul, that we have to address this press conference of the chairman with Richard Clarida.
It was confusing.
Hugely confusing. And he's, without going into it in detail, we will not on the show as well, Clarida is directly involved in the academic battle that's going on between economists and with the chairman of the Fed, led by Anna Wang, I might point out.
And the chairman of the Fed is not an academic. That's not his tradition. That's not his.
I would not be as harsh as you. This is typical food. Paul.
What, I just cut to the chase?
He is not one of the brethren like Anna Wang out of Chicago, the laureate Robert Lucas out of Chicago.
Or Ben Bernanke.
Ben Bernanke out of Princeton.
Or
and
Janet
all
Yellen.
Of his Yellen out of wherever. But the bottom line is no, he's not of that cloth. But he'll be with us, and that will be a really important global interview.
Well, we saw in Bloomberg News just earlier this morning, former New York Fed President Dudley says markets show loss of Fed credibility. I thought that was pretty strong.
Well, yeah, but we see it again. We saw the pop on Wednesday at the press conference. And we've sort of been waiting around, and you and I saw the pop at 9 o'clock or whatever.
Yep, so we're starting to see the market is doing the work for the Fed. If the Fed's
And you see it in the real life indicators, right? The 30-year mortgage, fixed rate mortgage is now at 6.66%, the highest in a year.
I live vicariously through your social life. Are you going to see Rush this weekend at Madison Square Garden?
I'm not, but I'm interested in hearing how this replacement drummer does for Neil Peart, because I feel like Rush is, you got to go with the OG, and of course Neil Peart
I
passed
think
away.
they'd be offended if we called her a replacement drummer.
Okay, well, how do you call it?
I don't know
Fill-in
right
drummer?
now. But she's like wicked awesome.
The guy who's filling in for the dead guy.
Geddy Lee sits behind home plate for the Dodgers. So, he's
Canadian.
Right there.
Shouldn't he be rooting for the Blue Jays?
I don't know. He likes. I don't know. He likes.
Rush is Canadian.
I think he likes the Dodgers.
I know.
Yeah, I'm telling Tom King because he doesn't seem to know. BTS is also performing this weekend.
Really?
Yes.
Where?
The Korean boy band at MetLife Stadium. This is like their first big, tour. They did make an
Well, we
appearance
can
at the World
chopper you
Cup.
to that. No problem.
I'm not. Yeah, I don't know if I want to be there. There's a lot of teenage girls, and the screaming is very
row,
hard
like
on the
8
ears.
rows back. Amy Wu Silverman and her daughter. Gotta be there.
Yeah.
Gotta be there.
You know how much the stage right tickets are for BTS? Take a guess.
Big. $1,000.
$1,800.
Okay. Yeah.
Yeah.
It's big.
$176 for the nosebleeds.
Just to get in the door.
Yeah.
Okay. All right. So you guys will reunite at 12 noon.
Yes.
Tom Keene, Scarlett Food, on the Bloomberg Money Show. So that's going to be some good stuff.
Favorite
coming up.
Rush song?
Oh, I'm not like Rush.
John Tucker?
I'm not a Rush fan.
You don't know any Rush songs?
I do know a ton, but I just can't think of the,
Okay, Tom Sawyer, Limelight, Spirit
Yes,
of Radio.
yeah,
Come on,
all
guys.
those, yeah.
Keep up.
All those.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash, brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Major averages mixed to little change on a high volume day. The S&P 500 dead flat, 74.37 right now. The Dow Jones Industrial Average up 85 points at 52,292. The NASDAQ 100 11 points lower right now. Amazon's cloud computing revenue accelerated for a fifth straight quarter, so that's up close to 15%. Apple, meanwhile, warned of chip supply shortages. They also forecast weaker than expected revenue growth. Those shares are down close to 9%. The chip makers, they are getting a bit of a bid today after this whipsaw week. The SOX index right now is up just about 0.5%. 3 Federal Reserve officials who've dissented in Wednesday's decision to hold interest rates steady are warning that waiting too long to act could risk the need for more aggressive policy. Cleveland Fed President Beth Hammack among them, saying the longer that high inflation persists, the more challenging and costly it can be to bring it back down. The long bond up 5 basis points right now, 5.26%. The 2-year yield up 4 basis points. The 10-year yield up 6 basis points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
Munis Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. We have bonds on the move here again today. Treasury market selling off here. Yields pushing higher. 10-year Treasury yields are up 6 basis points here, 4.73. We'll keep an eye on that, but that's a big move in the bond market, which was similar to what we saw when the Fed reported earlier this week. Let's see what's happening in the world of municipal bonds. For that, we check in with Eric Kazatsky. He's a managing director and client portfolio manager at Mackay Municipal Managers. He's based in Princeton. Eric, we see yields pushing higher. What's going on in the municipal market recently?
Hey, Paul, how are you? It's been a tough month for municipals. If we sort of go back in the numbers, this is probably the worst monthly performance going back to 2003. So it's been quite a while since we've seen a down July, but, it's technically driven, right? It's really a lot of what's going on the negative side, and treasuries is sort of bleeding into the muni market. But, for us, all is not lost, right? Always pointing out the silver linings. Yields are higher. This means a higher starting point for investors coming into the muni market, and that has a really high correlation with forward returns. So we're liking where things are sort of setting up from that standpoint.
We're going to get into the heart of the summer. I mean, we're already in summer, but it feels like things really slow down. Also in the muni market for the month of August. So how's it going to change things up here?
Hopefully we get a little bit finer balance or sort of like, a fine tuning of like what's coming in on the demand front and what's coming in on the supply front. Next week's calendar looks pretty heavy as well. But, thankfully, retail flows have still been able to absorb a lot of what's come to market. You're right, though. August tends to be a slower period for the muni market, but on a historical basis, returns have still been strong looking back, averaging about 60 basis points over time. Our hope is that the market sort of calms down from a rate volatility standpoint and we return to those sort of, normal return expectations for the muni market in the next 30 days.
How are the fundamentals out there in the municipal bond market here? It seems like most issues are looking pretty solid.
Yeah, I mean, look, we're still constructive on the muni market as a whole, right? This down month really wasn't driven by, muni credit souring or the sentiment on the sector souring. It really has been technically driven, and a lot of the negative rate sentiment has just bled in. Look, our view from the beginning of the year has been sort of leaning more heavily into revenue bonds, and we still think that that's the sort of better marker of relative value. They have assignable revenue streams, better covenant protections, pricing power in some instances. So, from that standpoint, we still like that area area of the market, and the issuance is sort of flowing in there as well. So, giving us a lot of opportunities and at-bats.
Eric, what worries you right now when it comes to the muni market?
Yeah, I mean, for us, I think like what worries us is just sort of thinking ahead, and it's like, telling people that it's not broad municipal credit, that's souring right now, and just sort of reinforcing the fact that with, negative returns, that really means that yields are going higher, and that sort of opposite correlation there. The risks we're watching for the market are really just around the technicals, and it's sort of getting investors comfortable with that higher yield and that, higher starting entry point, and just knowing that, that high correlation to 5-year returns going forward is actually something that hasn't been achievable in the past 12 months. So, I don't say that it's worrisome for us. It's more just about getting people comfortable and just sort of starting that re-education process again.
The infrastructure play in this country gets a lot of political headlines, certainly, that investing in America. How does that get reflected in your world?
A lot of the issuance we've seen this year has come onto the revenue side of the equation, and inevitably some of the financing is going to fall into that infrastructure category, right? Whether it's water and sewer projects, toll roads, airports, that all sort of funnels into that story. And, again, it creates opportunity sets where we're seeing the best relative value. Looking where the issuance has been really strong this year, and I think you and I have touched on this in previous conversations, it's those prepaid gas forward bonds that continue to sort of surprise. Year-to-date issuance in that sector is almost at where we were on a full-year basis last year. So it continues to be strong, and that means demand for those kind of bonds is even stronger, that the bankers keep bringing those deals.
All right, Eric, thanks so much. Appreciate that. Eric Kozatsky, Managing Director and Client Portfolio Manager at Mackay Municipal Managers, based there in Princeton. We've been talking a lot about Amazon because they put up some really good numbers last night, and stock trading up higher today. And obviously, we focus on the cloud business and the AI angle to that story because that is the driver of shareholder value for that company. But let's not forget, it's got a retail business too. All those boxes showing up at our doors every day. So get a handle on kind of how that's going and what that means for kind of the consumer economy out there. We checked with Poonam Goyal. She covers all the retailers and e-commerce companies for Bloomberg Intelligence. Poonam, what'd you learn with Amazon's results as it relates to the core Amazon.com retail business?
Yeah, I think the retail business was very strong this quarter. The Prime Day shift clearly helped them drive that 15% increase in the retail side of things. But I would say, more importantly, I think just the integration of AI, whether it's Amazon Alexa for shopping and the old Rufus, I think they're gaining a lot of traction there. They're also expanding their grocery business. It's a business that Amazon's been targeting for a very long time. And outside of Whole Foods, they really hadn't gained any traction. The fact that they are gaining traction through their own marketplace is encouraging, but it's a long way to go from here.
What did they do differently by growing it organically as opposed to trying to scale Whole Foods?
Yeah, so I think the biggest change came about a year ago, where when you go online to Amazon.com, today you can add in an avocado to your phone case charger. Before you couldn't do that. The fresh order was completely separate. So the bundling of these categories has increased the adaptability, and consumers today are shopping Amazon more and more so for their everyday needs beyond the paper towels and into the perishable category.
All right, you got to explain to me this AI story, the AI angle as it relates to kind of what Amazon's doing on the retail side. How are they implementing it?
The AI angle is across the board. It's in their search. So you don't even know that you're talking to a chatbot today, and you are. When you go to Amazon.com and you search for anything, it could be, last time we spoke, Paul, it was a power washer, right? So if you go in and you search a power washer, it can give you not just the best power washers out there, but it can track the pricing for you. You can go ahead and say, when was this power washer the cheapest in the last 6 months? And how does that compare to today? When it drops to this price or whatever price you're willing to pay, have it sent to me. So a month from now, a power washer could show up at your door and you'll be like, oh yeah, I wanted this. And it was at the right price that I wanted it at. So there are a lot of things happening.
Sorry, I'm going to have to cut this short, Poonam, but we're going to go to the president at Camp David. Poonam Goyal, thanks so much. We appreciate that covering on the Amazon numbers. Let's go to Camp David right now. President Trump meeting with his cabinet. He's making some comments. Let's listen in.
This is one of the most talented teams ever to serve the United States and in the United States. This is a talented group of people. let's see, I'll go one after another. Yeah, there's a couple of steps, but that's okay. It's an amazing group, and America is safer and stronger and far more successful than it was 2 years ago, and I think, frankly, that it ever was. I don't think it's ever been anything like this. And we're building more factories, plants in this country than we've ever built before. And we're going to be we'll be leaving this position. We're going to leave this country in very, very good shape. When we took office, we inherited a total catastrophe. The last administration created the worst inflation in 48 years, the most dangerous and insecure border in history, and exploding trade deficits like we have never seen before, rampant crime, men and women sports, transgender mutilization of your children, and chaos and bedlam all over the world. Other than that, they did quite a good job. In less than 18 months, we've turned around 4 years of disaster. We now have the strongest border in American history. We went from the worst border, I believe, of any country in history. 25 million people came through in 4 years. And these are people that, in many cases, you don't want. They were murderers, they were drug dealers, they were people that you do not want. But now we have the strongest border in American history, and for the last 15 months, the report just came out again, we've had no people coming in through our southern border, zero. And it's almost hard to say, because you'd say, is that even possible? They had 25 million people came in. We have no people coming in through illegally through our southern border. And that's in history, so think of that, zero, a big, beautiful zero. The murder rate saw its single largest drop ever recorded to the lowest in 125 years. That goes back to, think of it, it goes back to 1900. Lowest murder rate in the history of our country. So that's something. Today, I just want to mention that we heard in Minnesota, there was a cyber attack, and they blame it on Iran. I don't think so. I blame it on Minnesota because they're grossly incompetent. There was a cyber attack of 30 water plants, and I would blame it on Minnesota and the governor, the corrupt governor of Minnesota. They like to say, oh, it was Iran. Iran should be so lucky. Iran's got bigger problems than worrying about Minnesota. This month it was announced that inflation is dropping at the fastest rate in more than 6 years. Walmart, Sam's Club, Giant Eagle, and others are slashing prices by hundreds of grocery stores, and all of the stores, I mean, throughout the country, they're slashing prices, something that you haven't seen for a long time since my last administration. The stock market has set 73 all-time record highs since the election. That means all-time record highs, 73 days out of a very short period of time. And the typical 401k is up by more than $30,000. And when you think of that, if you add another $1,000 to it, it will be, we set the record in the last administration, a record still standing. This administration is going to blow my last administration away. When the factories that we're building at record, and we're not building them, all over the world they're building. They're coming from all over the world. They're coming from Germany with the cars. They're coming from Germany. They're coming from Japan, South Korea, Canada, Mexico. From all over the world, they're building auto plants here because otherwise they have to pay tariffs. The tariffs have made our country rich and successful. And all of this, I mean, I'd like to say it was the election. On November 5th, it was the election, and that's fine. But without the election, you wouldn't have what I've done economically. So we have the most successful environment that we've ever had. There's never been anything like it from the standpoint of investment into our country. It's 5 to 6 times higher than anybody has ever seen, than any other country, not just us, has ever had. On July 4th, we launched Trump accounts, a key provision of our great, big, beautiful bill. And these tax-free investment savings accounts have already been activated by over 7 million children. These are investments made in our future, which is our children. Our children are the most important aspect of our future, with more being added each day. So it's a tremendous hit, over 7 million, and really, it really just got going, I would say, Scott, about 2 weeks ago when it was, we got the final approvals. And we have over 7 million. Actually, there's never been anything quite like that. But millions of accounts are pre-funded with $1,000 from the U.S. Treasury. more generous gifts from private donors like Michael and Susan Dell and others who have given billions of dollars, billions. People are putting up hundreds of millions and billions of dollars into it and buying really a great future for children. When they turn 18 or when they turn 21, instead of having no hope, no future, they will end up with hundreds of thousands of dollars and maybe even more than that. So it's going to be something to see. With modest additional contributions, they'll grow by numbers that should be, it could be over $200,000. We're looking at the timeline. I wish we had an economy like we have now with the stock markets going up, but they will benefit by our country being successful. We're going to give every child a head start on the American dream. So go to trumpaccounts.gov. They're really something the whole world's talking about it, and it's far ahead of schedule. Nobody thought it would be as successful as it's been, but it should be. It should be. And we start them off with $1,000, and this was part of the great big beautiful bill. With my most favored nation policy, you could say this is even a bigger thing if that's possible. On drug prices, we're achieving record discounts on prescription drugs. The prescription drugs were going through the roof for many years, and now we're getting record discounts with price differences of 300, 400, 500, 600%. Nobody's ever heard of a thing like that. And what this is all about is that we had the highest prices anywhere in the world by far. Most expensive drugs, prescription drugs, and others. The highest in the world. The whole world was laughing at us. We paid for the rest of the world. We subsidized the whole world. And I said, we're not going to do that. And I started it in the first administration. I took it up. Obviously, Biden wasn't able to do anything about it because you had to get the consent of the drug companies, and you had to get the consent. More difficult would be the consent of other nations. The other nations had to agree, but they were paying a fraction, sometimes 10%, 20%, 40%, 70% less. So I had to call them and I had to get them on, and I said, if you don't do it, we're going to have to charge you tariffs. And they all said no at first, very politely said, sir, we can't do that. We're not going to double our prices. They had to double their prices, and in some cases triple their price, and we would come down. So a pill that sold for $10 in Germany would sell for $130 in New York. Same pill from the same company, the same factory, the same plant, the same laboratory, from $10, and we pay $130. I say, no. Now the world is a bigger place, so it's not as bad as it sounds for them. So they went up to 20, and we came down to 20. So we now have the lowest drug prices anywhere in the world. We're tied with the lowest, but we're basically its favored nation. So we have the lowest drug prices anywhere in the world from the highest drug prices anywhere in the world. Now, what that does for your health care, I mean, I see these fake polls where the Democrats have wonderful numbers on this stuff, and they are horrible, what they've done. Obamacare is a total disaster. It's a costly wreck. It's unaffordable. We call it the Unaffordable Care Act. It's a disgrace. They never even thought of being able to do something like this. They didn't even try. They didn't even try. So I got the drug companies first, and then I got the countries. And the drug companies agreed because they knew the countries wouldn't agree. And when I called Germany, France, when I called the UK, when I called all of these countries, I said, you got to do it. It's unfair. We're paying 10 times more than you're paying for the same drug. You can't do this. And they said, well, we're not going to do that because we're going to have to double our price in order to make you happy. I said, no, maybe you're going to have to triple your price. They said, well, we can't do it. I said, that's all right. If you can't do it, then I can't do something also. And I'm going to charge you very substantial tariffs, which are far more than we're talking about. And they all said, we'd love to do it. We'd love to do it. It would be our great honor to do it. So nobody else would do this. This would have never happened. So your drug prices have gone down by numbers not even thinkable. My first term, I had the privilege of having lower drug prices from the beginning of the year till the end for the first time in 28 years, you remember. And I called a news conference to announce it. So the year it ended, and I was turned out 1/8 of a percent, 1/8 of a percent, little tiny this much. It went down that much during 1 year. First time in 28 years it went down. It was always like this, just up, more expensive. And I called a news conference. I was so proud of myself, and I said, ladies and gentlemen, the first time in 28 years drug prices have gone down from January till the end of December. And I want to just congratulate everybody for being a part of this wonderful experiment. And 1/8 of a point now, we're talking about 400, 500, 600% coming down. We pay the lowest drug prices anywhere in the world from the highest. So, you know, and I'll say it again and again because the press doesn't want to report it, the fake news doesn't want to report it. They don't want to talk about it. What that does for healthcare, Bobby, is unbelievable because medicine's a big part of healthcare. So I wish that people would understand that, and I hope they're going to vote for us in the midterms because you'll see some stuff that will be horrible because they can blow it very fast if they don't know what they're doing. So your drug prices are great. You know, I saw Spain yesterday, and I watched the catastrophe that took place. It looks like an invasion of a country by hundreds of thousands of people. And that same thing's going to happen to us if the Republicans don't get elected, except worse. Much bigger, much easier to get into, despite the fact that we have built thousands of miles of wall, which I said we were going to do, but we didn't have that, forget it. But we have the safest border in the world. If we're not in office, our country will be invaded at levels that made Spain look small time. When I watched it, I said, boy, I said, I'm going to say it because I knew you were going to be at Camp David. And I said, that's going to be a talking point for the midterms. Because when you look at what happened to Spain, they don't know what to do. And it's happening again today. They're coming in by the tens of thousands. They're just invading the country. And what that is weak law, bad management, but very liberal law. They passed a couple of laws, and people read. You know, people are smart. They read from other countries, and they swam that 3-mile swim or however they got in, but nobody's seen anything like it. That will look good compared to what's going to happen to the United States. The biggest thing, the worst thing that Biden did is allowing 25 million people into our country, because many of those people are criminals. They're murderers. A lot of them are 11,888. A lot of them are gone now. We got them out. But they allowed people to come into this country that you can't allow to come into a country. We're also making an unprecedented investment in the United States Armed Forces, where we're doing great. And we rebuilt the armed forces. We rebuilt our military in my first term. But we are doing great with our military. They spent a lot of money in our military. They gave away $300 billion worth of ammo and everything else in Biden's term. But we're building it up fast, and we just have a great military. That's all there is to it. But we rebuilt it in my first term, and we're using it in my second term with Venezuela and other places, and Iran now. Iran is doing very poorly, just in case you read incorrect stories. They're doing very, very poorly. They're having a hard time. They've been very dishonest. They've been very dishonorable to deal with. But that makes no difference. They're doing very, very poorly. We're also making that investment and looking forward to getting $1.5 trillion next year. And people see now how important it is. We want to keep a safe country. We have to keep a safe country. And the good news is all of that equipment is made in the USA. So we're making it here. It's jobs. And each one of our defense groups are building literally at least 4 new massive plants as we speak, because we want them to move faster. We have the best equipment in the world, but we want them to move faster. We don't want to wait a year or a year and a half. We want to wait a week, maybe. So that's happening, and I think the results are very good. They're building at levels that nobody's ever seen before. And we've had tremendous success, and our military was just proud of it. Again, Venezuela was a one-day war, and we have a great relationship with Venezuela. We're working, we're partners with Venezuela now, taking out tens of millions of barrels of oil, and going to Houston, going to Alaska, going to Louisiana, going to different places for refineries, and it's been very much amazing. The administration has done more in 18 months than most administrations have done in 8 years if you had a 2-termer. We've done more in 18 months than anyone's ever seen before. Nobody's ever seen. This is the golden age of America. And we have a war that's going on. I guess you call it a war. Maybe I call it a military operation, They have no Navy, it's been obliterated. Their Air Force has been obliterated. They have no planes. Their missiles have been largely, they have some left. They have some, but they have far fewer than they had 4 or 5 months ago. Their manufacturing capacity is almost gone. The drone capacity is almost gone. There are very few, but they have some. If they have one, that's too many as far as I'm concerned. But we've done an amazing job with Venezuela. We've done an amazing job here. We're in there for 5 months. You know, I know people like to say, because we've done a much bigger job, much more important job than we originally anticipated. So we're in there for 5 months. And if you look at Vietnam, they were in there for 20 years. You look at Afghanistan, they were in there for many years. You look at any one of the wars, Korea, any one of them, they're in there for many years. We're in for 5 months, and we have obliterated their military capacity. Again, they've got some left, but soon they won't have some left. So I just want to thank everybody around this table. You've been very special. I want to thank a lot of the media people, because many of you have been very, very fair and that's one of the reasons you're here, frankly. But you've been very fair. You've covered me this time, much more fairly, I think, than the first term. The first term was a great success. We had the greatest economy in history in the first term, and this term is going to blow it away. I think this term is going to actually blow it away. So it's an honor to have you, and I'd like to ask our great Vice President, J.D. Vance, to say a few words, followed by Marco and Pete and Scott and Bobby Kennedy. Okay? Thank you very much, everybody. Please, J.D.
Well, great. Thanks, Mr. President. First of all, thanks for having us at this historical and beautiful place. And it's an honor to be on the team, an honor to be able to work on fraud, which is what I'm going to talk about today, though I know we have a lot of things going on. This has been an amazing team, from Kelly Loeffler at SBA, to Doug at the VA, to Todd and Bobby Kennedy. This really has required a whole of administration approach to try to tackle fraud. There are a few things that I want to talk about and celebrate. The first is that just since the beginning of the Fraud Task Force that I started under the President's leadership and direction, we have identified $230 billion of fraud that's being perpetrated against the American people, and we have halted already $56 billion of that. It's sometimes hard, once the money has already gone out the door, it's hard to get it back, but stopping it from going out the door is how we save the American people. $56 billion, and of course we're going to keep on working on that. Just today, Mr. President, we will announce 17 new anti-fraud actions that will total about $1/3 of $1 billion, and that's added to the $230 billion that we've already uncovered. And I want to just talk, for the benefit of the American people, about why do we care so much about this? Because what I always try to remind people is that fraud has two victims. So, to give one concrete example, there is a program that is administered by Medicaid, and that program ensures that low-income moms and low-income babies have access to neonatal care. Now, I think most Americans probably share my view that this is one of the great things about the United States of America, that if we see a baby and we see a young mother that requires help, we help our fellow Americans. That's a good thing. It's something that we should be proud of. And yet, there is a program that has defrauded the moms and the babies who benefit from these. You've gotten people who've gotten rich by setting up false companies that are providing false services. So who loses in that equation? Number one, of course, is the American taxpayer that is $230 billion poorer because of the fraud that this country has let go on. But I actually think most importantly is that we've seen that program run out of money. So we've seen moms and babies unable to access the health care that they need because the fraudsters have gotten rich. That is a disgrace. And until the president ordered us to stop it, no one was doing anything about it. So we've made a lot of progress, Mr. President, in just under a year. But we're going to keep on working at it because we believe the American people deserve to have their money spent as you and the Congress have the right to do.
There's big numbers you're finding, tremendous numbers. They look like Elliot Ness. Does anybody know? They look like that group of people you have lined up behind you. They're doing a great job.
Yes, sir.
Billions, think of not millions, billions of dollars is being recovered, billions. And you haven't seen anything yet. We have things happening that people aren't going to believe. The level of corruption and fraud that took place under the Biden administration is unprecedented. And Minnesota, California, Maine, believe it or not, you think of Maine as just wonderful place.
Yep.
It's the level of corruption is incredible, all over. So, great job. Thank you very much.
Thanks, sir.
Okay, please.
Oh, my turn. Well, first of all, thank you for bringing us out here. I got the chance to drive for the first time in a year and a half, which is the golf cart. It was fun. It was great. And so just a couple points that we all know, we've followed in the news, obviously, the events in the Middle East and others who can talk about that, not that they're not important, but there's some other issues happening around the world, Mr. President, that you've shown great leadership in that have not gotten nearly as much attention. I think they deserve to mention today. The first is the International Criminal Court is an illegitimate international organization that, frankly, illegitimate. They've made themselves illegitimate because they claim that even if you're not a member of that court, they can come after you. And what that literally means in the future is that American servicemen, political leaders, and others could find themselves under indictment by this International Criminal Court. And if you want to know a little bit about it, Jack Smith used to work there. These are the people that think they can go out and basically indict any world leader and haul them into The Hague. So we tried to get them to reform and listen to us. They wouldn't do it. They're very arrogant. We've now begun an effort to really try to bring that court to heel.
By the way, there's no information that they're after me. It could happen. But just so you know, she's talking about it, I'm saying that means that maybe he's not trying to defend me. He is trying to defend Bibi and various other people. But there are many people that shouldn't be looked at that way. But there is no indication that I'm one of them at this moment.
Well, and I actually think the people who are in biggest danger in our system are servicemen, people in uniform. That they'll try to go out for the rest of their lives, will not be able to travel anywhere in the world with their families because they can be arrested on one of these items. Imagine, you're a soldier, you fought in a war, and 20 years later they try to come grab you. So this is a big problem. So we've had dozens of countries already join us in this effort. Since we started 2 weeks ago, 5 countries have already quit the ICC and notified them that they're leaving, and we think there'll be more. The second thing is we had an unprecedented ministerial. 60 countries came to Washington, and we're a part of an effort where we were shedding light on far-left terrorism and violence. You know, the bomb goes off somewhere and it's tied to some right-wing group, or what I don't consider neo-Nazis right-wing, I consider them Nazis, right? But you're going to get a lot of attention on that. But if it's a leftist group, an Antifa group, that gets no coverage, or they ignore the ideological spin and the ideological reason behind it. So we've got 60 countries came up here and hopefully creating a strong coalition to go after far-left violent terrorism. Go after it and call it by name. I think we're building a very strong coalition there. We've had some successes in the Middle East, Mr. President. As you know, in the diplomatic front, the deal with Lebanon and Israel is unprecedented. President Ayoun was here a week ago. I think that was the first visit by a Lebanese president in over 30-some odd years. In fact, this is the first time the Israelis and the Lebanese government have spoken at the official level in close to 30 years. And that was thanks to your leadership. A lot of work to be done to keep that peace and build on it, but it's a real achievable. And of course, as you announced last night, Mr. President, this disarmament deal that you brought about with Steve and Jared's work on Hamas is another big step as well. It's something a lot of people thought would never happen. It needs to happen, but the fact that even agreed to it is a real achievable. Last point is on the Western Hemisphere. For the first time in 15, 20 years, the overwhelming majority of the countries in the Western Hemisphere are now led by pro-American leaders and pro-American governments. It's an extraordinary achievement, all of it happening through virtually every election that's happened in the Western Hemisphere since you were elected president has elected someone who is pro-American. And I think this is an incredible situation. And last but not least, and I have to thank a number of agencies here, particularly the Department of War, after that terrible earthquake in Venezuela, within 36 hours, the full force of the American government was on the ground providing humanitarian assistance. It was a sight to behold. The USS Ford, I think, was in their port. Our Marines and armed service personnel were helping run their airport and their tower. It is one of the fastest, most dramatic, and most effective humanitarian responses, certainly in recent history, if not ever. And they came at the direction of the president. In fact, within an hour of that earthquake hitting, I remember because I was overseas, the president called and said, make sure we go in there and help these people recover from this. And we did. And thanks to your leadership, Mr. President. It's a great story. Enough needs to be told about it because the credit goes to so many agencies represented here today, but really the Department of War's effort was phenomenal. So thank you.
Yes, sir. Thank you very much, Marco. And just before we continue, I want to just congratulate Jay Clayton. He's with us today, as you know. He just had a big victory. He's going to do a fantastic job. He's only done his whole life has been about doing a fantastic job. So congratulations.
President, for the invitation, the opportunity to be here. It's an honor for the War Department to help run this facility also, from the food to the fence line. It's an honor to have you, and it's great Americans here and all around the country and all around the world who are the core of what keep us safe. But in order to do that, you have to have a leader that's willing to put them in a position to do it. And that's my takeaway, Mr. President, is sort of 3 points. One, it takes courage. 2, it takes restoring a spirit, which you have done. And 3rd, it takes investment, and not just an investment, but a generational investment. And I think people miss that. The courage it takes to seal the border, to say we're going to do it, and we're going to do it every single day, and we're going to do it on behalf of the American people. The courage to bomb the Houthis and say we will maintain freedom of navigation. I wonder why they're not involved in this conflict, the Houthis, even though they're a proxy of Iran, because they felt the weight of American power for 45 days, and you had the courage to do that. The courage to do Midnight Hammer and conclude the 12-day war by obliterating their nuclear sites, something other presidents had the option on their table to do, but they never pulled the trigger because of the complications, because of the challenges, because of the risk. Courage. The courage to take on the cartels and drug boats, and now forming the ACCC, the America's Counter Cartel Coalition, with all those friendly governments that Marco talked about, who want to be shoulder to shoulder, not just with America, but with a bold, strong America with clear leadership. The courage to go get Maduro in the most dangerous, most heavily guarded house, inside the most heavily guarded fort, inside the most heavily guarded town in their capital city in the middle of the night, and change the entire dynamic of that country and that region. And the world saw what the American military was capable to do, but that doesn't happen unless the commander-in-chief says you're authorized to do it, and will take the handcuffs off when you do it to ensure that Americans come home. The courage to undertake epic fury and this Iranian regime and ensure they never have a nuclear weapon, which remains your commitment. And frankly, the courage to negotiate with people that have shown no willingness to do so honestly, with incredible negotiators who are the best in the world, and give them every opportunity to do it, give those things up peacefully. All of that takes guts. But that comes on the backs of a change in the spirit of our department. You talk about spirit all the time, and you're right to do so. When you rip out DEI, when you rip out social engineering and social justice, and you put in merit, and then you untie the hands of commanders to be commanders, to enforce discipline and accountability, to get back to basics, then you get historic re-enlistment inside our ranks. Our best people, Mr. President, are staying because they want to be in that kind of department. And then historic recruitment record amongst young Americans. Every month, our department breaks records. And when did that trend line start? On Election Day, 2024, when the American people said, I want to serve under this president. And that new name, the Department of War, has become the ethos, the warrior ethos of our department. Again, spirit. And I will know the flyovers will indeed continue until morale improves. But that's also spirit. Parades, 250, flyovers, the American people seeing and feeling their military in ways they have not in the past. That's spirit. And then finally, Mr. President, a generational investment. You rebuilt the military in your first term, and you've spent in your first year $1 trillion, and now we are committed in working with Congress to get $1.5 trillion. But this is not the same way we funded our department in the past. This is a businessman in charge. This is a deputy secretary of our department who's a turnaround guy, just like the president is, saying we will not fund money, we will not fund the department the way we have in the past. In fact, so far, $75 billion in private investment from defense companies who are now investing in new plants, new equipment, new assembly lines to build the munitions of the future faster than ever possible. That's saving taxpayer dollars because the companies themselves are investing. That would never, the arsenal of freedom would never happen without you. So just like we use a lot of the things Ronald Reagan's buildup was a part of, in this administration and in future administrations, they will look back at Donald Trump and the buildup that he has done, and that will be, the deterrence of the future will be established because of your investment. So thank you, Mr. President, for your answer.
Thank you. Scott, please.
Mr. President, it's an honor to be here in this historic place as we celebrate our nation's 250th anniversary. And I think if we look back, whether our founders, President Washington, Thomas Jefferson, Alexander Hamilton, could not have imagined the economy that we would have created. It is the envy of the world. And as you said, we have record investment coming in. We've never seen anything like it. And we're pulling away from the rest of the world. because of your leadership, the policies that you did from day one in terms of digital assets, in terms of technology, and bringing back American manufacturing. You've done it again. You had the incredible economy during your first term, and we are seeing that carry over here. And it is in stark contrast to the Biden economy, which was government jobs, government spending, and high inflation, the worst inflation in 50 years. And with the working families tax cut, which I will add, every Democrat voted against. Every Democrat voted against. It is the perfect barbell for this economy. On one side, you have full expensing for factories, for equipment, for farm structures. On the other side, your four signature policies, promises made, promises kept, no tax on tips, no tax on overtime, no tax on Social Security, deductibility of auto loans if you buy an American-made car. And the Americans are starting to feel it. Core inflation is low, consumer confidence is strong. We have the highest consumer confidence, came up today, in 5 months, and Main Street is back. Small banks are lending, thanks to your policies. Small banks, community banks are lending again, and the Americans are starting to feel it. As you said, these Trump accounts are the most successful program launch in government history. We've had 7 million families sign up with them. We're going to get to open enrollment, and we will have 70 million families who have signed up for this. 38% of American families, households, have no exposure to our great equity market. And thanks to you, we're going to have an ownership society. An ownership society. You were one of the first presidents to create assets for the American people, not more debt. We had the biggest tax refund season ever. Trade deals, tax cuts, energy dominance, and the regulatory efforts. America is ushering in the greatest reshoring wave in our history. In June, our manufacturing sector expanded for the 6th straight month. We've got construction jobs, and those are going to lead into manufacturing jobs. We've got Main Street prosperity. Real wages are up $1,000. And sir, what you've done again too is the bottom 25% of wage earners, just like in your first term, are outperforming the top 25%. This is a working families administration. In the past year, that group had real wage or had wage increases of 5.5%. They have 3 times what the top end has done. So you've done it again. And these are private sector jobs we are creating. As you often say in these meetings, we could have created 1 million, 2 million government jobs, but we didn't. The private sector is creating. We've got incentives, we've got money coming in, and we are rebuilding. So, and then our energy dominance, thanks to you and these policies, you can come to the U.S., you're going to have regulatory certainty, tax certainty, and energy certainty. So it is the best place in the world to build your factory. And finally, I want to add, it has been a pleasure to be a part, or a privilege to be a part of, as we've gone from ethnic purity to economic purity, to constrict on your orders, constrict the Iranian regimes, the financial tentacles all around the world. We started it on your orders. We started it in March 2025. In December of 2025, the largest bank in Iran collapsed. The central bank had to print money. That caused inflation. Now they got 180% inflation. They aren't able to pay their troops. And on your orders, we are searching for their assets all around the world, and that money will go to the Iranian people, Americans who have been harmed by the Iranians, whether the USS Cole or the barracks in Lebanon, or it will go back to when the Iranians attacked the ships coming out. So it's been a privilege to be part of that, and I look forward to it.
Thank you very much. And I want to just add that today there are more people working in the United States than at any time in the history of our country. We have more people working today, and we'll think of that number. I mean, more people working today by far than at any time in the history of our country. So it's been something very, very special. Bobby, please.
Thank you, Mr. President. Let me just take a moment to take note of the historical significance
What's that
of
now?
this occasion. Before the press came in, you asked all the cabinet members who had been to Camp David before, and I think about 3/4 of them had. I raised my hand, but I haven't been here for 62 years.
All right.
I came here.
So live coverage of the cabinet meeting at Camp David. RFK Jr., the health secretary, jumping in there. And thank you, Kaylee. Yeah, we're live on Bloomberg Radio, streaming live on YouTube. Not very often we see that site at the iconic Laurel Lodge at Camp David. Now, we might go back there because if the president starts to take questions, you know, we want to keep an ear on the conversation here with a very rare cabinet meeting at Camp David, and an even more rare situation to have cameras in the room. Are we going to Tyler, or what are we doing here? Charlie Pellet, okay. Well, now we know Tyler is there. We're going to talk to her in a moment. Charlie Pellet's watching Wall Street for us, and I got to tell you, Charlie, I thought this was bounce back day, but our gains are being challenged. What's up?
Indeed. We are seeing stocks waver, Joe Matthew, but right now the Dow, the S&P, NASDAQ, all higher emphasis on right now. It has been kind of a day. Check back with us in a few minutes. We'll see what's going on. The big stories, though, earnings out of Apple and Amazon. We got Amazon leading the NASDAQ 100 index higher. Amazon right now up 14.4%. We've got Apple lagging the NASDAQ 100 index. Apple after earnings down 9.6%. The NASDAQ 100 index higher, a little change right now, up by about 0.1%. The NASDAQ composite index up 0.2%. S&P up 12. That is a gain of just about 0.3%. Dow Industrials up 156 for a gain of 0.4%. We are seeing an advance for the Philadelphia Stock Exchange Semiconductor Index, up now by 0.5%. Your 2-year 4.29%. The 10-year 4.73%, and the 30-year now at 5.26%. Gold down 1.5%, 4,042 the ounce. Crude, big story there. WTI 84.50 a barrel, up now by just about 1.1%. Oil majors, we are seeing gains, losses for ExxonMobil after earnings, down 2.1%. Chevron after earnings up 1.3%. ConocoPhillips reports next week, and it is down by 0.1%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, many thanks. We'll get back to Charlie Pellet in 10, 15 minutes here, watching Wall Street on the Friday edition of Balance of Power. It's good to see you. Thank you for joining us. We're live in Washington, although the president is up at Camp David. Tyler Kendall is live on the North Lawn of the White House. Now, the news, if there is going to be any from this cabinet meeting, may have yet to emerge. If he does go to questions, we've got a lot of questions about a lot of things, from the war with Iran, of course, to everything that's been happening on Capitol Hill, this potential deal with Hamas that is being reported on, affordability, the economy. Tyler Kendall is our Washington correspondent. Tyler, not much news coming out of this yet. What was the point of bringing the whole cabinet to the top of the mountain?
Joe, that's a good question, because, of course, this is a particularly rare event that press is being able to be inside of this cabinet meeting at Camp David. President Trump made his way over there alongside Secretary of State Marco Rubio and Secretary of Defense Pete Hegseth, putting perhaps this heightened focus on the conflict with Iran, out with some rhetoric earlier today characterizing the U.S. as winning the conflict. So perhaps this is going to serve as some sort of status check, at least behind closed doors, as the war in the Middle East continues to dominate the conversation. To your point, not much news quite yet. President Trump did reiterate that he feels that Iran is being dishonest when it comes to the deal, going on to add that he thinks Iran soon won't have any military capacity left. But pair that with comments he then made about how he is urging defense contractors to ramp up their production when it comes to replenishing U.S. stockpiles, giving us a little bit more insight into how the administration is thinking about the timeline for this conflict. Because, Joe, as you well know, we're continuing to see escalation, including new this morning with Iranian state media reporting that the IRGC rerouted at least 6 vessels that were not using the Iranian-approved route, but the U.S.-coordinated route, now saying that they are advising any commercial shippers or insurers to not listen to CENTCOM's demands.
Well, I'll tell you what, I thought, to be honest, Tyler, that the president would come out of the chute today with news on Gaza and Hamas, with reports that there is a framework here, he's the one reporting it on Truth Social, for demilitarizing the Gaza Strip. Is this real?
Well, if the agreement does hold, it would be a very significant breakthrough when it comes to that 20-point peace plan to resolve the conflict in Gaza after really what's been months of stalled progress. But to your point, there are questions here on exactly how this would be implemented. According to the U.S., absolutely pivotal here, of course, is that Hamas needs to disarm. An Israeli official tells Bloomberg News that Israel is also looking for this deal to include a total demilitarization of the Gaza Strip. Then Israel would start to withdraw its forces. But Joe, we're already starting to hear some conflicting views on the sequencing of this agreement. Hamas did come out and they confirmed that they did agree to a deal, but they are saying that how I just laid it out, that's not what they agreed to. They're saying that Israel needs to withdraw its forces first before it takes any steps. So a lot of big questions here. The U.S. says that they still need to refine the details, according to an official.
Well, Tyler, I want you to come with us back to Maryland because the president just went to questions at Camp David. We'll compare notes with Tyler, see how long this goes. President Trump now live again at Camp David.
What comes first?
Did Mr. Infantino speak to you about their proposal to sell a stake in the World Cup, and is that something you support? Having just
about who?
Did FIFA or Mr. Infantino speak to you about their proposal to sell a stake in the World Cup?
No, I never spoke to him.
Mr. President, you said this morning on Truth Social that victims of government abuse should be paid back.
Yeah.
Even if it's not the anti-weaponization fund, would you still want the acting attorney general to find a new way to do that?
Weaponization against large numbers of people in our country by the Biden administration and by Obama, but by the Biden administration in particular in this case. But large numbers of people, their lives have been ruined. They've been destroyed. Families have been, decimated. They've gone to prison for no reason whatsoever. There's never been a group of people, most likely, I can think of a couple that were treated pretty badly, groups, but there's essentially never been a group of people treated so badly as these people. And this fund was not for me. This fund was for those people that have been weaponized, that have been abused. Now, I was abused. They attacked my house, Mar-a-Lago, where I live. And I was, big damages should have been given to me. I don't want anything. I'm not talking about myself. I think that there's a group of people in this country, history will show, that were treated like nobody else has ever been treated. So badly, so horribly. Their families have been ruined. Many, many suicides. They've committed suicide. People that were very successful that wanted to go to a rally or an event and ended up spending the rest of their lives in horror. So, you can say what you want about the fund, and they've agreed to not have a fund. But there are a lot of people that are very upset about it. A lot of Republican people, a lot of Democrat people are very upset about it. A lot of people were covered. I wasn't covered by that fund. I don't want to be covered by the fund. I probably was abused more than anybody in the history of our country. But I wasn't looking for that. But there were a lot of people. And I'll tell you something. Todd Blanche is a very, very good man. And he shouldn't be in the middle of this. He should get approved because you will never get anybody like him. You're never going to get anybody. And to make him a pawn in this whole thing, this is being done by a senator. And I don't really blame him, to be honest with you. I endorse his opponent. And as soon as I endorsed his opponent went through the roof and he won the primary election in Texas for the Senate. And the man that lost, the man that I didn't endorse, has become very angry, and that's okay. I understand that. I probably would do the same thing. You want to know the truth? I think I do the same thing.
Mr. President, on that though, do you agree, just to be clear, do you agree with the acting attorney general that the anti-weaponization fund is dead? And why not just put that in writing?
It is dead, but I wish it weren't, to be honest with you. I think people were horribly treated, horribly abused. This has nothing to do with Todd. This was me. Horribly abused, and I'd like to see them compensated for the pain. They lost their families. They committed suicide. Many people committed suicide. They went down for an innocent journey. And I'm not only talking there, I'm talking about not even having to do with that. The way they were treated. The Biden administration and the Obama administration weaponized government and destroyed lives.
But should they put it in writing?
Are you willing to accept limits on the scope of the audit immunity deal in order to get Attorney General Blanche confirmed?
Well, no, he should be approved forthwith. You're never going to get a person like that. Everybody agrees to it. Don't forget, Senator Cornyn thought he was phenomenal until he lost. You know, when he lost, is that a correct statement? You come from Texas. I mean, he thought this was the most incredible person. And then when he lost because of me. I endorsed somebody else. And as soon as I endorsed the other person became a rocket ship upward. And he lost. And, you know, I think I'd be the same.
But would you
I mean, I shouldn't say that, but I'd be upset also. And so I fully understand it. He shouldn't be that way. I shouldn't be that way. But he is that way. He's become a very angry person. And I understand you have a couple of others that have caused their defeat too. And, you know, you'll probably hear from them too. Yeah.
Mr. President, back on, there's a report that you got a proposal from the military to go big and hit them hard over 10 or 14 days.
Well, we're going big.
Are you going to consider?
We've already gone big. Look, I mean, what's big? They had 159 ships. That was their entire Navy, 159. Their entire Navy is laying at the bottom of the sea. I'd say that's going big. They had 200 airplanes. They're all gone, every one of them. They're not one airplane. They had anti-aircraft weaponry, very good, but it didn't work. And it's all gone. Their radar is all gone. Their leaders are all gone. Everything's all gone. But they'll fight onward.
Mr. President, on Ukraine, you said the other day that you're not sure about whether to grant Ukraine the Patriot missile license that have been discussed. Do you want to see more from Zelensky before you take that action?
Well, it's a big step. Look, we have the greatest weapons in the world. We have the greatest drones in the world. People don't know that. We have the greatest weaponry in the world. We have, in the case of President Zelensky, he'd like to have some Patriots. He'd like to have some Tomahawks, which are, you know, lethal, one offensive, one defensive. But give somebody the... I mean, the Patriot, as an example, the other day you read that 5 missiles were shot. They were going 8,600 miles an hour. Think of it, 8,600. Now a car, if you go 60, it gets to be a little faster. If you go 100, 8,600 miles an hour. And they were big missiles. And they were shot at Jordan. And our guys were there. Bing, 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 bing. 5. Bing, 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 bing. But I don't want to be my I had to be very careful. That would have been a great sound bite. There were 5 missiles, and we shot all 5 down before they got close. Nobody else has that capacity. These weapons are incredible. We have to be very careful about letting somebody build them. You know, it's very important now. We are building many plants now to make those, and the Tomahawk missile is the most incredible thing. You can go into a doorway, you can put it through a window of a house. Nobody's ever seen anything like it. You have to be very judicious, but you have to be very careful. Now, we have not agreed to that. We're talking about it, but it's a hard thing to give away that kind of technology. And I don't think this would ever happen, but you know, those people that you give that technology, they can someday turn on you. You know, that is possible. You look at war, it's happened a couple of times over the years, right? So we have to be very careful. I mean, we guard that. We have the greatest military in the world, but we have the greatest weapons in the world. Now we have to make them a little bit faster because we've given a lot away. You know, President Biden, unfortunately, gave a lot away to Ukraine, and he gave, and so did I. I mean, I gave them the javelins, the tank busters. Without the javelins, that war would have been a one-day war, would have been over. They wiped out the tanks going up to Kiev when they got stuck in the mud. They had a general that decided to go through the mud instead of going up the highway where they were going very nicely. It would have been over, but no, I gave them the javelins. The javelins are unbelievably. We have the greatest weapons in the world. We have to be very careful about giving out the secrets to those weapons. And they're not, you can't copy them. It's a little like NVIDIA. They have a chip. They say you cannot copy it. The complexity is so great you cannot. You know, most things you copy. China's known for it, other countries, we do something, and I guess we copy also. But most things you can copy pretty easily. There's a chip that they made, their ultimate chip, and they always have the ultimate chip. And I say, well, why doesn't somebody copy it? Because they can't, the complexity. They can't copy our weapons. We have the greatest weapons in the world, many of them. Those are just 2 or 3 that I mentioned, but you cannot copy them, so we have to be very careful.
Sir, as Hamas disarms as part of this plan, who do you see as taking possession of those weapons that they have? Does that go to the new government?
It's going to be the Board of Peace, mostly. It's going to be run by the Board. This Board of Peace has been it's led by some amazing people. Board of Peace.
Mr. President, you said they do have some capabilities left.
Yeah.
Should Americans be prepared for these back and forth attacks to continue until Iran simply isn't able of striking back?
They'll get weaker. They'll get a little stronger maybe now, but they'll get weaker, and then they peter out. Yeah, sure. I think so. I mean, it'd be foolish to say no. You always have to keep your guard up.
What is the status of talks? Who from the administration?
Well, they always want to talk, but they break their word so often. Steve is talking, Jared. We have very good people. JD's involved, very strongly involved. We have great people talking. Marco's involved.
Because they say talks aren't happening.
Very good people. We have the best people. But they'll make a deal. As an example, we'll talk about nuclear. And we'll be in there talking about nuclear for 7 hours. I say, why do you need 7? You can take 10 minutes. You have 5 minutes. You should solve it. But 7 hours. And then they'll go out, and I'll say, they discuss nuclear. And they'll go out and they'll say, we never discussed nuclear. And I'll say, why do they say that? All they do is make me angry. You know, they just make me angry. Any other questions?
Do you believe that you can reach a deal with Iran, given that you talked about how
Yes, you can.
supportive
I
they
mean,
are?
look, I'm losing faith in them because they do lie and they do misrepresent. Well, the other day, the 5 missiles we shot, we knocked them down, but we were in the midst of a negotiation. I mean, I'm waiting for Steve to call me. How's the negotiation going? And instead, I got a call from Pete that they just shot 5 missiles at one of our bases in Jordan. You know, we have bases in Jordan. Fortunately, our people operated the equipment. It's also very complex to operate. You know, you talk about the equipment. It's you have to be, oftentimes you see, when did you go to school? MIT, Caltech. I mean, you know, they go to schools that are not as normal for the military, to be honest with you. We have unbelievably brilliant people operating that equipment. And when you don't, you know, the equipment, the shots miss, the safety misses, or the accuracy misses. We have unbelievable people. Think of it, we had 111 at one point, a couple of months ago. 111 over a short period of time, missiles were shot at the Abraham Lincoln aircraft carrier. Great, beautiful ship. One of the most beautiful ships to me, design-wise. 111 missiles going out. Out of the 111 missiles, 111 missiles were shot down quite a bit earlier than they got. I mean, long before they got there. They were shot down. It was almost, in a couple of cases, they were shot down almost as they were taking off. It's incredible technology. So you have a ship that costs billions of dollars, and you have missiles heading to it. 111 missiles were shot down, routinely shot down. And I spoke to the people. I like to reward people. I call them up. I'm the president. And they were cool as a cucumber.
Mr. President, the last 2 weeks of strikes by CENTCOM has said that those were meant to degrade Iran's ability to disrupt the Strait of Hormuz. How many more strikes will it take to significantly?
Well, you never know. Look, I mean, most people would have given up by now. You know, they've got no Navy, they got no Air Force. Most people would have given up. They haven't. So I give them credit for that. I mean, they're known as being tough. They're tough.
Back on Ukraine, what did you tell President Zelensky about the Patriots? Did you explain all that to him?
I did. I spoke about Patriots. I spoke to him about Tomahawks. I spoke to him about everything. I also spoke to him about, let's get this war over with. So last month they had 25,000 people. It's averaging about 25,000 people a month die. Mostly soldiers. Almost entirely. But, you know, missiles are hitting areas also. But mostly soldiers. They had 25,000 soldiers. The month before that it was 32,000 soldiers. I said, you got to get this war over with. I think he wants to make a deal, and I think Putin wants to make a deal. But there's a lot of dislike, as you probably noticed.
He seems very reluctant to make concessions, President Putin.
Well, nobody wants to make concessions, but they're both going to have to make some concessions. I mean, you got to make a deal. 25,000 young, beautiful people, soldiers, mostly soldiers, are dying a month. It's, I ended 8 wars. That was the war I thought would maybe go first. And it really hasn't. It's gone less. I mean, I ended wars that were, in theory, much more difficult to end. We had a couple that were into the 30-year category. Well, the Congo, look at the Congo in Rwanda. That was our nasty war. And they have peace. I don't know how long that one's going to stay. But we ended India, Pakistan. 11 planes were shot down. That was raging. That was done. I used tariff. I said, if you're going to go to war, 250% tariff to each of them. And they screamed and yelled and were very angry. They were both angry about it. And a day later they called and they said, we will not go to war. But I ended up, and the Prime Minister of Pakistan said I saved 50 million lives. Because that's 2 nuclear powers, serious nuclear powers. Thank you very much, everybody. Thank you. No, I think Minnesota is behind it. You know who's behind it? Minnesota, because they're grossly incompetent. I think the governor's behind it. I don't think there was an Iranian cyber attack. I think that Minnesota ought to get its act together. It's one of the worst run states. JD will tell you. He found tremendous corruption in Minnesota. And by the way, just gave me a report. Massive future things having to do with corruption in Minnesota are happening right now. Thank you.
Have you talked to Senator Fetterman about the Thank you, guys.
All right, there you have the end of that conversation. A rare cabinet meeting live, televised, and broadcast live on the radio from Maryland. President Trump there taking questions, actually started making some news. That's why we brought you back to the gathering at the top of the mountain, specific to Ukraine. Not sure that this was something he even planned to bring up. Of course, he was asked about it by a reporter, suggesting that there is no agreement for Ukraine to make its own Patriot missiles. He said it's hard to agree to give away that technology. There's a risk of giving it away and them turning on you. We have the greatest weapons in the world. We have to be very careful about giving out the secrets to those weapons. He compared, having referred to the Patriots and Tomahawks that Zelensky would like to have, compared them to chips made by NVIDIA. Fascinating moment. He was asked immediately after that, did you tell Zelensky about the Patriots? He said, I spoke with him about Patriots, Tomahawks. I also spoke with him about ending the war. I think he wants to make a deal, going on to say they both have to make concessions, referring to Russia and Ukraine. We're going to unpack more of what we just heard when we connect with Tyler Kendall at the White House. First, we want to update Wall Street, where we do see indexes holding positive here. And Charlie Pellet has details as we look under the hood, live from World Headquarters in New York. Charlie, take it away.
Right now, we are looking at gains for the U.S. stock market. Joe Matthew, we heard the president talking about Patriot missiles. They are made by Lockheed Martin. Lockheed shares, they're up today by 0.9%. Again, the Dow, the S&P, NASDAQ, all advancing. S&P right now up 27 points. That is a gain of 0.4%. Dow Industrials also up 0.4%. NASDAQ up by 0.5%. And the NASDAQ 100 index up 0.4%. That index being led higher right now after earnings from Amazon. Amazon shares surging by 15%. At the other end of the NASDAQ 100 index, the top laggard, Apple, after earnings. Right now we got Apple shares. They are plunging by 9.9%. But bottom line here, stocks are moving higher. They have been wavering. A rally in chip makers is easing somewhat. Further losses in bonds showing the market is struggling to process the message from Fed Chair Kevin Warsh this week. Right now, we have got the SOX, the Philadelphia Stock Exchange Semiconductor Index, up by 1%. The VIX back below 17 now. The 2-year, 4.29%. The 10-year, 4.73%. And the 30-year at 5.26%. Spot gold, $4,047 the ounce, down 1.4%. West Texas Intermediate Crude, 84.54 a barrel, up by 1.1%. Barrel of Brent just below $90 now, higher by 1%. Keeping an eye on crypto-linked companies such as Strategy, it reported a second quarter net loss of $8.2 billion as Bitcoin prices declined during the quarter. Bitcoin now down 2.9%, 62,860 on Bitcoin. Also, Coinbase Global reported last night. It reported a third consecutive quarterly decline in revenue, with second quarter revenue dropping 19% to $1.22 billion. ExxonMobil and Chevron both out with earnings, and right now we do have Chevron shares up 1.6%, ExxonMobil down 1.8%. That, Joe Matthew, is a Bloomberg Business Flash.
Okay, Charlie, thank you, sir. Smack dab in the middle of earnings reporting season. Charlie Pellet has the answers for us on the markets. We'll get back with Charlie in 10 or 15 minutes to see how things are going. It is interesting, the dichotomy that we're seeing here, the contrast in these stories. Big day for big oil. Chevron impresses everybody. Stock is up. Exxon had some trouble. The stock is now down 2%. It's kind of like what we're seeing in tech. Apple's fallen off. And, of course, Amazon is in rally mode here. The way it's playing for the index is interesting as they hold positive. Micron, what happened there? Amazon reassures everybody it's going to keep spending money. It's making money from AI. Apple can barely pay for the chips because of the shortage, and Micron is still somehow down 4%. NVIDIA's kicking up, though. Maybe thanks in part to the moonshot. I want to get back to the cabinet meeting. We just brought it to you live here on Bloomberg Radio. The President of the United States with his top lieutenants at Camp David in the iconic Laurel Lodge. We're told the President doesn't love going to Camp David. And to be honest, I still can't figure out why they just went all the way up there for that. It was a cabinet meeting, not unlike one that would take place at the White House. Maybe they're having races with the golf carts or something up there. But it's pretty unusual. We don't tend to see a live television camera anywhere at Camp David. And the president made a bit of news, whether he planned to or not, when it comes to Ukraine and our support for Ukraine. This idea of giving them license to make their own Patriot missiles may not be fully baked. Tyler Kendall's on the North Lawn right now to tell us a little bit more about this. And I know, Tyler, you're trying to read between the lines just like we are here. But the president did make clear that this is not an actual deal. He says, we've not agreed to that. It's hard to agree to give away that technology. There's a risk of giving it away and them turning on you. Should we assume that President Zelensky understands this?
There's a few points of context that we should provide here, Joe, including that on July 8th, during the NATO summit, President Trump had pledged that the U.S. was going to grant those licenses to allow Ukraine to build these Patriots. It's important because Ukraine really wants the already built Patriots, but they had at least wanted to start building them on their own. In fact, the Ukrainian President Zelensky was here at the White House on Tuesday, and while he was in Washington, we have reporting that he had met with officials from Lockheed Martin to talk about what potential production would ultimately look like. And at the time, we heard from the U.S. ambassador to Ukraine saying that they thought that they could get this production up and running in 10 to 12 months. This is important because Ukraine had come to the U.S. this week asking for 300 Patriot missiles to be given over to them amid what has been some gaps in their air defense systems as the conflict with Russia continues on. So very interesting and newsy comments from President Trump here since the two leaders had just met, though perhaps it's not so surprising. Joe, we have some reporting from Bloomberg News that broke overnight that the U.S. ambassador to Ukraine did say that they did not get that hard commitment because of U.S. shortages, knowing that earlier in his remarks, President Trump did talk about those stockpiles and the need for U.S.-based defense companies to start replenishing them here at home before he can think about sending them abroad.
Great reporting, Tyler. Thank you so much. Keeping us abreast here of an ever-developing situation with Ukraine. We thought we might get more news on Gaza and Iran, but it brings us back to Ukraine and Russia. We'll assemble our political panel coming up next. Jeannie Shanzano and Leslie Shedd are with us. As ExxonMobil and Chevron both put up boffo earnings, Wall Street may not love everything they're seeing from Exxon, but you better believe that Democrats on Capitol Hill are paying attention. Get ready for the next debate over a windfall profits tax. We'll play it to the panel next, only here on Bloomberg.
It's 1240 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing right now. Yes, we are on track for a winning week as we wrap up the trading month. For the week, S&P 500 index on track right now for a gain on the week of 0.8%. Green across the board today with the Dow, the S&P, NASDAQ 100 index all advancing. Let's begin with the NASDAQ 100 index. Leading that index higher, Amazon after earnings up 15%. The laggard in the index, Apple, it is down by almost 10%. Keeping it all in context, the S&P up 32, now it's 74.70, up by 0.4%. NASDAQ higher by 0.6%, while the NASDAQ 100 index advancing now by just about 0.5%. The Dow also is up by 0.5%, up by another 250 points. The Bloomberg Mag 7 index is gaining 2.2%. The SOX, the Philadelphia Stock Exchange Semiconductor Index up by 1%. By the way, AMD will be among the chip names reporting next week. We've got the 2-year currently yielding 4.29%, the 10-year 4.73%, and the 30-year 5.26%. Again, that 10-year bears repeating, 4.73%. Gold down $58 the ounce to $4,044, down 1.4%. West Texas Intermediate crude up 1.3%, $84.64 a barrel. Brent just below $90 now, higher by 1%. Amy Wu Silverman is head of derivatives strategy at RBC Capital Markets, and she told us when it comes to the markets, you cannot ignore the political landscape.
I'm looking at midterms. I know that sounds really early, but I actually think the sentiment is focused on that, especially if there is any anti-AI sentiment building and how that impacts the overall market.
Amy Wu Silverman saying look out for data centers and AI, head of derivative strategy at RBC Capital Markets, a guest on Bloomberg Daybreak. ExxonMobil, right now after earnings, we do have shares of ExxonMobil tumbling by 1.8%. ConocoPhillips will report next week. It is up by 0.1%. Chevron higher now, also reporting earnings up by 1.8%. Miami Mike, our Mike McGlone, will have a whole lot more coming up on energy for you, specifically crude oil, in just a moment. Recapping, looking at gains for the S&P up by about 0.4%. The SOX up 0.7%. And Amazon bears repeating, it is surging after earnings up by 15%. Lots going on. That, Joe Matthew, is a Bloomberg Business Flash.
My good friend Charlie Pellet, thank you, sir. He'll be back coming up at the top of the hour, 1 p.m. Eastern Time. Charlie Pellet knows how this is done. He's a broadcaster. And my radio brother. He's up there in New York. I'm in Washington. And frequently the stories we talk about collide. And this is a great example today with the story Charlie was just talking about. ExxonMobil, Chevron blowing the doors off, right? The numbers are incredible. Unless, of course, you ask Wall Street. Exxon's trading lower. It's down 2% right now. Chevron's doing great. It's up 2%. And it's all about their earnings results. Now, we're going to try to kind of put this all together into a story. When I talk about how I get to work with the brightest minds every day in Washington and around the world here at Bloomberg, you're going to see what I'm talking about over the next 90 minutes here, starting with, yes, Miami Mike McGlone, who's going to talk to us about the reaction that we're seeing in oil because crude is up today. We're up a little more than 1% for WTI, just south of $85. Brent just south of 90, because we're still shooting at each other. And the Strait of Hormuz might be getting some oil through, but there's so much confusion about where we stand right now. And by the way, we're adding the Red Sea to this with the Houthi rebels. A war that has been seeing escalation is rattling nerves in the energy market. And what this means for the corporations is important here through the eyes of the market and Washington. I'll connect the dots there with our political panel in a moment, because there are a lot of Democratic lawmakers, many of whom you've heard of, Elizabeth Warren, who are talking about a windfall profit tax now because of what's going on here. And not just that, they want to know to what extent these companies are profiting on the war. Mike McGlone covers the sector for us here, our energy and senior commodities strategist at Bloomberg Intelligence. Great to see you, my friend. Welcome back, as always, to Balance of Power. Let's start with the commodity itself. Crude oil has seen much higher prices, but we've been ticking up since the resumption of hostilities in the Middle East here. Do you see us retesting highs? Are you surprised that we're at the levels we're at now?
I guess the answer is no and no, Joe. I don't think we're going to get near that high at 120. We could bounce to 100 and something bad happening in the Gulf. But as you pointed out, there is hostility still in the Gulf. And crude oil at around $84, $85 a barrel is the same price as first traded in 2007. That's what we're looking forward to. We're looking forward to what this is doing. It's accelerating that process of excess supply to the U.S. But you mentioned profits from corporations. One of the main ways they're doing that is the crack spreads. Like gasoline price around $4.11, that's 2008's high, and crude oil is very low. That spread is where they're making a lot of money, and just normal forces will pressure that lower. Obviously, it's distorted by the Gulf at the moment. So I like to lead in and enter that by the time we get the midterms, the bottom line is what does Mr. Trump need? He can help make crude oil go lower. Gasoline might be a little harder, but what also he has in his favor is natural gas still goes down and is going down, and that's the #1 source of heat, electricity, and fertilizer in this country.
I still say Crack Spread, great band name. Somebody's going to start like a punk rock band named Crack Spread, and Mike McGlone's going to be the lead singer. Exxon, I know, I don't want to go too, I'm not going to drag you through the earnings. I'm taken by the excuse today. As lawmakers want to investigate the extent to which oil companies are profiting off the war, Mike, Exxon is trading lower, and because the war, in part, itself. Earnings per share missed the average analyst estimate as disruptions from the Middle East war and downtime challenges impacted results. Just broadly speaking, is this scenario good or bad for big oil?
Oh, it's so repeatable, Joe. It's so expected. It's very silly. We have a free market capitalism in this country. It's part of the reason we're great compared to Venezuela and Russia, is because we're allowed the companies to make profits and produce all this energy. And if they don't make profits, then they're not going to produce energy, and we got a big problem. But it always happens when prices spike. But the key thing to always remember in commodities is you're almost always better off as an investor holding those commodities, like as measured by the XL ETF, versus the underlying commodity, because they create more with less every day. And I'm just a big fan of free market capitalism and let investors make some money. And by the way, a lot of pension funds endowments are doing well because of their allocations to energy.
Okay. You're the greatest, Mike. Thank you. Have a great weekend. Where every day is sunny in Miami at Bloomberg Intelligence. Now, we want to bring our panel in on this because, as I mentioned, Sheldon Whitehouse, Democrat from Rhode Island, Elizabeth Warren, Democrat from Massachusetts, are out with a letter to oil executives demanding details of how they have profited from the war or lobbied the White House in ways that benefit them to actually comport and prosecute this war in a way that benefits big oil companies. I'm not saying that this is happening. This is what they're asking for. Enter Brad Sherman. You've heard from him before on this program, a Democrat from California. He is up with legislation that would impose a windfall tax on U.S. oil companies until the war with Iran is over, the strait is reopened, and crude oil goes back below $75 a barrel. You think that's going to pass this Congress? Our great panel today includes Jeannie Shanzano, Bloomberg Politics contributor. She's back, democracy visiting fellow at Harvard Kennedy School's Ash Center, and happy that Leslie Shedd is back with us, president of Rising Communications, as I mentioned, our Republican strategist, who is also a fellow at the Atlantic Council and has great insights on geopolitics. Great to see you both here. Jeannie, is Brad Sherman for real in this Congress?
He is for real in this political context, and he is right to do this. This is going to be a midterm fought out over the economy, and the economy is struggling, and the #1 way in which people feel that is the price of gas and the price of oil. So when people hear that yesterday the oil companies had earnings through the roof and they are profiting, of course, they are reminded once again that while in this country it is a very good time to be a millionaire or a billionaire, it's not such a good time to be a working American who's struggling to pay for gas. And of course, Joe, this is coming as mortgage rates hit 6.66% yesterday. We are at about 1.5 in growth. I mean, these are really tough numbers. Inflation, jobs, all of these things concerning. And so he is right politically, as is Elizabeth Warren and Sheldon Whitehouse. to say, we need to know why you are profiting at this time when the rest of the United States and the American public, the regular folks, I won't say regular Joes, but the regular folks are suffering.
No such thing, Jeannie. Hey, Leslie, Exxon and Chevron together report a combined $26.5 billion in profits. This is from the quarter. People were paying a lot more for gas than they were a couple of months ago. So is there some populist politics here for Republicans, or do they have to be in line with drill baby drill and the president's energy agenda?
I mean, I don't know what Brad Sherman is smoking if he thinks something like that is going to pass in this Congress, but it's absolutely not. First of all, it's just bad policy to put a tax on companies that are successful. As your previous guest was saying, this is a capitalist country. We want to encourage American businesses to grow and thrive and make as much money as they can. And keeping in mind, too, this isn't some evil corporation that's hoarding all of this money for itself. There are millions of Americans, including some of these middle-class teachers, farmers, nurses that are invested in companies like Exxon and Chevron. And when they do well, that helps them. It helps them make money in their 401k. It helps them make money in the stock market. So this idea of putting some massive tax on energy companies right now, it's just silly.
Well, okay. By the way, Brad Sherman always struck me as a very sober man. I don't know if anyone, I know it's California, but Jeannie, the numbers that we're talking about here are impressive. $26.5 billion. Is this something for the Sheldon Whitehouse and Elizabeth Warren wing of the party, or is this something that moderate Democrats can talk about around the country, knowing that people are probably going to be paying at least $4 a gallon through the midterms, unless something big changes here?
Yeah, I mean, if Democrats and Republicans don't talk about it, people are still feeling it. It's a reminder every day. You get in your car, you fill up, it's incredibly expensive. And everything is expensive. But I just want to go back for a minute to the politics of this thing. This is interesting because you also have a Republican Party that, while Leslie and other people are talking about free markets, that's not where Donald Trump's wing of the party is going. Let's look at what the Department of Commerce did yesterday. They're talking about taking equity stakes in 7 companies under the CHIPS and Science Act. That is a populist move. So while they're critiquing Democrats and the left wing of the party for being socialist, they themselves are acting in the most socialist way possible. That our government is going to take over or take equity stock in companies. And this is where this is a fight between the populists. And I have to say, if the question is, do you want to be a populist in terms of the government taking equity stock in private companies, or do you want to be a populist who's arguing that our healthcare costs should be lowered? I go on the side of the healthcare costs being lowered and the oil prices being lowered and groceries being lowered. And this is the problem that the Republicans have at this point politically. And so, yes, every Democrat, and if they were wise Republicans, would keep talking about the mess the president has created when it comes to costs and what they can do to help average Americans while millionaires and billionaires are benefiting to an enormous amount. And that's not something that people need to be told. They see it and feel it every day.
Yeah. Interesting story on the terminal about what Exxon and Chevron are doing with this money, because, look, these days are not going to last forever. While it might seem like this war could do so, they are putting profits into debt reduction as opposed to buying back shares or investing it into research and development. Due to caution about the duration of war-driven price rallies. Again, we are up a bit today when it comes to the actual commodity. Leslie, I want to tap your geopolitical bona fides here for a moment. When you see crude oil rising back again toward $90 a barrel, where we are, gas today, I haven't checked till right now, $4.10 nationally. It's up a couple pennies from when it fell back earlier this week. Do people need to just brace for this as the new normal? I mean, we're looking at a conflict in the Middle East that's showing no signs of stopping. And the president just indicated in this cabinet meeting that this sort of rolling on again, off again just could be going on for a long time. We have less than a minute. What do you think?
I think I've mentioned this before. I think that eventually we will be able to route around the Strait of Hormuz as much as possible. You're already seeing something like 9 or 10 million barrels a day. So about 50% of the oil that was going through the Strait before is being rerouted on these pipelines. More of these are being rehabilitated. Others are being built. It feels forever, but I do believe there will be an end in sight, even if the conflict continues to last longer.
Could take some time to build those pipelines, but it would be remarkable to render the Strait of Hormuz irrelevant. Might be a way to end this. Jeannie, Leslie, thank you so much. They'll be back in our second hour. Kaylee Lyons will join us, as will our global television audience, only here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
President Trump heads for the top of the mountain. Welcome to the Friday edition as the president gathers his cabinet for a rare televised meeting at Camp David. It just wrapped up and making news on Ukraine, which apparently does not have a formal agreement to make Patriot missiles, as had been suggested. I'm Joe Matthew alongside Kaylee Lyons in Washington. Kaylee, we're going to unpack this with General Wesley Clark ahead, this would be pretty significant for the war effort in Ukraine.
Well, certainly so. The president's suggesting you have to be careful with giving away that kind of technology, who you give it to, even after being at the NATO summit in Turkey, where he himself suggested that he wanted to see these licenses go to Ukraine as they continue their fight against Russia. So interesting message from the president, message switching, that is. He was consistent on one other message, though, at his cabinet meeting at Camp David, which is that Iran will never have a nuclear weapon. A lot of the same rhetoric we've heard repeatedly from the president on that front.
It's true. After the escalation we've seen this week, Haley, we talked about it with former Defense Secretary Mark Esper last evening. Oil prices are kicking a bit higher today, and gas prices are following. We're back at $4.10, and this is a thorn in the side of the administration, or frankly anybody running for re-election at the moment.
Yeah, there's a few thorns in the side of this administration. There's also two thorns specifically in the United States Senate, in Senators John Cornyn and Tom Tillis, who are holding up the process over the confirmation of Trump's AG pick, Todd Blanche. It seems that both sides are doubling down today as the president is going on attack against the senators, defending the so-called anti-weaponization fund that they want to see killed in writing. And no surprise, the likes of Tom Tillis are firing back.
Yeah, there was a funny back and forth there with reporters. The president suggested he'd probably do the same thing if he was John Cornyn, but that's just the way people are.
It's the way it works here in Washington, and boy, don't we know it. And as we go from Washington to Wall Street now, we want to kick things off this hour as we turn to Charlie Pellet with a check on the markets on this Friday. Charlie, how are we looking?
Right now, we're higher across the board. Do want to stick with the thorn theme, though, and that is Apple. Yes, we've got stocks rallying today. We are looking at the NASDAQ 100 index. Amazon leading the way higher there after earnings. Amazon shares, by the way, up by 15.2%, but to the downside big time. Apple certainly weighing on that index, on the NASDAQ 100 index. It is the laggard. We've got Apple shares after earnings plunging by 9.7%. The company reported cloud computing revenue, or Amazon reported cloud computing revenue accelerated for a fifth straight quarter. That news sending Amazon up by 15.1%. We did see Apple shares after earnings tumbling by 9.7%. But bottom line, stocks are higher. Let's begin with the NASDAQ 100 index, up 0.6% right now. NASDAQ Composite up 172. That is a gain of 0.7%. S&P up 38 on the S&P 500 index, up 0.5%. Dow Industrials also higher by 0.5%, up by 248 points. The stocks picking up steam, up by 1.3% right now. The VIX below 17. The 10-year 4.73%. The 2-year 4.28%, and the 30-year right now 5.27%. Spot gold at $4,045 the ounce. Right now, gold is down 1.4%. Crude up 1.5%. WTI 84.84 a barrel, and Brent right at $90 the barrel. Barrel of Brent crude up by 1.1%. So again, recapping here, we got Amazon rallying. We have got Apple selling off. Bottom line, S&P up by 0.5%. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet with an eye on the Friday trade as we close out the week on Wall Street and here in Washington. Charlie, thank you very much. Of course, it has been a very busy week here in D.C., including this week, the funeral of the late Senator Lindsey Graham that happened on Tuesday. Along with it, the leaders of many countries around the world, multiple heads of state were in town for that, and two of them met with President Trump at the White House while they were in town, including the Ukrainian President Volodymyr Zelensky, who, while it didn't happen publicly before the camera, said afterward that one of the things he discussed with the president is Ukraine's need for Patriot missile systems, interceptors, to help them defend against Russian attacks. Of course, while they need Patriots urgently, there was also an ongoing conversation about them being able to build these systems themselves for licenses to go to Ukraine to produce these in country. We thought that agreement had been made. Trump talked about it at the NATO summit in Turkey just weeks ago. And yet today, he suggested at a cabinet meeting at Camp David that that is not, in fact, a done deal.
We have to be very careful about letting somebody build them. You know, it's very important now. We are building many plants now to make those, and the Tomahawk missile is the most incredible thing. You can go into a doorway, you can put it through a window of a house. Nobody's ever seen anything like it. You have to be very judicious, but you have to be very careful. Now, we have not agreed to that. We're talking about it. But it's a hard thing to give away that kind of technology. Give that technology, they can someday turn on you.
Important development here. We want to get right to Tyler Kendall ahead of our conversation with General Wesley Clark. Our Washington correspondent is at the White House right now on the North Lawn. Tyler, did something change here, or did we misunderstand this arrangement to begin with?
That's an interesting point, Joe. At this point, I think that's one of the questions that we have to pose to the administration, because as you're both outlining, President Trump did pledge on July 8th that the U.S. would be granting these general licenses to allow Ukraine to build these Patriot missile launchers on their own. In fact, that was considered to be perhaps the most tangible development that we had gotten out of the G20 summit earlier this month in Turkey. But this comes after Zelensky was here in Washington meeting with President Trump on Tuesday. In fact, we had reporting that he also met directly with officials from Lockheed Martin about what potential future production would look like, with Ukraine coming out and saying it would take probably up to 10 to 12 months to get that up and running. Now, there is a difference here, as Kaylee outlined, between the licenses to build them on their own and actually getting those weapons immediately, as we continue to see these gaps in Ukraine's air defense systems. Though, Joe and Kaylee, perhaps Ukraine knew that this was coming, because we have new reporting overnight from Bloomberg News that Ukraine is looking to turn to other allies and reach into their stockpiles of Patriot missiles ahead of the winter months, when we are expecting there to be an increase in attacks as we start to move out of the summer. And then they would look to replenish those allies back with anything that they are able to procure. We did hear from Poland's officials saying earlier this week, after we saw that Russian projectile land in Polish territory, saying that they would be willing to give Ukraine some Patriot missiles.
Well, it sounds, Tyler, like they're getting all the lawn work done at the White House while President Trump is not, in fact, in the residence or in the Oval. He's obviously been dispatched to Camp David, and they're getting the leaf blowers fired up in his absence. When we think more about what we've heard from him at Camp David, though, what we heard in that cabinet meeting, it wasn't just on the subject of Ukraine, but Iran as well, suggesting
advance. Yet at the same time, he said that we should expect further strikes on Iran to continue, calling them acting in bad faith, saying that they haven't upheld their part of the deal after we really saw the latest lull in the fighting re-escalate earlier this week when Iran issued that surprise attack against U.S. forces. At this point, there has been very little public indication that the sides are getting any closer toward a diplomatic breakthrough, considering Iran isn't letting up its leverage when it comes to the Strait of Hormuz, the biggest point of contention at this moment, as we've seen Iran knew overnight turning around at least 6 vessels that were transiting through the U.S. coordinated route, and not that Iranian route that the IRGC is overseeing, just further heightening the tensions in the region.
All right, Bloomberg's Tyler Kendall on the North Lawn of the White House, a North Lawn that probably is going to have fewer leaves scattered on it. Tyler, thank you very much. And as we continue the conversation on both Iran and Ukraine, we turn now to General Wesley Clark, who is joining us once again on Bloomberg TV and radio. He's, of course, a retired 4-star general in the U.S. Army and served as commander of U.S. Southern Command. General, it's great to have you back on Balance of Power. I'll quote the president from earlier today to you directly. He says, "We'll be hitting them very hard," referring to Iran, "and at some point they'll say, we just can't take it anymore." What makes them reach that point?
You know, most of the experts on the region, and I've been with the region off and on and in various roles for 25 years, most of the people don't believe you're going to get a capitulation from the Iranians. They've taken the punch. The IRGC has survived it. They lost their top leadership. They've still got their missile cities intact. Pickaxe Mountain, which as presidents talked about, is intact. And so you could take out oil refineries. Most of their water is not from desalination. You can tear down some bridges. But if the idea is that you would punish them enough that they would say, oh my gosh, I just can't take one more punch in the nose, most of the people who really understand it say that's not likely to happen, because you're dealing with real zealots. And let me put it this way. Look at what the Ukrainians have taken over the last 4.5 years from the Russians. And you would have said, my goodness, how could they stand it? Well, because for the Iranians, like for the Ukrainians, this is an existential battle. The president announced early on that we were looking at regime change. He's a couple of times suggested he was going to blow them back to the Stone Age. So they take those comments seriously. They see it as existential. I'm not talking about the Iranian people now. I'm talking about the IRGC. They're hanging on for dear life. And so if you knock out a few more bridges and take out a couple of oil refineries and so forth and reduce their money flow, okay. But they think they're winning right now. And they think they're going to continue to hold the Strait of Hormuz, strike our friends and allies in the Gulf, drive us back out of military positions there and back into the arms of Israel, and then by that time have sufficient missile strength to simply launch 1,000 missiles at Israel. Israel expends all its anti-missile ordnance, and that's the end of it. And the longer this goes on, the greater the support they're getting from China and Russia. So I don't think you can punch them in the nose and get them to surrender. But we've got to find a better way, I think.
General, what do you make of the trip to Camp David today? We carried the president's cabinet meeting, a rare Camp David cabinet meeting, and a rare visit there in general for this president, who tends to not go to the top of the mountain very often. But we know that Camp David is typically, or has been, reserved for delicate conversations, for sensitive negotiations, for deliberations away from the public eye. Knowing there was a TV camera there, which was a bit unusual to see today, I wonder if this cabinet meeting took place because the president was there to speak quietly with his top lieutenants. He's got Marco Rubio, Pete Hegseth, and others up there with him about next steps and potentially escalating this war.
Well, I think the administration, I think the president recognizes he's at a crucial decision point here. He's tried 5 weeks of airstrikes. He's tried to pause and ask for negotiations. Negotiations were undertaken. There was an MOU, and it wasn't very well written, and it was violated immediately by the Iranians, who didn't open the Strait of Hormuz. And then there's been tit for tat, and now surprise attacks and response. And I think the administration recognizes this is a fork in the road. If the more you want negotiations with the Iranians, the stronger hand they believe they have, and the worse the outcome of the negotiations will be. So do you continue to be the demandeur of the negotiations? Do you apply force? But if you apply force, what targets do you go after? And so there's some speculation that maybe we do one more round of really heavy airstrikes, a couple of weeks, take out all the remaining targets that we have in a 14,000 target base, refineries, bridges, everything that we think is significant, probably hit a couple of empty warehouses along the way. And then at that point, you're going to have to go in on the ground. At least that's the thinking. And that's one of the strands of thought that's hanging out there. So you're at a real inflection point here. And the question is, which way do we go? And if we move forward without isolating Iran from reinforcement, supplies, technology, targeting, and all the other assistance from Iran, China, and some of it coming through Pakistan, we're in for a long, tough fight.
Well, that's incredible to consider as we consider the fight directly between the U.S. and Iran. There's also the questions of the conflicts that have been going on in parallel with it in many ways, including, of course, with Hezbollah, between Israel and Hezbollah in Lebanon. And then there was the question of Gaza as well. The president announced yesterday, General, that the Board of Peace has reached an agreement for the complete disarmament of Hamas, that the president says, to use his words, will be a monumental step toward lasting peace and security. How much faith would you put in it?
Well, this is, I think it's a triumph of hope over reality. I'd be very surprised if Hamas would agree to that. And certainly if they're getting any help from Iran or through Hezbollah, I'd be doubtful that they'd agree with. It's been a tremendous, tremendous burden on Israel, not only from the military side, but also from the public relations side and international support side, as Israel has struggled to deal with the terrorist organization. So it'll be in the interest of all the outside actors who are opposed to Israel to tell Hamas, don't disarm, drag this thing on, take another month, 2 months, 3 months. So the problem with disarmaments is always how do you actually do it and then verify it. And then that's until you see the fine details, you don't know whether it's going to be real or not.
I want to ask you about the president's comments today about Ukraine, General. We didn't think we'd be talking about this, but he's casting doubt, in fact, openly doubting this deal to provide general licenses for Ukraine to build its own Patriot missiles. He said, we have to be very careful about giving out the secrets to those weapons. There's a risk of giving it away and them turning on you. Did you understand that this was a deal in place? And without those Patriots, what next for Ukraine?
President Zelensky has asked for just a few Patriots. He said he wants 30 before he gets into the winter, or maybe a little bit more than that. And really, we have been withholding these because we have a shortfall. So it's natural that we would allow someone else to manufacture. Okay, if you don't trust Ukraine, give it to Poland, give it to Britain, give it to somebody. Under the Defense Production Act, the president could have that authority. So, and the idea that the Patriots would be turned against us, I'm not sure about that. Actually, it looks like the more effective missile than the Patriot is a French-Italian anti-aircraft missile that's been around for a few years, continuously updated. And while some of the Iranian missiles can slip through the Patriots, we think this French-Italian missile won't let the steerable Iranian missiles or Russian missiles through. So it might be more effective. And Ukraine is going to develop its own anti-aircraft missiles or anti-missile missiles very quickly if we don't allow them to do it. They've already got their own TLAM. They've all long-range cruise missile. They're testing their ballistic missiles that would be able to hit Moscow. So let's get real here. We're moving into a situation where we're going to have at least 2 interlocking and perhaps 3 interlocking global crises, all with military force, in which they're engaged with Iran bridging between the Middle East and Ukraine, Russia supporting Iran as well as attacking Ukraine, China feeding both Russia and Iran to fight the United States. Yeah. So this is not a skirmish. This is a real serious inflection point in U.S. power abroad.
General Wesley Clark, it's great to have you back. Retired 4-star U.S. Army. I'm Joe Matthew alongside Kaylee Lyons. This is Bloomberg.
It's 121 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got the Dow, the S&P, NASDAQ all advancing right now. Chip stocks pushing higher. We've got the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by just about 1.4%. The S&P, putting it all in context, providing a baseline, up by 0.5%. The Dow Industrials also up by 0.5%. NASDAQ up 0.7%, while the NASDAQ 100 index up by 0.6%. Two big names at either end of that index. We have got Amazon after earnings, surging now by 15%, leading the NASDAQ 100 index higher. But at the other end, we've got Apple. Apple shares down now by 9.6%. The Bloomberg Mag 7 index rallying 2.7%. 6 out of 7 names are higher in that index. The lone declining name, of course, is Apple. The SOX up 1.2%, with the VIX now below 17. The 2-year, 4.28%. The 10-year, 4.73%. And the 30-year, 5.27% on the 30-year. Gold, meanwhile, down 1.4%, $4,045 the ounce. West Texas Intermediate crude, $84.84 a barrel, up 1.5%. Barrel of Brent just above $90 a barrel now, up by 1.1%. Among some of the chip names, NVIDIA advancing 2% now. Micron is tumbling by 3.4%. AMD, which reports earnings next week, up by 1%. Intel up by 1.1%. Again, the SOX is pushing higher, up by 1.3%. Again, stocks higher, S&P up by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. I'm Charlie Pellett. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie, thank you very much. Wrapping up another week on Wall Street and here in Washington, where time is short. There's only 1 week left until the Senate leaves for its elongated August recess. That, of course, happens every year, and there's a lot that they're trying to get done before they actually break for recess this time around. It's not clear whether or not that will include confirming Todd Blanche to be the next Attorney General of the United States. He, of course, was Deputy AG. He is now Acting AG. And it's unclear whether or not he's going to remain in that acting capacity for some time. The president has threatened, as of yesterday, to pull his formal nomination and allow him to serve as acting for the time being, or at very least until Senators Cornyn and Tillis are out of office, because they are the ones that are standing in the way here over specifically the so-called anti-weaponization fund and the audit immunity deal that was secured for the president and his businesses as part of it. The president seems to double down on that on True Social today and again in the cabinet meeting at Camp 3. And that doesn't sit well necessarily with one of the senators in question, Senator Tom Tillis, reposting that on X to say the president made it clear today that the so-called anti-weaponization fund is still alive, which is exactly why we are attempting to formally end it. He says those who assaulted police officers on January 6 are not great American patriots who are victims of government abuse, Joe.
So I guess it's going to be an acting attorney general for the foreseeable future. They met just yesterday. It was
Todd
said
Blanche.
to be a pretty good meeting, so I don't quite understand where this is going.
What's incredible is that Tom Tillis consistently says that they've been working with Blanche and
That's
that
right.
Blanche is not the problem. In his X post, he says Blanche has been forthright, thoughtful, and patient. It's a shame his confirmation, I'm quoting Senator Tillis directly, has hit a snag only because an incompetent personal advisor to the president refuses to amend the bogus settlement.
That's always the tack. It's the people around the president
Right.
when you talk to Tom Tillis. Let's see what our panel thinks. Jeannie is back with us today. Jeannie Shanzano, our Bloomberg Politics contributor, Democratic analyst, and democracy visiting fellow at Harvard Kennedy School's Ash Center, alongside Leslie Shedd, a Republican strategist, president, Rising Communications fellow at the Atlantic Council. Leslie, should Todd Blanche get comfortable with this acting title? We heard the president articulate the same spirit of that post in the cabinet meeting today. This is a deal breaker, right?
I mean, I think it's really unfortunate because Todd Blanche is incredibly qualified. He's incredibly experienced. You know, he's been doing the job. He's proven that he will be a fantastic attorney general. So I would really like to see him get fully confirmed. I know the quicker that we can get him confirmed, I think the better.
Well, so who is it that needs to blink here then, Leslie? Is it Mr. Blanche? Is it the White House? Is it these senators?
I think that's the great question here, right? Look, President Trump is by far the most popular, most powerful person in the Republican Party. So he has this capability to contact senators and to, lobby them hard to find out what it is that he needs to do in order to get his attorney general across the finish line. I think that he's going to be frustrated about having to do this, but at the end of the day, getting Todd Blanche fully confirmed will be a huge victory for the Trump administration. And so I think he should try to work with the Senate to get that done.
What's going on here, Jeannie? Is the DOJ aware of the president's feelings on this? Because they were said to be making progress.
Yeah, I think they are. And I think we should take a step back and look at what is going on here. Is that the president is unwilling to allow Todd Blanche to put something in writing that he confirmed during his confirmation hearings, that this weaponization fund, or anti-weaponization fund as it's called, is in fact dead. And as Tom Tillis said today, the language of the president on Truth Social this morning in the cabinet meeting today, as he waxed poetical and with great concern over the January 6th people who raided the Congress, who raided the legislature on Capitol Hill on January 6th, were convicted, many of them put in jail and then pardoned by the president. He's very concerned that they were maltreated. And yet, what is this really about? This is because the president of the United States wants a deal that no other American can ever get, which is immunity from past and future IRS investigation for him and his family. Of course, he already enjoys immunity as president. He wants that for his family. As we sit here recognizing the 250th anniversary of the United States, I think we should all remember that this is the stuff of kings and monarchs. It is not the stuff in a democracy of an executive leader. And that's why this corruption is at an extraordinary level. And the idea that he's willing to throw Todd Blanche over the bus is astonishing. And of course, his plan to do it in January hinges on a lot of things, including who takes the Senate and who's on the Judiciary Committee come the next Congress. He doesn't know what that's going to look like, and Todd Blanche may end up as acting until the rest of his term.
Well, and I guess the question becomes whether or not, if it's not to be Todd Blanche, Leslie, any other future nominee is going to have this same problem, because what they're trying to extract is not necessarily just a promise from Blanche. It is from the Department of Justice. So anyone tapped to run the DOJ, to be the top of the DOJ, I would imagine is going to face the very same thing, if not from Cornyn and Tillis, potentially from Democrats who have the majority, or from other more moderate Republican senators.
And I mean, you're making the exact right point, and Jeannie made the right point too, right? Which is, we don't know what the Senate will look like next year. I think Republicans will absolutely retain control of the Senate, but we don't know who will be on Judiciary Committee. We don't know how much we will have control of the Senate. And on top of that, this isn't about Blanche. They've made it clear it is about this, weaponization fund and the IRS issue, and they're going to hold on to that through the end of this Congress. So, to me, I think the president is a notoriously good deal maker. He makes deals. I think he should reach out directly, use his considerable sway within the party, figure out what he can do to get them to a yes, and then do it.
Interesting to watch this cabinet meeting, Jeannie, because we saw Jay Clayton in the room, the president's new DNI, although I guess he's not actually, because he's not been sworn in, right? Bill Pulte was also at the other end of the table. He's got Pulte on the same side of the table as the president of the United States. And it was floated, as we, I think, discussed yesterday, that, well, maybe that's one way to unstick this whole thing. President Trump does it again. He puts Bill Pulte in as acting attorney general. See how bad you want Todd Blanche on a day like that. You see a maneuver like that coming?
My goodness, I hope not. And so I guess Bill Pulte will be the person you put in as being so unqualified and objectionable that anybody is better. I can't imagine he goes in as acting attorney general, but I've seen everything if he does. But we know that he is reportedly, according to at least Politico, wants to stay in the post of acting DNI as long as possible. And it looks as if today that he is. You got to feel a little bit bad for both Jay Clayton sitting there and Todd Blanche. Jay Clayton, who got confirmed and is just waiting to be allowed to take the post and wondering where his predecessor as acting is going to land, because he's certainly not going to go very far away.
Well, Jay Clayton being confirmed was supposed to be, even if I guess there wasn't necessarily the stipulation that he also had to be sworn in and Bill Pulte had to be out, but I guess that's probably what Democrats were hoping to see. Wasn't this supposed to unlock, at long last, the reauthorization of FISA Section 702? Jeannie, are we going to see that before the recess? It doesn't seem so. It doesn't seem like there's really any urgency around it on either side, frankly.
I agree totally with that, Kaylee. I think that there's not a lot of urgency to get FISA done at this point, and I don't see the Senate moving in that direction. I think that was the talking point before Clayton's nomination was confirmed, but since we haven't heard a lot about it, because of course the Senate has so much else on its desk before they go on this recess, much of which involves fighting with the White House, whether it's the Save America Act, whether it's the Todd Blanche nomination, so much. And of course, John Thune at the center of it all. So I think FISA, if we get it, I think it's going to probably be after the midterm. I hope it gets done. We need it, particularly at a time when we are at war. But I don't think there's much energy in that direction, at least in the next, few hours as we're looking at it now.
Hey, Leslie, what do you think about this Bill Pulte situation? Typically, you're confirmed by the Senate. They swear you in a couple of hours later. You're a photo op. You're out having dinner with your new colleagues. Spectacularly bizarre is how Senator Ron Wyden describes the fact that Bill Pulte's hanging on there for longer. Senator Mark Warner called it amazing in a horrible way. It's baffling. What's the president doing here?
I mean, I don't think it's really that uncommon to have somebody that's been working in a role to stick around for a week or two and try to help the new incoming person. That's usually a really good way to transition instead of having one person out the door immediately, having him there.
You could still swear in the new guy, couldn't you?
Pardon?
You could still swear in the new guy, couldn't you, though? And
yeah, I'm not sure why they haven't sworn him in yet. It would make sense to go ahead and do that. It could just be perhaps the president is traveling. He wants to be the one to swear him in. He wants to be there. There could be a myriad of reasons as to why they haven't sworn him in yet. I don't think it's nefarious. I think the president is very excited about having Jay Clayton come in. I'm certain that Bill Pulte would love to stay because, look, I can tell you from personal experience, working in foreign policy and national security is really fun. It's really interesting. But I think that we're all ready to get Jay Clayton in there, and having a little bit of a transition will only help.
All right, Leslie Shedd and Jeannie Shanzano, our political panel on this Friday. Thanks for joining us on Balance of Power on Bloomberg TV and Radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We are seeing a rally in the world's biggest tech companies. Amazon, after earnings, surging by 14.9%. That's lifting the NASDAQ 100 index up 0.8%. NASDAQ Composite Index also up 0.8%. The baseline, the S&P 500, it is up now by 0.6%. Dow Industrials up 289, a gain there of 0.5%. The Bloomberg Mag 7 index up 2.2%. 6 out of 7 members are higher. The lone decliner, Apple, after earnings, Apple down by 9.6%. 10-year currently trading at 4.74%. The 2-year 4.28%, and the 30-year 5.27%. Gold down $52 the ounce to $4,051 for the precious metal. A drop now of 1.3%. West Texas Intermediate crude $84.70 a barrel. WTI up 1.3%. Barrel of Brent right around $90, up by 1.1%. Crypto-linked companies such as Strategy reported a second quarter net loss of $8.2 billion as Bitcoin prices declined in the quarter. Shares of Strategy down now by 4.2%. Coinbase also reported last night. Coinbase down now by 9.8%. All of this with Bitcoin just below $63,000, trading down today by 2.6%. Again, recapping, Dow higher by 0.5%. NASDAQ 100 index up by 0.8%, being led higher by Amazon up 14.8%. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you, sir. He'll be back at the top of the hour with more on the markets as we kick off Bloomberg Business Week daily at 2 p.m. Eastern Time. 95 days to the midterm elections. Pretty remarkable as we consider the markets that we're looking at here and the impact of inflation. The issue of affordability is something that's following candidates all over the country. And with interest rates on the rise, we're looking at the 30-year at now 5.27. It's pretty interesting to see stocks holding up to the extent that they are because oil prices are higher too, and that helps to increase interest rates. All of this leading to a conversation about inflation that our colleague David Weston has this evening at 6 p.m. Eastern with Jason Furman, the professor, practice Harvard Kennedy School, former NEC director in the Obama administration, about the root cause of this inflation, whether it's the war in Iran or something more broad. Listen.
That's what the Fed is trying to figure out right now. And there's a few mechanisms for that. Some of it is direct, just the cost of jet fuel goes up, so airplane tickets go up. That's not the biggest concern. The big concern is if it gets built into expectations, and the way that manifests itself is economy-wide wage setting and economy-wide price setting. So if you see prices go up faster, and that leads to wages going up faster, and wages going up faster leads to prices going up faster, and you end up with a sort of persistent cycle. That is so far where I am cautiously optimistic. We're not seeing the wage growth commensurate with this type of inflationary economy, again, in the way that we saw it a couple of years ago, but that is where we would see the broadening out if it really starts to show up, not just in specific prices, but across the board prices, and especially in wages.
Do the numbers coming out of the labor market cut both ways? There was a time not too long ago, there was a lot of concern on the Fed that, in fact, there was a loosening of the labor market. We needed to really keep rates low for that reason. That does not appear to be true now. It's more stable now than it was 6-9 months ago. Does that give the Fed actually some license to increase to address the inflation question?
Yeah, it absolutely does. The Fed has two mandates. The employment mandate right now is in better shape than I can almost ever remember. Normally the unemployment rate is either too high and it's coming down, or maybe it's too low and it's rising quickly or something like that. It's just been amazingly stable. It peaked in November of last year. It's fallen a bit since then. It's basically the same place for the last 2.5 years. And it's not clear what would dislodge that unless there was some big exogenous shock to the economy, say the AI bubble burst, and I don't think there's any reason to expect that to happen anytime soon. So yeah, the Fed really just needs to worry about the one side of its mandate right now, which is inflation.
The former NEC director, Jason Furman, in conversation with our colleague David Weston, the host of Wall Street Week, which of course airs tonight at 6 p.m. Eastern here on Bloomberg TV and radio. And while Mr. Furman says that the Fed really needs to focus on the one side of the mandate, the inflation side, there is the labor market question as well. And we're going to get our latest read on that next week with Jobs Day, of course, coming up on Friday. It's just one of the many calendar items on what is shaping up to be a pretty busy week. And it'll be a busy one in politics as well. Tuesday, especially, is its primary day across a number of states, but the one we will all be watching is Michigan, where the Democratic Senate primary is hotly contested and could give us a signal as to what direction the party is going. It's, of course, Abdul El-Sayed, who's a progressive, who the Democratic Socialists are campaigning for, even if he says he's not formally part of it, versus the establishment-backed Congresswoman Haley Stevens. And the latest poll out from Emerson College has Haley Stevens down 15 points to El-Sayed at this point, and Emerson's director of polling, Spencer Kimball, is joining us once again on Bloomberg TV and radio. Spencer, welcome back to Balance of Power. This number raised a lot of eyebrows, a 15-point gap in a race that a lot of people have said is pretty tight, could be a nail-biter. So is he just going to run away with this and surprise people?
Well, we're going to see on Tuesday night, Kaylee, if it is going to be a nail-biter. But the data suggests that Saeed has been able to build a coalition of younger voters, particularly under 50, and been able to make inroads with educated voters. And that coalition looks to be a pretty successful recipe here in the Democratic primary.
Well, I'll tell you, watching these numbers evolve is incredible. The way you present numbers from January, April, and July. El-Sayed goes 16% up to 24%, now at 54%, and it's been a little bit less optimistic for Haley Stevens. She was in the teens back in January. She's at 39% now, and I'm sure that you've heard people call this poll an outlier. I was talking to a Democratic campaign operative here in Washington, D.C. last evening, who was apoplectic about this poll. You've probably been hearing from some of them. What has happened in the last month or two to justify this huge increase in support?
Well, there was another candidate in the race, Mallory McMorrow, and she was polling pretty well in our numbers in April, and she drops out of the race. And the idea there was that her vote would go to one of the two candidates, Stevens or El-Sayed.
Now we know.
It looks like that vote has essentially split itself, not really coalescing around one of the two candidates. And because of that, El-Sayed's been able to maintain that edge he's had over Stevens in all of our polling, really since April. In January, we had Stevens a little bit higher, but she's been struggling in our numbers.
Well, and of course, she is backed by the establishment and has establishment Democrats like the one Joe was speaking with apoplectic, because the concern is that she's the one who would be able to beat Mike Rogers in the general, and that he would potentially be the victor in the other scenario. And I wonder, Spencer, if that's what your polling bears out.
Well, it's interesting you bring that up, because we saw that come across the newswire this week, that general election polling that had the two Democrats against Mike Rogers. What was interesting in there is that they didn't measure the primary, which is this week. And that kind of raised an eyebrow from the Stevens camp that why wouldn't you put out that primary number unless it's not a good number? And the better number to look at would be the general election. We see this all the time with viability. We talked about President Trump. Is he a viable candidate back in 2016 for general elections? It's what the campaigns will use to try to find a message to move the needle in their direction. I'm not sure it's going to be enough here for Stevens.
Do you have head-to-head numbers for a general election?
We haven't pulled a head-to-head since January, which we had it as a tight race as well with El-Sayed.
Yeah.
But that's been 7-8 months ago.
The matter is, if your name is Mike Rogers, you're just hanging out listening to this interview, enjoying every minute of it, right?
Well, I'm not so sure Mike Rogers has got this thing in the bag. I know the Democrats are fighting right now and it's divisive, but you know, it's kind of like on the other side down in Texas, the Republicans, with Tellerico, everybody tries to line up their opponents thinking, oh, maybe Paxton would be easier than Cornyn. Here in Michigan, maybe El-Sayed would be easier than Haley. But at the end of the day, I think after the primaries, the candidates, they'll work together. The divisiveness usually, fades away and we'll see a coalition build. So I don't put too much stake into that at this time.
Well, as we consider the dynamics for November, regardless of who wins, how high will the conversion rate be among Democrats if their preferred candidate in the primary loses to then go out and vote for the person who is victorious in the general? Or is there a likelihood of lower participation in that scenario?
Yeah, that enthusiasm gap is something that we're going to keep an eye on. But it looks like the Democrats are really going to rally around whoever the nominees are because they're the party out of power. And generally, that's what we see. But don't forget, in 22, we had some races for the Republicans in Pennsylvania, Arizona, that ended up not going in their direction because of candidate quality. So we'll see, obviously, who gets these nominations. But then let's reset the race in September, and we'll give you some fresh numbers at that point.
Would love to move to South Carolina and the numbers that you have on the special Republican primary for U.S. Senate. This is, of course, the seat that was held by the late Senator Lindsey Graham. Got to be honest here, Spencer, I'm surprised Darlene Graham is not first. Ralph Norman is at 22%, followed by Graham at 19%, Russell Fry at 12%, Mark Sanford at 11%. Darlene Graham does not have a name recognition issue, right? What does this say about her chances and Ralph Norman's candidacy?
I guess some would call it another outlier, but we're just looking at our reality here. And we've done this poll now twice. We did it 2 weeks ago as a hypothetical. And now that the candidates are in there, remember, this race is in a week. South Carolina has a truncated process here where if nobody gets to 50% on August 11th, there's going to be a runoff on August 25th. So this is all happening really fast. And it looks like Lindsey Graham's sister, who is now the senator, is struggling to get name recognition and viability come the general election. And we saw South Carolina not necessarily line up with the Trump endorsement in the gubernatorial race. We're going to see what happens here in this Senate special election. And in South Carolina, you were talking about the economy. We just looked at those Republican voters, and they're blaming President Trump for the high gas prices. And that's something that the Republicans are going to be concerned about coming to these midterms. They're still blaming President Biden for grocery store prices, but those gas prices that are hitting the wallets, that might become a bigger issue. So we learned that as well out of South Carolina.
Well, you mentioned the gubernatorial race, which Ralph Norman, of course, ran in, although he didn't come close to winning it. But how much of his numbers could be carryover from the name recognition that he was already on the ballot?
Well, Mark Lynch was carrying that. You can see he's the fifth guy on the list. He's the one who ran against Graham last time and got 28%. He's now down to 7%. So you can see name recognition goes in both directions. But yeah, I do think Norman does benefit from that early stages at this point. But again, it's only a week until, 2 weeks until the election. It's going to take a lot of effort to increase name rec. And what's interesting is Graham's sister already has Trump's endorsement. So is Trump going to come to South Carolina? It's going to be really interesting to watch the dynamics of that race play out.
You might have seen the memo from Doug Sosnick, Spencer. Pretty interesting. He's predicting a blue wave election, citing the party's overperformance in elections over the past year or two, the president's all-time low approval numbers, economic dissatisfaction, the war in Iran. Is he on the right track?
Yeah, our national generic ballot test has had the Democrats up by double digits for a few months. That tells me it's kind of baked in, that 10, 11-point spread. And that's a very large spread when we think about historically where we see these generic ballot test numbers. And that's why the Democrats are a little bullish in Ohio, in Texas, in Alaska, because now if those numbers get to double digits, states that look to be out of play come into play, and there you could have that blue tsunami that people are looking for. I think the House is one story. We'll obviously have to wait. As I mentioned, the candidate quality in the Senate is going to play a factor in those races, more so than in those House races.
Just quickly, Spencer, as we talked about the Republican primary in South Carolina, is there a remote chance that actually doesn't stay a Republican seat?
I guess there is a remote chance. The Democrats have put up a strong candidate, but this is South Carolina. It's going to be Lindsey Graham's seat. But I can tell you from looking at the data that there is definitely concerns about the Trump administration, and having that connection to the administration is a plus and a minus for these Republican candidates, because you need that Trump endorsement, generally speaking, in the primaries. But come the general election, that could end up having an impact. Remember when Lindsey Graham ran against Jamie Harrison, a couple cycles ago, that was supposed to be competitive, but Graham still win by 10 points. So hard to think.
Hey, Spencer,
South
it's
Carolina.
good to have you back. Spencer Kimball, director of the Emerson College Polling Center. Regards to my alma mater. We'll meet you on the late edition of Balance of Power. Kaylee will be here with myself, 5 p.m. Eastern Time on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
All right, everybody, a very good afternoon. Yes, indeed, we are across Bloomberg platforms right here on Bloomberg Business Week Daily. We are the final trading day of the month of July. Feels like it was kind of, I don't know, we've been bouncing around. I feel like we were going out with a little bit of a whimper, but we are higher and on all the major indices.
We are, for the month, down ever so slightly on the S&P 500. I mean ever so slightly, down 0.3%. The NASDAQ, though, down about 3.5% on the month. You know what, though? Zoom out. We're still higher, close to 10% on the year for the S&P 500.
Go inside the S&P, folks. It is an even split, pretty much. 240 names to the upside, 262 to the downside. So that's kind of what's going on. Amazon, though, is your top gainer in the S&P, and I think in the NASDAQ 100 as well. It was earlier. So you can see what's leading the way. This is stuff that we're going to get into certainly later on. I have to say, ahead this hour, Tim, it is kind of all AI in one form or another, and we're actually going to weave it through the next 3 hours on Bloomberg Business Week Daily. First up, who is Leopold Aschenbrenner? Why is Wall Street watching everything he is doing, too? We know a lot of you already have been reading about it on the Bloomberg. It's among our most read stories, if not the most read. There's been a lot of reporting about it, but we've got to dig into all of this, and there is obviously a big AI connection here.
Yeah, we're going to be talking situational awareness, where the firm, or where the fund, I should say, goes from here. We got Hema Parmar joining us in just a minute. Also AI related. The week that was for 4 of the Mag 7 companies that reported earnings, how we're thinking about that AI CapEx spend today.
Yeah, we're going to get into that. Plus, with another AI angle, the CEO of Vion on keeping Ukraine connected over more than 5 years of war pressures from another hot war in Iran. SpaceX, Starlink, they have some deals there, and how the company is building with and using AI. There's your AI connection. All right, folks, just a reminder to big thanks to all of you who've been sending in questions. We love it, exclusively for Bloomberg.com subscribers and terminal clients. And Tim, it's really easy to do.
It's easy. All you got to do is go to Bloomberg.com/AskRadio. That's Bloomberg.com/AskRadio. It's available for Bloomberg.com subscribers and terminal subscribers as well.
All right, let's get to the markets on this Friday, as we like to say. Charlie Pellet, take it away.
Hi, thank you very much. And right now we have got the Dow, the S&P, NASDAQ all advancing. We are seeing a rally in the world's biggest tech companies. Case in point, Amazon.com after earnings, surging now by 15%, certainly leading the NASDAQ 100 index higher. However, holding back that index is Apple. Apple after earnings down now by 9.7%. So the S&P up 0.6%, Dow Industrials up 288, that to a gain of roughly 0.6%. NASDAQ up 0.8%, with the NASDAQ 100 index up 0.8%. Not a broad-based rally, though. The Russell 2000 index of small cap shares slumping right now by 0.3%. But the SOX is advancing. The Philadelphia Stock Exchange Semiconductor Index up now by 1.5%. All of this with a VIX below 17 and a 2-year at 4.28%, the 10-year 4.74%, the 30-year 5.27%. Gold, meanwhile, down $49 the ounce to $4,053, down 1.2%. An advance for crude, WTI now at $84.68 a barrel, up 1.3%. Barrel of Brent crude, $90.04. Brent crude up by 1.1%. Bitcoin, meanwhile, down 2.4%, 63,182. 6 out of the 7 Mag 7 names have reported earnings, and right now we have got shares of Amazon advancing by 15%, Apple lower by 9.7%. Tim and Carol, that is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thanks so much. We'll come back to Charlie throughout the hour for Check on Trading on this Friday. Hey, I don't know if it's a sign perhaps of the AI trade that we've all been pretty worried about, or you certainly have seen it play out in the markets with leverage going on, the high flyers, the unknowns when it comes to ROI. We got some reads on that and some different reactions in the market when it comes to some of the hyperscalers. It is all about the roller coaster ride, Tim, that is the AI spend and build.
We're talking about Leopold Aschenbrenner's hedge fund, Situational Awareness. It sold a chunk of its AI-related public equities this week and saw its assets slump sharply from $45 billion to $10 billion. The fund's sharp sell-off in AI-related stocks, it's highlighted the risks, Carol, behind some of the market's biggest AI bets. Ken Griffin's Citadel purchased a significant portion of these holdings.
Feels like you got a deal on that, but we'll kind of dig into this.
Time will tell.
Exactly. Good point. All of this, though, has been asking, who is Leopold Aschenbrenner and why is Wall Street watching? With more Bloomberg News hedge fund reporter Hema Parmar, this is her world. She's been watching. So good to have you here with us. It is amazing how all of a sudden everybody just wants to find out what's going on here. It is among our most read stories on the Bloomberg. Who is this guy? Why are we talking about it so much?
Yes, talk about a roller coaster the past couple days, even just the past 24 to 36 hours. Why we're talking about it? This, Leopold is 24 years old. He runs a hedge fund that had $45 billion in assets. Even with this huge decline, they still run $10 billion. It still makes them one of the world's biggest hedge funds. But what's gone down in the past few days is them needing to sell off assets in order to meet margin calls. They had this huge exposure to AI investments. They had a ton of leverage. It's a story we've seen time and time again. The risk that we see in the market with these levered up bets. Them needing to seek a buyer to get some liquidity to meet the margin calls. They found it in Citadel with Ken Griffin, who bought a chunk of their stock portfolios. Interestingly, they even were considering selling off some of the private assets, these valuable Anthropic stakes. So it shows just how dire things were hours ago.
Who were the investors in this fund?
Yeah, so that's a really good point, because typically hedge funds have big institutions, sovereign wealth, endowments, foundations. This hedge fund, even given its size, didn't really have a lot of those investors. In fact, some of those investors opted to not invest in the fund because they looked at it and was like, oh, I don't know about those risk management skills. It doesn't seem super professional. So the investors that we're seeing are founders, they're tech, more Silicon Valley individuals, they're wealthy, high net worth, but it's not the typical sort of LP we see in the hedge funds that we write about very often.
Ken Griffin coming in, right? There are other people who kind of passed, right? Who maybe looked or briefly looked.
They had conversations with Millennium, with Jane Street. Citadel is the one that got the deal at a discount. This is what Ken does. He jumps in when you see firms in distress, gets a good deal. We've seen him do this many times in the past, either buying up assets at a distressed firm or taking talent. So this is part of his playbook. It's what he does.
Who is this 24-year-old? I don't know what you guys were doing at 24. I think I was getting my first broadcast job. But I'm just like, who is he?
You didn't have a hedge fund worth $45 billion, Carol?
No,
Okay.
I didn't go to college at 15. I didn't.
You were in valedictorian at 19?
I was not,
Okay.
and I didn't work for some really well-known people in firms that are out there and very much a part of, I feel like, our world.
Yeah, going to college at 15. He founded Columbia's Effective Altruism group, which is this philanthropic avenue. He helped run Sam Bankman-Fried's philanthropic arm of FTX. He worked at OpenAI for a couple years, then got fired. His claim to fame is the manifesto, Situational Awareness, which really put him on the map. People began following his 13 Fs. He had sort of a cult following about his key points around AI and the risks and the rewards. A very large manifesto. He named his hedge fund Situational Awareness after this paper that he put together, and he's been closely watched. Raised a ton of assets, has lived all of the...
Who's closely watching him? This is the thing that... Who are the investors who are closely? Is it retail? Is it really institutional? Is it folks in Silicon Valley? Who is it?
Less institutional, more individual founders, more Silicon Valley type of people.
The same who are investing in him.
And maybe the ones that are investing in companies like Anthropic or that are employees of these firms,
What were some of the public equities he bet on?
Yeah, so he bet on companies like SK Hynix, Bloom, SanDisk, a lot of AI bets, highly concentrated, highly levered. That's not a good mix.
How different is this from a typical... I mean, this is your world, how you cover hedge funds. How difficult was his typical... or different was his strategy from the typical hedge fund?
Yeah, no, that's fair. So he did take short bets, which does make him a hedge fund. He does publics and privates, which we see a lot of hedge funds do. On the flip side, a lot of leverage on a concentrated amount of AI stocks. A lot of the hedge funds that we think about as public privates, we don't think that they use that much leverage on these positions. That's a bit of an outlier. If we look at Viking Global in the past couple months, they've been very vocal about not making big AI bets. Now that's been a bit of an outlier. A lot of hedge funds are riding this beta wave. They're posting strong returns over the past year or so because a lot of them are concentrated. But it's the leverage factor. It's the fact that 4 to 5 times on highly concentrated bets. We like to not see that in our space.
It works when stocks go up.
When it's fine, but...
Well, Carol, that's a good segue for you to talk about the banks. You came by my desk this morning. You're like, come on, we got to talk about the banks.
Well-known banks on Wall Street, JP Morgan among them, who are willing to lend him capital to do this.
Exactly. And he was trying to have more conversations to get more financing in recent months.
Just to wrap up here, is there a problem? Is there a takeaway? He's still got a $10 billion hedge fund.
Still got a $10 billion.
So is there something that we should take away? Because we keep looking for canaries in the coal mine when it comes to the AI spend and trade.
Yeah.
Is there anything here, or what are you watching for what's next here?
Yes.
What should we be watching?
We're going to be watching to see which other hedge funds are seeing pain as we get through the end of this month. We have a rally, today, so we will see maybe some better performance at the end of the month, but also it's been incredibly volatile. So we're going to be watching the numbers that are coming out next week to see who made money, who lost money. We're going to be looking at Citadel. Their numbers have been somewhat middling over the past year, over the past 6 months. So what kind of a dent or improvement will this deal have on their returns? It should lift the returns. It should be a sweet deal for them and for their investors.
It's just fascinating. Like we said, he's still doing okay, but it's interesting, and certainly not where he was a few months ago. No. Hema, thank you so much. Hema Parmar, she's going to be back in our 3 p.m. hour. We want to continue to stay on this story. She's Bloomberg News hedge fund reporter. We're going to stay on AI.
We are. It's being told through Mag 7 earnings, at least this week, when 4 of the big companies reported. Amazon shares surging after the company reported cloud computing revenue accelerated for a 5th straight quarter. It eased investors' concern that it won't produce a return on huge expenditures to meet the booming demand for AI. And then, Carol, there's Apple.
Tumbling after component shortages weighed on the company's sales forecast, signaling that industry-wide supply constraints are taking a bigger toll than anticipated. He's been one of the voices guiding us through all of these earnings this week and really last. Ed Ludlow, host of Bloomberg Tech in the Bloomberg San Francisco bureau. Ed, Amazon and Microsoft were cheered, Apple and Alphabet, not so much. Is there a clear AI narrative, or is it all company-specific?
There was a note that hit my inbox from Azuo this morning that had an image at the top of it that said, it was a red hat that people will be familiar with something else, but it said, "Make fundamentals great again." And it was trying to kind of apply that. I think we should probably strip out Apple from the hyperscalers, right? Because it's muddled, but why is it that Alphabet was punished and the other 2 really cheered? It's hard to answer that, because one of the things that the street liked about Microsoft was there was stuff beyond the top line growth. So they gave data around Copilot and how well that's doing. Amazon gave us the extra figures of revenue run rate for the AI business and revenue run rate for the chips business. But Alphabet also gave us stuff like that. They told us about Gemini and tokens per minute, and for one reason or another, it just wasn't enough. But in general, all 3 of them showed increased commitment to spending. Microsoft said it will protect free cash flow, and they all showed massive cloud growth. And that's the summary, if you just take away whatever the market reaction was in any case.
So, yeah, the market reaction for each of these on their own notwithstanding, but the narrative, Ed, hasn't changed at all since before Alphabet reported last week?
Not really. I mean, there's a lot of specifics that are worth discussion. Amazon raised CapEx by $20 billion for this year, in large part because the cost of building infrastructure is going up, right? So it's gone from $200 billion to $220 billion. But what Andy Jassy said was that's largely because of higher memory prices. It's not necessarily raising CapEx because they feel like that would make them move faster on the infrastructure. But the cloud growth is there. AWS growth of 37% was pretty handsomely above street expectations. Azure's growth of 43% was near to being in line, but it was really cheered for one reason or another. Nothing's changed. Spending go up, cloud growth go up.
To put it simply.
I love that. Qualcomm, I don't know. Should we bring? Is there anybody else we
could
need?
bring in Rivian. I do want to talk Rivian.
Okay,
but
let's
even
go.
though it's not one of the mag, because Ed had a great conversation with the company's CFO.
He did, yeah.
Ed, we'll talk more of the Mag 7, but I want to talk to you about Rivian, because this is a company you followed since literally before it went public. You understand this industry. better than pretty much anybody else. But the fact of the matter is Rivian's facing the same problems that Ford is facing, that General Motors is facing, that Tesla is facing, and that's, well, what is the appetite for EVs in this country?
Yeah, I mean, the EV market generally has slowed over a number of years in America. Enthusiasm is gone, even with the short term of the war in Iran and what that's done for gas prices. You know, it's not really changed trajectory. Rivian opened higher, 2%, and it's now down more than 7% in the session, but they had a good quarter where basically they've been losing money for a long time. Those losses have narrowed, and they launched their mass market product in a really small way at first, the R2, but they now like have something to show for it in the real world. So, you know, the conversation I had with Claire McDonough, the CFO, was very much like, okay, this is it now. To your mind, you're in the bigger leagues. When are you going to start seeing some financial returns on that? And, you know, the back half of this year is the answer.
Right? Every kind of growth company or new company has to grow up at some point, become a teenager and an adult, essentially. Hey, I want to, sorry, well, it's true. It's the reality, right? I do want to go back to Apple. Yeah. You know, we talked about Apple kind of looking smart regarding cash flow and CapEx spend, and yet we have seen the stock under pressure.
Yeah, I mean, gosh. You also mentioned Qualcomm in passing a second ago, so there's something common there. But this is like a really profound reaction in the stock from Apple.
Yeah.
You know, it's down 9.5%, but put a better way, it's the biggest drop since the world shut down for COVID in 2020, March 16th, 2020. And the story, put the numbers aside, was that Tim Cook, in his final ever call as CEO of Apple, made an admission that they'd got it wrong in the supply chain. So it's not just that memory chip prices are higher. They said those will continue to be higher into the September quarter. It's that they basically said they misjudged demand and they placed the wrong volume of orders for lead-edge processors with their suppliers. And so in the end, the demand is there for iPhones. They couldn't build enough of them because they got the math wrong on supply of components.
Ed,
just
10
it's what
seconds.
they do
Will demand still be there when they raise prices at the next round?
Well, you know, Anurag made this point with us, right, that he felt the iPhone cycle for the 17 generation had one good quarter left in it. When you get to September and then suddenly you're in the release of the iPhone 18, that's where the higher memory pricing issue will show up. So I don't know, really. I can't really answer that. The guide was that revenue growth in the September quarter will be 9% to 11%, and the street was looking for 12%, which was already taking into account a very tough environment. And so Apple's projection came in below that. There was no sentimentality for the fact that it was Tim Cook's final call. You know, that's not what the market trades on.
Well, as the guy who oversaw supply chain, right, that's a rough way to go out.
He's still there. He's not out.
He's not out, but you know what I mean. Ed Ludlow, thank you so much. Really appreciate it.
Yeah.
Yep, host of Bloomberg Tech out there on the West Coast. We're going to the C-suite when we come back.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are rallying on the final trading day of the month. It has been a turbulent month. Right now, though, we have got the S&P 500 index at 74.85, up 47 points now. That is a gain of about 0.6%. The Dow likewise up 0.6%, up 325 points. The NASDAQ 100 index up 0.7%. NASDAQ, meanwhile, up by 0.8%. Optimism over Amazon's results is offsetting worries about Apple. Right now, we do have Apple shares plunging by 9.4%. Amazon leading the NASDAQ 100 index higher, up now by 15.3%. The 10-year yield, 4.28%, with the two-year yield, 4.28%. It's the 10-year at 4.74%. But look at the 30-year now at 5.27%. Gold down 1.3%, $4,050 the ounce. And West Texas Intermediate crude, 85 a barrel. WTI up by 1.8%. Brent, 90.12 a barrel, up by 1.2%. ExxonMobil and Chevron have been plowing profits into debt reduction rather than huge buyback increases, in a sign of big oil's caution about how long war-driven price rallies will last. ExxonMobil, after earnings today, trading lower, down 1.3%. Chevron, after earnings, up 2.1%. ConocoPhillips reports next week. ConocoPhillips up by 0.9%. Carolyn, Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, we want to get to a company that recently, actually this morning, reported earnings. We're talking about Vion. And we did see the stock rally at their intraday high today. This is after coming out with financial quarterly results. Company raised its fiscal year revenue growth outlook and its fiscal year EBITDA growth. And the company, it's kind of a story about Ukraine. It's about telecom. It's about wireless. It's also about becoming a super app, Tim, and more.
Kaan Terzioglu is with us, CEO of the publicly traded and Dubai-based Vion Limited, $3.6 billion market cap wireless telecom company. It's the parent company and majority shareholder of the Ukraine telecom company Kyivstar. Kaan joins us from New York. Kaan, first, just clarify the relationship between Vion and Kyivstar, because I understand the majority shareholder part, but since Kyivstar is a separate publicly traded company, how is Vion still considered the parent company?
Well, we decided to actually take Kyivstar to NASDAQ a year ago, and we are just celebrating its first year anniversary of being listed in NASDAQ. Actually, last Monday, we rang the bell, closing bell in NASDAQ for Kyivstar. And we just listed 18% of Kyivstar. We still own 82%. We are very proud to be basically serving Ukrainian people in Ukraine. And it is a stellar company. I think you should also have Sasha one day here to tell about his story and his growth.
We've spoken to Sasha in the past.
Yeah, we have.
Oh, you have? Great. I think, you know, if you have noticed, we are in Ukraine, we are in Pakistan, we are in Bangladesh, Uzbekistan, Kazakhstan. Practically, the countries that we serve is 600 million people. These countries have one common characteristics. They are underserved. And that's why, you know, we do not define ourselves as a telecommunications company. Telecommunications is not the destination for us. It's a foundation. We are a digital operator. We do not sell number of gigabytes, number of SMSs, number of minutes. We would like to provide meaningful digital services to our customers in financial services, entertainment, healthcare, education, enterprise services.
So this
I'm so happy.
So this is about infrastructure, right? More broadly, because my understanding is you guys also think of yourself as kind of an investment vehicle for investors who want exposure to the reconstruction in Ukraine, for example.
Absolutely true. I mean, I think, you know, Vion and Kiev as two stocks, they are a unique opportunity for American investors to participate in the growth story of these markets. But it's not only about the infrastructure and, you know, building roads or fiber optic cables or data centers, but it's also about the digital reconstruction of industries like healthcare, education, transportation, logistics, e-commerce. And those areas are where we are investing heavily. For example, you would not expect Kyivstar to have a ride-hailing business or a marketplace or a healthcare service provider. But most of our growth today comes from these businesses. If you look to our Q2 results, 17% growth. 27% of our business is actually coming from digital services that I mentioned, and it's growing 53%. And that's really makes me excited because our strategy is working. Actually, in these markets, if you can reach out to customers, provide a low-cost distribution platform, you have a unique advantage.
So, again, and my understanding, because we're trying to understand, because you guys are in a lot of stuff. I think this came from a Reuters story that I was reading in preparation for this. You guys are expanding in areas such as entertainment, financial services, super apps, which combine multiple digital services on a single platform like China's WeChat. Is that what you're trying to become?
Well, on top of our telecommunications foundation, we have three businesses. One is financial services. The second one is digital life, which actually includes from marketplaces to healthcare solutions to ride-hailing businesses. Anything that touches the daily life of a customer is in that category. And the third one is digital enterprise, which is cloud and data center services for our enterprise customers. And those three businesses, together with the telecoms, is defining our total business.
Khan, on the infrastructure side, particularly in Ukraine, and you know, we all understand, some more so than others, about the challenges that the country faces, being in its more than 5 years of war. But from an infrastructure perspective, when it costs so much to actually build this stuff out, and then in some cases, sadly, it is destroyed in a war, how do you do that when it costs so much money and when you don't know if it's going to survive as a result of the bombing or whatever's happening in that particular theater at that moment?
So, Tim, it's been 5 years, and we have 4,000 heroes working in Ukraine for Kyivstar. And we have kept 95% of our network up and running. And during this time, we had numerous challenges, from cyber attacks to energy outages to direct hits. And unfortunately, we lost 5 people during this process. But we never lost our path in terms of keeping Ukrainians safe and connected. And we have even gone the extra mile because we have integrated our terrestrial networks with satellite platforms of Starlink. Today, 5 out of 10 customers of Starlink Mobile is our customers in our countries. Actually, we have enabled direct-to-cell capabilities so that our customers in Ukraine can connect and communicate, even if there is no energy in an area, even if the area is landmined so that it cannot be serviced properly, we have the ability to serve our customers. I think that's really the concept of how to make sure that the customers are connected. And on top of that connection, how customers can really consume meaningful digital services.
You know, one of the things that we also like talking with your team at Kyivstar, but getting an idea of what it is like in terms of life. You mentioned some of this in Ukraine, as this war with Russia is now in its 5th year. What is life like? Is there reconstruction going on, or can there not really be until this war is put to an end? I'm not quite sure. There was a point in our life that we talked about it a lot more. Obviously, the U.S. war in Iran has shifted some of our conversations dramatically, but this war continues.
First of all, it's needless to say, war is a terrible thing and it changes lives, livelihoods of people. But in Ukraine, the morale of the people and the livelihood of people has never been, I think, lost. Frankly speaking, the reconstruction is a perpetual work. They are resilient and they continuously, every single day, ready to build what is destroyed. And I can say you this. I have a flash forward, and in that flash forward, what I see, Ukraine is winning. And the people who will be investing in Ukraine now will be even winning bigger. Because reconstruction of Ukraine, I have no doubt that in 15 years, it's going to create the most prosperous nation in Europe.
We follow a lot of what's happening with SpaceX and what SpaceX is doing with Starlink. And there was a report out of Semaphore earlier this week about SpaceX being interested in buying spectrum and starting to compete, at least in some parts of the world, with the telecom providers like T-Mobile in the U.S., Verizon in the U.S., AT&T, and shares of those companies fell as a result. of this news. Do you guys use any Starlink or SpaceX technology right now to supplement what you offer in different markets?
Absolutely. We are the biggest partner of Starlink in the countries that we operate in. As I mentioned you, globally, Starlink, I think, announced that they have 10 million customers on direct-to-cell technologies. 6 million of those customers are our customers in Ukraine, in Kazakhstan, in Bangladesh. And I do not see Starlink as a substitution. We are their partner, and we work very closely together, and we are proud to bring integration capabilities of terrestrial networks and satellite platforms in the countries that we are operating in. Now,
so you're not worried.
That,
you're not worried about competition eventually from Starlink or SpaceX.
In my countries, absolutely not. We are the licensed operators in these countries. There are reasons why we are licensed. We hold spectrum ourselves. I do not see any intents of Starlink to come and do the groundwork of this type of business. To be frank, if you look to our financials, while we are extremely profitable and cash generative company, we know how to operate in low cost, low price markets. And I think, these markets are unique, and we are the main players in these markets, which will be partnering with Starlink to make sure that people are connected at all times.
You are based in Dubai. That's your official headquarters. How has the U.S. war with Iran impacted you guys?
What I can tell you that Emirates is such an amazing place. They actually took care of their people, their visitors, the expatriates, the companies there, completely informed and protected in an incredible way. So hats off to them. Of course, it's not easy to be in a hot zone like that, but I remember none of my flights got delayed, canceled, and there was no impact, negative impact to our business or to our life during even those difficult times.
We appreciate you weighing in. Khan, we've only got 30 seconds here. You guys just opened up some offices here in New York City. Rockefeller Center, very well known to anybody in and around the New York Metro. Just quickly, 30, 40 seconds, why and why now?
Well, the office we opened is actually a connection point for us to communicate to American investors that there is a market, and the only way to invest in that market is, well-governed companies like Kyivstar and VEON. And if they want to participate in the growth in Ukraine or in frontier markets, we are looking forward to talking to them. And that office will be the heart of that transactions and discussions.
All right, great to check in with you. Look forward to future conversations. Khan Terzioglu, he is CEO of the publicly traded VEON Limited, joining us right here in New York City. All right, when we come back, we've been following this here at Bloomberg. FIFA. World Cup is over, but they're digging in big time on
now
privatization.
The drama is starting.
It does
the
feel
World
like
Cup is over, but now's the real drama.
the drama off the field, right?
Yeah, UEFA versus FIFA.
All right, we're getting into that when we come back. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. U.S. stocks holding close to session highs. Final trading day of the month. August right around the corner. S&P higher by 43 points. Now that is a gain of 0.6%. We are seeing a rally in the world's largest tech companies. Case in point, shares of Amazon after earnings up by 15%. Apple after earnings, very different story. Apple now down by 9.4%. But bottom line, NASDAQ 100 index holding on to a gain of 0.7%. The NASDAQ Composite Index up by 0.8%. The Dow up 0.6%. And the S&P 500 index, keeping it all in context as a baseline, up by 0.6%. The Bloomberg Mag 7 index up 2.3% today. The SOX up 1.1%. 2-year yield 4.28%. The 10-year yield 4.74%. And the 30-year yield 5.27%. We've got gold at $4,050 the ounce. Spot gold down 1.3%. A rally for crude today. WTI 84.63 a barrel, up 1.2%. Barrel of Brent just above 90 now, up by 1.2%. Among semiconductor names today, we're seeing shares of Qualcomm down almost 2%. NVIDIA up 1.9%. Micron up down 4.3%. Advanced Micro Devices is higher. It reports earnings next week, up now by 0.6%. Again, recapping, we've got the SOX higher by 1.2%, S&P up 0.6, the NASDAQ 100 up 0.7. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, a most read story on the Bloomberg. FIFA digging in big time and will proceed with plans to privatize its commercial business despite spreading threats from regional footballing organizations in Europe, Asia, and North America that they could boycott the World Cup. They're digging in.
All right, they're digging in. We're going to dig into it, too, with
Yes.
Vanessa Perdomo-Maglione and Bloomberg Business Week, Business of Sports, Bloomberg News senior reporter Randall Williams with us. Vanessa is the co-host of the Business of Sports podcast and a Bloomberg News sports business reporter. They both join us here in the studio. So they're moving forward with this despite all of the outcry from leagues around the world, Vanessa?
They are going to move forward with it. They're going to have a vote, with their 211 members in September to see if they decide to take this $20 million check that would come their way if they do end up going through with this plan. But right now, they're going through, Gianni Infantino is going through with the next few steps as he can.
The motion of going through. Okay. It's not done. Them saying we're going to charge forward does not mean that they're going to break through the door.
What will keep them from breaking through the door?
Well, UEFA represents a good portion of the European countries. Of course, you have CONCACAF that represents some as well. And so they combined are above 90 countries. You have 90 countries that say no, and very quickly it gets a tight race.
Yeah.
Couldn't we see like a schism here? Where, let's say FIFA does decide to do this, then there is some sort of boycott of the World Cup. The UEFA teams get together with other leagues around the world.
What is FIFA without them?
Exactly.
Nothing.
Vanessa.
They're not. FIFA is nothing without UEFA. The UEFA is by far the most important part of FIFA, a most important part of global soccer that there is. So if all of those teams come together and say, we will not partake in the World Cup, then you will have asterisks on the next World Cups because the real winner won't be there.
So let's think about it in terms of the rounds of the World Cup. You had Portugal, you had Croatia, you had Spain, you had France, you had England, you had Germany, who, they got out very, very early. Belgium as well, who beat us. So you get all of these bigger countries who are well established out of the World Cup, and what does this look like? We also have, I don't believe we've heard from South America, and if we have,
South America hasn't weighed in yet.
But if South America weighs in and says we're out on this, then it's dead. Brazil not playing, Argentina not playing, those are titans. Now all of the world titans are out, and we're not going to be watching a World Cup with whatever small countries that would participate. It's just not going to be popular.
So who has the power here? Is it the regional? Is it FIFA? Tell me, understand, for those who don't know, me included, explain the structure of how this works and who makes decisions, who determines the partnerships, the sponsorships, the money part of it. Help me understand this.
I mean, the real the real power is technically with the teams. Like if you want to look at it in terms of maybe American sports that people could understand, it's that NBA is the entity, but the players are the face and they have the power, which they've been, exercising a lot in the last few years, right? You have no league without us, so we can go here, we can go there, and we can do whatever we want and jump teams. So if the big power teams in FIFA say, we don't want to play, then they're going to have to really pivot. I don't imagine a world where they're going to go forward without UEFA. I don't imagine.
So does that mean FIFA doesn't do this?
I don't. I find it hard to believe that this will go through. Now,
Okay.
But going back to your question,
Yeah.
UEFA controls the Champions League. They have the Euro Cup, which are two tournaments that are based in Europe. Then you have the Copa America, which is controlled by the South American, I believe CONCACAF as well, that participates. And then you have the World Cup. That is FIFA's main event. Now they've tried to do the World Cup, the Club World Cup, which of course is with clubs. Think of Inter Milan and FC Barcelona, those clubs. But those aren't big money-making events the same way that the men's and women's World Cup are. And so what they're trying to do now is like, listen, we'd like to make more than just our big event every 4 years.
Which, by the way, is one of the other reasons why UEFA is probably against this entire deal, because it does encompass the Club World Cup, which involves their teams, and it then directly competes with what Randall was saying when they're competing against the UEFA Champions League.
Any of the big players weighed in on this, or is it just the leagues?
I mean, I would say that in some aspect, with UEFA saying no, that is the players. If someone was going to say yes, like the players aren't going to be getting this $20 million, and you're talking about countries that probably generate this very easily. England, France, Spain, Belgium, all of these countries are competitors with this. This $20 million is not going to go that far for them, but you think about Cape Verde. That could go far for them, but is it going to make them a contender tomorrow? Remember, this $20 million is not every single year. It would be stretched over 4 years. And then let's get to the distribution of things. Do you trust every single football federation's head official to then distribute that to youth places?
Randall, of course we do. So FIFA had to know putting this out there was going to cause this kind of turmoil and debate, not even debate or pushback. So why did they do it?
I mean, it remains to be seen. We did have a report today, and one of the FIFA executives come out and said that this is solely a Gianni Infantino plan, said that this was also kind of a surprise for the rest of their organization.
So ego?
What I would say is you have to, in order to understand what's happening here, I would say go back to December and really even farther than that if you want to. Like, look at the way that Gianni Infantino has cozied up with President Trump. A peace prize. We go to war. We seize the Venezuelan president 30 days later. 60 days after that, we're with war in Iran. And then, of course, you had the Flo Balogun controversy. And now you have these deals. All of this was in the works very, very early on. And so in his mind, he's like, I've generated $15 billion. This was the most successful World Cup of all time. And by the way, we're all going to get so much more money, but he's upset a lot of people with this. It isn't just President Trump cozying up. You have the hydration breaks as well that UEFA has said, we're not going to be doing that in our events.
Oops. We made a mistake. Hey, we don't want to wrap up without your interview that you did with Mark Klaus of the Washington Commanders, the president. Tell us about that interview.
So Mark Klaus, he took the job at the end of 2024.
This is the real football.
The American football.
I'm going to get
Gianni is
now.
not going to like that comment. But the Commanders, with Josh Harris taking over, have quickly become one of the more popular teams of the NFL again. They had an unsuccessful season last year, but they have a new stadium. They have the NFL draft coming to Washington, D.C. next year. And so Mark, of course, is tasked with leading the stadium efforts, bringing the draft there, and then maybe someday there will be a Super Bowl in Washington, D.C. So we talked about all of that on Wednesday, and it was great.
All right. We apologize. We're running out of time. We can't really run the clip. Is it all in your weekend podcast, Business of Sports? You guys post it.
It is on the Business of Sports podcast feed, and go check it out for sure.
And you can find it on YouTube. If you search Mark Klaus Bloomberg, I'm sure it'll pop up.
Anything else on the podcast?
We also have the Racing Bulls Formula One team CEO on the podcast this week, and we know, Bloomberg loves the F1, so.
Yeah, you put an F1 story, it becomes like one of the most
It's
read.
a big one.
You guys have the coolest job. Thank you so much.
Thank you for having us.
And look forward to it. Be sure to check out the Business of Sports podcast. You can find it on the Bloomberg at Bloomberg.com or wherever you get your podcast feeds.
A big thank you to Vanessa Perdomo, Mag Leone, Bloomberg News sports business reporter, co-host of the Business of Sports
Look at
podcast.
how colorful they are. What's with us? We're like in these dark, dismal colors and Look at them. They're like
And just
a
like
ray of,
people who work in sports.
a ray of
Yes.
sunshine.
And that was Randall Williams, Bloomberg News senior reporter, also co-host of the Business of Sports podcast. Thanks, guys. Happy weekend.
Yeah, happy weekend, guys. Hey, when we come back, a check on trading. Also, some stocks on the move on this Friday. I'm Carol Master, along with Tim Stanovic. You're listening and watching Bloomberg Business Week Daily. We're back in a moment.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stanovic on Bloomberg Radio and Television.
All right, everybody, getting ready to wrap up the trading day, the trading week, the trading month, if you will, here on Bloomberg Business Week Daily. Just got a little bit more than 60 minutes to go to wrap up, as we said. S&P 500 hovering near its best levels of the session. That means up about 2/3 or up almost 49 points. Dow Jones Industrial Average, 315 points to the upside. That, too, is up about 0.6%. NASDAQ 100 outperforming on a percentage basis, up 0.8%, up 221 points. It is off its best levels of the day. We've talked about kind of an even split when it comes to winners and losers in the S&P 500, almost an exact even split there.
Not an even split when it comes to the stocks. The stocks up about 1.3%, 25 stocks of the 30 in the stocks higher, 5 are lower. Monolithic Power, Coherent, and Astera Labs lead the way in terms of the green. NXP Semiconductors down 5%, Micron down 4%, and Qualcomm, just after reporting earnings this week, down 1.6%.
Looking at the Mag 7 as a whole, that group is up about 2.5%.